Well, good morning and welcome to our special budget coverage on money control, Budget 2025. Perhaps one of the most challenging budgets in recent years. As Finance Minister Nirmala Sitharaman gears up to present her 8th consecutive union budget, her task is clearly cut out. Like there's no room for half measures. The FM will walk the tightrope of balancing India's domestic economic compulsions with an increasingly unpredictable global landscape. Now, the return of Donald Trump has already rattled global trade dynamics and has added another layer of uncertainty for Indian policy makers. And back home, we have our own issues to deal with. Cyclical slowdown, slowing growth, stubborn unemployment, weak private investment and sluggish consumption. All these are pressing concerns. And with monetary policy already tight, the big question is how will the government revive animal spirits and incentivize the private sector to set up and invest. Of course, it's a full house, extended week for all of us, Saturday working, and of course we have the markets also, equity markets also trading for a full session today. And here as well we have a full house. Joining me, my co-anchor Shweta Punj. Shweta, 8th consecutive budget for Finance Minister Modi 3.0's first full year budget, and of course we had the Prime Minister invoking the middle class, Goddess Lakshmi for the middle class yesterday. Is it all going to be about taxes this time around?
Oh my God, I'm really thinking the mountain of expectations that Ms. Sitharaman is carrying with her today. What a day, it's like you rightly pointed out, she's also the first full-time women finance minister to have presented 7 consecutive budgets, and this is her 8th one. So a mountain of expectations, Nandita, a lot of focus or a lot of expected focus to provide relief to the middle class, to boost consumption. So, there's a lot riding on this budget because this is the first full budget of the 3rd term of the Modi government. So, to understand the cues that the markets are going to be watching out for, and to understand the significance of this budget, we have with us Bodhi, who's joining us, who's come down all the way from Bombay, a veteran, and Gaurav Chaudhary, who has analyzed several budgets. Bodhi, the big cues that the markets are going to be watching out for today.
So I think one is the capital gains tax, which went up last year in really royal markets, right? So both the short term and the long term capital gains tax went up, long term to 12.5, short term to 15%. Now, there was some of the commentary post the July budget seemed to indicate that there was a roadmap to raise the STCG to income tax, to the relevant income tax rate, and even to raise the LTCG to 15%. In fact, look, these are dangerous things to say a few hours before the budget, but it does not look as if there will be any tinkering with the capital gains tax this time around. The long-term capital gains tax also applied to property, which created its own set of confusions and led to a partial rollback. So, but the market will certainly take it amiss if capital gains tax goes up. It doesn't look likely, but we'll see.
So Bodhi, you mentioned the long-term capital gains tax on real estate. The last time,
that's right,
you and I, we were having a conversation with one of the secretaries in the finance ministry, and it seemed like they hadn't thought that through when they brought that in, and that measure was ultimately revoked. Hopefully this time around they will not, we will not see measures like that being introduced. There will be more thought, or at least they would have thought through, because I think there's so much public pressure also, if you look at the social media and the kind of memes that we've seen doing the round.
So yes, I would, one would certainly hope so. So I think, just apart from the capital gains tax issue, so there are 2 other buckets. One is what does she, so there has been a lot of commentary on the weakness of consumptions that's shown up in some of the results in some of the FMCG companies. The growth rates haven't been very high for an economy which has such high expectations. 5 trillion in a couple of years time, Viksit Bharat by, well, that's 2047, but nonetheless 10 trillion perhaps by the early 30s and so on. But you're seeing single digit growths in consumption, low single digits in some cases. So there is a strong expectation that there will be tax cuts to boost consumption. Now these tax cuts, so will have to be married to the government's other intention, which is to promote the new tax regime, the new tax, so a lot of expectations, particularly about the 30% tax, which kicks in at 15 lakhs, which quite frankly is a very low level. So there is expectations that it could go up to 18 or even 20, and the other two tax rates, which is 10 and 20, will have to be adjusted accordingly. Again, we'll find out, but there's a lot of expectations on that front as well. The richer sections of society, those who are facing the top income tax rate or even 42% income tax rate, 39% now actually, for those above 5 crores, 39% in the old tax regime, I think it's 42, 39% in the new one, I think it's 42% of the old. I think that's also creates its own level of confusion. There has been some talk, but certainly at the lower, at the 15-20 lakh levels, there is a lot of talk, at least a lot of expectation of some concessions. By the way, I should point out that a lot of the people on social media who seem to think that they're in the middle class are not actually middle class. They are rather higher than that.
And they are the most vociferous.
They are the most vociferous.
Yeah, Gaurav, you've done an extensive study analyzing the impact of budgets on equity markets.
Right.
If you could just give us a primer, on what are the markets going to be looking out for today, and historically what has been the case?
See, there are two things here. One, of course, is how markets behave on the budget day. It's been generally it has been noticed that markets, there's a lot of expectation riding on to before the announcement make, and generally tapers off. I would expect same thing to play out today, and as Nandita pointed out, this is the second time that the budget is being presented during a weekend. First it was in 2016 I think, 2016, and now again, and that was the first time. I think in 2016 also was the time when the last budget on February 28 was presented, after we moved to 2017, where the budget actually got advanced to February 1. But be that as it may, markets are off peak.
That's the decolonization agenda.
That was the decolonization agenda. Also partly because most of the announcements that were made during the budget, by the time the budget got passed in Parliament, it was already May, and
that's
3
right.
months, 3 months would have passed by. It made eminent sense to actually advance it. So this time, for instance, the budget session gets over, scheduled to get over on 4th of April. By that time, the finance bill will be passed. Most of the announcements will kick in from the 1st of April. But back to equity markets. Markets are back from, are not at the peak levels now where it was. It has come back off peak. So which is why there's a lot of expectation riding on it, and we saw yesterday also that there's some expectation building up to it. Bodhi mentioned about the vast Indian consuming class that remains the strongest edifice of the India growth story. Very little room for the finance minister to disappoint on that front. There's also another reason, is that before the budget, the cabinet actually approved a pay commission for this government employee.
Very significant.
Now, government employee is only one small chunk of the vast Indian consuming middle class and the salaried class. A large number of salaried class actually operate outside the government sector. They don't have a pay commission kind of a cushion or a systemic backup in place, but something has to give here. And so if you have to boost spending, the spending ability either will come when their incomes are rising, which is at this point sluggish, or you give them tax break, which you essentially put more money in their hands, part of which they'll go and spend and some part which they'll save. Savings, the savings part will play out through the virtuous cycle and of investment, etc. But it is the spending that the government will need to boost, and for that spending to come, I think tax breaks through individual income tax is a very short way. We have seen that happen in the previous instances. Indirect tax, of course, is out of the way. We saw that in 2008 when the stimulus came. The government actually gave a spending boost by reducing prices through tax cuts, which is not possible now, and also that had its own consequences because it raised fiscal deficit to completely an unmanageable level at that point. The other thing that markets will keenly watch out for is that whether the finance minister actually presents another medium-term fiscal policy. This leg of the medium-term fiscal policy actually ends this year, that is FY26, by which the target was to bring down the fiscal deficit to 4.5% or less by the terminal year, which is FY26, which government looks set to achieve. In my view, it could be probably, they could overachieve that, or at least the target will be very ambitious. But the thing to watch out for is this government has signaled that it's open to the idea of actually announcing a range of fiscal deficit than just a number, because then it becomes it gives more flexibility and elbow room, fiscal maneuverability to the government if it's a range. The other thing that I expect, and which markets will be keenly watching out for, is an change in the approach of fiscal management so far as government borrowing is concerned, is that whether government actually moves towards a debt to GDP ratio approach rather than getting fixated only on the fiscal deficit. If you look at the numbers, debt to GDP ratio currently is around 56.8%. The whole idea is to first bring it down to below 50%, which was 49.8% it was in 2018-19. Post pandemic it had gone up to about 61%, more than 61%. It has been progressively coming down. What I get to hear is that the government probably is going to make a announcement of a roadmap of progressively bringing down the debt GDP ratio by 1 percentage point every year till such time it hits below 50%. The whole idea is to bring the debt GDP ratio to around 40% or so, which then it becomes manageable. This is something both sovereign credit rating agencies and the markets will be keenly watching out for.
Right, I think we also have with us Sanjeev Shankaran, who's been tracking many budgets and a veteran, so to say. Sanjeev, we were just having a conversation with Bodhi and Gaurav, and both of them believe that a lot is riding on Finance Minister, and we will be looking out for any changes to taxation as well as steps to boost consumption, and capex as well will be the focus area. According to you, do you think the need of the hour is a 1991 reform oriented kind of budget, and would the focus be on the 3 C's, capex, consumption and consolidation? What are your expectations, and take us through how you think the markets will also be reacting, because we have seen some challenging times and we've seen the market also clocking in a 4 straight month of loss. That has last happened 23 years back in 2001. So we are working with challenging situations both on the economy front and the market front. Your expectations? Sanjeev, is my voice reaching you?
All right, I think we are having a bit of an audio issue there with Sanjeev. Technology is all very good, but there are times when we get glitches like that. But why don't we get Gaurav to respond to that? Gaurav, if you look at the US stock market, it declined yesterday on Friday because of Trump's announcements on tariffs on Mexico and Canada primarily. So there is a lot, when it comes to this budget, there's a huge overhang, a Trump overhang on this budget. How can India maneuver this? When we say a tightrope walk between consumption, fiscal consolidation and so on, but this is the biggest elephant to address.
Absolutely. No, I think this government will probably try to separate the domestic constituency from the international geostrategic requirements and objectives. The Prime Minister, we understand, and it's reported, is going to travel to the US. There is talk of a limited trade deal with the US. I don't think the budget is going to touch upon too much on what could happen on the international trade front, on the geostrategic front, so far as India and the US is concerned. Tariffs, of course, is a lingering issue. This budget comes amid signs of a looming global trade war, and the economic survey yesterday did talk about protectionism without mentioning Trump as a key cause for concern. But the thing here is from a budget point of view, if you go back a couple of years, this government is very clear that it's not going to allow any kind of cryptocurrencies to operate in India, because currency, so far as the government's definition is concerned and approach and attitude is concerned, is always sovereign. So either it's the Reserve Bank of India, the central bank, that has complete control and authority over any kind of currency operating. But now with Trump back in the saddle in the US, crypto actually going through a severely bullish phase. Do we see any kind of mention of crypto or any kind of digital assets? It could, the finance minister could completely bypass mentioning crypto, but actually crypto could make a backdoor entry masquerading as a digital asset in the budget speech or budget. It's going to be very interesting to see, because if that if digital assets or crypto by another name actually makes an entry into Indian budget making or the tax configuration, then that could be a signal that the government is actually open to the idea of allowing cryptocurrencies or some form to operate as digital assets in India. That's something that markets will look for, because cryptos or digital assets are coming within the mainstream public policy and the budgetary framework would mean that you are actually getting some kind of legitimacy to a new asset class. It could have implications for other asset classes.
So that's the other C, Nandita, 2 or 3 C's on the budget.
We have 4 C's now.
We have 4 C's.
But to ask you a question, Gaurav, do you think that crypto is a major policy issue facing the government? I mean, in the US it has become a political issue because the Republican Party or parts of the Republican Party have strongly identified with crypto. It's become an ideological issue, just as many of them also hate electric vehicles. It's a marker of identity to distinguish them from Democrats. But there is no such thing in India, right? At least not yet.
So what I probably expect here is that the government could actually go a little soft on the clamp down on crypto. Right now the signaling is that the government is extremely strict and stringent. The government is going, if at all the government actually talks about crypto or something to that effect, it would be purely as an asset class. And if any kind of signaling comes from the budget that the government is open to regulating digital assets, that's the first step towards, I think, this kind of assets getting legitimacy. That's going to be a big step forward.
Interestingly, just to add to what Gaurav is saying, the Reserve Bank of India introduced a central digital currency, which has really not made much progress. Trump has actually banned central bank-backed digital currency.
Interesting. Yesterday, the Indian markets ended on a high after the eco survey. What are the cues that they picked out that was, rallying the markets? Bodhi.
So, so I think the eco survey. So the theme of the eco survey was really a concerted attempt to improve ease of doing business, and it does. And there are, it sort of delves into economic theory, why that is needed. It talks about India being a low trust society. So therefore, there is a compliance culture, as it were. It needs to talk. So it goes into a lot of detail. It's a very interesting document. And if that, so the point is that if what is the starting point of the eco survey? It talks that it says that to reach the goal of Viksit Bharat by 2047, it has to grow by 8% for at least a decade. And right now we are not doing that. We are around 6%. Between 6.2 to 6.8 is the eco survey's range. By most accounts, the growth rate current now is some kind of stuck, if one can use the term, just above 6%. So how do you raise that rate? There are many ways. Obviously, the basic thing is to raise the investment rate from 31 to 35%, which are the numbers mentioned in the eco survey. But a major component of doing this, or bringing this about, is really to improve ease of doing business, to reduce the compliance burden for government to get out of the way, as the eco survey rather boldly puts it. So I think that is possibly one cue they have, the markets may have picked up. The other cue, and just to go back to something which we were discussing on this consumption, that there will be some steps to boost consumption, possibly tax cuts. Well, if you go to even the president's speech had references to the middle class. There were extensive references to the middle class, and she also talked about the establishment of the pay commission for government employees, which is obviously a large component of the middle class. So I think these are the cues which the market could possibly have picked up. Also, see, there is a rebound which is happening in the market in any case, because the markets had fallen more than 12% from the late September peak. So that is happening. Let's see what happens today, because the 25%, Mr. Trump's 25% tariffs are supposed to kick in this weekend. That's not good. That's why the Nasdaq fell yesterday. And let's see what cues our markets pick up from there.
Unemployment is another area, which needs a lot of focus, right? So, when, will the focus be on manufacturing when it comes to jobs, or are there any other sectors that need more focus in terms of employment creation?
So there's again a lot of speculation. Again, it's dangerous to speculate on budget measures just 4 hours before the budget, 4 hours or so before the budget speech. But there is a lot of speculation that the 15% tax rate for new manufacturing operations for companies, which was introduced in the 2019 budget and which expired, which was in 2024. Some variant of that might be brought in to boost manufacturing. There is no doubt that, I mean, there is strong speculation. We'll see if that's true or not. Clearly, manufacturing is needed. There is a so it's all interlinked. I mean, there is weak consumption because obviously, you know, a lot of people are underemployed. I mean, the salary levels are not that high, which the economic survey also alludes to. It sort of it berates India Inc. for not paying employees. I mean, the rate of growth of profits is much higher than the rate of growth of salaries, which is something which I guess a lot of people in the audience will also sympathize with. But coming back, yes, manufacturing does need a boost. One way is that I think a lot of PLIs have taken place. So the PLIs, one spectacular success in PLI has really been electronics manufacturing.
Yes.
Other than that, the record is mixed. You know, I was at a get together. I mean, I was at an event actually where a senior bureaucrat, for example, said that to automobile manufacturers that you guys are not investing in electric vehicles and battery manufacturing and things like that, or not at least investing in the desired this thing. So manufacturing will be a boost, but you know, the thing is that India is a services driven. It's increasingly becoming so. But for the bottom of the pyramid, the kind of jobs that are being created in services are really low-end jobs of the nature of support services and drivers and things like that. So you need to do perhaps a lot of low-end manufacturing. So the other speculation is that labor-intensive manufacturing, such as textiles, furniture, leather, will also get some kind of a boost, whether through the PLI route, which is the government's preferred route in the budget. But yeah, we do need certainly steps to boost manufacturing employment.
Right. Gaurav has a point, and after that, Nandita, maybe we can talk about the stocks to watch out for. Sure. Nandita has put together an exhaustive list, and I think
just small point on boosting employment, also on the kind of focus that the government is having. If you look at the numbers, for instance, one of the key flagship programs of the government, the Pradhan Mantri Awas Yojana, which is, while enabling people to get houses both in rural and urban areas, there are now two segments to it. In the budget for 24-25, that full budget, and the previous year 23-24, there was a nearly 50% rise, 49% rise in the budgetary allocation for 23-24 over 24-25 over FY24. I would expect a significant rise to happen there. Also, if you look at what the government has been spending on national highways, including road works, from 14-15 it has gone up from 24,000 crore to 24,000 crore to 2,77,000 crore now. So I think this is where the large part of employment generation is likely to take place.
Yeah, absolutely. In fact, we have Ashish Bahate joining us, technical and derivatives research analyst. Thanks, Ashish, for joining us. Big morning, budget day, and I think this is the one budget that the middle class, the not so middle class, journalists, market traders, everyone's keenly watching out for. Ashish, what are the big things that you are hoping to hear from in the budget speech today?
Good morning. Honestly, it's become for me it's become a kind of a non-event day, as we all know that GST is not part of the budget, and it becomes more of a from the stock market perspective, it becomes an event, but I don't think there's going to be a much thing which is going to come from the income tax perspective. 2019 we have seen the corporate tax cut. Already we have seen the deficit budgeting which happened in 2021, which gave a big boost to the market. So there's not much of the elbow room left for the government right now and for this budget. So from the market perspective, yes, we have been in an oversold zone, and I think a little boost to the economy, a little boost the liquidity which panned out for by the RBI right now helped the market to recover from the lows, and I think it will a little boost from the budget will propel the market towards its 200 DEMA.
Ashish, hi, Nandita also joining in. We've seen a very good recovery in the market. Friday to Friday, the market Nifty was up almost 2%, and this comes after days and weeks of negative close, and of course we've shaved off quite a bit from record highs as well. Some bit of recovery. How are you really positioned ahead of the budget? Would you be looking at going light, or would you be heavily invested? How would you trade the Nifty in particular today?
So we are kind of heavily invested right now, but with the hedges and the way Nifty has moved in the last 3 trading sessions has been remarkably good. Nifty has moved above its 20 DEMA, which is a significant number, and I'm sure it will want to push. It's now pushing towards its 200 DEMA, which is placed at 24,000 level. But if that breakout happens, we may see even 24,700 on the charts. So what is looking good, I will say probably banking stocks are looking really good. Most of the banks, we have seen the private sector banks moving first, and then the PSU rally happened yesterday. So we are more bullish on the bank stocks on the index side and on the some of the chemical and infrastructure stocks.
Right, Sandeep, any particular budget bets? Ashish, I beg your pardon. Ashish, any budget bets?
Yeah. So Kotak is on our buying list. We've been recommending it from the just straight after its numbers which came, and the way it has consolidated on the 1900 level, I'm sure it is well placed to reach or touch 2000 plus mark. So we are long on Kotak. With us, one can go long by keeping a stop loss of 1870 here.
All right. Let me also go across to my colleague Sanjeev, who is standing by in the newsroom. Sanjeev, a lot of expectations riding high on this budget. However, whatever we've just heard from Ashish, we are talking about income tax rate cuts and so on, but Ashish seemed to be more subdued on his expectations. I think it's a more realistic framework that he's working with. Any cues that you picked out, Sanjeev, from the eco survey yesterday, from what we've heard the Prime Minister speak yesterday? He invoked Mahalakshmi. And I think everyone took their meaning out of that speech that he gave. So what is it that you are expecting, and of the many budgets that you've analyzed and tracked, Sanjeev, I think it would be safe to say that this is one of those budgets that's really got so much riding on it and a lot more interest. All right, I think we have an issue with Sanjeev's audio there. Maybe there's some issue with his mic. Let's go back to Ashish, Nandita. Yeah.
Ashish, in terms of defense, we all know that stocks have come off quite a bit from their record levels. Like some of them have shaved off 40% or thereabouts. Do you expect, any increase in allocation to defense? And in that light, would you be looking at some of these stocks?
Yeah, defense is one sector which will keep on, Indian expenditure will keep on rising in the defense. We really don't have a choice there, and I think the best bet to play defense is L&T rather than going with the PSUs. L&T is a bet which you can play not just for defense but even for the infrastructure. So the way L&T has reacted in yesterday's session, it was up 4.5%, and we've really seen a short covering happening there. Even the open interest, we'll see the shorts have exited their positions. So I think it's well placed, and it is at a very attractive level right now. So one can go long here by keeping a stop loss of 3,500 for the immediate short term target of 3,800.
Hold that thought. I'll come back to you, Ashish. But Gaurav, you had a take on defense, right? I think yesterday when we were talking, you said that over the years the defense spending has been a little underwhelming.
That's right.
Do you expect some focus there when it comes to capex?
Absolutely, and also a large part of the defense spending has also got to do with the overall the broader Atmanirbhar plan. And I'll just give some numbers. In last year, this year FY25 last budget. Total spending the defense budget was about less than 13% of the total central government expenditure, and it has been falling, which is something that I expect the government to actually arrest it and turn it around and turn it in this budget. It's fallen from over the last 4 years, 5 years for instance, it's fallen from close to 14%, 13.81 in 2021 to about 13%, and it's going to test 13% now. The other thing is that also look at it as a proportion of GDP. Defense spending as a proportion of GDP in India similarly mirrored the similar trend as part of central government expenditure, as a proportion of central government expenditure as well as GDP. It's now it's fallen from 2.4% in 2021 to less than 2% now. That is quite low given international benchmark globally. IMF mandates, or that's the benchmark, is that you should be spending about 3% of your total GDP as defense spending. And NATO, for its member countries, the North Atlantic Treaty Organization, has set a benchmark of 2%. So we have been below that. I would expect that to turn a bit this budget.
So yesterday, some of these defense stocks were upbeat. Stocks like Garden Reach, they saw 6 to 7% kind of an uptick. So yesterday, the entire market was kind of upbeat and going into budget. Usually, you see a lot of action around railway stocks and defense stocks, which is what happened yesterday as well. Right. But on that note, let's go back to Sanjeev and see whether he's getting our audio or not. Sanjeev, I hope you're getting my audio. We all are keenly waiting to understand what is it that you are watching out for from FM's budget speech.
Well,
I think the video and audio issues persist.
Yes, I'm not. How about we talk about the tech stocks, Nandita? How are they going to be? What are they going to be watching out for in the budget? Services sector has been a big driver for the India story.
Actually, interestingly, what has happened with DeepSeek recently? We've seen a renewed focus on IT stocks globally, right? Yeah. We had the market cap to GDP ratio, which was of course presented in the economic survey as well, and how India has been leading, and China of course has been lagging. But I want to pose a question to Bodhi on this. Chinese markets have been depressed for quite some time, right? But now with China looking to take the lead in AI, which seems to be the buzzword, and we've seen stocks, Nasdaq listed stocks doing extremely well, the likes of Nvidia. But now will China, reverse that course? Could it move forward and perhaps overtake India? How does it really mean, or what does it really mean for India and tech stocks globally?
There was a big chapter on AI.
Yeah, there is a big see the so Chinese market cap is about 65 to 70% of GDP, if I am not mistaken. It's below 70%. So Chinese markets are larger than India in absolute terms. Chinese markets have not done well for the last 3-4 years, and the Chinese economy, the post-COVID rebound hasn't really taken place. Chinese consumption has not rebounded. Although again, the levels of these, we are talking about much higher absolute levels compared to India. The reason why it has not rebounded has been attributed, at least in the foreign commentary on China, I'm not a China expert, has been attributed to, among other things, the crackdown by Xi Jinping on the private sector, or at least on parts of the private sector, starting with the spectacular crackdown on Jack Ma and things like that, and that has generally led to entrepreneurs being disenchanted, and a general, so there have been other measures which have been widely reported that the Chinese Communist Party is not happy about the very high salaries of finance in the finance sector, and it wants a definancialization of the economy. Other parts of what we would call edtech here have virtually been shut down. Because of the adverse social effects and so on. So that all these things have contributed to a loss of confidence in the private sector, and is said to have contributed to the muted consumption story in China. There is also the larger question of demographics in China. The population, the Chinese population is probably declining. While if you go back 5 years, it was considered a given that China would become the world's largest economy, overtaking the US. At least by some commentary, that is not going to happen anytime in the near future, if ever. All that being said, though, DeepSeek is a remarkable achievement.
Yes.
It in fact came out of a hedge fund, and it has been called a Sputnik moment. It's a remarkable success of Chinese private sector entrepreneurship. So again, for everything, there are contradictory things that happen. Will China really take the lead in AI? It remains to be seen, but I mean, they've already, they've caught up with the US in a matter of a couple of days. We'll see what are the ramifications of that on the stock market. Remains to be is not at all clear. I just want to pivot back though.
Bodhi, can I request you to hold that thought? We have Vivek Kumar joining us from Quant Eco. Vivek, a very good morning, and thank you so much for joining us on a Saturday morning. Typically, you would have been out for a walk on a Saturday morning and making big plans for your Saturday, but I think the FM and the Prime Minister had other plans for all of us. So thank you for taking out the time. Very quickly, Vivek, what are the big numbers that you will be watching out for? Yesterday, we heard the Eco Survey talk about a growth range between 6.3 to 6.8%. Are you expecting the budget document to reiterate some of that? And also on the fiscal consolidation plan, how hopeful are you that Ms. Sitharaman will do what she has always done, which is to be conservative and to be fiscally prudent?
Hi, good morning. So first, thank you for having me on the show. And yes, we do start today on
an audio issue there as well.
Yeah, today is not our very very tech morning for some reason. I'm so glad we have Gaurav and Bodhi here with us.
Okay, I'm not sure if the audio is working.
Can we? There seems to be some issue there. If I would request the team to just quickly take a look at Vivek's audio, because he can hear us.
We can't hear
but we can't hear him.
Oh.
All right, Vivek, if you can hear me, very quickly, the big numbers that you will be watching out for, and the fiscal consolidation plan. What's your expectation on that?
So thank you for having me on the show first. Now, in terms of the big numbers that we would be looking for is one, the first and the foremost is whether the finance minister
I think we can make out what he's saying. So I think we'll touch base with him again. But Bodhi, you were looking to make a point. I would urge you to come.
Yeah, no, I was really saying on the Indian tech stocks, I think, quite a lot of that, I think, how Indian tech stocks do will depend on some of the actions of Mr. Trump, particularly with regard to the H-1B visas. That is going to be important. And the other issue is really the impact on AI on the kind of software services which Indian companies provide, and the longer term impact of AI. By the way, the economic survey is interesting. It also it talks about whether AI is needed at all in the preface, that while it may be a solution for Western societies which have obviously declining demographics, where the population level is already declining or very low growth levels, whether that's appropriate for India or not is something which it talks about, although it kind of leaves the thought hanging in the air. But Indian tech stocks, I think, remarkable success story of the last 30 years, has created the middle class post 1991. But going forward, there are going to be challenges, and unless I'm getting also the enormous employment which they have created, hundreds of thousands of people, the rate of growth is bound to slow down. People can't just keep employing people like that, and AI is another another issue.
Okay, I think we have Vivek back with us, and I do hope we will be able to hear him this time around. Vivek, if you can hear me, I'll repeat my question again. We got the Eco Survey yesterday, and the Eco Survey presented a growth range between 6.3 to 6.8%. And late last evening, we interviewed the Chief Economic Advisor, who categorically said that 6.3 to 6.8% is not a slowdown. Also, the survey listed out a whole host of things that are working for India, whether it's this whole theory about slowdown in capex. The survey has pointed out that there has been a huge pickup in capex, and it's spoken about there's been a pickup in construction and a whole lot of other manufacturing services and so on. So I want to get a sense from you, Vivek, on the big things that you are looking out for in this budget, and what is your expectation on the medium term fiscal policy that the finance minister could spell out?
Right. So I hope the audio is working now. Yes.
Yes, loud and
In
clear.
terms of the big announcements that we are looking for, number one is, and the foremost would be, whether the finance minister is adhering to the path of fiscal consolidation as promised or not. Now, a lot rests on this because getting into the budget season, there were expectations or there were talks about whether the government is overdoing on fiscal consolidation part. And we brought down a deficit from 9.2% to less than 5% in almost just about 4 years. So from an economic perspective, such a sharp cut in fiscal deficit tends to weigh on growth impulses. So effectively, the support that one could draw from fisc to growth from a very mechanical statistical perspective tends to be negative. So that's one aspect. Which the markets had started to talk about. But at the same time, it's not just about statistical numbers that goes into fiscal balances and its impact on growth. We also have to see what kind of fiscal adjustment it is. Because, while the government brought down its fiscal deficit, the government achieved that by increasing its capex spending or capex allocation to the budget. So in terms of the quality of adjustment, that was extremely superior. Plus, it was easy for the government to bring down some of the past excesses because a large part of that was COVID-related stimulus and which was no longer needed because the economy had started to recover. So, in some sense, I think that the government was on the right track and there are gains and benefits to enjoy from the fiscal consolidation path because, we are now entering into a global phase, which is something that the economic survey also readily talks about, is that there is enough uncertainty on geoeconomics and geopolitics. And in this uncertain world, if you are able to establish macroeconomic stability through your policy actions, I think that will make India stand out. So if the FM, in a nutshell, if the FM is able to bring down or lower the fiscal deficit from 4.9% in the current financial year, that's the target, to somewhere close to 4.5% in the forthcoming financial year, I think that will be a testament to our policy belief that macroeconomic stability is at the forefront. And this also in the longer term will open the door for a possible re-rating for India sovereign. Yes, मुझे आवाज आ रही है? So this would also leave the door open for India's re-rating from a sovereign perspective, which again has immense benefits from a longer term perspective. So that was the foremost thing. There are supplementary details that one would look at. So what is the assumption that the government is making on the nominal GDP growth? The survey expects real GDP growth in the range of 6.3 to 6.8%. You could argue this is almost similar to the current financial year's growth estimate of 6.4%. And what is the capex allocation? How much of funding is the government doing via the bond market, etc.? So these are some of the headline items that one would look at from the budget announcement.
Right. Thanks, Nandita. You want to go across to Anand?
We have another market guest joining in. Just about 1 hour to go, 1 hour 15 minutes to go for the markets to open. Want to understand what really the market is watching out for from the budget and from Finance Minister this time around. Joining me is Anand K. Rathi, co-founder Mira Money. Anand, we've seen a very good correction in the market, right, from all-time highs right from October. But what is it that would bring cheer to the market? Would you say that the expectations from the market standpoint are a bit subdued this time around because whatever changes had to happen on the capital gains front, tax front, that happened last budget? So overall, anything that retail investors will be watching out for from the budget that could bring some cheer, and what is it that could be a big disappointment in your view?
Good morning. The most important thing that the retail investors will be looking out for is no additional taxes going forward, because what we have seen is every time there is a budget, there is an increase in taxes leading to lesser amount of money left in my pocket, and that is something that it can act if there is an increase in taxes in any way, whether it is in the form of income tax or capital gains or in the form of GST. which of course will not be declared at this moment. But any form of increased taxes that leads to lower amount left in my pocket is something that retail investors will not like to hear from the finance minister. This, if at all it happens, could well mean that the market will not like it, and I would not be surprised if the market corrects from Monday onwards or today itself. In terms of what is that one thing that we are all looking for, at least in the budget, in my view, is that what is the government planning to do to boost the consumption that we are lagging at the moment. A lot has been done for capex for the last 3-4 years. The government has been actually doing a lot of public capex. They now need to make sure that there is more money in the pocket of the people, and therefore consumption is what are the kind of boost that the government will do to boost consumption is something that all the retail investors, traders, DIIs, FIs are all going to look out for. So some news there will definitely cheer the market, and maybe we will have a decent post-budget rally as well.
So let's in fact bring in Mr. Sudipto Mandal, Chairman of the Centre for Development Studies, a veteran economist, to get his thoughts in on what are the options for the government to boost consumption. Mr. Mandal, the markets are not going to like the fact that if Ms. Sitharaman does increase taxes in any form whatsoever, there's an expectation that the middle class might see some sort of relief when it comes to income tax slabs. However, I want to get your thoughts in on what are really the levers that Ms. Sitharaman can accelerate on to boost consumption, because she has to be fiscally prudent. There is an urban consumption stress in the economy. So what are the options that she can really choose or roll out, which would please the rating agencies, please the economists, and please the Aam Janta?
So is this question for me? Sorry.
Yes, Mr. Mandal. Thank you so much for joining us.
Anand here, sorry. That's why it's confused. Okay, now...
sorry, Anand, I'm sorry, that question was for Mr. Sudipto Mandal, who is also joining us from New Delhi. Mr. Mandal, if you can hear me? Okay, I think there's a bit of an audio problem there with Mr. Mandal. Mr. Mandal, can you hear me? All right, Anand, I think we'll get you to take that question.
The government definitely can do is increase the tax exemption limit. I think it is long overdue. Our exemption limits have not been adjusted to inflation. That is something that the government definitely would or should do, is what I strongly believe. The other thing that they can do is, I definitely feel that 4.5% of GDP will be what the government will be looking at as fiscal deficit. There is no big, surprise around that, because we all know that government is on the glide path, so the debt will actually, they want to reduce the debt for sure. So what I would like the government to do is, let's say, give more, subsidies, give more, boost or incentives for people to spend, which could be, I'm just taking a radical measure saying, okay, why don't I cut a few consumption-related products GST from 18% to 12% just for a year to consumption. That is something that I can actually look out for. That is something that I would want to see in this budget innovatively.
Nandita, if we go through MK's analysis, right, of the sectoral sectors and how they have performed after the budget, pharma and IT, banking and financial, realty and metal sectors, and FMCG, these are the ones typically that have exhibited a lot of resilience across all periods post-budget.
I want to talk about the last July budget till now. IT and pharma, these are the pockets that have stood out, the defensive, so to say. But if you look at defense and all the other consumption, realty for that matter, all of these sectors have seen, losses to the tune of 18%, 15%, and defense stocks in particular, on an index level, you may not be able to see the pain, but some of the stocks, if you see, they have eroded 40%, 35% from highs. So that's the kind of there was a lot of euphoria built in, when it comes to defense stocks. So a lot of correction has happened, but execution is something that hasn't really happened at the same pace that the market was expecting. So pharma and IT, these are the two pockets that have stood out, and consumption, as I mentioned, there have been these slowdown trend, the urban consumption slowdown. Earlier it was rural, but now of course
now it's
urban that has emerged. So because of that, even FMCG has seen a fair bit of correction. But when we are talking about FMCG, I want to talk about stocks in particular. ITC, that is one stock from the consumption pocket that will be in focus, because there is some bit of expectation or chatter that there could be an excise hike. Hasn't happened in the last 3 years, and if the potential hike is above 10%, that could be negative. That's the some of the reports that I read have pointed out. So since Anand is here, let's ask him particularly about FMCG in the wake of the slowdown that we have seen.
Yes.
And also the fact that commentary has been fairly mixed. If you look at the earnings commentary from the managements, HUL, the big one, has pointed out that there could be more slowdown going forward for the next 2-3 quarters at least. But if you look at Dabur's commentary, they've said that the urban consumption slowdown has bottomed out. What have you made of the consumption slowdown, A? And secondly, ITC, your call or your take on how things would pan out if at all there is a excise hike in the budget.
In terms of urban consumption, one of the real reasons why I believe consumption slowed down, especially in the urban areas, is because actually there are two reasons. One, the inflation was very high, so it did affect India in general, and it included urban and rural together. The other reason why a lot of urban population went into a very saving mode is because they didn't have too much money left after paying up their EMIs, and the interest rates were very high. So in my view, interest rates and inflation hit the urban consumers a lot more than a rural consumer, and that's the reason why we saw a bit of a slowdown. In my view, inflation looks like bottomed out. Food inflation looks like it is going to decelerate from here thanks to good crop sowings and things like that, right? So urban consumption looks like it is bottomed out. So I would go with what Dabur's management has said. I think it may look up from here, maybe a quarter or so here and there, but it should start looking up from here. In terms of ITC, I think a lot of these shareholders of ITC are used to seeing GST hikes, custom duty hikes, excise hikes for one of the largest products for ITC, right? The selling product for ITC. So in my view, ITC shareholders will not be surprised if there's a hike there. But ideally, they may not want to see if there's no hike. I think it will be a surprise for the ITC shareholders, and it can go up from here. But in general, people do expect that excise and GST can definitely go up for ITC as a company in general.
Let's also go across to Vivek. Vivek, what are you expecting on the schemes? Typically stock markets do not respond very well to higher allocations for different schemes. We've seen PM Kisan Samman, we have Ayushman Bharat and so on. Are you expecting allocations to go up for these schemes? Because, this is as much an economic statement as it is a political statement.
What I think is that it's going to be both. It's going to be both because in rupee terms, you are likely to see an increase, whereas what matters from an economic perspective or from an accounting perspective is the share in or the ratio to GDP. So we expect the overall revenue spending to increase from nearly almost 37.4 lakh crores to 39.2 lakh crores. So that's the increase in rupee terms. But as a ratio to GDP, we expect it to be lower from 11.5% in the current financial year to 11% in FY26. So in some sense, it will be a balancing act, because in rupee terms, you will get the sense that the finance minister is allocating higher amounts. But when you are accounting for it from a fiscal deficit ratio perspective, the ratio will actually be lower. So it's both, and I think in the near term, for some of these schemes, for example Narega, etc., all the rural development schemes might not need that kind of allocation, because there is a clear divide between the consumption parts, as was discussed earlier. Rural is outperforming urban as far as consumption is concerned. So you could see some bit of reallocation between the schemes as well, and overall as a ratio to GDP, we would expect it to come lower. Whereas in rupee terms, it might be a tad higher.
Right. Let me bring in Gaurav and Bodhi here. You know, we were having a conversation yesterday on the possibility of a universal basic income being brought in, an idea that's been discussed and it comes up around every budget. But this time around, there is a strong buzz that the government could consider bringing in something like this to boost consumption from a macroeconomic point of view and from a market's perspective. How good of an idea would it be? Because, you know, once you roll out something, you can never roll it back. Right. Right? Gaurav, you want to start?
Yeah, a couple of things here. Some form of universal basic income may not be universal in the definitional sense, but we have seen over the last 5 years or so, some kind of income transfer scheme have been put in practice in various states. So we have seen what's happened in Maharashtra, what's in place in Maharashtra, what's in place in Madhya Pradesh, etc. And in the run-up to the Delhi elections, we are seeing what the respective parties have been promising. Right. These are pure income transfer schemes, particularly for women, which is something that I would probably expect the government not to announce in a central budget, because that what it does then, as you said, it becomes a statutory expenditure. Once you bring it as a part of a statutory expenditure, every successive government is bound to adhere to. The last statutory, almost like a statutory, it's not you know, notified in law in a statute, but is the one that we saw in 2019 when the PM Kisan Nidhi scheme was announced. By the way, that is due for an appraisal. It's been 6 years now, where the corpus or the amount, the payouts have remained more or less the same, 6,000 rupees. That probably could change. On the point of revenue expenditure, there has been a subtle shift since last year. Revenue expenditure since 2017 as a percentage of total expenditure had come down from about 84% in 2017 to less than 76%, about 76% in 23-24. However, since 24-25 July, it has started rising. It's a signaling that the government could probably look at more welfare measures through various revenue expenditure schemes. The other thing that to watch out for is what does the government do for women schemes, women related programs. So
we'll come to that, Gaurav. Just please hold that thought. We have Mr. Mandal back with us. Mr. Mandal, if you can hear us.
Not very clearly.
Okay, I'll try and be as loud as possible, Mr. Mandal. Just want to get a sense from you on what are the consumption levers that the finance minister really has in this budget, because she has to stick to the path of fiscal consolidation. There is an expectation of a revision in income tax slabs. So, you know, it is a tightrope walk. So, you know, if you could just take us through some of the levers that she could really accelerate to address the urban consumption crisis that we are seeing right now.
Well, first of all, let me say that, you know, we have to remember that this is the first annual budget of full budget of this government, and we are at the beginning of what we economists call the political business cycle. And the first half of political business is always a very tough budget. I expect this budget to be a fairly tough budget. And everything else that I'm going to say has to be seen in that context. If you want to know about consumption boost, I think the main thing that she is likely to do on the expenditure side is not so much, you know, direct handouts and stuff like that, but substantial emphasis, continuing emphasis on capital expenditure. Though we are reaching, the last year has shown that we're more or less reaching absorptive capacity, but still I think there would be a thrust in maybe a 10 to 15% growth, not the 25-30% growth earlier. But more importantly, speaking to your point, I expect already the production-linked incentive scheme has been there for a few years and is likely to be ramped up. And more importantly, she introduced last year the employment-linked incentive scheme. The allocation was not small; it was 10,000 crores. But you know, in things like incentive for new employment and stipends for you know, training and that kind of thing, I think this year we might see a more substantive thrust on the employment LinkedIn, because the government has been talking so much about employment, and that's the way you boost consumption. It's a proper way, not by just giving, I don't think there's going to be any reduction in duties and stuff like that to boost consumption.
Right, Mr. Mandal. So Nandita, we heard Mr. Mandal talk about how difficult of a budget this is, and she might not go for direct handouts, and that's always good news for the markets.
Yes, right? That's correct. Any populist measure, isn't really received very well by the market, right? And of course, markets seem to be very volatile on budget days. I think we have a guest waiting. I would elaborate on that point later, but. Sanchita Mukherjee, personal finance expert, joining in. Sanchita, great to connect with you this morning. I just want to understand, what would you be really watching out for in terms of changes to taxation? A lot of chatter about that. Of course, it has been fueled by yesterday's Mr. Modi's talk about invoking Mahalakshmi and helping out the middle class, etc. What are you watching out for, and do you think the government will sweeten the new tax regime? Will there be changes in tax slabs, any changes or ATC kind of deductions being brought into the new tax regime? What are your expectations really?
Yes, thank you so much for having me over here, and like it was discussed over here throughout the show, I think there is an issue of an urban consumption slowdown, and there is a lot of expectation of money coming into the hands of the middle class so that they can spend, because of late even credit loan disbursal by banks have been a bit slow, on the slow side, because retail deposits have not been picking up. Hence the middle class consumption is actually a little strained, because first of all the definition of middle class needs to change. There are people earning salaries at various levels, and a lot of times we see a lot of them are clubbed together, especially at the higher end. Like a person earning a 30 lakh salary cannot be equated with somebody who's earning a 1 crore salary. So the treatment and the definition of middle class needs to change. That's the expectation. And having more money in the hands of the people, especially the salaried taxed, because salary class people are taxed disproportionately high. If you see 114% tax collection in the last 3 years, and tax to GDP ratio is at a 19% in India, vis-a-vis East Asian countries, which are at a 14.5% tax to GDP ratio. Hence, a slashing of rates, possibly a standard deduction higher, better definition of a middle class would go a long way in augmenting consumption. Consumption is important, because once you see consumption, that is how private investment happens, and it's a very virtuous cycle. Absolutely. All the efforts which have gone into Make in India and all will play out if there is demand in the economy.
Right. Thanks, Sanchita, for that. Let me go back to Mr. Mandal. Mr. Mandal, we heard about focus on PLI schemes that could happen in this budget as well. Typically, whenever we've seen focus on, manufacturing, we've seen at least the manufacturing stocks rally up. So, Mr. Mandal, in terms of pushing manufacturing, and you have the Trump presidency, you have the challenge of tariffs as well. So it's a tightrope walk for the finance minister. What are you expecting in terms of dealing, getting India ready to deal with the trade wars that could happen, and that face us and that face the world this year?
I think I couldn't hear what the previous speaker was saying, but I think the main change we are likely to see on the taxation side is not so much on, income taxes and so on. There may be some raising of the standard deduction, etc. But the main change I'm expecting is a reduction in tariffs. For several years now, this was going in the wrong way, but last year, the finance minister did substantially reduce tariffs in a range of goods, and I think that is likely to be taken forward, if I may say so. The main tax reform I am expecting in this budget is actually on the tariff side, in a sense also anticipating what the new Trump 2 administration is likely to demand. I mean, they have already been giving those signals. He has already had the conversation with Prime Minister Modi, where this was also pointed out. So I am expecting a reduction in tariffs, the main change in taxes. But that apart, the PLI scheme is likely to continue, but it's going to be also combined, I think, with the employment-linked incentive scheme. The government has been talking a lot about the need to prioritize employment. And so a sector, for instance, like garments, which is both labor-intensive and an export sector, you can expect either a PLI or an ELI extended to that sector or some form. But those incentives are likely to be there for export industries which are also labor intensive.
Right. That's right, actually, Nandita. You know, the world as we know it in terms of the economic model, it's completely changed. Trump has changed it on its head. Yeah. It's no longer about globalization. We have Ajit Mishra also joining us. Ajit, you know, your thoughts on how are the markets expected to open today? Are you optimistic? Are you ambivalent? How are you feeling this morning?
Good morning. So yes, we are seeing that market in the last 4 trading session has shown some strength. Means we have recouped some of its losses that market have observed of late. So, but yes, since we are closer to the resistance areas when it comes to the index, there could be a bit of a jittery, and plus the volatility is still high. We expect a volatile session for sure, but by the end of the day, probably we can see market resuming the direction. But as of now, I feel the upside seems capped, considering that we have already seen a decent run up, in run up to the budget. So there could be limited upside, but stock specific move can continue. Means yesterday we saw that some of these capital good name, defense, railways, they all were buzzing. So selectively stock picking is something that one should continue with in a market like this.
Ajit, hi. Nandita also joining in. How would you really look at banking stocks? Because we also have an RBI policy coming up next week. How would you be positioned in some of the PSU banks now? Because they have seen a fair bit of correction, and then after that we've also seen some bit of a rebound coming in. How are you positioned, private versus PSU? What would your pick be right now?
The rebound, some of these PSUs name. In fact, the banking sector, altogether has been outperforming the index, and we expect this outperformance to continue. Specifically, after the ICICI Bank numbers, we are seeing that across the banking pack and plus the liquidity measures that RBI have announced of late, all these things are turning positive for the banking and financial basket. PSU particularly, we expect selective, buying, considering that it's largely because we are in the middle of the earnings season also, and market is focusing more on those numbers instead of any other data or event to unfold. So as of now, selective stock picking like stock like Canara Bank, Indian Bank, SBI, they are comparatively positioned better within the PSU pack.
Renewables will be another pocket that will be in focus, right? Stocks like Tata Power, JSW Energy, NTPC Renewable, which is a recent listing, of course, Suzlon, Torrent Power. Would you be focusing in on these stocks, or would you be focusing in on capex stocks like L&T? What are the areas you'd be looking out for when it comes to stock picking?
Right. So within the capital goods space, yes. If you have noticed, Ananta, that in the recent past we have not seen any major participation. In fact, usually we see a buzz or a buying interest most of these capital goods names. But off late we have started seeing some traction. So NCC, L&T, these are some of the names in the capital good basket wherein we are seeing infra play doing well. Apart from that, stock from the renewable and the other related baskets, we are seeing selective participation. So largely, it's basically market is reacting more to the earnings as of now. And since we have seen decent correction across the board, selective participation can definitely be seen. Means Tata Power, we have seen decent rebound, and we expect this rebound to further extend. So yes, selective stock picking can be done within this space as well.
I just want to get in Gaurav and Bodhi in on the renewable energy stocks that we spoke about.
Right.
Since now that we have a Trump presidency, do you think India could also change course where it comes to incentivizing renewable energy companies or solar panels and so on, or do you think that India will continue to follow its policy of trying to become more energy efficient?
No, I think India will follow. The direction is absolutely clear which way we are going, and so far as the Indian government is concerned, I think the objective here is to move as much as possible from the focus and the dependency on fossil fuel. One marker of that was seen recently when the Prime Minister went to the Bharat Mobility Conclave show and made it very clear that electric vehicles is the future, and probably we are getting there very soon, which is kind of an a goading of the industry to the auto industry to actually shift their focus entirely on electric rather than those built on fossil fuel. So I would expect renewables to remain a primary focus area. In the budget, of course, you can expect some new allocations to come in, but so far as tax incentives and others are concerned, at least they're going to continue and probably get more amplified.
Bodhi.
No, so I think so I don't think the Indian government policy will change. The issue, I mean, there are two issues. I mean, if you look at the US, Trump is not saying don't buy electric vehicles.
Yeah.
One of his major financial backers, namely Tesla, is the world's, I mean, the US's biggest producer of electric vehicles. But he's removed the tax rebate for electric vehicles, and there is a general, and he's not also incentivizing the setting up of charging infrastructure, which is the main problem. I mean, the public sector grants to that. I don't think that's going to change in India. I think India will incentivize electric vehicles. The main incentive is that the 5% GST compared to 28% for others. And there will be some amount of subsidy for setting up of public infrastructure. As far as solar panels is concerned, no, I don't see any changes. In fact, I think well over 30% of our capacity, in fact, close possibly even as 35% or so is renewable energy. But the actual generation is 20%. So I think what might happen, I think what the big problem which is emerging with renewable energy, and again the economic survey which is refers to this, is some of the reasons why industrial production has been hit in places like Germany, is that if you rely too much on renewables energy without a dependable base load, which used to be provided by coal, then you will get problems. So you might see a lot of emphasis on nuclear reactors in the budget, on promoting nuclear power in the budget, which is non-polluting.
Right.
So is hydro, but hydro also has seasonality and other environment.
Right. Let's go back to Vivek Kumar, who's standing by. Vivek, yesterday's economic survey, in fact, we were talking about renewable energy and how the budget could incentivize or not incentivize the sector. Yesterday, the eco survey also flagged, the import dependency that India has when it comes to EVs, when it comes to its supply chain, and it batted for urgent localization. So, Vivek, to get your thoughts on the priorities for the Indian economy right now, because you have an opportunity in this crisis for India to step in when companies across the world are looking to tap into the China +1 strategy. So what would you like to see from that perspective, when it comes to accelerating private investment within the country and to bring in more FDI?
Two things. The economic survey actually lays out a very clear and a very audacious glide path for the government. What the economic survey attempts to say is that in order that private investment be unshackled in the economy.
Very clearly.
Yeah, so I think let's go back to Ajit then. Yeah. He's still here with us. Ajit, thoughts on real estate? This index has seen quite a bit of a correction, on a YTD basis as well, 18-20% kind of a correction. Any expectations in terms of, push on housing, PMAY schemes, anything that could be meaningful for the real estate pack?
So in fact, Nandita, in the recent run-up that we had in the realty pack, it was largely led by the bigger players, wherein they operate in the luxury segment. And in this rebound that we are experiencing in the state at present, also, we are largely seeing that that pocket is, currently witnessing decent amount of recovery or traction. So I feel that yes, there could be steps around affordable housings, which has been continuing for quite some time. But when it comes to the stock positioning, largely the bigger names are there better placed. Means stock like DLF, Oberoi Realty, Godrej Property. These are the stocks basically which are participating at present. So selectively in the other spaces also one can look at, but largely when it comes to the short to medium term approach, these stocks are something that one should favor.
Okay, I want to come to Bodhi then. Bodhi, in terms of banks, banks haven't really been able to take leadership when it comes to stock movement. There are a lot of issues, plaguing the banking system, liquidity, which of course RBI has announced a slew of measures to pump up liquidity, and we also have a policy coming up next week, a new governor at the helm. So, tell me, do you see room for monetary easing here? A 25 basis point rate cut, can that be expected? And would the RBI also look at another CRR cut, because last time they announced a 50 basis point. Since they have already announced a slew of liquidity measures, are you expecting another CRR cut and a 25 basis point rate cut going forward?
Certainly one of the two things can happen. The point is that the inflation rate hasn't really settled down close to the 4% rate. The other issue is which would so if you look at given the, I wouldn't say weakness in the economy, but given that the emphasis in the government is to speed up economic growth, and very clearly, as one of the speakers also alluded to earlier, the higher EMIs is one of the reasons for housing loans and so on, and is one of the reasons why consumption may have slowed down. There is scope for an interest rate cut, because the economy is clearly going through a soft patch. But what would argue against an interest rate cut is really the strengthening dollar and its corollary, the weakening rupee. So that is, I think, that would argue against it. So I'm not 100% sure that he would go in for an interest rate cut. He could, but it's not certain. But clearly, as far as there's possibility of a CRR cut, there have been measures to boost liquidity. But the fundamental problem that the banks are facing is really they're not able to get deposits. There are desperate measures they're taking to boost deposits. I think maybe some of us have received calls saying that to put more money in deposits, it is a lot of.
Could there be a tax rebate on deposits that could be announced today? I mean, could that happen?
You mean the interest on deposits?
Yes.
Well, see, generally this government has been, how many tax rebates can they give? I mean, we want them to cut income tax rates, we want them to cut GST rates, we want them to cut. So how much of a tax rebate can they actually give?
Right.
Beyond a point, I mean, because, and they are also expected by the markets to meet the 4.5% fiscal deficit target. So it's going to be a difficult task.
It is an unenviable position to be in.
Yeah.
We also have Sushant Bansali, CEO of Ambit Asset Management, joining us. Sushant, thank you very much and a very good morning. This is Shweta. Very quickly, Sushant, want to get a sense on the big capex and infrastructure stocks that you will be watching out for today, considering we are all expecting continued focus on Pradhan Mantri Gati Shakti, Bharat Mala and so on. So, what are the big stocks that you will be watching out for in this space?
I think overall as a thematic on both capex as well as capital goods thereby, because that's what will boost the consumption. The whole sector has been under, I would say, a bit of stress of late, especially in the current fiscal year. Last 2-3 years, the budgetary tax collections versus actual tax collections were lower. So actual tax collections were a bit higher, and that gave good room for the government to spend more on capex versus revex. Having said that, this year the collections have not been that different from budgetary estimates, and thereby limiting government's ability. Also, there were general elections, and that's why there was less spend in the first half of the year. will eagerly see how the latest revised budgetary estimates for the current year are, along with what are the budgetary estimates for the next year which government is planning. It should give I think the need of the hour is to give the push, but having made big promises, I think globally in terms of fiscal prudence, the government would want to continue on that path. But combining and marrying the two to boost the consumption through capex while maintaining fiscal prudence, I think there's some magic needed, and we're eagerly awaiting for this budget to decode that. The economic survey does, I would say a lot in terms of policy corrections, be it deregulation or be it opening and lowering the tariffs, etc. But the more, I would say, attention will be needed in the retail as compared to just listen to the budget speech.
Sushant, hi, Nandita also joining in. I want to understand where do you think the next leg of leadership will come from in the market? IT has taken the lead since last budget. That sector has outperformed by leaps and bounds if you compare it with other sectors, a 7 to 8% up move. But given the kind of commentary we've seen in terms of bottoming out of the worst on the revenue front, would you expect IT to continue taking the lead, because valuations aren't cheap, if you look at the performance of stocks. So in that sense, what are the comfort corners that really you'd be looking for, in the market, irrespective of, say, budget and any other event?
It carries, I think, a bit of weight from a short-term perspective. But over long periods of time, I think the structural firms are what matters. In the current context, I think the valuation comfort is definitely IT is one sector. Banking, I think, is another one where the valuation comfort is quite high. Few of the leaders have definitely not participated in the big rally which has happened in the last 3-4 years, and thereby calling for, I think, some comeback from those. So valuation comfort is there in many companies in that sector. Apart from these two, I would say the sectors which are continue to give good growth, be it pharma sector, that I think is again a good. The fourth one I would say is automobiles, especially two-wheelers, where I think because of rural recovery, which has been much talked about of late, there seems to be good recovery on that side, combined with a good export trajectory by the players who are exporting and created a good franchise. So these are the four sectors I would say where probably a good place to position oneself in the current context. The macroeconomy has been, I would say, stable but tough. It's not an easy playing ground. There's lots of competition coming both from unorganized as well as the smaller players to the large players, which was not there in 2020 and 22. But in the last few quarters, we have seen that, and that's why sales growth has been on the slowing trajectory in the last 5-6 quarters, while profit trajectory has now come down to almost 2 or 3 quarters to look at the data. The percentage of companies which are delivering 25% plus earning growth has shrunk to 1/3, which was more than 50% in the last 2 years. So it's I would say it's a stock pickers market. Sectoral trends definitely some help, but mostly it will be the stock pickers market in 2025.
Okay, let's also talk about the railway stocks, Nandita, because Money Control had also reported that this sector could get a huge allocation. We are looking at 2.9 to 3 lakh crore, budgetary support for Indian Railways in 25-26, which is a 15 to 18% increase in allocation. So, if you look at the railway stocks, why don't we get Sushant's thoughts in on that as well, the big railway stocks that he's betting on?
Yeah, railway stocks will be in focus, of course. As you pointed out, we have done a story that there could be an 18 to 20% kind of an increase in allocation as well, right? And of course, there could be higher spends for Kavach Bharat as well, and new Vande Bharat trains as well. Yeah. So a lot of these stocks like RVNL, Titagarh wagons, Bharat Electronics, all of these stocks will be in focus. But in terms of execution, that is something that the market will really be watching out for, because order books are strong. But how it translates into revenue, that's the next trigger that the market will really be watching out for in terms of stock movement. Because whenever they win order books, we see the stocks, the reaction on the stock prices, right? And much of that has already played out. So now, how much of the order book turns into revenue and how the execution is carried out, that will determine where really the market will, or how the market will really take it. But since Sushant is with us, Sushant, you said it will be a stock pickers market in 2025. Would you be looking at the railways and defense pockets now? Because, valuations have been a cause of worry here.
I think that story played out well in 2022 and 23. 24, especially the second half, has been tough. And as I earlier mentioned, the ability of government to spend has come down massively on the capex side in the last few quarters. And thereby, as you also rightly pointed out, that orders are coming, but revenues are not. And I would further take it that probably revenues might come, but cash flows will still be a bit tight. And ultimately, it's the cash flow which matters, and especially in all these capex-heavy companies, capex side, it's the cash flow which matters in long term. And historically, that has working capital along with the revenue generation from the order book perspective has been a big issue for investors like us. And we'll keenly watch, I would say, not just the next year budget, but even how much money has been spent so far, because that will tell us the true state of, I would say, government purse in terms of the ability of government to spend and not just avoid budgetary allocation.
All right, that's the view then. But, of course, yesterday we had the economic survey where the growth projections are in the range of 6.3 to 6.8%. But, of course, we need to grow at 8% to achieve that aim. But I think the Prime Minister spoke about the Viksit Bharat goal. Yeah. Let's first listen into him and then we'll carry forward this conversation with our guests as well.
और आज जो 20-25 साल की आयु के नौजवान है, जब वो 45-50 साल के होंगे, तब वो विकसित भारत का सबसे बड़े बेनिफिशियरी होने वाले हैं। उम्र के उस पड़ाव पे होंगे, नीति निर्धारण की व्यवस्थाओं में उस जगह पे बैठे होंगे कि वे गर्व के साथ आजादी के बाद जो शताब्दी शुरू होगी, एक विकसित भारत के साथ आगे बढ़ेंगे। और इसलिए ये विकसित भारत के संकल्प की पूर्ति का प्रयास, ये अथाग मेहनत, आज जो हमारे टीनेजर्स हैं, हमारी युवा पीढ़ी है, उनके लिए ये एक बहुत बड़ा तोहफा बनने वाली है। इस बजट सत्र में सभी सांसद विकसित भारत को मजबूती देने के लिए अपना योगदान देंगे। विशेष करके जो युवा सांसद है, उनके लिए तो सुनहरा अवसर है, क्योंकि वो आज सदन में जितनी जागरूकता, जितनी भागीदारी बढ़ाएंगे और विकसित भारत के जो फल है, वो तो उनकी नजर के सामने देखने को मिलने वाले हैं। और इसलिए युवा सांसदों के लिए एक अनमोल अवसर है। साथियों, मैं आशा करता हूं कि हम देश की आशा आकांक्षाओं के इस बजट सत्र में खरे उतरेंगे। साथियों, आज एक बात आपने जरूर नोट की होगी, मीडिया के लोगों ने तो जरूर करनी चाहिए। शायद 2014 से लेकर अब तक शायद ये पहला पार्लियामेंट का सत्र है कि जिसके एक दो दिन पहले कोई विदेशी चिंगारी नहीं प्रगटी है। विदेश में से आग लगाने की कोशिश रही हुई है। 10 साल से 14 से देख रहा हूं, हर सत्र के पहले शरारत करने के लिए लोग तैयार बैठते थे और यहां उसको हवा देने वालों की कोई कमी नहीं है। ये पहला सत्र मैं पिछले 10 साल के बाद देख रहा हूं कि जिसमें किसी भी विदेशी कोने से कोई चिंगारी नहीं हुई।
All right, that was Prime Minister Modi on the Viksit Bharat vision, really. But I think let's go back to our guests now. It's 8:37 on the clock, counting down to the FM speech. Let's bring in Ambarish Baliga, market expert, who's joining in. Ambarish, hi, great to have you on the show here. Of course, a balancing act, that's something that we'll be watching out for from the finance minister. Fiscal prudence, growth, everything else is fine. But from the market standpoint, I want to talk to you about the volumes in the cash and F&O market. They've declined significantly, and we also had SEBI coming out with measures to curb the frenzy that was building up in the derivative segment as well. And aside of that, we also had a securities transaction tax increase in the last budget. This budget, any chances that the government could do away with STT? I mean, is there an expectation building on that front to perhaps boost the volumes that have been flagging in both the cash and F&O market?
No, I mean, see, after increasing STT, I don't expect the government to go back on that. I mean, just to increase volumes in the market. I don't think that's the focus area for the government. And I mean, clearly, they were bothered about the sort of volatility, especially SEBI was bothered about the volatility in the like in the markets and the way the markets had moved up. Most stocks also had become quite expensive. So I think there are measures taken for that, and I don't think that will be reversed immediately.
What, according to you, could be a major disappointment? Because expectations per se from a market standpoint are fairly subdued.
Right.
What is it that could come as a big disappointment this time?
See, I mean, clearly there is an expectation that there would be some decent SOPs for the middle class and the salaried, which again from a market perspective will leave enough cash in the hands of the public for consumption, which we have seen has declined quite a lot in the last 3 to 4 quarters. And the other thing is on investments, because the extra cash flow goes for consumption as well as investments. So if in case this happens, it will be taken positively by the markets. And again, as usual, we would be expecting those higher spends on infra, railways and defense, which again would be required, which is a catalyst for the economic growth to come back. Because if you're talking of Viksit Bharat 2047, as mentioned in the economic survey, we need to grow at 8%. And if we are growing at that 6.4 to 6.8, the gap will keep on increasing. So either 2047 becomes possibly 2060, or we have to grow at a much faster pace. But then at the same time, if we have to grow at that fast pace, if you're talking of long-term gain, then generally we see that there's a short-term pain as far as the measures are taken. And the markets generally don't take that too well. It could be good for long term, but markets also look quite a lot at the short term sort of an effect. And that may not be taken really well by the markets. And although, like rightly said, that the markets have been correcting for the last couple of months, but then the last 3 or 4 days, we have seen a spirited rally, about a 700-point rally on the Nifty. So clearly, there would be some expectations from the budget. And in case it's lackluster, you'll again see the markets getting back into that correction mode.
We'll again see the markets getting back in correction more if it's a business as usual kind of a budget. But let's also bring on board Sameet Chavan, Head Research Technical and Derivatives at Angel One. How are you positioned, Sameet? Are you on the short side or the long side? Because yesterday we saw a good up move coming in over the last week as well. We've seen a 2% move after a prolonged correction. So how are you really positioned? Would you be on the long side or the short side?
Good morning. If you recall, 3 weeks back, we had a discussion when we were somewhere around 24,100. We had given a pullback, and we were of the opinion that once we would see the territory of sub 23,000 in coming days. Okay. And our view was 22,800, 23,000 on the Nifty, and last week we saw Nifty testing 22,800, which is the important support of falling wage. Which is clearly displayed on the daily time frame charts. At this juncture, ahead of the budget, since we are quietly oversold, we have already corrected more than 12% in benchmark indexes. Small and mid cap indices have corrected more than 18%. At this juncture, we would remain cautious. We have a few levels in our mind: 22,800, which is the recent bottom, followed by 22,400, which is the next important support if you look at the weekly and monthly time frame charts. So in case of any aberration, we might see a knee-jerk reaction towards last week's low, 22,800, and even towards 22,400. But we would see some sort of respite coming in towards 22,400, 22,800, so which is the very strong support zone according to us if we have to take slightly medium-term view. So we would remain cautious since market has already given a pullback of nearly 700 points in last 3-4 days ahead of the budget. We would remain cautious. So 22,800, 22,400 on the low side, and on the higher side 23,800, 24,000. These are the important levels to watch out for. So till the time we do not surpass 24,000 on a closing basis, we are likely to see some supply at higher levels. But once 24,000 is taken out on a closing basis, we would see this correction getting arrested, and then probably we might see a next leg of the rally. But as of now, we would see this broad range wherein 23,800, 24,000 on the higher side, and 22,800 and 24,000 seems to be a very strong support.
We have Finance Minister Sitharaman, who has left her residence now. Of course, she will be presenting a very tough budget, a very tough balancing act, a tightrope walk, so to say, Shweta. Fiscal prudence, and how she plans to really boost consumption and boost household incomes as well. Absolutely. Because they haven't really gone up. Any tax changes, that will be
significantly. Nandita, also, it's the first full budget of the third term of the Modi government. 3 terms, Sanjeev. It's almost like a historical moment. How often have finance ministers have had this opportunity to really present 8 consecutive budgets? I think it's quite commendable. So all the budgets you've tracked, Sanjeev, what are the key things that you're hoping to get from this budget speech? The key things that you are going to be looking out for.
What I'm looking out for is dependent on the context, the economic context. There is a sense of resignation that we are stuck in that 6 to 7% GDP growth range, which is clearly inadequate, because yesterday the economic survey said explicitly that we need nothing less than 8% for quite some time. So I would look for 3 things in the overall speech. First, a sense of direction on getting rid of this regulatory cholesterol. It's not a novel suggestion that we saw in the Economic Times. I'm sorry, Economic Survey. Something in terms of intent that needs to come through, because the first part of the speech has a lot of stuff that addresses different political constituents like farmers and other parts of the social bloc. But we need to see something for the private sector if you want to unleash animal spirits and so on. And so we've not really seen it in the last few budgets. It's something that is a little more convincing for them. Second, on the fiscal part, there was a suggestion in the last budget that 26-27, that financial year onwards, the focus would be on the debt to GDP, central government debt to GDP ratio, and the fiscal deficit would be adjusted in such a way that that keeps coming down. I think that's a far more important ratio than just the fiscal deficit, because government, state, center, their accounting system is cash based, where you can kind of, some stuff can be slipped below the line. So the debt to GDP ratio is by far the more important one, and I think that'll be more convincing for the rating agencies, because that's they can't complain about that. And I would like to see, given the fact that while private consumption this year, in the ongoing financial year, certainly picked up, it can do with a boost and now that the Prime Minister has invoked Lakshmi.
Yes.
So I think
we will have Mahalakshmi right here in the studio in the next 10 minutes or so.
So I think it's reasonable to expect something on the tax slabs. And I see that while a lot of people, I think you need to be a little careful with the old regime, because it can be very disruptive if they make some sudden changes for the for insurance companies, for instance.
Sure.
And they're very big investors in the debt market, and so they've done the transition. I think this is one of the highlights of Nirmala Sitharaman's term as a finance minister. They've done the transition well, I would say, because last year she said more than 2/3 of the taxpayers have already switched to the new regime. I think for the younger people getting into the job market who are still in an early stage of their career, it is by far the better scheme. For older people, I mean, it's, you've made a certain life cycle plan based on it, and you just can't change the goalposts very suddenly for them. But they probably need to provide another couple of incentives, change the slabs a bit, something that puts a little more money in the hands of the taxpayers.
Right. Sorry to cut you off. We also have another guest joining in, Aditi Nair of ICRA. Aditi, hi, good morning. Thanks a lot for joining in. Do you expect the government do you think the government has enough fiscal room to boost consumption, or do you think they will let monetary policy handle that? Let's take that question with you first.
And the fiscal math, we think that in FY25, they're going to be just under that 4.9% of GDP for the fiscal deficit, based on the data that we saw yesterday for the first 9 months. And we think that the government should target a fiscal deficit of around 4.5% of GDP for FY26. Now, within that, the expenditure space that is there for providing a stimulus to growth is obviously, it's moderate, it's not huge. Now, most of that we believe should be really kept toward capital expenditure, particularly in this year. We believe that the budget estimate for capital expenditure should at least be brought back to the budget estimate for the current year. And that would give us a moderate space for increasing revenue expenditure. Now, when looking at a situation where the pay commission has been having an impact on fiscal balances from next year, the Finance Commission's recommendations are also expected in the middle of the year. I'm not sure this is a very good time for the government to be getting into any kind of a multi-year entitlement program. That is something that should wait until they are able to figure out the fiscal contours based on the pay and the finance commissions. So consumption boost from this budget would have to be limited, I'm afraid.
Right, Aditi. Hi, Shweta here. Aditi, very quickly, I wanted to get a sense from you on what you saw in the survey yesterday, in the Eco survey. It laid out a lot of things that are working well for the Indian economy, whether it comes to a pickup in capex or even manufacturing or construction, for instance. So, the big levers that you are expecting Ms. Sitharaman to press on in this budget?
So definitely big, as much push to capex as is possible within the fiscal constraints. Second, some modification on the tax side to be able to provide some leeway in terms of higher consumption to the taxpayers, with, of course, the caveat that we don't want to lose too many people out of the tax net. And then, of course, continued rationalization of expenditure to be able to provide money for schemes, addition for existing schemes, and perhaps some new schemes as well that may not be very long-term in nature or very big-ticket in nature. But expenditure rationalization has been a theme that we've seen from this government for a long time as well. Even the CSS schemes, the way that they have moved over a period of time to a just-in-time payment release for CSS schemes, which has also been very good for the Government of India's cash management. So I would expect to see more such, measures coming through in today's budget.
We're not talking about disinvestment.
Exactly. We've really fallen short on that front. I think in the last 3 years, we've just achieved 22% of the target.
Barely.
Yeah, barely.
So, it's not been a priority for the government, or, there is another narrative that has emerged that disinvestment is not a
priority area right now.
A gap measure. So, have the markets factored in that? Nandita?
I think this time around we will be looking at some bit of a upping of that target because as we mentioned, as we spoke about it, that's really not been happening, and I think that roadmap, whether or not the government brings back that as a priority area, is something that the street will be watching out for. Right. Although I haven't heard a lot of experts.
You want to go back to Amrish maybe and check with him?
Yeah, sure. Amrish, are you there with us? Amrish, if you can just take that question, will the government really bring back divestment on the agenda?
I don't know, but then they should, because you just see the number of promoters who have lined up for IPOs. Looking at the way the markets have performed in the last 4 years, if you look at the sort of IPOs which had come in the last 12 to 18 months, it was record. The only thing missing was government divestment. This is a great time to divest. I don't know why the government has not been utilizing this opportunity.
Point, but I think on that note, let's take a break. We've been on and on since 7 in the morning. I think all of us here need a break. And of course, as we step into a break, let's listen into what the broad expectations are from the Finance Minister this time around.
इनको मिडिल क्लास लोगों के लिए सोचना चाहिए। जो मिडिल क्लास है ना, उसका कुछ नहीं हो रहा, वो बस रोज का कुआं है, रोज का पानी है।
हमको एक्साइज ड्यूटी जीएसटी ज़्यादा नहीं बढ़ानी चाहिए, हमको प्रोडक्शन अधिक करवाना चाहिए। सरकार को यही है कि जितना जितना बजट है वो एजुकेशन सेक्टर में लगाएं, जिससे लोग जो हैं अच्छे पढ़ें। आजकल एआई बेस्ड सिस्टम आ रहा है और इसमें हमारी भारत जो है ज़्यादा प्रगति भी कर रही है, और ये प्रगति जरूरी भी है कि हम वर्ल्ड से जो है मैच कर पाएँ। एआई इज़ वन ऑफ द थिंग्स जो लोगों के अंदर खुशियाँ लाती हैं। मतलब सबसे अच्छा यही है ना, डाटा कंपाइलेशन। जितना अच्छा डाटा कंपाइलेशन होगा उतनी ज़्यादा अच्छी पॉलिसी भी आपकी बनती है। तो डाटा कंपाइलेशन में जो है ज़रूरी है कि एआई का आप सरकार उस पर ज़्यादा से ज़्यादा खर्च करें, हमारे स्टूडेंट को ज़्यादा से ज़्यादा उस पर ट्रेंड करें और अपनी टेक्नोलॉजी में भी ज़्यादा से ज़्यादा सुधार करें।
आई पर्सनली थिंक कि यदि गवर्नमेंट कुछ ऐसे हमें ग्रांट्स लाइक फंड्स ग्रांट करे ईयरली बेसिस पे ही सही, जिसके थ्रू हम न्यू टेक्नोलॉजी सीख सकते हैं, और ज़रूरी नहीं है कि इसे बहुत ऐसे बड़े लेवल से लाइक सिखाना ज़रूरी है। इफ़ ही इवन कुड गेट एक्सेस टू रिसोर्सेज और प्लेटफॉर्म्स जहाँ पे हम बहुत बेसिक लेवल पे ये सारी चीज़ों के ऊपर पढ़ना शुरू कर दे, तो आई थिंक विद कमिंग टाइम हमारे पास भी लाइक बहुत सारी लड़कियों के पास एक ये तो टूल रहेगा जिसके थ्रू दे कैन एक्सप्लोर देयर करियर अपॉर्चुनिटीज एज वेल, एंड एनी अपॉर्चुनिटीज दे आर सीकिंग विद इन देयर वर्क विद AIML।
मैं खुद एक बिजनेसमैन हूँ, और जिस तरीके से हम लोग काम कर रहे हैं और जीएसटी का जिस तरीके से हम लोगों के साथ, हमें समझ में ही नहीं आता कि 18% जीएसटी है और इलेक्ट्रॉनिक्स पे जो हमारा बिजनेस है उस पर 28 है। तो ये कैसे सर्वाइव करेंगे? और बजट जो है ना, इनको मिडिल क्लास लोगों के लिए सोचना चाहिए, क्योंकि ये बड़े लोग तो कैसे भी निकाल लेते हैं। उद्योगपति को तो आप उनका बिजनेस तो टॉप पे ही जा रहा है, जो बड़ा है वो बड़ा ही है, जो मिडिल क्लास है ना उसका कुछ नहीं हो रहा, वो बस रोज का कुआं है, रोज का पानी है।
मिनिस्ट्री में बहुत सारी मिनिस्ट्रीज होती हैं, लेकिन हमारे पास पैसे कुछ कम पड़ जाते हैं। पैसे को आपको जो है बढ़ाने के लिए इनकम टैक्स ज़्यादा नहीं लगाना चाहिए, हमको एक्साइज ड्यूटी जीएसटी ज़्यादा नहीं बढ़ानी चाहिए, हमको प्रोडक्शन अधिक करवाना चाहिए। हमको प्रोडक्शन जब करेंगे जब आप एक अच्छा इन्वायरमेंट देंगे। इन्वायरमेंट आप तब दे पाएंगे जब आप रिजीम को ढीला करेंगे। रिजीम में आपको कभी किसी प्रकार का जो है ऐसा रिजीम नहीं बनाना चाहिए जो रेस्ट्रिक्टिव हो।
Women who are like doing a job as well as they are like managing their entire family, their kids. So for me, according to me, like with the upcoming new budget, I want this thing in the budget that there should be some relaxation in the tax slab, like any kind of relaxation if possible, so that women could get opportunity.
आज बजट सत्र के प्रारंभ में मैं समृद्धि की देवी मां लक्ष्मी को प्रणाम करता हूं। और ऐसे अवसर पर सदियों से हमारे यहां मां लक्ष्मी का पुण्य स्मरण किया जाता है। सिद्धि बुद्धि प्रदे देवी, सिद्धि बुद्धि प्रदे देवी, भुक्ति मुक्ति प्रदायिनी, भुक्ति मुक्ति प्रदायिनी, मंत्र मूर्ते सदा देवी, मंत्र मूर्ते सदा देवी, महालक्ष्मी नमोस्तुते, महालक्ष्मी नमोस्तुते। मां लक्ष्मी हमें सिद्धि और विवेक देती है, समृद्धि और कल्याण भी देती है। मैं मां लक्ष्मी से प्रार्थना करता हूं कि देश के हर गरीब एवं मध्यम वर्ग समुदाय पर मां लक्ष्मी की विशेष कृपा रहे। साथियों, हमारे गणतंत्र के 75 वर्ष पूरे हुए हैं। और ये हर देशवासी के लिए सर्वाधिक गौरवपूर्ण है और विश्व के लोकतांत्रिक जगत के लिए भी भारत का ये सामर्थ्य अपनी एक विशेष स्थान बनाता है। साथियों, ये देश की जनता ने मुझे तीसरी बार ये दायित्व दिया है और इस तीसरे कार्यकाल का ये पहला पूर्ण बजट है। और मैं विश्वास से कह सकता हूं कि 2047 जब आजादी के 100 साल होंगे, विकसित भारत का जो संकल्प देश ने लिया है, यह बजट सत्र, ये बजट एक नया विश्वास पैदा करेगा, नई ऊर्जा देगा कि देश जब आजादी के 100 साल मनाएगा तब विकसित होकर रहेगा। 140 करोड़ देशवासी अपने सामूहिक प्रयास से इस संकल्प को परिपूर्ण करेंगे।
Hello and welcome to Money Control. It's 9 a.m. just about that on the clock, and we are just 2 hours away where Budget 2025 will be laid out. It's a record 8th budget for Nirmala Sitharaman, and it's unlike any other budget. It's not a simple P&L anymore. This budget comes at a very crucial time. The Indian economy, while being amongst the fastest growing, has shown considerable signs of slowing down. The GDP growth for the current financial year is said to be the slowest since COVID-19 pandemic, driven by the inability to spend by the great Indian middle class. Now, considerable amount of geopolitical uncertainty with Trump back in office, also his trade and tariff policies vis-a-vis India. So, like I said, not your usual balance sheet to be put out by the finance minister. The focus will need to be on job creation, on boosting the middle class, and also present a roadmap to revive the economic growth. I'm Sonal Mehrotra Kapoor. You are tuned in to the budget headquarters here at Money Control, and joining me is the Money Control Markets Editor Mahalakshmi. And over the next few minutes, ML, we are going to be understanding how exactly is the excitement building up even on Dalal Street. We've got lots of guests also lined up.
Absolutely. So, Sonal, the first thing is that, you know, all the time, all these years, we have always said the finance minister has to walk a tightrope walk and balance growth and fiscal deficit. This time, there is this consensus building up that the fiscal path the finance minister will stick to, the 4.5%, which is the big number every time, everybody, the macro, don't change it. That's the consistent consensus message, and that's what I'm worried about. When there is so much consensus that 4.5%, everybody believes she's going to stick to that. Will she stick to that? Second thing is the Prime Minister saying, pointing to the poor and middle class and invoking Lakshmi. Is that a giveaway that there is something coming in terms of tax reliefs? And let me give you just one big number that everybody should know. It's very simple math. If you keep the fiscal deficit target at 4.5%, and if you were to keep everything around the same, the capital expenditure budget at 11.11 crores for next year, essentially you have a headroom of about 30,000 crores that gets released in the budget, which you can
just
give away.
Hold that thought, ML. Very interesting bits, and I loved how you've opened the show by just putting perspective over there. If we can go back to those shots, please. That was the Finance Minister Nirmala Sitharaman going in and reaching the Finance Ministry. And at this point, we are expecting her to go inside, meet with her team, then come out and present that budget tablet. Those are the pictures on your screen. She has just about entered the finance ministry over there. She's going to recoup with the team, then come out, present that budget tablet and make her way to Parliament for the 8th consecutive budget. Lots is riding on this. But, you know, ML, I have a very streets view on this. People watching us want to know only one thing on the day of the budget. What about our taxes? That is the crucial be-all and end-all of this budget. Every year when the budget comes in, we talk about tax cut hona chahiye. Idhar, you know, aam aadmi ko relief milna chahiye. But never before has there been a better case for it. Look at the consumption slowdown, especially in urban India. So it's a 2% of taxpayer who's yearning, really looking at finance minister and saying, give us some relief.
Oh, absolutely. So that's the math I was coming to. So if you keep all things equal, you have a headroom of about 30,000 crores. Practically, you have about 3 crore taxpayers. Mota moti, just divide it. There is 10,000 rupees that everybody can hope to get out of this budget if there is some kind of calibration of taxes. Now, from a stock market perspective, there is another number. Suppose I was talking about that 4.5% fiscal deficit target. Suppose she were to sort of prioritize consumption and prioritize the fact that there is some kind, acknowledge the fact that there is stress at, you know, in two sections of the society, the middle and the poor, and she were to do more. That means the fiscal deficit target will have to be scaled down from 4.5% for next year to say 4.3% or 4.4%.
Right.
Each percentage point is 30,000 crores, roughly. So you have 30,000 crores
or 60,000 crores or 90,000 crores, all other things being equal.
All options have been laid out. All the finance minister has to do is listen to those numbers. But enough of us talking. Let me bring in our first guest. Joining us this morning is Manu Bhatia, investor and trader, is joining us at this moment. Good morning, Manu. Thank you so much for joining in. It's unlike any other Saturday where we're not just discussing budget, we're also discussing how the markets are pegged to open. We've seen considerable sort of rocky, mood in or sort of a somber mood in the markets. Today morning, as Nirmala Sitharaman steps out with that budget tablet, what are your big hopes?
So, as you rightly said, past few months have been a bit on the downside on the index, and most of the investors, traders have struggled. So, with the start of this month, there are a lot of expectations that we get some relief on the budget side, which can propel the markets up. On the budget day, generally what we've seen over the last few years is that mostly we get a range-bound volatile movement. So, so that's what we can expect today as well. Rarely do we see...
Manu, actually, while you say that, I'm just going to give a cue to my producers to pop up the graphic which gives us a good view on how markets have fared over the last 10 years on the day of the budget. And it tells you a very interesting story. ML's team actually put that data together. And ML, any specific highlight that comes out on the day of the budget, what is the market movement generally like?
No, I think we put out the story right in the morning also that over the last 10 years on 6 days, the budget actually, was bad for the market. So it was in negative territory. But I think what we should focus on asking Manish is, Manish, how is how is the derivative market positioning this morning? Last 4 days, we had very strong markets, but before that, for 4 months, we have been sulking. We have had the steepest correction since 2002. Last 4 months, very grueling for markets. At least if you look at the post-pandemic period, we have, people who have tracked markets for 20 years have seen much, much worse. But tell me, how is the trade setup looking today?
So, on the budget day, generally, we start off with a high volatility. And what we can expect as the speech goes through towards the end, the volatility to come down. So the trade setup generally on the budget days is to short the volatility in the first half. Shorting volatility can be done via various ways. I mean, we can do a straddle on the index or strangles iron condos and such. So that's the trade in the first half. And if you get something nice, positive on the from the finance minister, then during the second half, it's generally a trending move that can be expected.
In terms of, what could the day end like? Are there any cues? Purely going technically.
Technically, we should end in green is what my charts are saying. It's been a rally in the past 4 days, and I expect this to be a flat to slightly positive kind of a day.
Particular trades or charts that are looking nice to you? Good from a momentum perspective.
Sure. So as I said, so on the budget day, it's mostly the short vol trade that goes in, and charts. I mean, it's more like a choppy movement, so it's very difficult to actually catch any good momentum as such. Most of the momentum generally comes after the budget day. So on the budget day, one good strategy is to keep your position size low or not trade. And if someone has to kind of take those trades, then the consensus or the general trade is on the short wall side.
Right. Manu, just hold on to that. I'm just going to request our producers to bring up live visuals that are coming in from the Finance Ministry. The Finance Minister has just stepped out with the budget tablet in hand, the Bahi Khata as it used to be, now in a tablet in that red envelope along with her team. She's just about making her way to Parliament. And the timeline goes something like this. At this point, we know that she's going to step out and leave for the Parliament at around 9:40. is when we expect the President House to also be leaving. Those are the visuals coming in at this point from Finance Ministry. At about 9:40, we are expecting the President to make their way, and 10 a.m. again we will see the Finance Minister there in front of Parliament, and 11 o'clock, right after the Union Cabinet meeting on budget approval has happened, is when we will hear her speech. I'm told we also have other guests joining us. Feroz Aziz is with us, Deputy CEO. Hi, good morning, Feroz. Can we quickly get an understanding from you? We are minutes away from markets opening. If you look at the graph that we've pulled up on the past 10 years, it doesn't really paint a very good picture. So what is your expectation on how the markets will react to this budget, or at least open up?
See, I think if you look at how the market would react, if I break it down into smaller components, of course, we're speaking of really short term probably today. There is more skew towards positive than negative because everybody has gone light. FII has gone light in the index futures, have gone light on the cash market. You've seen a very large selling. Most prop FIIs have emptied their stock holding. That's what has happened in January. The index fund FIIs have held on. Prop FIIs have almost emptied most of the small cap stock they had. So they're going light. FII got almost about 350 crores in small cap funds alone yesterday, which is an algorithm which we track in, because small cap is a great barometer of sentiment on the domestic side. There were a net purchase of individuals in small cap funds yesterday. So that's good news. Third, retail hasn't sold too much because retail doesn't sell their stock at 30% lower unless it's from a margin funding book. So most of the three big players, which is retail and others, HUFs and corporates, is one big daddy. The second one is DII, and third one is FII. So if I compartmentalize, all of them have gone reasonably light before into the budget. So that's why you would see day before yesterday, FII short futures was 88.9 and 11 was long on 30th of Jan, and that's where you got some degree of short covering yesterday. So we're still above 80. So that's a reasonably good mark to go into an event like this rather than over leverage long positions.
Specific sectors and stocks that you were watching out for today, which ones would those be?
See, I would be watching out for transport, defense and rural development kind of stocks because those are the three big heads of expenditure. If you look at last year in the fiscal, for this fiscal financial year, you look at about 11.61 crores of interest expense. The next three is transport, defense and rural development. They have taken a large chunk of almost about 30%. If that were to increase, then you get some fillip on these stocks, which are government expenditure dependent.
Feroz, you said today should be a positive day, but do you see this as a turning point of some sort? Because last 4 months, it's not been good for the markets. In fact, we lost nearly 17% from top to bottom during this correction. Now, of course, last 4 sessions have been great. Have we put the worst behind for this year? Would you say that? Or does this budget even have the power to do something like that?
Think that yes, it's not a very difficult thing to predict if as long as you break it into smaller segments of the market. If you remember on 4th June when the counting on the election day, I told you that 21,000 is going to be the base of the market. Even when the counting was progressing at 11 a.m. in the morning, that was on a certain 4 parameters which I checked. Their predictive capability is reasonable. At least it tells you what it can't fall to. It can't tell you where it goes, but at least it tells you where the bottom is, where you will not go below that. So if you look at how we are poised, I think the worst is behind us. Now, worst does not imply that markets can't fall 3-4%. Market falls 10% every 9 months in the last 24 years. Now, if you look at the broader market, which has been the biggest party spoiler over the last 1 month in January, where the small cap index is down about 11-12%, that was only because of 7, 8, 10 FIIs who are prop traders who emptied brutally their positions. So on the small cap and the mid cap space, I think the worst is behind us. And when I say worst is behind us, doesn't mean that the index can't slip by 1%. Worst is behind us, by which I mean 3-4%, 5% moves, short-term moves are always possible. But knife free fall kind of catching the knife kind of falls, you will not get.
All right, Firoz, markets have just opened. I'm going to request the producers to put up or go full screen on those numbers coming in. Markets have opened up this morning on a relatively positive note. I'm just going to cut across to Nandita as well to give us more details on how exactly it's faring. At the moment, we see BSE up about 17 points. At this moment, we are seeing numbers sort of come in. And markets have opened up. Kotak Mahindra is up over there. More numbers trickling in. While we bring those numbers out, let me go back to Firoz and also Manu with us. Manu, any particular stock sector that you're watching out for?
Not really. So on the budget day, it's best to kind of not take too many bets, and only post the budget is when we get more clarity as to what are the sectors and stocks that will benefit. So that's not something that I'm looking at right now.
Firoz, for you, FMCG, is that a space, consumption, that could actually be a driver?
Yes, I think depends on how long you want to play these sectors for. I think consumption as a sector is surely going to be one of the sectors, because the government is again going to focus on more money left in people's bank accounts rather than deciding for themselves in terms of kahan paise dalne hain. The government has always taken the route of forcing people towards debt investments to fund the fiscal deficit. I think we are reasonably comfortable, especially with the foreign guys funding our debt side. I would say consumption is a theme which will play out in the next 2-3 years of this Modi government 3.0. So that's one thing I would definitely look out for, because the new tax method of computation of personal income tax leaves a lot of money in hand. And I think if there is going to be more impetus to that, consumption is one thing, both on the rural and the urban side, should get a push. And in turn, any consumption-driven stock for a structural re-rating is a great possibility.
All right, we're also getting in live visuals at the moment, I'm told, from Finance Ministry. While we continue to look at them, let me also just cut across very quickly to Nandita to give you an overview. So those are the pictures on your screens. Finance Minister there on her way to present the first full-term budget for her, the 8th consecutive one as well, with her entire team, and flaunting that Bahi Katha turned into an iPad, making her way to the Parliament. So that's Finance Minister coming in. Nandita, while we look at these pictures and markets are also opening up this Saturday morning, what are the big sectors to look for?
Hi Sunal, it's a working Saturday across the board, of course, and markets, of course. Second time that the budget is really being presented on a Saturday, full trading day, and we've started the day on a positive note, mildly positive, so to say. But remember, yesterday we had a very strong rally coming in. In fact, over the last 1 week, Friday to Friday, we've seen the Nifty rallying to almost 2%. And mind you, that comes after a prolonged period of correction since that started in October. But of course, today, 5th straight day of gains coming in. We are looking at the Nifty up somewhere around 14 points or thereabouts. So we are holding on to that 23,500 mark at the start. The Sensex as well, 77,577 on the screen right now. But let's take a look at the sectors that are taking the lead right now, because important to watch out will be the capex related stocks, the consumption stocks that have been under pressure in the wake of the urban consumption slowdown. So looking at that, the FMCG pack is trading with caution right now. In fact, that's among the sectors which aren't doing all that well at the current juncture. Trading in the negative zone, almost 0.2% kind of a drop coming in on the FMCG pack. Look at the auto pack, that's holding on right now. The Nifty Bank Index is extremely flat. Look at the IT pack, even that's extremely flat. So right now, early days to really say which way the market will move, because of course after the FM speech or during the FM speech, we may see some volatile spikes in the market, which typically happens on a budget day. But in terms of what's doing well on the index, IndusInd Bank, that's the top Nifty gainer at the current juncture, reported numbers yesterday reacting to that. Some pharma names are doing well. So you have Sun Pharma, you have Bharat Electronics, NTPC, Adani Enterprises, Trent, Apollo Hospital. these are some of the gainers on the index. What's not doing well, are some of the auto names, as I mentioned, auto holding out, but Hero MotoCorp, that's a top laggard. Some oil and gas names are not doing well. OMCs will be watched out for, given the fact that, if there is any kind of LPG subsidy announcement or not, that's something that that is something that of course will keep oil marketing companies like ONGC, I beg your pardon, IOC, HPCL and BPCL in focus. So right now they are trading with losses. Let's see if there are any announcements to that effect. Aside of that, among the losers, you have Maruti Suzuki. Tata Consumer, that had a good reaction to results, is under pressure right now. And aside of that, if you look at, I want to just pull up some of the railway stocks as to how they are doing. Because we did a story that there could be an 18 to 20% kind of a increase in railway expenditure. So, want to see how stocks like BEL, RVNL are faring right now. Also, stocks like L&T should be in focus, in the wake of the government's capex announcement as well. What kind of an uptick we'll see in the government capex that really had slowed down in the first half. That's expected to pick up. So stocks like L&T should be in focus. But right now, as I had pointed out, BPCL, Tata Consumer, Wipro, these are the top laggards. Sectorally, most of them are trading in the green, but FMCG pack is in the red, and so is the oil and gas basket. So that's the, that's the really scene with the markets right now. But let's see how things really progress, because early days to really say which way we'll head. But once the FM speed starts, we'll really know how things really pan out. But with that, I think Sonal, back to you.
Talk about one particular stock that has got everybody's attention, ITC. It seems to be one that is a major giveaway on how the markets will actually react. Also, FMCG sector on the whole being in such focus. If you could take us through how that's doing this morning.
So ITC, that stock, the most important stock, if you ask me really from a taxation perspective, there hasn't really been an excise duty hike on cigarette for the last 3 years. So this time around, there is chatter that there could be a hike, and if it is in excess of 10%, that will be viewed as a negative by the street. So right now, ITC is trading up by 2.5%. But which way it moves, of course, will really depend on how things pan out in terms of cigarette taxation.
All right. Thank you so much, Sandhita, for joining us. We've got other guests also coming in. Rohit Srivastava joining us. Good morning, Mr. Srivastava, and welcome to Money Control. Big day, big Saturday. Markets have had sort of what do we call it? Is it a volatile start, ML, or what?
No, it's a flat start.
It's a flat start. It's a flat start there in for the markets. Rohit, your first observations today.
Yeah, I think the markets already rallied a bit on anticipation that things might not be so bad, or there could be some positives out of this because the government would want to get the markets, perked up again. So that hope is definitely alive. How big will it turn out to be? That we will only come to know later. But surely it can be sector specific rather than broad based. So there could be. It's more about how they allocate money to different areas that will be in focus. Not sure, given the fiscal deficit targets, whether you can have something broad based for the market. But in any case, the markets were very, very oversold. So there was a good reason for them to try and make some comeback. What the budget can do is only further fuel that on the upside. Let's see if that happens.
Infrastructure, one is looking at FMCG.
Yeah, that's, I think, the focus area, because anything happens on income taxes for the public at large, the middle class, it directly reflects on your consumption side stocks. And I think FMCG was the first sector to really top out and fall from September onwards. And in that sense, if I actually look at the 1 month relative performance, FMCG is holding out the best also, because it fell first and now it's sort of basing out. And any kind of positive can sort of flip it further to the upside. So I do think there is a case for FMCG stocks to actually do well. Pre or already done a bit well, I think, yesterday, and post budget also we could get triggers for it to continue for a while. So that's, I think, one key area, consumption, which can drive up consumer stocks from here a little further as well, because of both the technical condition and possibly what may come out of the budget on the consumption side.
Rohit, you have been a bit of a contrarian over the last 2 years. Every time the market's selling, you say that the bottom could be near, and every time the market's rallying, you think, you take a opposite call. Right now, for 4 months, we have sold off a lot. For 4 days, we have sort of come back. Have we put the worst behind for this year? Do you see this as a turning point? Which sectors and stocks? Sonal asked about FMCG, but all the stocks that have seen deep cuts over the last 4 months, infrastructure pack, which is also essentially done well only on the back of public spending. Do you see a reversal there?
Yeah, the thing is, earlier
government spending has been the main driver of growth. And the hope is that that spending continues. Now, while it may continue, the pace of growth on spending has definitely slowed down. If you look at the capex expansion that the government was doing, it was 30% 2 years ago. It dropped to 10% last year. Will they maintain the same pace this year, or will they further drop it? Remains a question, because they have a bigger a target to bring down the fiscal deficit. And this is what even the US is doing, right? With the installation of DOGE, which is the Department of Government Expenditure. They're also looking at cutting back broad expenditure. So this raises a question on the infrastructure side. How can you have the same pace of growth that these companies were showing, or do their valuations need to correct? So coming back to your main question, we've been 4 months down. This is the longest losing streak since, I think, 9/11, 2001. It's a very long time, almost 14, 15 years since we've seen such a big long losing streak in the market. And it's hard to say that the worst is behind. Of course, 9/11, that was the last event after which the worst was behind. But that was after a 18-month bear market that had happened. This one has happened right from an all-time high, and which is why it starts to feel like, is it the beginning of something longer in terms of consolidation for the markets from the run that they were having for, the last 4 to 5 years. And that's what we've sort of started to mentally prepare for. So we do have a bottom. It may not be a long-term bottom. It may be more medium-term, which means the markets can go up over the next 1 month. Maybe the budget provides some steam for that to happen. But it may not be enough to go back to an all-time high and keep running away the way it was doing last year. So that is the sense that there may be some upside, but it may not be back to new highs.
Also bring in our next guest, Ruchit Jain. He's Vice President, Technical Research, Motilal Oswal Financial Services is with us. Good morning, Ruchit. Do you have a slightly more optimistic view at the moment? And if I can just start by asking you your top 3 sectors and top 3 stocks that you're watching out this morning.
Yeah, hi, very good morning, Nandita. Very good morning to everyone. Well, we believe that market, since it has retraced the 38.2%, retraced by 38.2% of this recent correction of last 3 or 4 months. So I think it's time to get a bit cautious from here on, unless we see a closing again happening above the 23,600, 650, which is the 200 EMA. No, we believe that the volatility would be there, and we are now near that resistance end. So taking going on the budget with a very neutral view, I would say, and until we see a closing about 23,650, which is the 200 EMA, I think one needs to be very cautious and stock specific over here. And amongst the sectors, I think couple of sectors which are looking positive from here on, which is one is Nifty FMCG, because after this recent corrective phase, there is clearly a positive divergence with RSI, where the prices on the FMCG index have formed lower lows, but RSI has been forming higher lows. So I think FMCG would be one space that we will watch out for. Stock specific amongst the FMCG stocks, if we see, then stocks such as Britannia, Dabur, HUL, which have already seen a price-wise corrective phase over last few months, are witnessing a bounce back from their oversold territory. So FMCG is one basket which we are looking to trade with a positive bias. And breakouts in certain chemical stocks have been seen in this week. Stocks such as SRF is there, or Navin Fluorine is there, where if you look at the price volume action, then it has been supported by very high volume. So I think here also the downside now seems to be very limited, and in case of any kind of dips in both these stocks, SRF and Navin Fluorine, one should look for buying opportunities there too.
Emil.
Sorry, who?
Emily, I have Ruchit Jain.
Ruchit, so how do you see the infrastructure pack doing today? Ruchit?
Okay, let me bring in Rohit Srivastava also with us. Rohit Srivastava, I can take that question to you very quickly and understand specifically on infrastructure.
is somewhere in question, especially the capex spending that was sort of driving the infrastructure area. It doesn't mean that growth is not going to be there, but the pace at which we were seeing capex grow, say 2 years ago at 30%, now it's slowing down to a 10%, is definitely going to impact the valuations that we are giving to infra stocks in anticipation that growth would be much higher. So that is one thing that's going to affect us now. It's definitely possible they do something different. I mean, it's us thinking that, oh, they've slowed it down last year, they will continue to remain slow. If they do push up the rate of expenditure on capex, then that could definitely have a positive rub-off on infra and capital good stocks, and that's going to be one of the watching points. Another one that can have an indirect positive effect if they do something on the FDI front, because that's fallen significantly as a percentage of GDP. And it has been impacting our currency also in a big way, because if you have positive currency flows either from FDI, then you can offset some of the negativity from the FII side. So there are different angles from which you can see a positive rub-off on infra as well, which we'll have to watch out for. But yeah, hard to say whether there's a big impact or a small impact. Depends a lot on how they allocate funds.
Rohit, what do you think of banks? Because that is one area where a lot of fund managers, institutional investors are positive on, and everybody thinks that it is reasonably valued, and usually budgets have something or the other, some implication or the other for banks. How do you see them on the charts?
So at least the private sector banks have been well placed. You're right that when we actually look at the long-term valuation charts, even on our strike valuation setups, they were at the lowest levels in years when HDFC Bank was at the bottom end. Now, of course, it has broken out to a new all-time high and then pulled back a bit. But that has set the positive momentum in favor of some of the most beaten down financial stocks. So definitely there's a case there. But for that momentum to continue, you really need to see credit growth pick up. And that's where the private sector spending or private sector expenditure has to really be seen. So far, again, it takes us back to the first argument that we've been so dependent on government spending for growth that it has really not shifted towards private sector. That's what we are all, waiting for, that when does that happen? One of the triggers for that could be interest rates. Of course, it takes a while for that to percolate down. And the government's focus on fiscal deficits can indirectly make it easier for the RBI to cut interest rates. So that's now a very indirect angle to getting to the banking thing. So if you maintain fiscal deficits, you have a case for lower interest rates and credit growth. Banks end up doing well. So there is a very indirect case where banks actually are well positioned, and because the valuations are there, I think that argument will remain for fund managers to allocate, because even if you have a weak market overall, you want to play defensive, and in that sense, you'd end up wanting to own banking stocks.
Rohit Srivastava, thank you so much for joining us this morning on Money Control on the day of the budget, and wish you a very happy budget day, and hope to see you again in the afternoon to get an understanding of how this is panning out. For everybody just tuning in, let me do a quick recap for all our viewers. Sensex, Nifty have erased opening games. They're trading flat at this point. Defense, railway stocks in focus ahead of the budget. That's the other headline that we are panning. Also looking at Sun Pharma, Bharat Electronics, Ultratech Cement, Adani Ports, IndusInd Bank, all amongst major gainers for Nifty this morning, while losers are Hero Motocorp, ONGC, Dr. Reddy Labs, Trent and Gresham Industries. BSE, mid-cap and small-cap indices are up 0.5% each. That's the lay of the land at this point at 11:34 this morning. Like I said, we are just about roughly an hour and a half away from hearing in from the finance minister. Those are the live numbers. Let's also go back to our guests now. Ruchit, can I pick you up on what Rohit was also saying on FDI investments, one of the key sectors, if that's the focus where the government really wants to bring in, where do you think this is actually going to go? Okay, can I take that question to Feroz, please? Feroz, yeah. Go
There's
ahead.
some issue with that.
Firoz, yeah. Go
There was
ahead.
some issue with the audio. If we can go again, it'll be great.
Okay, I was just trying to understand from you on the issue that Rohit Srivastav raised on how FDI is going to be in focus. If that's your lens, then which sectors are you really looking at?
I think FDI is definitely something which will definitely give impetus to several sectors. If the government is putting in money in the top three, defense, transport, and rural development, and then comes education. So education is one space where FDI has not seen any investment. These are the four top expenditures of the government. FDI push in these sectors will give some degree of complementary nature to the government expenditure. If government is spending 32-33% on these four things which I mentioned, out of the 48 lakh crores, some degree of push from the FDI side makes sure that there could be economies of scale into this sector. I'd say these four sectors is where luring FDIs would make so much more sense. Will that happen? I don't know. I think I would just be second guessing, Ruchit.
All right.
Firoz, where do you see, where are you putting your money for today, for the next 1 month?
See, I'm a largely mutual fund investor, but I think from a sector specific, I would say automobile and banking are the two sectors which most of the fund managers skewed their portfolios to, and rightly so, because banking is one sector which is available cheap. Because of the flat yield curve of India, I think any kind of a rate correction, any kind of economic boost, actually banking is a reasonable proxy. I think any sentiment booster will definitely create a large move in the banking space, especially because 27% of Nifty is banking. Any influx of money, and if FIIs reverse their positions, banking will be the largest beneficiary. So banking and automobile are the two sectors where I would expect my fund managers to skew, and I would like to skew it if I was to be buying a sector fund.
Firoz, one last question from me. What is the sentiment amongst all these, high net worth individuals? Because all this while post-pandemic, every time we've spoken, every small correction has been bought by them, right? The sentiment decisively has changed over the last 4 months. That is why we had a steeper correction this time. Do you see at this point people coming back to markets? Are they waiting for a larger correction to buy? What is the sentiment like?
I think, see, over the last, from 27th September, when the market peaked on Nifty, where FII long positions had gone to almost about 80.1%, which was one of the other breaches it did 12 times over the last 2.5 years. But after that, of course, there's been a lot of long position unwinding of the index futures of FIIs. Now coming to HNI sentiment, I don't think it has gone dampened, because if you look at 41,000 crores of influx of net sale of mutual funds, which is a reasonable barometer both on the retail side and the HNI side, has been robust. It's been the best quarter, which has been the last quarter from an inflow in the mutual fund space. Now comes the second part is FIIs, HNIs have a large game in the AIF category 3, which is long only, and PMS. If you look at these two categories, PMS has taken a little dampened after the budget of 23rd July 2024. So coming back to your point, I think the HNI sentiment surprisingly is intact, because markets have not shown 5% fall on a single day over the last 5 days, because of one specific circular, which I love that circular. I thank the Lord every time I go to sleep, and I thank SEBI for having kept that circular alive, which is called the net short circular, which was released 1 day before the lockdown. That is alive. That makes sure that we are, as a country, far more investors market than a speculators market. There are very few countries which limit the short position in equity markets, and India limits it to 500 crores of notional, which is not a large amount. 2-3 lakhs, if you want to buy a 1 rupee put option, you will max out a 500 crore limit. So that's why you would see that sharp falls are not happening. Gradual falls on a daily basis can still happen from 26,213 to 23,508 as we speak. But these sharp falls, which used to happen in the past and still happen in S&P 500 and NASDAQ, don't happen in Nifty. This is something I think investors are not taking note of, and thanking the Lord enough and the regulator to protect them against these speculators who sit on global on offshore waters. And they short some many market where they think they have to bring it down. That's not happening in India, and that's one thing I think we should all, as stakeholders, take note.
That point on net, whether Firoz, the point on whether short position should be limited or not is debatable, and that we should do some other day. But the pointed question I'm asking is, the SIP flows are a given. It's 40,000 crores a month, and it's, that's not something we are questioning. What I'm asking you is the discretionary flows, whether it comes through AIFs or through mutual funds, or even through direct equities. The money that family offices put in, that money, what is the sentiment amongst those investors? Because those are the clients you deal with day in and day out.
Yes, see, I'll tell you, if you look at, and 41,000 is not the SIP number, it's the net flow number for the full quarter. So 26,000 crores is the SIP number. If you look at 1 lakh plus SIPs, which form 75% as per a sample study which we did, have also continued. Now coming to direct equity, if you look at where is the money coming from, I think there is some degree of sentiment dampened, especially in the broader market. But I don't see flows going out because debt is not giving you the capital appreciation which people have been talking about. So to answer your pointed question, if there was a scale of 1 to 10, 10 being the most excited HNI community, I would say 6.5, 7 is where we currently stand.
Leave it there for the moment. Thank you so much for joining us. We also have Vaishali Parekh standing by. Vaishali, thank you for being so patient. We're just getting some visuals from the Parliament this time around, I'm told, of the Finance Minister. There you go. That is the Finance Minister walking into the corridors of Parliament as she goes in to present the 8th consecutive budget for India. She's walking in there with her team. Now, what does the protocol say at this point, and what are we really expecting? It's about 9:40 right now, just around the time when she's going to get there. We will have the President House also being given a copy of the budget at this point. Once that is received, that is the cue for the Finance Minister to actually take it to the Union Cabinet. Once the Union Cabinet then sits on it, it's a short meeting that they sit on the budget, and then it is taken to the Parliament where she will be tabling it. 11 a.m. is when we are expecting that speech to happen. At this point, we are seeing a rather flat opening to the market. But as we look at those visuals, more guests are with us. Vaishali Parekh also with us. Vaishali, your first thoughts on what you're expecting today to be?
Very good morning. So yes, market shows a lot of optimism right now. We are seeing good momentum as usual in defense, power, infra. So I guess right now these are the budget-friendly stocks that one should be focusing on.
I'll go to you, Nitin. Nitin, we spoke about the capex math when we spoke last time. I think the elaborate interview we did. What is your expectation? What are you seeing in this budget? We've already seen quite some scale down in core areas last year in terms of capex. Do you see that reversing, considering that we have competing demands from the consumption side this time?
I think, good morning. I think that there's no doubt that after a sort of a muted capex growth in FY25, government will announce anything between 12 to 15% increase in capex. But what we would like to see is more allocation to core capex, which has a high multiplier effect, A, in terms of jobs, B, in terms of competitiveness of Indian industry like railways and roads, infrastructure. I would actually expect a 12 to 15% growth, given last year FY25 was a low base.
What is the number you're looking at, Nitin? So most people are expecting that this year we will close at 10 lakh crore, and at 10% over that will take us to 11.1 lakh crore, which will look like growth, but it will be no growth over the budgeted figures of last year. Do you expect that to be the number to be better?
Mahalakshmi, I just use about a minute to actually give a longer term perspective over here. And if you look at the last 4 or 5 years, the real change in the budget has been how off-budget expenditure was brought into on-budget expenditure. So prior to COVID to today, perhaps we are very closer to 4.5 to 4.8% of GDP. Last year, we were thinking closer to about 11.1 trillion rupees of capex. We'll get closer to about 9.7 to 10. The core capex will hold up at about 5 or 6%. So I would actually be in the same camp that closer to 11 to 11.5 is the number. 11.5 trillion is that what they will announce. But what I would like to see is most of that allocation, unlike last year, which was about 15% in non-core capex, to go into most of it to core capex.
Okay. The other question is, so does that, from a stock perspective, how do you see the market reacting? If it were 11.11 lakh, would that excite the market? Will it be a muted reaction? Can it trigger at least a short-term rally?
Clearly, we've seen the order inflow needs for most of the infrastructure companies or capital goods companies would rise if they were to allocate closer to about 11.5 trillion, and large part of that in the core capex. Clearly, roads and railways would stand out, and some of the railway companies, smaller ones, in the last 1.5 year have been complaining, or let's say explaining, that the inflows have been sort of muted. We need more. So I think roads and railways will make a lot of announcements today. So perhaps stocks could react as they do all the time around announcements. But urban infrastructure is equally important, not only the grand infra, but urban infra. So I hope roads and railway companies would take that in a positive manner. And perhaps the markets also for their stocks.
I have a couple of more questions for you, but I'll come back to you. We have Rajiv Radhakrishnan, CIO Fixed Income from SBI Mutual Fund joining us. Good morning, Rajiv. Rajiv?
Yeah, good morning. Can you hear me?
Good morning. Tell us your budget math. You think she will stick to the 4.5% deficit? What does it mean for bond markets?
Yeah, I think given the stated fiscal consolidation trajectory, and the government in the past has clearly adhered to that path of fiscal consolidation. So we do expect that FY25 would be possibly slightly lower than 490, and the coming financial year, the government should be able to budget a fiscal deficit target of 4.5. Now, from a bond market perspective, since the fiscal deficit trajectory is broadly, I think the market really expects no shock there. But I think what is important eventually is the net and the gross, or rather the gross at this point. I think the net borrowing number would broadly be along similar lines as in this financial year. But we need to see how the gross borrowing numbers come out, because we need to understand that when you look at the way the government debt or the redemptions are there over the next few years, I think the coming year is close to 3.95 trillion of maturing bonds, and it just steps up over the next couple of years. So I think there is merit in sort of trying to smoothen out the redemption pattern by possibly budgeting a bit of buybacks. So possibly that the gross number could be closer to 14.5, 15. I think the market is possibly looking at around 14, little bit higher than that possibly should not be a big issue. But I think the key takeaway for the market is, or the market would look at in terms of the fiscal number, is clearly the gross number. And what is the trajectory for the as you go forward? Because after 4.5, we don't really have a visible consolidation trajectory that has been enunciated by the government so far. At the same time, in the last budget, they did mention about targeting public debt to GDP, targeting it around 60. But I think a roadmap to that, if possible, is something that possibly will be important from a slightly longer term market dynamic perspective. So, yeah.
Rajiv, if I can sort of come in and ask you and have a retail investor's lens for a minute. They've been rather edgy, sitting trying to understand what exactly is happening. For all your managers at the moment, I'm sure you had a morning call before the budget. What was the big message there? What have you told them? And what is your advice or perhaps guidance to the retail investor this morning?
In fact, for the retail investor, I think, I'll just go back to, one section that I saw in the economic survey yesterday. I think the economic survey did mention about reducing the entry barriers for corporate bond markets. I guess, we've seen, if I ask from a retail investor perspective, we know that over the last couple of years, the taxation has completely turned adverse and very punitive, if I were to say, for fixed income investments. So I think some sort of, relook approach on how you enable retail investors to come into debt mutual funds. I think that is something that is very, very essential. I mean, my sense is you cannot necessarily equate a market-linked product with assured return products and have the same taxation. So I think that is clearly an enabler, and I think it clearly gels in with the perspective given in the economic survey of trying to reduce the entry barriers into corporate debt markets. I think it's a very well accepted requirement even from policy circles to improve or enable development of corporate bond markets. So unless you sort of incentivize the demand in terms of, unless retail investors are incentivized to invest in the market, clearly, through I think debt funds do provide that enablement for retail investors. So I think this is something that is very, very essential, an enabler to incentivize retail to come into debt, and at the same time it will address the entry barrier issue that the economic survey flagged out. So I think that is something that would be keenly watched.
Rajiv, another question for you. If the market were to, if the finance minister were to go a little loose on the fiscal deficit number and it comes in at, let's say, 4.6 or 4.7, do you think the market will rebel it?
No, I think the market will take it as a slight negative, because as I said, 4.5 is there in the price. A net borrowing of something like 11.2, plus minus, is clearly there in the price. So if you are looking at 470, which effectively means that possibly the net and even the gross possibly would be on the higher side, it'll be a short-term negative for the market clearly. But I don't think, I think the general, consensus or the expectation is that you will see around 4.5.
I see. Trideep Bhattacharya is also with us. But before I go to him, Rajiv, can I talk to you about the 3 T's which have been shaking up the mind of the retail investor? It's tax, tariff and Trump. These 3 T's have really been the focus of how everybody is thinking, perhaps what will be on the mind of the finance ministry folks as well. Your quick comments, and then I will go to Trideep. Okay, yes. Rajiv, we couldn't get that. Trideep, if you could hear that question, I'm trying to decode the 3 T's for the market this morning. Tax, tariff and Trump. How are you seeing that play out?
I think these 3 that you talk about are unknowables at the point in time. It's very difficult to kind of, with a budget in an hour's time. All of these structurally would be, whichever direction it goes, would be negative for broadly equity markets. Certainly tariffs overall, though the second order impact, how does India figure relative to other markets, or India would stand to relatively gain, could be positive, but prima facie, lower global trade would be negative for markets in general. Taxes, if there is a rebate that comes through, certainly would benefit. But we'll see how much they want to get off the fiscal deficit lowering trajectory to promote taxation if they have to. I think the key moot point of the budget that we see in front of us is basically the balance between capex and opex, which is how much do they spend on capex and how much do they spend on consumption, which is the taxes and all these things put together. That's the balance that I think the markets would be really watching out for. If it is more towards capex, my sense is the markets would treat this as a continuity, and broadly the markets would be fine with it. But if it is more towards populist measures, more towards things that lead to immediate consumption but doesn't add value over a period of time, then I think markets might take a dim view of this. So that's broadly how I look at it.
Interesting.
Trideep, this year earnings growth has obviously slowed down, and for FY25 we are expecting not more than a 5% growth in earnings. This will be the slowest in the last 4 years post-pandemic. Next year, the consensus estimate is 12% earnings growth. Do you think this budget will set the conditions for a 12% earnings growth? Because otherwise most people I talk to say that that number will have to be pared down. What's your view?
Yeah, my sense is that next year earnings growth is likely to be somewhere between 10 to 15%. So, a little bit here and there, but broadly speaking, after a lost year of earnings, which is FY25, I have a dimmer view of FY25 and maybe a slightly more optimistic view of FY26 as compared to what you just said. My sense is by the time we sort of get to end of FY25, we'll call it a lost year of earnings, where courtesy not only government lack of spending, but also globally, as different governments changeover happened in different countries, hardly any work got done on the economic front. And that's the reason I think you have seen actually not just earnings cut in India, but also earnings cut globally. Earnings cut in India has been to the tune of about 10%, which is why you've seen a bit of wobbliness in the market. My sense is by the time we get to March, April, May, this macro sort of uncertainty, which has been lingering around for a year and a half with regards to which government, what policies, and how much spend will all be out of the way. And I think that in itself is a good sign for earnings to start kicking in. So based on the comments that you made, I would be slightly more negative on the near term FY25 earnings and slightly more positive on FY26 earnings.
Interesting.
Is that some kind of a cognitive bias, Tridip? Because you're a lucky man if you're optimistic, and you're more optimistic about the future, and you're saying you have a dimmer view of the present.
The dimmer view of the present is more driven by what I see in the earnings season that went by, I think on net balance, this earnings season would probably lead to about 1.5% earnings cut. So that 5% number that you talked about is probably by the time we hit the end of this result season, which is by February 15th, might actually be less than 5. And hence, I think that, and from the announcements that have come by, it doesn't look like that March quarter would be a particularly great one either. So that's why I said FY25 would be kind of, pretty much a lost year of earnings. Now in FY26, though, the positive impact of rural economy, rural recovery coming back, some stops, if they talk about in the budget on the consumption, would lead to a slightly better consumption scenario, which has been lagging overall in FY25. And I think the other delta is on the government capex side. We talked about 11.5 last February. We'll probably end up somewhere between 9 to 10 lakh crore. So we undershot the budget by almost about 15%. Next year, my sense is with no regional elections in the way and the government in power, you would see the spend growth-wise better than what we have seen in the past versus actual spending. So my sense is government spend will also come back in some shape or form. That kind of underlines my relative more bullishness on FY26 and the recent earnings season, a little more dimmer view on the present.
Can I just get a quick word from Rajiv as well? Rajiv, before we quickly go into a break, what is the one thing, one announcement from the finance minister that you think will make the markets happy today? Not 1, 2, 3, just one thing that you think could really rally the market.
Consumption growth to revive, at least some tax breaks or tax support for the middle class, which has been, I think, speculated of late. I think that should be, I would say, a positive at the margin.
Tridip, your view quickly. One thing that you think will make markets happy?
Would be something which I think the markets and all of us are looking to see the continuity of policy and less of populism because the multiplier effect of infrastructure is a lot higher than some of the populist measures.
I see. Vaishali, same question. All right. All right. Rajiv, Radhakrishnan, Tridip, Bhattacharya, thank you so much for joining us. Just a quick update on what's happening. The finance minister has reached the president's house. She's going to be presenting the budget there first. Then she makes her way to the parliament where she will be going in for a quick cabinet meeting. It's a short one and we are just about an hour away from hearing budget 2025. Those are the visuals from just a few moments ago while she was leaving the finance ministry. We're going to slip into a quick break where we bring you how corporate India is actually looking out for the budget. What are the big expectations there? Watch out for that. Coverage continues right here on Money Control.
Doesn't want to burden the government with so many priorities that they already have to give any tax incentives or SOPs. But, you know, what we would probably, I think, encourage or request is a dialogue to relax certain price controls that are there on vaccines. You know, today you've got all our industries flourishing, you know, the financial sector, auto sector, IT sector, where, you know, every company is making a few $1 billion in profits. But, you know, it's unfortunate that the vaccine industry, which is a very critical industry, all the companies, my company included, combined, doesn't even make $1 billion in profits every year. Now, why is this important and relevant? Whilst we want to keep health, doesn't even make $1 billion in profits every year. Now, why is this important and relevant? Whilst we want to keep healthcare very affordable, we don't want to have people paying very high prices. We want it reasonable. So what do I mean by that? If reasonable profits are made in this industry, then we can develop and innovate and make our own vaccines and our own molecules and technology. Today, we're still dependent on the partnership model with foreign entities. You know, you saw that in COVID times. You saw it even today with chikungunya. We've partnered with Valneva, very good company abroad. Dengue, similar thing. So, you know, if we have the kind of capital that, you know, pharmaceutical players all over the world have, then, you know, we can further bolster innovation and development in R&D in our country, and the government understands that, and we have to work towards, you know, finding the balance there in the policies to do that. I think if we do that, you'll see even this industry becoming large, like, you know, the IT sector, auto sector, and all of that. And that's really what I would pray and hope for over the next 5 years.
I think we need something that really spurs investment. I think capital formation is not at the level that you need to grow this economy at 7-8%, and that has to happen. So the budget has to create and you know, all these PLIs for batteries and semiconductors, they will show results 10 years from now. Okay, we need something that spurs the economy in 3 months and 6 months, not 10 years from now. And for those products, largely the machines are all imported, the capex is all imported. So we need something that is going to put capex in the ground in India.
One quarter's data is hard to interpret. Some of us, I included, have been saying that there is an issue we need to deal with which has been building up over the last few years. If you think about the last year before the pandemic, our growth was 4.5%. And through the pandemic, we had some terrible quarters, and then we had a strong revival. What is hard to tell is how much of the strong revival was because of the terrible downturn. And I would say that to some extent, the underlying issue is how do we get strong sustainable demand? And strong sustainable demand comes from, you know, confident people. We have confidence at the upper end, the upper middle class, you know, the people who are employed in Bangalore and Chennai, they're confident. It's the lower middle class which has been a little more hesitant because of the job situation. And that's why it's imperative for every state to expand jobs wherever it can, to whatever extent it can. And that's sort of going to be both beneficial for, you know, just more investment, more production, more growth, but it also gives more confidence for consumption. And I think the weakness has been displayed initially. You know, we've seen weak lower end consumption, it's strengthened a little bit, but upper end consumption has weakened in the last data. Broadly speaking, we need to build more confidence in consumption, which ultimately means jobs, jobs, jobs. That's a single mantra. You saw that in the elections, you see it in every election. And we can't get away from the fact that India needs to employ its young people. That's a talent pool we have, which is an opportunity for all the companies that are thinking of investing in India. But it's also a challenge we have of making those people employable for the companies coming in, which is why schemes like Nan Mudalvan are important, because they bridge that skill gap.
See, the macroeconomic fundamentals of India are very strong. Yes, we have had some headwinds on growth over the last 6 months relating to consumption. I think the reasons for that are known. I mean, it's whether it was the elections, whether it was the seasonalities, and also in some industries, global disruptions that happened principally because of in one of the countries, the capacity that they had created and for some of the products was disproportionate to the demand, and therefore that impacted global commodity pricing or global pricing, and that had an impact. So those things are well known. I think budget should be seen as a good opportunity to find a way that they can unleash more positive energy in the business community as well on the consumption side. And I think it's a tightrope to walk, because India is very focused on, and rightly so, on ensuring that the macroeconomic trend line is followed. So the fiscal deficit light path that we are on, I think that should continue. So the government will really have to look at innovative ways in which they can raise capital. I think it's all known. I think the measures are known. If they can execute on that and use that money as they have done in the past to spend more on the capex side, also give some relief especially to the urban lower income, middle income side. I mean, on the rural side also it's required, but definitely it's given the impact that inflation has had and everything. If they can find some relief to be given, mainly through income tax, personal income tax rates and everything, if that can happen, and I think as what we have seen, what the US is doing right now. And I think it's going to be increasingly a trend around the world, is how do we push ease of doing business and regulation so that organizations that want to grow can accelerate their growth path. Right now, because even if organizations are looking at capex spend, I think the time it takes to get all the approvals and the time it takes to the speed gets delayed. Obviously, there are challenges on skilling and everything else that have to be addressed. So I would say that if the focus on capex focus, looking at consumption, easing up things, deregulating a bit more, trying to see how we create energy through disinvestments, and
Welcome back. You're watching our special budget coverage right here on Money Control. Just about an hour left for the finance minister to present her budget. The markets, of course, have opened on a fairly flat note, but my colleague Nandita is standing by with the latest. Over to you, Nandita.
Thanks, Shweta. Of course, you rightly pointed out markets have started on a flattish note, although we'll take heart from the fact that it's in the positive zone, and we are holding above that 23,550 mark, crucial level, because most of the experts were pointing out that 23,500 on the upside is a crucial level, and if we keep closing above this level for consecutive sessions, who knows, we could look at moving towards 23,700 as well. So yes, right now the mid cap index as well exhibiting strength. We have picked up pace when it comes to the broader end of the markets. So that's one area that has seen quite a bit of pain if you look at the recent correction. Even though headline indices have managed to recover, the recovery in the broader end of the markets have been fairly muted. But today, mid-cap index, like yesterday, extending those gains, almost a % gain on the mid-cap index. Bank Nifty also holding out in the green. In the recent up move, the Nifty Bank Index has been outperforming as well. So here, a triple-digit gain coming in with stocks like IndusInd Bank, which reported numbers yesterday. Top Nifty gainer right now. Capex-heavy stocks are doing well. UltraTech Cement up 2%. You have Bharat Electronics. The entire defense pack is extremely active at the current juncture. Yesterday as well, we saw traction in stocks like Garden Reach and other defense names. Today, of course, BEL, of course, up by 2% on the index. Aside of that, look at other stocks, M&M, auto stocks, FMCG stocks in focus, given the fact that we are waiting for some consumption boosting measures from the finance minister. M&M among gainers, and you also have other names like Axis Bank doing well, Adani Enterprises, Bajaj Auto, and even life insurance. If the government gives or sweetens the new tax regime, it won't be very positive for life insurance stocks. But nevertheless, SBI Life, HDFC Life, these stocks are holding out at the current juncture. If you look at some of the laggards on the index, you have Hero Moto. Not doing well, 1.5% down at the current juncture. You have some, pharma names not doing well. Dr. Reddy's is also on the list. So are other names like Cipla, not doing well. Some IT names also under pressure. Look at Wipro, TCS, Tech Mahindra, all of them on tenterhooks. Aside of that, if you look at the railway stocks, as I mentioned, capex heavy stocks are doing well. There are expectations of an increase in railway budget as well on the railway spending, which is why you are seeing stocks like Titagarh Wagon, RVNL, all these stocks doing well. Aside of that, renewables is one pocket that's in focus. Inox Wind, that is up somewhere around 9% or thereabouts on the Nifty 500 index. Let's also take a look at some of the other movers on the Nifty 500 index as to how they are doing. If you look at Prestige Estates, on hopes of push for affordable housing, some of these realty names are also doing well, which is why Prestige Estates, that stock is up 7%. Look at some of the other names like Suzlon, 5% up. Cement stocks are doing well, again on hopes of higher capex allocation. India Cements up 5%. You have other stocks doing well like Data Patterns, TBS Supply, Inox India. So yes, right now the texture of the market is on the upside. As we know, it does tend to turn volatile once the FM speech starts. So let's see how things really pan out. But 23,550, we are holding on to that level, and nothing really to complain about at the current juncture, but let's see how things really pan out, whether there are changes in personal taxation, there's anything in terms of capital gains, which of course expectations aren't there this time around, but any move towards either reducing or doing away with STT, who knows, that could prop up sentiment when it comes to the market. But aside of that, from a market standpoint, there aren't really big expectations. It's fairly subdued this time around.
All right, so it seems like, thanks Nandita for that, it seems like markets seem to be very cautious in terms of the outlook towards the budget. I have with me two eminent economists. Deepti Deshpande is joining us from CRISIL, and Mr. D.K. Srivastav is joining us from EY India. Deepti, first I'll come to you on, are you also as tepid in your expectations of the budget? Are you expecting Ms. Sitharaman to really play the field like she's always played, being fiscally prudent, not rocking the boat too much, giving, minor boost to consumption through some tweaks here and there?
Yeah, good morning. Absolutely. I think that's exactly something on the minds, because fiscal prudence has been the one, theme that we've seen throughout over the last couple of years. And I think that's what is primarily also going to govern how the spends are undertaken in this budget. But I think, having said that, we could see a little bit of, a different angle that this budget takes, because, I think there are three important, crucial things behind this budget. Number one, it's the first budget after the new government, after the re-election came in. So then we have about 5 years for any of the fiscal measures that are, proposed throughout this year to see a light of the day. So I think that's an important backdrop to this budget. Second is, if we expect that over the next 5 to 7 years, the impact of some of these measures, gets converted and we get to the $7 trillion path by FY 30-31, it means that we need to smoothen the growth process. If possible, we need to push that up. So then we do have that period now to do so. And finally, most importantly, is the fact that the timing of the budget coincides with a lot of turbulence on the global front when it comes to trade-related or tariff-related measures and actions. So it does give us an opportunity to really, maneuver our way through some of this turbulence as well, by tweaking and making it a little more easy and comfortable for domestic manufacturers and exporters to work in. So I think the setting of the budget is a little bit different this time around, with a little more angle on what's about to happen globally.
Let me also bring in Mr. D.K. Srivastav here. Mr. Srivastav, you've been an astute observer of the Indian economy for several decades now. Would it be correct to say that in terms of expectations, in the last decade, this is probably the budget where expectations are riding very high? You have the rating agencies, you have the common middle class, you have urban consumption to boost, you have private investment, and you have the Trump overhang, Mr. Srivastav. If you were finance minister today, what are the key buttons that you would have accelerated on?
Well, I would advocate the underlying theme for the budget to somehow revive India's private investment and keep it within the domestic shores. That is the one engine that has not fired that well so far. And so we have to find out through fiscal means what can be done in order to revive private investment. Now, within the budget, we have one continuing stimulus coming from government's own capital expenditure. And that capital expenditure growth must be sustained. We actually witnessed it being stalled during the election year. And that is the reason why the economic survey and other observers have signaled a slight deceleration in the growth rate. But it is still quite robust at 6.4%. The expectation is even in FY26, it should be 6.4 to 6.5%. But the missing link is actually the private investment. And whatever private investment is taking place, there is also now a tendency for it to locate outside of India. So the budget therefore has to look at the fiscal means for doing so and also look at support from the monetary side. Now, fiscal means actually the capital expenditure growth would also have multiplier effects, and it would also generate investment demand for investment goods for the private sector. But in addition, if we can get a tangible increase in disposable incomes, not just a tweaking, through personal income tax rationalization, and it is overdue also, then that would be another way where private investors would find demand actually getting augmented. And that would be one more reason. Now, the third one is far more difficult to attend to through fiscal means, because there is a lot of attraction right now in locating one's investment in the US, for example. But one significant advantage that might happen in this year is that global energy prices may come down. And that would lead to a reduction in cost of production overall. And this is also because of some of these policy announcements that the US government has made, in the sense that they are now going to augment global supply of crude oil as well as gas through shale and other means, and therefore overall global supply will increase. That will come very handy for the Indian economy. So in my sense, I think we have to now fire on all cylinders, but all the time remaining cautious that it is only domestic growth engines that would continue to fire.
Question for you. You talked about, the most important thing this budget needs to address is how do you get back private investments? And you were saying that the finance minister may look at tax breaks. Now, my question is, if you just look at the budget math, how much headroom do we have given the current state of affairs? Because your income tax is already, at a high. How much headroom do we have keeping capex spends steady at the pace that we set at least last year, if not the last 3 years? How much headroom do we have for tax breaks at all? Move the needle.
Yes, we have to take a call on what is going to be the tax revenue growth and what is going to be the level of fiscal deficit, because these two will determine the fiscal room available for any tax side maneuvers. Now, tax revenue growth, luckily, even though nominal GDP growth has gone down to something like 9.7% in FY25, we expect that the budget might aim for either 10 or 10.5% nominal GDP growth. Luckily, the personal income tax buoyancy has been doing well. So if we can do something about the corporate income tax and uplift its buoyancy at least close to 1, then there would be some room that would be available from the side of the tax revenues. Now, from the side of the fiscal deficit, as far as FY26 budget is concerned, because government was not able to spend up to the budgeted amount on capital expenditures, there would be some saving there, and fiscal deficit may turn out to be in the revised estimates close to 4.8%. And in the next year, it will be, that is FY26, it may be then targeted at 4.4%. So I think the fiscal space available may be about 0.1 to 0.15 percentage points of GDP. That may be sufficient as far as income tax reorganization is concerned.
By that number, Mr. Srivatsav, I mean, it'll be some, 30,000 to 40,000 crores in terms of tax breaks. And you just divide that, the 3 crore taxpayer numbers, you get like 10,000, 15,000 rupees per person. Is that enough to spur private investments?
Well, it may by itself be not enough. That is why I am arguing that we should now attempt at least at 3 policy interventions. First, continue to support capital expenditure growth, which will have a larger multiplier. Then increase disposable incomes. It is the signal that comes out that the government is looking at a simplified tax structure, compliance costs are lower, and so on. That signal by itself is very important. And then also act as, get some support from the monetary side. At least these 3 engines should fire together, but also something more can be done on the side of import tariffs, because given the global conditions, customs revenues may also be augmented by very careful calibration of the tariff structure. In particular, we need to make sure that final goods do not come into India, but in intermediate raw materials and intermediate goods, at least for a finite period, are allowed in. And so that investors are encouraged to invest within the domestic economy and the raw materials and the intermediate goods are made available without much load of tariff. But they are protected in terms of the market share, because the external competition can be, at least to a degree, barred. As such, there are 4 or 5 instruments that must be utilized together in order to make it effective. Luckily, the capital utilization ratio right now is closer to 75, and it is above the trend capital utilization ratio, which is about just a little less than 74. So the situation is right for the private investment to start investing for new projects.
Right. Let me also bring in Deepti here. Deepti, there has been talk about a universal basic income coming through to boost consumption. Is there fiscal room available for that? And when you look at the subsidies and the welfare schemes that are already in play, we are talking about free food grains, we have cash transfers, there's already so much going on. So would universal basic income spur that demand factor that we are really looking at getting a push through this budget?
Factors. Number one, the fiscal room available. If you look at that, each year post the pandemic, the fiscal room available with us is really shrinking, because number one, we are going towards fiscal consolidation. We need to bring down our debt burden. At the same time, year on year, so last year we went to, the budgeted number was 4.8% of GDP. If this year we go to 4.4 or 4.5% of GDP for the next fiscal, it's that much less available, because you need to bring down your deficit. So that's number one. So with the available resources, where do you spend such that it creates the highest and fastest multipliers to growth, but also in the short term does not derail other things such as your inflation target, the ability of the economy to cut interest rates, etc. So today we are in a situation where food inflation or overall inflation is a big concern, but so is food inflation. Food inflation has been high and persistent, and it's already threatening to enter and become generalized and push overall inflation. Now, in such a situation, the RBI has been trying to sort of, keep demand from pushing inflation wherever it possibly could have. So in this situation, what we need the fiscal policy to do is coordinate with fiscal monetary policy and keep track on fiscal consolidation, keep spending in a way that is non-inflationary. Now, how can they do that? They can either do that by spending on capex the way they have been, or they can spend on some of the welfare schemes which received focused last year, Narega spends, the spends on rural roads, housing, etc. Because they do two things. Number one, they create assets. Number two, they provide an employment and also, push incomes into the hands of the people who have the highest propensity to consume. But because there is supply potential or asset creation happening simultaneously, it does not net have a very big impact on inflation. So when you speak about a universal basic income, if that does come through in such a situation where we are grappling with an inflation pressure, it can push up inflation. So I think that's number one. But number two, and more important, is operationalization of such a policy. We need to identify the beneficiaries correctly, in the sense who needs to receive that basic income, where there is no overlap with certain other, welfare schemes, etc., that have already been given out to them. So I think it will take some more time. In the meanwhile, from a macro perspective, perhaps too early to have a universal basic income at an all India level. Perhaps pilots in pockets, some states, etc., could, look at it. But I think it's probably too early to have an all India level universal basic income. So that's not really an expectation.
Right. In fact, thanks for that, Deepti. We just received an image. It's a lovely image of Ms. Sitharaman with the president, and I think what the president is feeding Ms. Sitharaman is some yogurt and possibly some sugar in it. It's supposed to be a good luck thing, and I have not seen this before.
Neither have I. I mean, it's a very unique picture. I wish we could put it up there.
Of two women leaders, bonding and of course wishing each other luck. Here, Miss Sitharaman, I think it's a lovely I wish we could show it to you right now, but there, so Miss Sitharaman is the first woman finance minister who will be presenting the 8th consecutive budget. I think that in itself is so historical, and the mountain of expectations that she's carrying on her shoulders today, I really wouldn't, I mean, it's an unenviable position to be in.
Oh, absolutely, absolutely.
Well, we also have Siddharth Pai joining us. Siddharth, what are the big cues that you are watching out for today, and how hopeful are you that of a 1991 like budget, something that a lot of economists have spoken about? How hopeful are you that we'll see a big bang bold budget?
I think it does behoove the government to have a big bang bold budget. The previous budget also did have some strong announcements, but I think it's lacking the punch that everyone's expecting out of a third term Modi government. And Trump has actually set the pace as of now. I think he's passed over 100 executive orders within the first 3 days of actually taking office. So he set a very high bar for the rest of them to follow. I think from the private equity, venture capital industries side, we've seen capital formation through AIFs drop to single digits for that matter. We've seen foreign investors pull out money from the Indian markets as well. And we've actually seen that some of these low-hanging fruit that the government can easily end up rectifying being one of the reasons for this. So as much as the government wants to extend capital support to this industry, for that matter, I think just easing up regulations, giving us parity with foreign funds, and giving us clarity on our operations will end up actually unleashing the vast amount of dry powder that's been sitting on the fence that's eager to end up actually deploying into the Indian market itself. Indian startups also have seen fantastic IPOs. The industry wants to build upon that, and having this sort of policy clarity, as well as giving us the kind of economic liberalization and freedom akin to 1991, will be the best thing that the government can do for all the startups, as well as venture capital and private industry funds in the entire country.
Specifically, Siddharth, are there any measures that you expect that can decisively change the FII sentiment? Is there anything in this budget that could do that?
Thing is giving VC and private equity funds clarity as to how their gains are going to be taxed. Foreign investors actually all their financial assets are classified as capital assets, and therefore the income as capital gains. Whereas we've had to rely on a network and a patchwork of circulars to end up achieving that. So give us that kind of clarity. I think will end up ensuring parity between foreign funds and us. And for startups, of course, our ESOP taxation is amongst the most onerous in the world. And given the wave of startups looking to flip back to India, giving us a kind of parity with what they enjoyed in the US or Singapore will actually be essential to accelerate that entire movement back to India and to ensure that our employees don't have to go into debt just to become shareholders in the companies they help to end up building up.
On our screen, there were visuals of the finance minister with her team going into Rashtrapati Bhavan, and we're seeing the finance minister today in a lovely Madhubani sari.
Yeah, look like a very unique Madhubani sari. Yes,
look like a really unique Madhubani sari. See, every year she makes a statement with the sari that she wears.
Right.
So
does it have anything to do with what that state? Something related to the state.
Too, maybe it'll be a budget focused or a lot on the social sector. That's the sense I'm getting. There we have it. It does look like a Madhubani sari with a
sari is any indicator, for sure.
As journalists, we feel so compelled. And look, they're color coordinated. The president is also
bear in mind that this is the last budget before the Bihar elections in 2025 November.
See, there is always a message. There is always a message. Absolutely. Yes, the last elections before the Bihar budget, last time around we saw a big package coming through for Andhra Pradesh.
Was she wearing a Lipakshi Kalamkari sari last year? I don't remember. But yeah.
But this year, there Gaurav has put it in perspective that Bihar could be a state that could be, feeling very happy after this budget. Also, President Murmu color coordinated with the finance minister. So it's a lovely sight. Well, we have Samiran joining us. Hi, Samiran. How are you feeling this morning?
Hi, good morning, everybody.
Are you also under pressure to really, deliver a compelling report on the budget? There's so much expectation around this budget. It should be a 1991-like budget. Is that what you're expecting as well, Samiran?
So
if it's not a 1991 situation, then it can't be a 1991 budget. Do you agree? Disagree?
No, obviously, every budget, the markets, the economists, we go with a lot of expectations, but we also understand the context, the challenges that the finance minister poses. At one extent, economists want the fiscal deficit to come down, but middle class wants income tax cut. Industry wants more capex spend. So it's always a very calibrated, difficult balance that the finance minister will have to strike. So this year is not going to be any different. After the budget, we will just have to figure out in which way the balance is slightly more tilted.
Do you think this will be an economist's budget or will this be a politician's budget? Because it comes after an election year. It comes after two big wins in the state of Maharashtra and Haryana. It's coming days before the Delhi election. Do you think by this point the Modi government is out of that constant election fighting mode?
So clearly, both in the near term and medium term, there is now a clear need for policy impetus. The economic survey yesterday has made it very clear that just going on BAU would not be enough. So from that perspective, what will be important is that this small cyclical dip that we have seen in growth rates, how the budget tries to correct that. And also, outside the budget math, what are the steps being taken to ensure the economic survey's objective that India grows at 8% for a decade or two? Both the things, so both the budget math part as well as these sort of structural reforms for the more medium-term growth, I think both will be very important. As an economist, I would probably be more hopeful that the second, the structural reforms part, which will push us to that 8% growth, that gets a lot of prominence. on that note, we are looking forward to that economic policy framework document that will be put out for the first time to see what's the plan over the next 5 years. As we know, this is the first year of the third term of the Modi government. So this is probably a good time to lay out that at least the next 5 years what the planning is on.
Right. Let's go across to our veteran, budget analysts here. Bodhi and Gaurav, both of you have analyzed and gone through so many budgets. So, we heard Samiran talk about how this is a tough balancing act and so on. In the past, if I were to ask you to jog your memory, any finance minister besides Mr. Manmohan Singh, of course, who's had to deal with these kind of expectations, and how did we emerge, after that specific budget was presented? I remember when Mr. Pranab Mukherjee had introduced that dreadful retrospective taxation, and that came out of nowhere, and there was an expectation at that time that the budget will be very reform focused, but this little caveat was brought into it. So, just to give us some historical context on how has India, navigated tricky situations like we find ourselves in today, where domestically consumption is going down, globally you have the Trump factor, looming over us. Bodhi, do you want to take that first?
Well, okay, so I think if you look at, and there's obviously 1991, which is not perhaps. There is the 97 budget where there were a lot of tax cuts and so on. That was, Chidambaram's budget. If you look after that, maybe the closest analogy could actually be the 2019 budget, because growth had started slowing down.
Right.
The first 2 years of the Modi government from 2014 onwards saw high rate of growth.
Yeah.
Then there was a slowdown from 16, 17 onwards, 18, 19. So that budget did in fact introduce, among other things, a 15% tax rate on manufacturing. So there were some growth friendly measures. So that could be one issue, although there was no global crisis at that time. I mean, there isn't a crisis now, but there could be one if tariffs start going in this thing. But quite frankly, the 2019 budget, some of the it's kind of got lost, because after that you had the pandemic, 8 or 9, sometime after that. 2019 budget, I'm talking about the one that came after the elections, after the second, at the beginning of the second Modi term. But 8 months later, there was a pandemic, so it sort of kind of faded away. Some of the Vajpayee government budgets have certainly dealt with tough periods. So the one after the Asian crisis of 1998, the 99 budget have dealt with quite a tough economic situation. There was a mini recession at the beginning of this century. There was obviously the attacks on the Twin Towers, which created its own etc. So those budgets where Yashwant Sinha was a finance minister have dealt with such situations. But quite frankly, this is a unique situation. The global uncertainty is really being caused by Trump's tariffs coming in, which could lead to, if 25% tariffs on Canada and Mexico kick in this weekend, the markets will probably plunge in the US and probably worldwide because of that. 10% of tariffs in China are being questioned, and you're in a wild card kind of a situation, right? It depends on how long these tariffs last, whether they're rolled back after some time. So nobody really knows. But yeah, it's a tricky situation. One observation though I'd like to make, I mean, sort of summarizing almost 2.5 hours of discussion that we've had, or more than that, 3.5 hours, is that there is a lot of expectation. All our commentators, some of us have also spoken about that, cut income tax rates, especially for the 10 to 15 lakh range. 30% will kick in, maybe the 10% will kick in. So there is an expectation of some relief because of the slowdown, because the economy has clearly hit a soft patch. The issue is that now it's kind of circular. The problem is that because the economy is at private sector is not investing, the government has to invest, has to do the heavy lifting, and they have to meet fiscal deficit targets, and you want them to cut tax rates. Now, all this is not possible at the same time. It's logically, it cannot happen. Right, everyone wants lower capital gains tax, lower income tax, lower corporate tax rates to incentivize manufacturing. But all of this cannot lower GST rates again to boost consumption. But logically, all of this cannot happen at the same time. It's not possible. So yeah, I mean, sort of it is a as to use a term that you've been using, it's an unenviable situation to be in, but let's see. I think the vision statement part, which one of the commentators, what she spells out a vision for reforms.
Yeah.
If there are steps like a rollback in tariffs, which is seen as a reformist measure, some of that might also be in reaction to Mr. Trump. If there is talk about and some steps announced in terms of enhancing ease of doing business, which was there. So those things are, I think that could sort of lift sentiments, possibly boost the markets.
So one question I'd like to ask probably Gaurav and then Mr. Srivatsav is that if you look at the history of economies and how they've grown, you can't think of any large economy that has really grown just domestically based on domestic growth, right? It is always export led. You look at Southeast Asian countries, you look at China, you look at any country. Now today we are in an environment where the biggest consumer or biggest importer is saying that we don't want so much of imports, we are going to put barriers onto that. Our ability to trigger growth or import growth looks to be under threat. When you put this in context and look at the consumption slowdown and the cap on middle class, the hurdles that middle class and poor are facing, is that it doesn't look like it's a one-year thing. You need a large, some kind of a pivot of sorts to be able to ensure that we are able to achieve the growth targets that we keep talking about. How big is that issue?
No, absolutely, and we saw that how the economic survey yesterday actually flagged it without mentioning the word Trump even once. It went on to say how rising global protectionism it could turn out to be a big cause for worry, and also how global supply chain disruptions is something that we need to really take very seriously. But just on the point that Shweta had raised on budgets, in difficult budgets, I think the most difficult budget that was present circumstances was in 21-22 when we were in the middle of the pandemic.
Yeah.
And that was something I think no finance minister in India's history since 47 would have been facing. And so you have to give it to the current finance minister's credit that she took the bold decision of raising the fiscal deficit to 9.2%. And at the same time committed and pledged that it will be brought below 4.5% by 2020 FY26, which is what this budget is likely to do. Also this budget, I think, and the point that Samiran made, whether the medium-term fiscal policy framework that is going to be presented along with this budget for the next 5 years, there is a very high degree of expectation that we could probably see a signaling of a change in the fiscal policy architecture as we know it.
Okay.
We probably could be moving from a purely fixated fiscal deficit kind of a target to a debt to GDP ratio, which could be the primary marker and metric for public finance and fiscal policy management. If that happens, because if you look at the debt to GDP ratio, it is now about 56 to 57%, 56.8%. It has to be brought down to below 50% first, and then around about 40%. It had gone up to about 61% in 21-22. I think that's going to be, the government is going to clearly signal that debt to GDP ratio is going to be the primary metric that fiscal policy is going to change. It's something that the markets, the bond markets, and everyone in the rating agencies will be keenly watching out for, because if that happens, that's a significant shift.
Right.
In this
fact,
fiscal.
Let's just hold that thought, Gaurav. Let me bring in Samiran here. Samiran, you heard Gaurav Chaudhary talk about the fiscal policy framework and how we could see a paradigm shift there. So I want to bring in your thoughts on what is it really that you're expecting to see there, and what would you like to see in that framework?
There are 2-3 things here. One is the government has not yet articulated a quantifiable roadmap on this public debt to GDP reduction. It has given a qualitative thing saying that as long as it is on declining path, that means we are doing the right kind of consolidation. So what the market is hoping for is that in this budget, there will be some quantification around this. The second issue is that the deficit numbers are not going to go away. I mean, there is still, there would be some emphasis on where these deficit numbers should be in the context of that debt reduction. However, the important part is that if you do the maths in detail, what comes out is that as long as nominal GDP growth stays ahead of 10%, it is relatively easy to get the debt to GDP ratio on a declining path, even without cutting back much on deficit. So that way, the budget cannot be too restrictive also, because then we'll miss the 10% nominal GDP growth target, and that would make the debt consolidation even that much difficult. So that's where the fine balance comes in, that how much deficit reduction you do to get the debt down versus how much support you give to nominal growth through the higher deficit to get this, achieve the same objective.
So ML, clearly, you know, as Samiran has also outlined, it's a very, it's to quote a cliche, it's a tightrope walk. Yep. And we are looking at a single-digit nominal GDP growth. Am I right, God? We're looking at about 9%, or it could be
not more than 10%. In the poll that we did,
I think the government will signal more than 10% growth in nominal terms in the budget. Eventually, how it plays out will be a matter of various other factors, including the point that ML had raised. We are serious global headwinds we are facing. And despite the very strong arguments on globalization and its discontents, we live in a hugely globalized world. We cannot ourselves decouple from it. Clearly, if something, the headwinds are going to affect us too. And so, how we are going to navigate this very complex landscape is something that people will be watching out for the budget to signal. It's going to be more than just accounting, in this case, public finance accounting. Right. I think the signaling from the government, given the current economic environment, not just domestically but globally, is something that will, you know, the phraseology that the government uses, that she uses in her speech, is going to be extremely interesting to watch out.
Absolutely. Let me also bring in Deepthi here. Deepthi, if you can hear me, you know, we've, in terms of the revenue streams for the government, disinvestment is something that we are not very optimistic on. Over time, we've seen that the government has de-emphasized on disinvestment. However, are you expecting any surprises there? And also on the RBI dividends, you know, how much of a cushion is that providing to the government?
Yeah, I think last 2 to 3 years, this has changed. On the disinvestment part, the number one thing to note is that the government has acknowledged that it doesn't make sense to have huge disinvestment targets. So they've reasonably brought it down. Unfortunately, at least for the current year and a little bit for the last year as well, we weren't able to meet those targets as well. So I think going forward, the focus really needs to be to, spruce up some of our revenue that can come in from more of taxation. By that I do not quite intend higher tax rates, but I think the buoyancy, the ability of the economy to generate taxes via higher growth, better administration, better compliance. I think all of that needs to be the focus. The RBI dividend has of course remained a bonanza for us for the last 1 or 2 years, and that might remain a little bit of a support. But like I said, the focus must be on ensuring that the economy over time is able to generate revenues on its own via taxes and direct and indirect taxes.
Yeah. On the RBI bonanza, I think the RBI dividends this time also a huge, massive amount is coming in, which is from a public finance point of view, whether depending on RBI to take care of a large number of large components of expenditures, good thing or bad thing, that's a matter of different debate. But I think last year, on the back of a 2.1 lakh crore payout last year, and even if the RBI, the government pencils in about 1.5 to 1.6, that's a huge amount of money that the government is expecting from the RBI to come in as dividends. Disinvestment as a revenue generating source, I think we have already heard the last of it. This government has now probably made peace with the fact that disinvestment cannot be a revenue generating source. It had tried setting huge targets, very ambitious targets of more than 1 lakh crore in previous budgets. Close to 30% of that probably would have been achieved in those years. Yeah. So I don't think this investment is going to feature very, very prominent. In fact, the word disinvestment doesn't feature in the budget since last year.
Okay, very quickly, Samiran, I know you have to leave and we just have about 10 minutes before the budget speech starts. Any new themes that you're expecting in this budget? You know, I'm sure you've been part of some meetings where recommendations have been made to the finance minister. Anything that you can share with us, Samir?
I guess the focus from a market standpoint also will be on the capex number a lot. And there, the new theme could be diversification of capex. As you know, right now, the central government capex is extremely focused on just 3 areas of roads, railways, and defense. If we are able to expand this to newer areas like urban development, social housing, water, R&D, renewables, then that will be a big positive booster because there is a perception developing that if we want to grow capex at a rate higher than nominal GDP growth, which means the capex to GDP ratio will keep on increasing, then it is difficult to do it just through these traditional sectors of roads and railways because we will not have that much of execution capability there. So that's where I think the diversification of capex could be a very important thing for me to track in this budget. This will lay down the roadmap for the next 5 years on how the government is going to give the supply side push to the economy.
Thank you, Samiran, for joining us, and many thanks to Deepti Deshpande also for joining us. We, of course, just have about 10 minutes to go before the finance minister presents the budget. Gaurav, yes.
Yeah, so one of the things, I mean, of course, a fiscal deficit remains the primary number that everyone is going to track because it has, you know, it has its impact and consequences, not just in the bond markets and markets in general, but also individuals, because a higher fiscal deficit actually shrinks the pool of lendable resources for individuals, which kind of raises interest rates. So there's a bearing on everyone. But one of the things that most people who track, public finances, particularly from a market's point of view, will be watching is also the primary deficit. Right. It has been very judiciously coming down, and last budget, that is FY25 budget, it was pegged at 1.4%. And now, what does the primary deficit tell you? It tells you that lower the primary deficit, a lesser amount or a lesser proportion of the fiscal deficit or the government borrowing is being used up to pay up for interest rates. So, it's interest rate payments is devouring less amount of the borrowing. If the primary deficit in this budget is pegged at less than 1%, that's going to be a telling comment on the growing, on the rising fiscal health of the economy, and also a judiciousness, which fiscal purists will really like. And I think that the markets are going to really, really like it.
Absolutely. Okay, very quickly, from a political point of view, yesterday, when the president's address, the president mentioned Delhi Metro. Right, she made a mention of the Delhi Metro. Besides the other,
it's an interesting
lot of schemes that the government is working on. She mentioned specifically the Delhi Metro, which I thought was very interesting. So, do we expect something for Delhi?
No. So, Shweta, I'll make a point here. You know, the Election Commission has made it very clear that the budget cannot contain specific measures for Delhi, because Delhi goes to election 3 days from now. Right. So, it's going to be a violation of the Model Code of Conduct. Having said that, however, the federal budget, that is the central budget, technically also presents the Delhi budget. So it's an accounting exercise also for the Delhi government of the Delhi budget. There could be in the fine print, there could be details hiding of greater allocations for various kinds of things in Delhi. I think those are something that will come out in the budget. Very interesting to watch what the government does so far as Delhi is concerned.
How the government would try and get past the EC and try and give Delhi wala something Mahalakshmi.
Correct. Just a quick market update. I mean, I'm just looking at the sectoral performances at this hour.
Yes.
Nifty Realty is on top, which is essentially interesting considering that this year has been pretty bad. I mean, realty demand compared to last year, which was actually blockbuster year for all the realty companies, 1.3% up. So that's some expectation this morning.
Is that because there's expectations of the Pradhan Mantri Awas Yojana, urban and rural, to go up?
Perhaps. Maybe also some exemption related stuff.
But the components of the realty index, do they really cater to the kind of the Pradhan Mantri Awas Yojana, the kind of users of Pradhan Mantri Awas?
It has, but those are not the top weights. But I'll tell you what, Prestige Estates, so these are all big housing. Prestige Estate, Shobha, DLF, Raymond, Prestige is up 6%, Shobha 4.5%, DLF 1.3%. So this is not the affordable housing, these are not the affordable housing stocks. But in general, there is, at least in the market, a lot of people have been expecting that something, even in the economic survey yesterday, they mentioned that realty is an important sector. And has demand there has tapered off compared to the previous year. So perhaps some measure
so this is
to
probably
reignite
the
demand.
higher tax deduction, limit for interest or principal
See,
in home loans.
Definition of middle class, the definition of affordable can also vary, but none of these companies have much to do with the Pradhan Mantri Awas Yojana.
Yeah, it could be reduction of duties and construction materials. That's probably what's
also intermediates, maybe cement and steel.
Yeah.
But if you look at the numbers, PMJAY, urban and rural actually grew 56% last year compared to the previous year. So I think that could be one of the reasons why reality is really watching, because this serves as a signal for what the government's emphasis is.
ML, what are the other sectors?
PSUs are up 1%, not too much. Energy, actually there is hardly any dispersion. Most of it is 0.5 to 1%, and IT is actually the only loser, but that also FMCG stocks are losers this morning. So
I don't think
markets are not.
But what could actually be a downside for the market if the capex, if the capex budget or the growth in capex budget actually is below the nominal GDP growth rate? Meaning to say that if 11 lakh crore was the capex budget last year. If the nominal GDP is pegged at say about 10.9 or 10.5, 11%, and if the capex growth in the capex budget is less than that, that could be a bit of a disappointment.
That will be a disappointment, more so because I think that pack of stocks are already doing badly. So this will be like double pressure.
Well, 5 minutes to go, ML, for the budget speech to begin. And we just had some visuals of Amit Shah walking in to the parliament. So yeah, in another 5-7 minutes, we'll start getting a sense of what this budget will look like. That has been pitched as a historic budget, 1991-like budget, tall expectations.
I think the government or the finance minister and also in general this government would like this budget to be remembered more as a 2025 budget than a 1991.
But Gaurav and Bodhi, I want to ask both of you this question. So, initially the BJP government had this whole, the Sangnomics was a big part of BJP's economics, right? And I remember when Mr. Yashwant Sinha had presented the budget and there was talk of increasing the FDI cap on insurance.
That's right.
And there was a huge protest by the Swadeshi Jagran Manch then. And since then, of course, we've seen a complete sea change in the way all the sectors nearly have been opened up for FDI. But there is demand for further opening.
Interesting. Insurance, there has been a lot of talk that probably we can see up to 100% FDI being opened up.
FDI,
this budget could well be the occasion to make that announcement if it does, if it happens.
Dr. Surjit Bhalla, in an interview to us and in an article that he wrote, he highlighted the deep state. How deep state is holding India's growth story back. So one of the things that he highlighted was that how India started breaking up all its investment treaties with other countries, and one of the clauses that it inserted in those investment treaties was that all so-called divorce settlements, if a country wants to exit, they will have to come to Indian courts to settle that. So that was a big breaking point, and that has driven much of that exodus from India when it comes to falling FDI in the country. So this budget definitely presents the government with an opportunity to correct some of that.
So specifically with regard to FDI, I think this was in reaction to the Vodafone and the Kane episode, where those investments had international arbitration provisions, and the international arbitration panels ruled against India. So it was a reaction from the finance ministry. I'm not that sure about the deep state angle, but the finance ministry, certainly the bureaucracy, the finance ministry over successive finance ministry, finance secretaries of bureaucracies took this call, and the government then said that they scrapped arbitration clauses from these from the bilateral investment agreements, and said everything is under Indian court. So it was an assertion of sovereignty, of Indian sovereignty, which by the way is very much in keeping with this government's general, outlook.
I think
can that be reversed? I'm not sure. I mean, I'm not even sure whether that's holding up foreign investment in any significant way. It could, yeah, but it's been mentioned as an area. But
also one important point to remember from the, on FDI, from the market's point of view, because valuations have been so high over the last 2 years, you've seen a lot of multinational companies actually pair exposure to Indian markets. For example, Whirlpool. Many of these companies have actually sold down their stake. As we speak, I mean, day before yesterday, Whirlpool stock was down 20% because now they're going down from 51% to, I think, 20%. So they just sold about 25% stake last year, and now they're bringing it down by another 20%. It might be an extreme example, but that is also one contributor to FDI reverse flow.
But one thing that this budget, which probably we can say with a degree of certainty, is that for the okay, let's start.
Okay, should be.
All right. Okay. Well, I think just about a minute to go before Ms. Sitharaman presents the budget in the Parliament. So we'll of course come back with an analysis of the budget speech and watch what the budget holds for India.
Done. माननीय सदस्यगण, आइटम नंबर 1 श्रीमती निर्मला सीतारमण वित्त मंत्री सदस्यगण, बजट के बाद राज्यपाल अभिभाषण में आपको पर्याप्त अवसर दूंगा। मेरा आपसे निवेदन है, नहीं माननीय अखिलेश जी, आपने संसद की मर्यादा को आप बना के रखें। कभी बजट भाषण के अंदर इस तरीके का नहीं हुआ, ये उचित नहीं है, ये उचित नहीं है। अखिलेश जी प्लीज, मैं आपको मौका दूंगा राज्यपाल अभिभाषण पे, प्लीज। नो, ये तरीका ठीक नहीं है। नो, राज्यपाल अभिभाषण पर चर्चा होगी। नो तरीका।
Honorable Speaker, I present the budget for 25-26. This budget continues our government's efforts to A. Accelerate growth, B. Secure inclusive development, C. Invigorate private sector investments, D. Uplift household sentiments, and E. Enhance spending power of India's rising middle class. Together, we embark on a journey to unlock our nation's tremendous potential for greater prosperity and global positioning under the leadership of Honorable Prime Minister Shri Narendra Modi. As we complete the first quarter of the 21st century, continuing geopolitical headwinds suggest lower global economic growth over the medium term. However, our aspiration for a Vikasit Bharat inspires us, and the transformative work we have done during our government's first 2 terms guides us to march forward resolutely. Our economy is the fastest growing among all major economies. Our development track record for the past 10 years and structural reforms have drawn global attention. Confidence in India's capability and potential has only grown in this period. We see the next 5 years as a unique opportunity to realize Sabka Vikas, stimulating balanced growth of all regions. The great Telugu poet and playwright Gurujada Apparao had said, Deshamante matti kadoy, Deshamante manushuloy, meaning a country is not just its soil, a country is its people. In line with this, for us, Vikasit Bharat encompasses zero poverty, 100% quality good school education, access to high quality, affordable and comprehensive health care, 100% skilled labor with meaningful employment, 70% women in economic activities, and farmers making our country the food basket of the world. In this budget, the proposed development measures span 10 broad areas focusing on Garib, youth, Annadata and Nari, spurring agricultural growth and productivity, building rural prosperity and resilience, taking everyone together on an inclusive growth path, boosting manufacturing and furthering Make in India, supporting MSMEs, enabling employment-led development, investing in people, economy and innovation, securing energy supplies, promoting exports and nurturing innovation. For this journey of development, our four powerful engines are agriculture, MSME, investments and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat. This budget aims to initiate transformative reforms across 6 domains. During the first 5 years, these will augment our growth potential and global competitiveness. The domains are taxation, power sector, urban development, mining, financial sector, and regulatory reforms. Agriculture as the first engine. Now I move to specific proposals, beginning with agriculture as the first engine. Prime Minister Dhan Dhanya Krishi Yojana, developing agri-districts program. Motivated by the success of the aspirational district program, our government will undertake a Prime Minister Dhan Dhanya Krishi Yojana in partnership with states. Through the convergence of existing schemes and specialized measures, the program will cover 100 districts with low productivity, moderate crop intensity, and below average credit parameters. It aims to 1. Enhance agricultural productivity, 2. Adopt crop diversification and sustainable agricultural practices, 3. Augment post-harvest storage at the panchayat and block level, 4. Improve irrigation facilities, and 5. Facilitate availability of long-term and short-term credit. This program is likely to help 1.7 crore farmers. Building rural prosperity and resilience. A comprehensive multi-sectoral rural prosperity and resilience program will be launched in partnership with the states. This will address underemployment in agriculture through skilling, investment, technology, and invigorating the rural economy. The goal is to generate ample opportunities in rural areas so that migration is an option but not a necessity. The program will focus on rural women, young farmers, rural youth, marginal and small farmers, and landless families. The details are in Annexure A. Domestic best practices will be incorporated, and appropriate technical and financial assistance will be sought from multilateral development banks. In phase 1, 100 developing agri-districts will be covered. Atmanirbharta in pulses. Our government is implementing the National Mission for Edible Oil Seed for achieving Atmanirbharta in edible oils. Our farmers have the capability to grow enough for our needs and more. 10 years ago, we made concerted efforts and succeeded in achieving near self-sufficiency in pulses. Farmers responded to the need by increasing the cultivated area by 50%, and government arranged for procurement and remunerative prices. Since then, with rising incomes and better affordability, our consumption of pulses has increased significantly. Our government will now launch a 6-year mission for Atmanirbharta in pulses with a special focus on Tuar, Urad and Masoor. Details are in Annexure B. Central agencies such as NAFED and NCCF will be ready to procure these 3 pulses as much as offered during the next 4 years from farmers who register with these agencies and enter into agreements. Comprehensive program for vegetables and fruits. It is encouraging that our people are increasingly becoming aware of their nutritional needs. It is a sign of a society becoming healthier. With rising income levels, the consumption of vegetables, fruits, and Shri Anna is increasing significantly. A comprehensive program to promote production, efficient supplies, processing, and remunerative prices for farmers will be launched in partnership with the states. Appropriate institutional mechanisms for implementation and participation of farmer producer organizations and cooperatives will be set up. Makhana Board in Bihar. For this, there is a special opportunity for the people of Bihar. A Makhana Board will be established in the state to improve production, processing, value addition, and marketing of makhana. The people engaged in these activities will be organized into FPOs. The board will provide hand-holding and training support to makhana farmers and will also work to ensure they receive the benefits of all relevant government schemes. A national mission on high-yielding seeds will be launched, aimed at 1. Strengthening research ecosystem, 2. Targeted development and propagation of seeds with high yield, pest resistance, and climate resilience, and 3. Commercial availability of more than 100 seed varieties released since July 2024. India ranks second largest globally in fish production and aquaculture. Seafood exports are valued at 60,000 crore rupees. To unlock the untapped potential of the marine sector, our government will bring in an enabling framework for sustainable harnessing of fisheries from Indian Exclusive Economic Zone and high seas, with a special focus on the Andaman and Nicobar and Lakshadweep Islands. For the benefit of lakhs of cotton growing farmers, I am pleased to announce a mission for cotton productivity. This 5-year mission will facilitate significant improvements in productivity and sustainability of cotton farming and promote extra long staple cotton varieties. The best of science and technology support will be provided to farmers. Aligned with our integrated 5F vision for the textile sector, this will help in increasing incomes of the farmers and ensure a steady supply of quality cotton for rejuvenating India's traditional textile sector. Kisan credit cards facilitate short-term loans for 7.7 crore farmers, fishermen, and dairy farmers. The loan limit under modified interest subvention scheme will be enhanced from 3 lakh rupees to 5 lakh rupees for loans taken through the KCC. For Atmanirbharta in urea production, our government had reopened 3 dormant urea plants in the eastern region. To further augment urea supply, a plant with annual capacity of 12.7 lakh metric tons will be set up at Namrup in Assam. India Post with 1.5 lakh rural post offices, complemented by the India Post Payment Bank and a vast network of 2.4 lakh Dak Sevaks, will be repositioned to act as a catalyst for the rural economy. Details are at Annexure C. India Post will also be transformed as a large public logistics organization. This will meet the rising needs of Vishwakarmas, new entrepreneurs, women, self-help groups, MSMEs, and the large business organizations. Our government will provide support to NCDC for its lending operations for the cooperative sector. MSMEs as the second engine. Now I move to MSMEs as the second engine, which encompasses manufacturing and services with a focus on MSMEs numbering 5.7 crores. Currently, over 1 crore registered MSMEs, employing 7.5 crore people and generating 36% of our manufacturing, have come together to position India as a global manufacturing hub. With their quality products, these MSMEs are responsible for 45% of our exports. To help them achieve higher efficiencies of scale, technological upgradation, and better access to capital, the investment and turnover limits for classification of all MSMEs will be enhanced to 2.5 and 2 times respectively. This will give them the confidence to grow and generate employment for our youth. The details are given in Annexure D. To improve access to credit, the credit guarantee cover will be enhanced. First, for micro and small enterprises from 5 crore to 10 crore rupees, leading to additional credit of 1.5 lakh crores in the next 5 years. Second, for startups from 10 crore rupees to 20 crore rupees, with the guarantee fee being moderated to 1% for loans in 27 focus sectors which are important for Atmanirbhar Bharat. And for well-run exporter MSMEs, for term loans up to 20 crore rupees. Also for the micro enterprises, we will introduce customized credit cards with a 5 lakh rupee limit for micro enterprises registered on Udyam portal. In the first year, 10 lakh such cards will be issued. Fund of funds for startups. The alternate investment fund, AIFs, for startups have received commitments of more than 91,000 crores rupees. These are supported by the fund of funds set up with the Government of India's contribution of 10,000 crore rupees. Now, a new fund of funds with expanded scope and a fresh contribution of another 10,000 crore rupees will be set up. A new scheme will be launched for 5 lakh women, scheduled castes and scheduled tribes, first-time entrepreneurs. This will provide term loans up to 2 crore rupees during the next 5 years. The scheme will incorporate lessons from the successful Stand Up India scheme. Online capacity building for entrepreneurship and managerial skills will also be organized. Measures for labor-intensive sectors. To promote employment and entrepreneurship opportunities in labor-intensive sectors, our government will undertake specific policy and facilitation measures. To enhance the productivity, quality, and competitiveness of India's footwear and leather sector, a focused product scheme will be implemented. The scheme will support design capacity, component manufacturing, and machinery required for production of non-leather quality footwear, besides the support for leather footwear, and products. The scheme is expected to facilitate employment for 22 lakh persons, generate over 4 lakh crore rupees, and exports of over 1.1 lakh crore rupees. Measures for the toys sector. Building on the National Action Plan for Toys, we will implement a scheme to make India a global hub for toys. The scheme will focus on development of clusters, skills, and a manufacturing ecosystem that will create high-quality, unique, innovative, and sustainable toys that will represent the Made in India brand. Support for food processing. In line with our commitment towards Purvodaya, we will establish a National Institute of Food Technology, Entrepreneurship and Management in Bihar. The institute will provide a strong fillip to food processing activities in the entire eastern region. This will result in 1. Enhanced income for the farmers through value addition to their produce, and 2. Skilling entrepreneurship and employment opportunities for the youth. Manufacturing mission, furthering Make in India. Our government will set up a national manufacturing mission covering small, medium, and large industries for furthering Make in India by providing policy support, execution roadmaps, governance, and monitoring framework for central ministries and states. Details are in Annexure E. Given our commitment to climate-friendly development, the mission will also support clean tech manufacturing. This will aim to improve domestic value addition and build our ecosystem for solar PV cells, EV batteries, motors and controllers, electrolyzers, wind turbines, very high voltage transmission equipment, and grid-scale batteries. Investment as the third engine. Now I move to investment as the third engine, which encompasses investing in people, investing in the economy, and investing in innovation. Investing in people. Saksham Anganwadi and Poshan 2.0. Saksham Anganwadi and Poshan 2.0 program provides nutritional support to more than 8 crore children, 1 crore pregnant women and lactating mothers all over the country, and about 20 lakh adolescent girls in aspirational districts and the Northeast region. The cost norms for these nutritional support will be enhanced appropriately. Atal Tinkering Labs. 50,000 Atal Tinkering Labs will be set up in government schools in the next 5 years to cultivate the spirit of curiosity and innovation and foster a scientific temper among young minds. Broadband connectivity to government secondary schools and PHCs. Broadband connectivity will be provided to all government secondary schools and primary health centers in rural areas under the BharatNet project. Bharatiya Bhasha Pustak Scheme. We propose to implement a Bharatiya Bhasha Pustak scheme to provide digital form Indian language books for schools and for higher education. This aims to help students understand their subjects better and in their language. National Centers of Excellence for Skilling. Building on the initiative announced in the July 24 budget, 5 national centers of excellence for skilling will be set up with global expertise and partnerships to equip our youth with the skills required for Make for India, Make for the World manufacturing. The partnership will cover curriculum design, training of trainers, and a skills certification framework and periodic reviews. Expansion of capacity in IITs. Total number of students in 23 IITs has increased 100% from 65,000 to 1.35 lakh in the past 10 years. Additional infrastructure will be created in the 5 IITs started after 2014 to facilitate education for 6,500 more students. Hostel and other infrastructure capacity at IIT Patna will also be expanded. Center of Excellence. Center of Excellence in AI for Education. I had announced 3 centers of excellence in artificial intelligence for agriculture, health, and sustainable cities in 2023. Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores. Expansion of medical education. Our government has added almost 1.1 lakh undergraduate and postgraduate medical education seats in 10 years, an increase of 130%. In the next year, 10,000 additional seats will be added in medical colleges and hospitals towards the goal of adding 75,000 seats in the next 5 years. Daycare cancer centers in all district hospitals. Our government will facilitate setting up of daycare cancer centers in all district hospitals in the next 3 years. 200 centers will be established in 25-26 itself. Strengthening urban livelihoods. Our government has been giving priority to assisting urban poor and vulnerable groups. A scheme for socio-economic upliftment of urban workers will be implemented to help them improve their incomes, have sustainable livelihoods, and a better quality of life. PM Swanidhi scheme has benefited more than 68 lakh street vendors, giving them respite from high-interest informal sector loans. Building on this success, the scheme will be revamped with enhanced loans from banks, UPI-linked credit cards with 30,000 rupees limit, and capacity building support. Social Security Scheme for welfare of online platform workers. Gig workers of online platforms provide great dynamism to the new age services economy. Recognizing their contribution, our government will arrange for their identity cards and registration on the e-Shram portal. They will be provided healthcare under PM Jan Arogya Yojana. This measure is likely to assist nearly 1 crore gig workers. Investing in the economy. Public-private partnership in infrastructure. Each infrastructure-related ministry will come up with a 3-year pipeline of projects that can be implemented in PPP mode. States will also be encouraged to do so and can seek support from the India Infrastructure Project Development Fund, which is a scheme to prepare PPP proposals. Support to states for infrastructure. An outlay of 1.5 lakh crore is proposed for the 50-year interest-free loans to states for capital expenditure and incentives for reforms. Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects. Regulatory and fiscal measures will be fine-tuned to support the plan. Jal Jeevan Mission. Since 2019, 15 crore households, representing 80% of India's rural population, have been provided access to portable tap water connections. To achieve 100% coverage, I am pleased to announce the extension of this mission until 2028 with an enhanced total outlay. The mission's focus will be on the quality of infrastructure and O&M of rural piped water supply schemes through Jan Bhagidari. A separate MOU or separate MOUs will be signed with the states and union territories to ensure sustainability and citizen-centric water services delivery. Urban sector reforms. Building on the July budget proposals, urban sector reforms related to governance, municipal services, urban land and planning will be incentivized. Urban Challenge Fund. The government will set up an urban challenge fund of 1 lakh crore rupees to implement the proposals for cities as growth hubs, creative redevelopment of cities, and for water and sanitation purposes announced in the July budget. This fund will finance up to 25% of the cost of bankable projects, with a stipulation that at least 50% of the cost is funded from bonds, bank loans, and PPPs. An allocation of 10,000 crore is proposed in 2025-26. Power sector reforms. We will incentivize electricity distribution reforms and augmentation of intra-state transmission capacity by states. This will improve financial health and capacity of electricity companies. Additional borrowing of 0.5% of GSDP will be allowed to states contingent on these reforms. Nuclear energy mission for Vikasit Bharat. Development of at least 100 gigawatt of nuclear energy by 2047 is essential for our energy transition efforts. For an active partnership with the private sector towards this goal, amendments to the Atomic Energy Act and the Civil Liability for Nuclear Damage Act will be taken up. A nuclear energy mission for research and development of small modular reactors with an outlay of 20,000 crore will be set up. At least 5 indigenously developed small modular reactors will be operationalized by 2033. Shipbuilding. The shipbuilding financial assistance policy will be revamped to address cost disadvantages. This will also include credit notes for shipbreaking in Indian yards to promote the circular economy. Large ships above a specified size will be included in the infrastructure harmonized master list. Shipbuilding clusters will be facilitated to increase the range, categories, and capacity of ships. This will include additional infrastructure, facilities, skilling, and technology to develop the entire ecosystem. Maritime Development Fund. For long-term financing for the maritime industry, a Maritime Development Fund with a corpus of 25,000 crore rupees will be set up. This will be for distributed support and promoting competition. This will have up to 49% contribution by the government, and the balance will be mobilized from ports and from private sector. UDAN regional connectivity schemes. UDAN has enabled 1.5 crore middle-class people to meet their aspirations for speedier travel. The scheme has connected 88 airports, and operationalized 619 routes. Inspired by that success, a modified UDAN scheme will be launched to enhance regional connectivity to 120 new destinations and carry 4 crore passengers in the next 10 years. 4 crore additional passengers in the next 10 years. The scheme will also support helipads and smaller airports in hilly, aspirational and northeast regional districts. Greenfield airports will be facilitated in Bihar to meet the future needs of the state. These will be These will be in addition to the expansion of the capacity of Patna Airport and a brownfield airport in Beta. Western Kosi Canal project in Mithilanchal. Financial support will be provided for the Western Kosi Canal ERM project, benefiting a large number of farmers cultivating over 50,000 hectares of land in the Mithilanchal region of Bihar. Mining sector reforms. Mining sector reforms, including those for minor minerals, will be encouraged through sharing of best practices and institutions of a state mining index. A policy for recovery of critical minerals from tailings will be brought out. Under the special window for affordable and mid-income housing, SWAMI, 50,000 dwelling units in stressed housing projects have been completed and keys handed over to home buyers. Another 40,000 units will be completed in 2025, further helping middle-class families who were paying EMIs on loans taken for apartments while also paying rent for their current dwellings. Building on this success, SWAMI Fund 2 will be established as a blended finance facility with contribution from the government, banks and private investors. This fund of 15,000 crore rupees will aim for expeditious completion of another 1 lakh units. PM Gati Shakti data for private sector. For furthering PPPs and assisting the private sector in project planning, access to relevant data and maps from the PM Gati Shakti portal will be provided. Tourism for employment-led growth. Top 50 tourist destination sites in the country will be developed in partnership with states through a challenge mode. Land for building key infrastructure will have to be provided by the states. Hotels in these destinations will be included in the infrastructure harmonized list. The following measures will be taken for facilitating employment-led growth. Organizing intensive skill development programs for our youth, including in institutes of hospitality management. Providing mudra loans for homestays. Improving ease of travel and connectivity to tourist destinations. Providing performance-linked incentives to states for effective destination management, including tourist amenities, cleanliness, and marketing efforts. And introducing streamlined e-visa facilities along with visa fee waivers for certain tourist groups. Continuing with the emphasis on places of spiritual and religious significance, in the July budget, there will be a special focus on destinations related to the life and times of Lord Buddha. Medical tourism and heal in India. Medical tourism and heal in India will be promoted in partnership with the private sector, along with capacity building and easier visa norms. Investing in innovation. To implement private sector-driven research, development and innovation initiatives announced in the July budget, I am now allocating 20,000 crore rupees for this purpose. A deep tech fund of funds will also be explored to catalyze the next generation startups as a part of this initiative. In the next 5 years, under the PM Research Fellowship Scheme, we will provide 10,000 fellowships for technological research in IITs and IISc with enhanced financial support. The second gene bank with 10 lakh germplasm lines will be set up for future food and nutritional security. This will provide conservation support to both public and private sectors for genetic resources. We will start a national geospatial mission to develop foundational geospatial infrastructure and data. Using PM Gati Shakti, this mission will facilitate modernization of land records, urban planning, and design of infrastructure projects. A Gyan Bharatam mission for survey, documentation, and conservation of our manuscript heritage with academic institutions, museums, libraries, and private collectors will be undertaken to cover more than 1 crore manuscripts. We will set up a national digital repository of Indian knowledge systems for knowledge sharing. Now I move to exports as the fourth engine. We will set up an export promotion mission with sectoral and ministerial targets driven jointly by the Ministries of Commerce, MSME, and Finance. It will facilitate easy access to export credit, cross-border factoring support, support to MSMEs to tackle non-tariff measures in overseas markets. A digital public infrastructure, Bharat Trade Net, for international trade will be set up as a unified platform for trade documentation and financing solutions. This will complement the Unified Logistics Interface platform. The BTN will be aligned with international practices. Support will be provided to develop domestic manufacturing capacities for our economy's integration with global supply chains. Sectors will be identified based on objective criteria. Facilitation groups with participation of senior officers and industry representatives will be formed for select products and supply chains. Through this, there are huge opportunities related to Industry 4.0, which needs high skills and talent. Our youth have both. Our government will support the domestic electronic equipment industry to leverage this opportunity for the benefit of our youth. A national framework will be formulated as guidance to states for promoting global capability centers in emerging Tier 2 cities. This will suggest measures for enhancing availability of talent and infrastructure, building bylaw reforms, and mechanisms for collaboration with industry. Our government will facilitate upgradation of infrastructure and warehousing for air cargo, including high-value perishable horticultural produce. Cargo screening and customs protocol will be streamlined and made user-friendly. Reforms as the fuel. Over the past 10 years, our government has implemented several reforms for convenience of taxpayers, such as faceless assessment, 2, taxpayer charter, 3, faster returns, 4, almost 99% returns being on self-assessment, and 5, Vivad Se Vishwas scheme. Continuing these efforts, I reaffirm the commitment of the Tax Department to trust first, scrutinized later. I also propose to introduce the new income tax bill next week. I will detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Requirements and procedures for speedy approval of company mergers will be rationalized. The scope for fast-track mergers will also be widened and the process made simpler. As proposed in the interim budget, we signed bilateral investment treaties with 2 countries in 2024 to encourage sustained foreign investment, and in the spirit of First Develop India, the current model BIT will be revamped and made more investor-friendly. In the last 10 years, in several aspects, including financial and non-financial, our government has demonstrated a steadfast commitment to ease of doing business. We are determined to ensure that our regulations must keep up with technological innovations and global policy developments. A light-touch regulatory framework based on principles and trust will unleash productivity and employment. Through this framework, we will update regulations that were made under old laws. To develop this modern, flexible, people-friendly, and trust-based regulatory framework appropriate for the 21st century, I propose 4 specific measures. A high-level committee for regulatory reforms will be set up for a review of all non-financial sector regulations, certifications, licenses, and permissions. The committee will be expected to make recommendations within a year. The objective is to strengthen trust-based economic governance and take transformational measures to enhance ease of doing business, especially in matters of inspection and compliances. States will be encouraged to join in this endeavour. An investment friendliness index of states will be launched in 2025 to further the spirit of competitive, cooperative federalism. Under the Financial Stability and Development Council, a mechanism will be set up to evaluate impact of the current financial regulations and subsidiary instructions. It will also formulate a framework to enhance their responsiveness and development of the financial sector. In the Jan Vishwas Act 2023, more than 180 legal provisions were decriminalized. Our government will now bring up the Jan Vishwas Bill 2.0 to decriminalize more than 100 provisions in various laws. I now move to fiscal policy. In the July budget, I had committed to staying the course for fiscal consolidation. Our endeavour will be to keep the fiscal deficit each year such that that central government debt remains on a declining path as a percentage of the GDP. The roadmap for the next 6 years has been detailed in the FRBM statement. Revised estimates for 2024-25. The revised estimate of the total receipts other than borrowings is 31.47 lakh crore rupees, of which the net tax receipts are 25.57 lakh crore rupees. The revised estimate of the total expenditure is 47.16 lakh crore rupees, of which the capital expenditure is about 10.18 lakh crore rupees. The revised estimate of the fiscal deficit is 4.8% of the GDP. Budget estimates for 25-26. Coming to 25-26, the total receipts other than borrowings and total expenditure are estimated at 34.96 lakh crore rupees and 50.65 lakh crore rupees respectively. The net tax receipts are estimated at 28.37 lakh crore rupees. The fiscal deficit is estimated to be 4.4% of GDP. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.54 lakh crore. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 14.82 lakh crore rupees. I will now move to Part B. Indirect taxes. My proposals relating to customs aim to rationalize tariff structure and address duty inversion. These will also support domestic manufacturing and value addition, promote exports, facilitate trade, and provide relief to common people. Rationalization of customs tariff structure for industrial goods. As a part of comprehensive review of customs rate structure announced in July 2024 budget, I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. After this, there will be only 8 remaining tariff rates, including 0 rate. 2. Apply appropriate cess to broadly maintain effective duty incidence, except on a few items where such incidence will reduce marginally. 3. Levy not more than 1 cess or surcharge. Therefore, I propose to exempt social welfare surcharge on 82 tariff lines that are subject to a cess. I shall now take up sector-specific proposals. To provide relief to patients, particularly those suffering from cancer, rare diseases, and other severe chronic diseases, I propose to add 36 life-saving drugs and medicines to the list of medicines fully exempted from basic custom duty. I also propose to add 6 life-saving medicines to the list attracting concessional custom duty of 5%. Full exemption and concessional duty will also respectively apply on the bulk drugs for manufacture of the above. Specified drugs and medicines under patient assistance programs run by the pharmaceutical companies are fully exempt from BCD, provided the medicines are supplied free of cost to the patients. I propose to add 37 more medicines along with 13 new patient assistance programs. Support to domestic manufacturing and value addition. Critical minerals. In the July 2024 budget, I had fully exempted BCD on 25 critical minerals that are not domestically available. I had also reduced BCD of 2 other such minerals to provide a major fillip to their processing especially by MSMEs. Now, I propose to fully exempt cobalt powder and waste, the scrap of lithium-ion battery, lead, zinc, and 12 more critical minerals. This will help secure the availability for manufacturing in India and promote more jobs for our youth. To promote domestic production of technical textile products such as agro-textiles, medical textiles, and geotextiles at competitive prices, I propose to add 2 more types of shuttle-less looms to the list of fully exempted textile machinery. I also propose to revise the BCD rate on knitted fabrics covered by 9 tariff lines from 10 or 20 to 20% or 115 rupees per kg, whichever is higher. Electronic goods. In line with our Make in India policy and to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20% and reduce the BCD to 5% on open cell and other components. In 23-24 budget, for the manufacture of open cells of LCD, LED TVs, I had reduced the BCD on parts of open cells from 5% to 2.5%. To further boost the manufacture of such open cells, the BCD on these parts will now stand exempted. Lithium-ion battery. To the list of exempted capital goods, I propose to add 35 additional capital goods for EV battery manufacturing and 28 additional capital goods for mobile phone battery manufacturing. This will boost domestic manufacture of lithium-ion batteries, both for mobile phones and for electric vehicles. Shipping sector. Considering that shipbuilding has a long gestation period, I propose to continue the exemption of BCD on raw materials, components, consumables, or parts for the manufacture of ships for another 10 years. I also propose the same dispensation for shipbreaking to make it more competitive. Telecommunication. To prevent classification disputes, I propose to reduce the BCD from 20% to 10% on carrier-grade Ethernet switches to make it at par with non-carrier-grade Ethernet switches. Export promotion. To facilitate exports of handicrafts, I propose to extend the time period for export from 6 months to 1 year, further extendable by another 3 months if required. I also propose to add 9 items to the list of duty-free inputs. Leather sector. I propose to fully exempt BCD on wet blue leather to facilitate imports for domestic value addition and employment. I also propose to exempt crust leather from 20% export duty to facilitate exports by small tanners. Marine products. To enhance India's competitiveness in the global seafood market, I propose to reduce BCD from 30% to 5% on frozen fish paste, surimi, for manufacture and export of its analog products. I also propose to reduce BCD from 15% to 5% on fish hydrolysates for manufacture of fish and shrimp feed. In July 2024 budget, to promote development of domestic MROs for aircraft and ships, I had extended the time limit for export of foreign origin goods that were imported for repairs from 6 months to 1 year and further extendable by 1 year. I now propose to extend the same dispensation for railway goods. Time limit for provisional assessment. Presently, the Customs Act 1962 does not provide any time limit to finalize provisional assessments, leading to uncertainty and cost to trade. As a measure of promoting ease of doing business, I propose to fix a time limit of 2 years, extendable by a year, for finalizing the provisional assessment. I propose to introduce a new provision that will enable importers or exporters, after clearance of goods, to voluntarily declare material facts and pay duty with interest but without penalty. This will incentivize voluntary compliance. However, this will not apply in cases where department has already initiated audit or investigation proceedings. For industry to better plan their imports, I propose to extend the time limit for the end use of imported inputs in the relevant rules from 6 months to 1 year. This will provide operational flexibility in view of cost and uncertainty of supply. Further, such importers will now have to file only quarterly statements instead of a monthly statement. I now come to my direct tax proposals. In Part A, I have briefly underlined taxation reforms as one of key reforms to realize our vision of Vikasit Bharat. In respect of criminal law, our government had earlier ushered in Bharatiya Nyaya Sanhita, replacing Bharatiya Danda Sanhita. I am happy to inform this august House and the country that for new income tax bill will carry forward the same spirit of Nyaya in its drafting as well. The new bill will be clear and direct in text, with close to half of the present law in terms of both chapters and words. It will be simple to understand for taxpayers and tax administrators, leading to tax certainty and reduced litigation. Reforms, however, are not a destination. They are means to achieve good governance for our people and economy. Providing good governance primarily involves being responsive. The Tirukural captures this in verse 542, which reads, "Vaanokki vaazhum ulagallam, mannavan kol nokki vaazhum kudi," meaning, just as the living beings live expecting rains, citizens live expecting good governance. Our government is committed to keeping an ear to the ground and a finger on the pulse and responding while balancing our national building efforts. The following measures will detail just how our government will, under the guidance of PM Modi, has taken steps to understand and address. I repeat that sentence, sir. The following measures will detail just how our government, under the guidance of PM Modi, has taken steps to understand and address the needs voiced by our citizens. My tax proposals are guided by this spirit. The objectives of my proposals are as follows: personal income tax reforms with special focus on middle class, rationalization of TDS and TCS for easing difficulties, encouraging voluntary compliance, reducing compliance burden, ease of doing business, employment and investment. I will come to my proposal on personal income tax towards the end. TDS and TCS, rationalization for easing difficulties. I propose to rationalize tax deduction at source, TDS, by reducing the number of rates and thresholds above which TDS is deducted. Further, threshold amounts for tax deduction will be increased for better clarity and uniformity. The limit for tax deduction on interest for senior citizens is being doubled from the present 50,000 rupees to 1 lakh rupees. Similarly, the annual limit of 2.40 lakh rupees for TDS on rent is being increased to 6 lakh rupees. This will reduce the number of transactions liable to TDS, thus benefiting small taxpayers receiving small payments. The threshold to collect tax at source, the TCS, on remittances under RBI's liberalized remittance scheme, the LRS, is proposed to be increased from 7 lakh to 10 lakhs. I also propose to remove TCS on remittances for education purposes, where such remittances is out of a loan taken from a specified financial institution. Both TDS and TCS are being applied on any transaction related to sale of goods. To prevent such compliance difficulties, I propose to omit the TCS. I also propose that the provisions of the higher TDS deduction will now apply only in non-PAN cases. In July 2024, the delay for payment of TDS up to the due date of filing statement was decriminalized. I propose to provide the same relaxation to TCS provisions as well. The government under the leadership of Prime Minister Modi believes in Sabka Saath, Sabka Vikas, Sabka Vishwas and Sabka Prayas. In line with this, we brought in updated return facility in 2022 for voluntary compliance by taxpayers who had omitted to report their correct income. Our trust in taxpayers was proved right. Nearly 90 lakh taxpayers voluntarily updated their incomes by paying additional tax. Taking this trust further, I now propose to extend the time limit to file updated returns for any assessment year from the current limit of 2 years to 4 years. I propose to reduce the compliance burden for small charitable trusts and institutions by increasing their period of registration from 5 years to 10 years. It is also proposed that disproportionate consequences do not arise for minor defaults, such as incomplete applications filed by charitable entities. Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. In my speech in July 2024, I had promised that all processes, including giving effect to appellate orders, shall be digitalized and made paperless over the next 2 years. So I'm happy to announce that digitalization is being made operational now. In July 2024, we brought in the Vivad Se Vishwas scheme to resolve income tax disputes pending in appeal. The scheme has received a great response, with nearly 33,000 taxpayers having availed of the scheme to settle their disputes. I have a few proposals to promote investment and employment. It is proposed to provide a presumptive taxation regime for non-residents who provide services to a resident company that is establishing or operating an electronics manufacturing facility. I further propose to introduce a safe harbor for tax certainty for non-residents who store components for supply to specified electronics manufacturing units. Presently, the tonnage tax scheme is available only to sea-going ships. The benefits of existing tonnage tax scheme are proposed to be extended to inland vessels registered under the Indian Vessels Act 2021 to promote inland water transport in the country. Extension for incorporation of startups. We continue to support the Indian startup ecosystem. I propose to extend the period of incorporation by 5 years to allow the benefit available to startups which are incorporated before 1/4/2030. In order to attract and promote additional activities in the IFSC, I am inter alia proposing specific benefits to ship leasing units, insurance offices, and treasury centers of global companies which are set up in IFSC. Further, to claim benefits, the cut-off date for commencement in IFSC has also been extended by 5 years to 31/3/2030. Category 1 and Category 2 AIFs are undertaking investments in infrastructure and other such sectors. I propose to provide certainty of taxation to these entities on the gains from securities, to promote funding from sovereign wealth funds and pension funds to the infrastructure sector. I propose to extend the date of making an investment by 5 more years up to 31st March 2030. Personal income tax reforms with special focus on middle class. Democracy, demography, and demand are the key support pillars in our journey towards Vikasit Bharat. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, average income of 1 lakh per month, other than the special rate income such as capital gains, under the new regime. This limit will be 12.75 lakh for salaried taxpayers due to the standard deduction of 75,000. Slabs and rates are being changed across the board to benefit all taxpayers. The new structure will substantially reduce the taxes of the middle class and leave more money in their hands, boosting household consumption, savings, and investment. In the new tax regime, I propose to revise tax rate structures as follows. 0 to 4 lakh rupees nil, 4.8 lakh rupees to 4 to 8 lakh rupees 5%, 8 to 12 lakh rupees 10%, 12 to 16 lakh rupees 15%, 16 to 20 lakh rupees 20%, 20 to 24 lakh rupees 25%, and above 24 lakh rupees 30%. To taxpayers up to 12 lakh of normal income, other than special rate income such as capital gains. I read that again. To taxpayers up to 12 lakh of income, other than special rate income such as capital gains, tax rebate is being provided in addition to the benefit due to slab rate reduction in such a manner that there is no tax payable by them. The total tax benefit of slab rate changes and rebate at different income levels can be illustrated with a few examples. A taxpayer in the new regime with an income of 12 lakh rupees will get a benefit of 80,000 rupees in tax, which is 100% of tax payable as per the existing rates. A person having income of 18 lakh rupees will get a benefit of 70,000 rupees in tax, that is 30% of tax payable as per existing rates. A person with an income of 25 lakh gets a benefit of 1,10,000 rupees, that is 25% of his tax payable as per existing rates. Details of my tax proposals are given in the annexure. As a result of these proposals, Honorable Speaker, sir, revenue of about 1 lakh crore in direct taxes and 2,600 crores in indirect taxes will be foregone. Mr. Speaker, sir, with this, I commend the budget to this august House.
Item number 2, Srimati Nirmala Sitharaman.
Sir, with your permission, I rise to lay on the table the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management Act 2003. Medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.
Item number 3, Srimati Nirmala Sitharaman.
Sir, with your permission, I rise to move for leave to introduce the Finance Bill 2025.
प्रश्न ये है कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए। जो सदस्य इसके पक्ष में हाँ कहें, जो सदस्य विरोध में ना कहें। मेरे विचार में निर्णय हाँ वालों के पक्ष में हुआ, हाँ वालों के पक्ष में अनुमति प्रदान की जाती है। माननीय मंत्री जी, अब विधेयक को पुनर्स्थापित करें।
Sir, I introduce the bill.
Thank you. सभा की कार्रवाई सोमवार दिनांक 3 फरवरी 2025 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है। सभा की कार्रवाई 2025 को
launched in partnership with the states. This will address underemployment in agriculture through skilling, investment, technology, and invigorating the rural economy. The goal is to generate ample opportunities in rural areas so that migration is an option but not a necessity. The program will focus on rural women, young farmers, rural youth, marginal and small farmers, and landless families. And best.
All right, the budget 2025 has been tabled. The loudest cheers have gone in on the tax relief that has come in. No income tax payable up to 12 lakh rupees. That's the big headline coming out of budget 2025. Those along with several other measures that have kicked in. But at this point on money control, let's take a quick look at how the markets are actually faring at this point and what their reaction to this budget 2025 is all about. Let's cut across to Nandita for the latest. All right, we'll just fix that audio with Nandita in a minute and go back to her. For the moment, the big breaking news at this point, the big takeaway from budget 2025 is the income tax exemption limits. We'll put that graphic up on the screen for everybody to sort of review at the moment. Let's take a look at those exemptions again. From 2005 to 2025, if you look at the exemptions that have been given in, it's gone from 1 lakh, 2 lakh to almost 12 lakhs now in 2025. That is the big booster shot to middle class that has come in with budget 2025. Remember, going into this budget, the one big thing that everybody was asking was relief. Has that been granted with this budget? Like I said, loud cheers were heard here in the newsroom and across as well on social media as we hear that. We are just about an hour and 20 minutes of budget speech that we heard from the Prime Minister, some of the key, from the Finance Minister, some of the key takeaways on your screen right now, and those are what the numbers are really looking like. Let's try and see if we can get a quick response again and see how the markets are faring at this point. Let's see if we have Nandita. Nandita, yeah?
Yeah, I'm back. So yes, as I'm saying that, the Mahalakshmi has clearly blessed us in terms of personal taxes. No income tax up till 12 lakh rupees, and that is something that cheered the market, because we did slip into the red, and we shaved the wild swings. We saw wild swings during the speech. Once the capex target was revised lower, the markets took it on the chin. We in fact shaved off 300 points from the day's high. In fact, the Nifty fell below that 23,300 mark as well. But announcement on personal taxes, something that cheered the market, and we came off from the day's low. All the capex heavy stocks like Ultratech Cement, L&T, these are all losing at the current juncture. Bharat Electronics, if you look at these stocks, even power stocks for that matter, Coal India, Power Grid, and the oil and gas stocks, ONGC, BPCL, these are all trending lower, given the fact that the government has revised its capex target lower for FY25. What's doing well? You guessed it right. All the consumption stocks have got a boost after the announcement on personal taxes. So Maruti Suzuki 6% up for that matter. Trent, ITC, Britannia, Bajaj Auto, HUL, all these consumption stocks are gaining to the tune of 6 to 7% apiece. So that's the kind of reaction that's coming in on the market. Mid-cap index in the green right now. We are off the day's low. We saw wild swings. But let's understand and get a battery of guests to understand all the announcements that were made in the budget. For that, let me cut back to Mahalakshmi. Mahalakshmi, take it over.
Before we go to the battery of guests, one correction. The Finance Minister did not mention the revised, the budget estimates for capital expenditure for FY26 in her speech. She only talked about the revised numbers for FY25, which stood at 10.1, which is pretty much what the market was expecting. That's what we closed this year with. The number for FY26 budgeted estimate is still not out. We have to wait for the budget document to see that. So I'm really clueless about why has the market really took it so badly. But the good news in the end was, of course, the tax breaks, which largely people were expecting, but were not sure whether will happen or not. Back to you, Nandita.
Thanks, Mahalakshmi. Yes, when I did point out that the capex figure has been revised lower, it was for FY25. Yes, but the markets did react quite negatively to that. Of course, we will wait for the fine print and see how things pan out for FY26 as well. Yeah. But in terms of other announcements and reactions on stock prices, insurance FDI has been hiked to 100% from 74%, which is why we saw positive reaction on stocks like SBI Life as well, and there was a lot of push towards agriculture, which bode well for stocks like Kaveri Seeds, Godrej Agrovet, Bayer Corp. You had fertilizer stocks as well gaining because government is going to set up urea plant of 1.27 lakh tons capacity, and which is what cheered stocks like Madras Fertilizer, Paradis Phosphates, FACT as well. Footwear stocks got a fillip. We saw Bata, Relaxo, all these stocks rallying in trade. Scheme for footwear and leather will generate investment to the tune of 4 lakh crore rupees. So, which is what got the footwear stocks going in trade. There were measures to boost shipbuilding as well, which is why we saw reactions on stocks like Shipping Corp, SR Shipping, and the Jal Jeevan mission has been extended to 2028. Stocks like Viatech, Babag, Shakti Pipes, got a fillip, and we saw strong gains coming in there. There has been a push for affordable housing as well. The Swami, which is why stocks like Aadhar Housing, Aptus Value, HFC, even the entire realty pack in fact managed to do well. But in terms of what the market is doing at the current juncture, as I said, wild swings. Right now we are in the positive zone. The bank nifty is trading in the red, but yes, we are off the day's low, and of course once the fine print comes, we will get more reactions, and we will see how markets really react to that. But with that, I think back to Sonal and will impact all of us.
It's been quite a firecracker for budget. Lots to decode on what is happening. Stay back with us. I want to come back to you and see how consumption, or essentially putting money back in the pockets of the middle class, will actually do, and which sectors will see an upswing there. So while you prep up on that, let me just also welcome in Bodhi Satsa Ganguly in the studios. Bodhi, what a budget. She saved the best for the last.
I know.
And right in the end gave in that big booster. Your first thoughts?
No, so the highlight of the budget is clearly the personal tax under the new income tax regime.
Yes.
Just to be clear. So basically, if you if up to 12 lakhs you don't pay any tax at all, I think it's 12.75 if you include the standard deduction, and the 30% tax rate kicks in above 24 lakhs. So that's significant because under the new income tax regime, the 30% tax kicked in above 15 lakh. That's a big. So there is a lot of money for those who have opted for the new income tax regime. However, I think you should consult, if you're still under the old income tax regime, you should consult your CA because of the housing loan, the 2 lakh interest and also health insurance and things like that, or even the rental. So you need to consult your CA for that. So don't, but that's really the big kicker. Yeah. I don't know what has happened to consumption stocks though in the last few minutes. Have they moved?
I actually wanted to go back to Nandita and sort of get in a quick jump on that. So when stuff like this happens, Nandita, like I said, consumption, which was a big expectation, urban consumption, largely the big expectation, which is falling short. If this is a measure intended towards that direction, which sectors are we seeing and how are they reacting?
So, right, we are seeing autos doing well, FMCG, which have seen volume decline, not exactly decline, volume slowing down in their quarterly earnings. We've seen biggies like HUL say that volumes are under pressure. We've seen flat growth in volumes because people are buying less soaps, less detergents, that's where the pain was, which is what the, I think, finance minister has looked at, plugging the hole, and which is why we are seeing stocks from auto sector doing well, FMCG doing well, retail stocks like Trent, for that matter, among top gainers, 5%. So that will, more money in the hands of consumer will, encourage them to plug that hole and perhaps go and buy more of these cars and, dresses, the lower end dresses, FMCG products, etc. Looking at the top gainers, Trent, that stock is up 5%, Maruti, Hindustan Unilever, Britannia, ITC, Tata Consumer, Bajaj Auto, all these auto, FMCG and retail names are the ones that are reacting.
All right, can we look at some big stocks then, Anita, for a minute, stocks that we've been tracking before the budget as well, ITC, Nestle, the rest of them, and see how quickly they are really doing at this point? And let's go
Sure.
sector by sector. Yeah.
Yeah, so HUL is leading when it comes to the FMCG pack, followed by ITC, Britannia, even Nestle for that matter is among the gainers when it comes to the FMCG pack. Looking at the auto pack, you have Maruti, Bajaj Auto, Hero Moto that was in the red for a greater part of the day because there has been a CEO management change as well there, a top level management exit. It was reacting to that, but now it has also turned back into the green and it's gaining somewhere around 2% or so. From the retail names, as I mentioned, Trent is doing well. Tata Consumer is another one that's doing well right now. So that's about the consumption. Even paint stocks are doing well as of now. Asian Paints, that's kind of holding out. But the trend is, you can't really establish a trend in the market right now because we are flitting between gains and losses. I think once the budget fine print comes out later, that's when we will see a proper trend emerging. Right now we are off the day's lows, but still in the red.
In the order of gainers, it's very clear. Actually, staples are the biggest gainers, 4% up. In fact, 3.39% up as we speak. Consumption is 2.37% up. Consumer durables is the next, which is all these white goods, etc. Then autos. So it seems like the market is expecting that the rural demand will have rural semi-urban will have a lower effect, but autos will be even slower. But the top gainer is staples and yeah.
What about agri?
Two-wheelers also is around.
Yeah. What about agri stocks?
Agri stocks,
agri stocks are a mixed bag.
Agri stocks actually, there is a big push for agriculture sector. Government will be launching a 6-year mission for Atmanirbharta in pulses. So you have Kaveri Seeds, Godrej Agrovet, Bayer Crop. These are some of the agriculture centric stocks that are doing well. Even fertilizer stocks, because government will be setting up a urea plant. Of 1.3 lakh tons capacity. All these fertilizer stocks like Madras Fertilizer, Paradeep Phosphates, footwear, there was a push for that as well. Bata, Relax, so these are doing well. Even for solar battery system, there was government will be aiming to create an ecosystem for solar PV cells and electrolyzers. Because of that, you've seen stocks like Borosil Renewables, Amara Raja doing well. So these are some of the stocks that are doing well right now.
Another important thing to note in today's trade is banks. I mean, she announced fiscal deficit at 4.4% for next year, and yet banks are sulking. Private sector banks, large Nifty private banks is down a tad. Similarly, PSU banks down nearly 1% today. Financial services down 0.5%. So
why are they sulking?
So gross borrowing figure is also going up 5.5%. I think that will have a bearing on the bond market.
That's again largely on expected lines, Bodhi. Yeah, I don't think the deficit or the borrowing number is something
4.5 was expected. It's 4.4. I think the bigger takeaway, why the markets started falling the moment the capex number for this year, the 24-25 capex number was not going to be met, and the 25-26, which just remind me what it is. But it is
25-26 numbers she didn't state.
It was not announced. It was not announced. That's right. So that is when the market started falling, because it is capex which has been holding growth rates aloft. So that that's really when the market started falling. Then they rose briefly after the income tax cuts, but now again are slightly down.
But all these capex heavy stocks really have taken it on the chin.
So see, there is a positive way and a negative way of looking at it. The positive way is really that it will help those whose salaries are comparatively less in a comparative sense, which includes possibly the majority of employees in the organized sector, including in corporates. But those earning about 8 lakhs, 10 lakhs, if you go by the Eco survey, which lambasts companies for paying less while their profits are going up, IT employees, entry-level IT employees. But the thing which the market perhaps is apprehensive about is the capex not being met, and not exactly clear. We'll get in the fine print what the capex for next year is. Government capex has been very important for boosting growth. So it can be interpreted as some kind of an emphasis on giveaways, quote unquote, and a de-emphasis on capex. I mean, that is one way of reading it.
Can I also draw everybody's attention to another sector which found quite a significant focus in her speech, health? She has spoken in detail about cancer medicines being custom duty free. She talked about medical tourism and heal in India. She also spoke about some 75 seats to be added to medical colleges, daycare centers, etc. to be put up. Any quick look at health and then see how
I'll
those
just
are faring as well?
I'll just need some 5 minutes.
By the time Nandita comes back, Vikas Kimani and Pankaj Tibrewal join us. Your first thoughts, Vikas?
Pankaj is with us. Pankaj Tibrewal, thank you so much for tuning in. First reactions to Budget 2025. It's been quite a booster.
Yes, I think clearly the sentiment change is being seen and the priority is being seen towards boosting the middle class. And I believe after 4 years, from a market perspective also, we may move from infra-led growth to maybe consumption-led growth, which has not been there. And I think clearly this tax regime, and it's a significant boost that above 24 lakhs, it's 30%. So till 24 lakhs, it's a significant boost, and up to 12 lakh, there's nothing. And back of the envelope calculation suggests that it's approximately 75 to 80,000 rupees per household, per person on an annualized basis. So I think clearly full marks to the government in terms of doing this on the consumption side, which was much needed. On the expenditure side, our ballpark calculation suggests that the revised number is 10.1 lakh crores for this fiscal year and 11.2 lakh crores, which means a growth of 10% on the revised numbers on the capex side, which is not bad. But I think the highlight of the budget is the personal income tax slab readjustment on the new tax regime, and it will lead to a smooth movement from the old tax regime to the new tax regime.
I see, ML.
We have Rashesh Shah joining us. Good afternoon, Rashesh. Your first thoughts on the budget?
Hello.
Rashesh, can you hear me?
Yes, I can hear you.
On the budget. Your first thoughts on the budget?
I think it's a conservative budget, more keeping the fiscal path on track. I think a lot of people were expecting a bold, aggressive budget. I think the FM has decided to keep it conservative. But at the same time, I think the announcement about the new income tax code is a very good one. It's long awaited. The relief for the middle class of no tax up to 12 lakhs is good. I mean, for people like us, 100% FDI in insurance is also a great, announcement, because this will really boost investments in insurance and make the insurance sector also grow with the capital that will be available. So I think some good stuff. I think we were expecting a 7 to 7.5% growth target for the next year in the real terms, and maybe 11 plus for nominal. I think the nominal GDP of 10.1 is slightly more conservative, and I'm hoping that actual nominal growth is higher than that. So, and again, I think we are all constantly grappling with how to boost capex and how to boost consumption. I think some of the middle class relief should boost consumption, but I think the more important one is going to be the RBI monetary policy in a week's time, because I think you were speaking earlier about banks, because a large part of the bank's earnings is not going to be impacted by the announcement in this particular budget, but will be impacted by the RBI policy a week down the line.
All right.
Rashesh, do you see these measures essentially spurring private investment? One aspect is that, we might see some uptick in demand because of these slab changes and the income tax relief. But do you see that as adequate enough to spur private investments?
Private investment is going to be spurred only when consumption grows and the capacity utilization moves consistently close to 80%. We have, for the last 5 years, hovered between 74-75% capacity utilization. And because of the recent slowdown in demand and all, we are still stuck around that. Private capex will follow demand. Private capex will follow capacity utilization. It will not follow any announcements at all. So I think my expectation is for the first half of this year will still be dependent on government capex. Government capex has been the main driver for the last few years. Government and the PSU entities. I think that will still be for the next 5-6 months at least be the key driver. With the reduction in taxes for the middle class, if that drives consumption up and some reversal to growth comes back, I think then the private capex will go up. Also remember, I think the international markets is going to be very, very volatile. Trade is going to be very volatile. All the tariff issues and all is also going to keep exports also very uncertain. So given that, I think first half government will be the key driver. The private capex will only follow after that.
I see. Pankaj Tibriwal is also with us. Pankaj, hi, if you can hear me. So, anybody looking at this budget right now, middle class, definition of middle class is debatable at this point, but anybody looking at this budget as a booster and looking at it as a tax relief would be wondering why, despite that, markets are so volatile. If you could take us through where you are seeing that?
Clearly, this year has not been that great on the capex side, and that has led to the slowdown. Going into the budget, the expectation was a 15 to 20% kind of a growth over a revised estimate, which is about 10.18 lakh crores for the fiscal year 26. This number has come at about 11.2 lakh crores, which is the July number, if you look at plus minus few thousand crores. So I think that has been a bit of a dampener in terms of sentiment. That can we can be in a low growth environment for some time now till the private sector capex picks up. But the other flip side is that consumption, which was also not doing well for the last 4-5 years, I think it's a significant boost to the household income. And I think that's the only point of joy. Otherwise, the capex numbers are still there. And also, the finance minister clearly, again, was hawkish on the fiscal side. The revised estimate is 4.8. She talked about 4.4 for next year, which is another 40 basis points of fiscal consolidation. Markets were expecting some relaxation on fiscal side to get a boost to a slowing economy. I think, as Rashesh also mentioned, I think next the ball is in the monetary side. I think we can do substantially there. On 6th of Feb, when the credit policy is there, any interest rate reduction can be a further boost from an economic perspective. And we believe that there's a lot of monetary room as you move ahead into this next 12 months. So clearly, I think markets were expecting fiscal and monetary. Fiscal didn't that much happen, especially on the corporate side. So I think that's where the markets are slightly disappointed on the overall capex numbers.
Pankaj, which part of the consumer space would you bet on right now? Consumer staples or discretionary, or all these assorted consumption names like Nykaa, Zomato, which are different also because of the kind of business models they have?
So clearly, we believe that consumer discretionary has further legs in terms of growth over the next few years. As the per capita income of India increases, roti, kapda, makan, the basics gets, addressed, and better, good, higher restaurants, better fashionable brands in terms of clothing and bigger houses becomes more aspirational. And a lot of discretionary part of India, I think we have significant headroom to grow. And I think that's where our choice would be in terms of discretion. And that's what market is also reflecting right now. And if interest rates also gets reduced over the next 6 months, I think one significant boost on the EMI side. Don't forget, 5 years back, total EMI of consumer loans across housing, jewelry, credit card was about, in our estimate, 19 lakh crores. This year, we will end at about 42 lakh crores, which is double of what we have seen, but the incomes have not gone to the same extent. So I think there is a significant EMI burden in the household leverage. Any reduction on the interest rates on that side will help boost the boost the consumption as well. So our preference will lie on the slightly lower end of the pyramid, the second half of India, the middle half of India. And I think there a lot of good, interesting names are available.
Sure. One question for you, Rashesh. This fiscal prudence, I mean, this finance minister has been absolutely, sticking to the fiscal path that she defined. In fact, she's beaten expectations by bringing it down to 4.4% for next year. And all of this, I guess, in aid of getting a rating upgrade. Do you see that coming this year? Rashesh?
So I think all this is part of that. I think the fiscal prudence is actually keeping in mind the bond investors. Equity investors like growth, bond investors like fiscal prudence. So, I mean, every time there is a monetary loosening, equity investors are happy, and every time there is either monetary or fiscal tightening, the bond investors are happy, and the equity investors are the opposite. So I think that is what maybe you are seeing in the equity markets. But overall, I think Indian economy needs both inflows in equity markets and bond markets. And I think India is now getting ready for global bond markets. And I would say last few years, the government approach to fiscal prudence and the middle path has in the long term, because it will conquer one key problem India has always had, which is inflation, which is like a dragon that rears his head all the time. So I think this government fiscal prudence of the last few years, including when COVID was there, Indian government was very, very careful, has been good for keeping inflation at least not getting out of control. But at the same time, I think we now have a growth issue, and balancing that is going to be a key one. I think demand is going to be the most important vector to drive. And I'm hoping that some of the details as we get will also give us confidence that demand, especially urban consumption and all, if it starts picking up, that will be good. It will augur well for the economy. But outside of that, I think currently, whatever government does, the ease of doing business and the income tax code and all this will have an effect in the medium term. I think in the short term is going to be government capex. I do hope that whatever capex for the year they have, they do front end it in the first half. So that will also give a boost to the economy and the growth rate, as well as at least cushion the uncertainty of the global environment.
Sure. Thank you so much, Rashesh, for joining us this afternoon. Vikas Khimbani from Carnelian has joined us. Vikas, in today's trade, consumption stocks seem to be winning. Do you see these stocks having legs to run going forward?
I think, consumption is a long-term story for sure in India as the per capita income goes up. The little bit slowdown which we saw in case of in last couple of quarters, I think this current relaxation in the income tax probably might help that. But I mean, in my opinion, these are only short-term trades. According to me, consumption continues to remain one of the best story for long-term. But again, like I said, as an investor, one looks for real long-term story, and that nothing is about India as a consumption hub.
But in terms of valuations, etc., even now, consumer stocks, despite the the growth rates coming off over the last few quarters, which partly may get addressed because of this uptick in consumption, they're all highly valued, more than 60-70 times earnings. So from a market perspective, while some uptick in demand may come through, in the short to medium term, do you see these stocks performing?
No, look, again, it's hard to call out on short term, but like I said, most consumer stocks are quite expensive, and hence we don't own many, but we have select stocks which we like. So, idea is to kind of look at stories where there's a risk and reward in favor. So, structurally speaking, many consumption stocks have not performed in last 4 or 5 years and may not perform in next couple of years because of their overvaluation and also potential disruption happening in those large big names. But at the same time, smaller consumer companies have been growing faster and they are also getting sort of, better risk reward. So again, idea is to choose right set. But I would say that consumer stocks may not be a one-way run and short-term fillip can be there, but you have to look back again, individual stocks and, idea depending on that. But risk reward has to be there based on the valuation.
One more question, but before that, Bodhi, what do you think of, the possibility of us getting a sovereign debt upgrade this year?
No, so I think that's certainly an expectation the government has. The fact is that it's 4.4. I think the expectation was for the next fiscal year, it should be 4.5. So they're
Correct.
actually tightening.
Yeah.
We'll have to also see beyond that, what is the target? Do they plan to hit 3%? In the next couple of years. If you look at the last 5 years, in the COVID year 2021, I think the fiscal deficit, if memory serves me right, was almost 9% of GDP. It was probably, so it's a big contraction. It's a 5 percentage points, 5.5 percentage points contraction over 5 years, and that could account for some impact on growth. The problem, which is that the contraction is not crowding in private investment as it is supposed to do in theory.
Right.
At least not as yet. I mean, that's been the Indian story. If at some stage it does, we should all be in for happier times, but I'm not sure the market is convinced about that right now.
Talking about the markets, let's take a quick check on that. The big headline we are going with at Money Control at this point is that it is Prime Minister Modi's big middle class outreach. Tax changes have put more money in the pocket, but look what's happening in the market. There's a different story over there. Indian equity markets erased early gains and slipped into red after government revised its capital expenditure, capex estimates, remember, for FY25, lower than initially projected. At around 12 noon, that's when the speech ended. The Sensex fell about 350 points over there and about 0.45% as well. Now, while Nifty declined also above 100 points or so, 0.43% also is the market's breadth sort of turned over a little bit. But let's look specifically at how these stocks are doing. ML, we've talked about the big sort of gainers and losers at this point and sectors that we are looking into. What else is telling you the story of how market is reacting?
Yeah, I mean, it seems to be a reversal of the, trade that happened post-COVID for a bulk of, 3-4 years, is that all your economy-sensitive stocks, infrastructure stocks did very well, consumption stocks didn't. And now, that's what you're seeing, a reversal of that trend, but we don't know how much to read into it. That's what we'll understand. So, back to you, Vikas. Even in today's, how do you see, I just got the capex numbers, it's 11.2 for FY26. That's the budgeted number for FY26 capex. That is pretty much along market expectations. But is it a disappointment? Can that number take the infra pack through this year? Vikas?
Like I said, government has put out a number and it is in line with expectation. Now, a lot depends on how the execution happens, pace of execution, how government really spends it. Now, would you want the number to be higher? Answer is yes, but government has taken a path of a fiscal prudence and I think pursuing that. And also there are different ways of spending money on capex. Today, a lot of infrastructure capex are happening on the SPV of, they're not necessarily through the government balance sheet, but on a user pay basis. So this is not the only sort of vector for the growth of the investment cycle. There are many more. So I would say that yes, of course, there's not major disappointment on that. But at the same time, could this number have been higher? Maybe answer is yes. But this is what it is, and I am not really very disappointed overall on this basis. I think given what two things were expected from the government on this, one is the taking care of the middle class on the income tax, and secondly on the capex. I think they have met the expectation by and large. In fact, in case they in income tax they have exceeded the expectation. So by and large, it's a good budget, and I think markets are terribly down. I mean, a little bit of profit booking based on the expectation always happens. So I'm not really perturbed. It's not a significant judgment on either side of the budget. It's a good budget, as but in line with market expectation is what I would say.
Pankaj, there were 4 pockets of sectoral announcements which I thought were interesting. What do they mean from a stock perspective? Affordable housing. She talked about 40,000 dwelling units under Swami's scheme. Then she talked about continuing the stuff on renewables. There were the thrust on EV batteries, solar cells, transmission equipment, grid scale, and this pocket has been a very buoyant, vibrant pocket of the stock market. So amongst these, any stocks stand out? Do you still back these themes? Because these are also some of the overvalued pockets.
Definitely, Mahalakshmi. I think from an overall perspective, the new age businesses, the new energy transition, the government has been quite vocal about. And in this budget also, they mention about the same. But one important point which I want to bring it is that we always get cue from this government on what the next 3, 4, 5 years lie ahead. If you remember in 20 and 21 after COVID, the clear focal point was to revive government expenditure across infrastructure, make in India, make sure PLI schemes worked, and you achieved a huge success, and the next 3, 4 years followed that. If you look at the last 6 months in this 3.0, clearly the focus is towards boosting the middle class consumption. Already 12 states have announced freebies, welfare schemes, whatever you can mention, to the tune of 3 lakh crores. So that's supporting the urban side, the rural side. And now with this income tax correction and new regime, you're talking about incremental 1.14 lakh. We just did the maths, which is a huge number for an individual on an annualized basis on a higher tax slab. So I think the clear focus could be towards consumption as well. And I think most of these stocks in the consumption, though headline valuations looks very expensive, but when growth starts coming in, can be a area to watch out for. Also, expenditure 10% growth, not bad, but compared to the expectation, it was running high. So I think markets are a little disappointed. So I think a balanced portfolio probably could help you navigate this volatility as you move ahead in the next 12 to 18 months. Don't be on the extreme side. I think having right stocks from a bottom up, both on consumption as well as some of the areas where infra spend will happen, both by private and government, will be the way to create a portfolio.
So much, Pankaj. We have with us Jigar Mistry, Director of Buoyant Capital. Jigar, the last time we spoke, you said, banks is the only sector where you find valuations relatively okay. In today's trade, banks seem to be sulking. How do you explain that the fiscal deficit number is actually lower than what the market was expecting? There are consumption triggers in this budget. Nothing changes with respect to the infrastructure budget. The spends are pretty much in line with market expectations, but banks are sulking still. How do you explain this?
I would beg to differ, Mahalakshmi. I think we see this as a pivotal shift of the government away from capex and into consumption. Because if you look at the spending, 11.1 lakh crore was the budgeted estimate last year. From there, we are going down to 10. And next year budget is 11.2 lakh crores. I think the market estimate was fairly above 12 lakh crores. So clearly the capex number of the center is much lower than expected. Secondly, if you look at the last 12 state elections, the capex bill was 4.3 lakh crores. The sort of social spending / freebie bill was 3.6 lakh crores. So center is not spending enough, states are not spending enough. Private capex, while it's inching up the intensity to GDP, is not really matching pre-2015 levels. So I think what the government is now trying to do is, look a little closer to home rather than spending with the highest M3 multiplier. If you look at the income tax spendings, 60% of the 8-month collection was because of personal income taxes. Corporation income tax growth was 0. And I think they're trying to make sure that they, give some relief therein. While the fiscal deficit number is broadly on track, I think the 14% assumption on personal income tax growth at a time when STT and capital gains accounted for a bulk of the incremental number, the market might not really want to look at it in a big way. Secondly, RBI dividend of 3.25 lakh crores at a time when you could be called in to do a much larger OMO. I don't think the market wants to believe that that higher number is possible, which is why yields may want to spike once the market opens. In that scenario, the banks, sort of don't look as great in the short term. So to answer your question, I think I've taken a longer route, but this is how sort of we see the budget.
Sure. I guess Saurabh Mukherjee has also joined us. Good afternoon, Saurabh. You already must have your, personal income tax calculations ready. So give us a lowdown.
Look, I think Pankaj was already saying it, that this is a very different budget from the last 5 budgets from the. I think this is a decisive change in direction. Perhaps the 2024 general elections triggered this, but it pushes the market away from the theme that the market had got really, addicted to, which is government will do capex, we will buy capex stocks, and that's all there is to it. If you take the last 2 years, effectively there will be zero growth in government capex.
Correct.
And therefore a whole section of the market, I would say 50-60% of the Indian stock market was running on a government capex theme directly or indirectly. I think that part of the market, will see a retreat over the coming few years. And in a way we go back to what we saw in NDA 1, which is you focus on SMEs, you focus on pro-poor, you focus on the middle class, you give them economic space to grow, and the economy runs on the back of that. I think that's the theme we get back to. The middle class consumption tax cut. The middle class tax cut is obviously the biggest concession in that direction, but there's a whole host of smaller concessions to low-income workers, to farmers, and I think changes the direction of economic growth. It changes the direction of earnings growth quite decisively, and we'll see that playing out in the coming weeks in the stock market.
So 2 numbers have come in, Saurabh. One is that the RBI dividend projection for next year is 2.56 lakh crore. That's even bigger than the bazooka we got for this year, 2 lakh crore, which itself was a lakh more. But the projection for next year is 2.56 lakh crore. Does it surprise you, and what can it do?
I mean, look, I think given that the recent change in the RBI governor, given that the RBI has massive surpluses, the RBI balance sheets has massive surpluses, it doesn't surprise me that there is a big dividend there. What I find interesting is that the government has chosen to compress the deficit significantly in spite of the dividend. They could have used this extra money from the RBI and thrown it at capex. The government is being very clear, saying we will compress the deficit, we'll give the middle class a break, and we will conserve fiscal space. I suspect the conserving fiscal space for the sort of business end of the 5-year election cycle. So the budget deficit reduction to 4.4 in turn, I think puts onus on the RBI to kick off the rate cutting cycle. Next couple of months we'll see the rate cutting cycle begin. With this sort of fiscal consolidation, in spite of the pressure on the rupee, I think there's good reason for the RBI to begin the rate cutting cycle.
Fair enough. Because one question for you, and as all of you have rightly pointed out, that there is no capex growth between last year and this year. If at all we are showing that 10% growth, it is because this year we did not meet that, that we see that growth compared to the revised estimates and budgeted estimates for next year. Do you think the entire bogey of stocks that did well in the post-pandemic era, that trade has now reversed? I guess we've lost Vikas. Saurabh, can you take that question?
Saurabh, just a minute. We're just getting your audio back. Saurabh, if you could just take that again, please. Thank you.
A lot of the focus in the market was on capex oriented plays, especially government capex oriented plays. I think that theme will now die a slow death over the next couple of years, and we go back to the sort of market we had in the era before COVID, where small businesses were going up the ladder a little bit, middle classes were moving forward. That was giving a fillip to consumption oriented plays, light industrial stocks. It's also likely that on the back of the rupee weakening, export oriented companies will do better. Not just IT, I think even in manufacturing exports we're seeing good improvement in earnings growth. So the direction of the stock market, as I said, tilts away from that 50-60% of the market, which is a play on capex directly or indirectly, towards that 40% of the market, which is a play on either exports or consumption.
Why would you think exports? What areas of exports? Are you talking about pharma?
A couple of reasons for thinking exports, right? If you see India's economic cycle, it's actually a fairly predictable pattern. We have 3 years of strong growth, and then supply side issues catch up with us. We then get a couple of years of weaker growth. When we get weaker growth, the rupee typically comes off. That helps exporters naturally. Thankfully for us, that period of the rupee coming off also coincides with a very strong period for the US economy. So the US economy in great shape. China is pulling off. China is pulling back from the post-COVID dumping. That creates more space for our exporters. So the export data the last 6-7 months, Mahalakshmi, has been very clear. Our exporters are growing at the fastest rate I've seen since the COVID period. Post-COVID, we had a dramatic lull in Indian exports. Exporters are being helped by the weaker currency, strong demand in America, and China gradually throttling off on the mad dumping that they've been doing in the post-COVID years.
Saurabh, but can I give you a follow-up on that? You talk about exports, but how do you factor in Trump and tariffs coming in on that matter? With US being in the state of volatility, we really don't know what's going to happen next. How are you factoring that?
It's highly unlikely there is that much that we produce that he will tax. Our biggest export to the United States is IT services. Fortune 500 companies fundamentally rely upon India as their global IT center. I fail to understand why Trump will go after that. It's not as if IT services will relocate to America just because they'll get taxed. So our manufactured exports are pretty small. I mean, in the context of Indian GDP, manufacturing itself is 15% of GDP. Manufactured exports would be barely 2-3% of GDP. So I don't think Trump's "Make America Great Again" is a huge threat to India. It's a bigger challenge for China and countries like Mexico, who are sort of acting as a via media for Chinese goods to get into America. From a tariff perspective, I sort of fail to understand why many people in India get so worked up. We export so little beyond IT services and pharmaceuticals that it's not really a massive issue. IT and pharma, difficult for me to see why Trump will come after us on those two.
Pankaj, would you bet on affordable housing as a theme? And the second one I wanted to ask you, anything related to agri inputs that you find exciting?
I think housing has a great multiplier impact, and two things which have not been spoken about. One is the urban infra. I think we have seen government talking about urban infra and giving states the funding required, and a 50-year concessional rate. That's a good one, and 1 lakh crore of support on the urban infra. And I think this model, if state and center work together, can be a brilliant model apart from the capex number which we are so obsessed to look at. And this has a very high multiplier impact. The second part is the housing, and obviously our long-standing demand has been that. And if you look at two self-occupied houses, individual can own now. I think there is no taxation on that side, which is a good, which has not been spoken about again. And I think these two are important measures. And obviously, housing from a medium to long-term theme is a very, very strong and powerful theme from a multiplier impact perspective on the country and the economic growth. So obviously, that remains as a core thesis from a portfolio perspective also. The second part which you spoke about was, can you repeat, Mahalakshmi, once more on the second part?
He's asking you to repeat the question once.
Second question, agri-related stocks.
I think clearly we have seen that from the recent commentary by most corporates and the data coming out, that agri seems to be doing well, rural seems to be doing well. And there have been a whole host of announcements on the agri. She started from the agri side itself. And we believe that probably the rural stress is behind us. The good news on in Indian economy is that reservoirs are full. Rabi has been quite decent. Kharif was good. So we are coming on the back of a good monsoon. And the real wages of rural workers is moved into a positive territory after a very long time. And that's we are seeing in many sectors which are linked to agri directly. For example, M&M just declared their numbers. Look at the tractor growth. Obviously slightly lower base, but we are seeing a good number on M&M tractor growth. Look at the way fertilizer and agrochemical companies are reporting numbers. A couple of them reported yesterday, very strong growth. And the narrative of a lot of FMCG companies which have declared numbers or given a preview are talking about pickup in rural and a bit of stress on urban. So I think rural is doing fine, and I think stocks probably linked to rural can come back. So I think after 24 elections, I think there is a decisive change in which this government wants to take the next 4 or 5 years. And there is a clear focus on reviving rural and urban consumption. And we should not ignore that, because that's a decisive direction this government is telling us to focus on. And I think slowly and gradually markets will move towards that part as we move ahead.
Jigar, what is your takeaway? I mean, this rural thrust in terms of, pockets of stocks and sub-segments, where do you see action? Are there any pockets that today are, have seen serious cuts which you think will bounce back?
Yes, Nalakshmi. So I think generically, as we discussed before, we do see, the effort of the government to give relief to a wider mass rather than a select few, right? So even this data that you look at, the TDS, TCS cuts that we saw, right? There are almost 2 crore taxpayers who pay the tax but don't file IT returns. With this sort of increase in limit, they will benefit. The Kisan cards limit expansion that you saw, the specific targeted agri measures. I think when you see these surveys where you see that the bottom 20% households have not really seen a growth in nominal income since demon. I think the government is trying to address that, as I was mentioning in my initial comment. So very clearly, and even I think they did something on the seeds, fisheries, yet to read the fine print on those 2 accounts. But I think, yes, there is a definitive push away from sort of the last budget and time into consumption and a wider base that benefits in small proportions rather than sort of a select few.
How do you see travel and tourism? Because there was this, Udan scheme that she talked about, and the expectation, I mean, that's been one strong area of spending and somewhat of an exception. Do you see that continuing? And will this Udan really make a difference in terms of how, the hotel companies do, in terms of how airlines do? Airlines, of course, there is already a consolidation because of which profit pools are getting concentrated in fewer companies. Saurav, if you can come in on this.
Post-COVID, one of the big surprises has been the runaway boom in domestic travel, right? Foreign tourist arrivals today are actually lower than they were in 2019. It's remarkable. 6 years in, there are fewer foreign tourists in India than there were in 2019. Hopefully the e-visa that the FM mentioned will stimulate that. But domestic tourism is on a tear, and the numbers actually are quite astonishing, right? The the listed hotels are reporting 20-25% revenue growth. The luggage manufacturers, we've invested in one of them. They are reporting 25% earnings growth, 25% revenue growth. I'm sorry, earnings might be more than that. In fact, I speak to some of my friends who run unlisted hotels and unlisted luggage companies. It's a massive boom, and whatever the FM is saying, the tourism plans, the Udan construct, 120 new airports, will only give further succor to that. It seems that Indians have discovered this kind of wanderlust where they want to discover their country, and luggage manufacturers and hotels will make a lot of money. I'm not so sure about airlines. It's tougher to make money in airlines in any country, but hotels and luggage manufacturers will be grinning from year to year today.
All right, sort of taking a leaf on tourism, can we switch our focus for a minute to medical tourism as well and Heal in India? That was also another focus the FM had. Like I was pointing out, there were several schemes that have been floated out. Health also found quite a prominent focus there. How are your outlook on health?
So look, it's relatively clear for several years now that the government really doesn't plan to build too many more hospitals, right? So therefore the private sector hospital space has been blossoming. In parallel, post-COVID, everybody is buying Mediclaim, or their companies providing them Mediclaim. So the healthcare and hospital space, diagnostics, hospitals, medical equipment is doing well in our country. If medical tourism can be given a further boost, then all power to the private hospitals. But I suspect the private hospitals' main play will be will be Indians and Indians getting insured, because I think the government is saying we will broadly be stepping back from the provision of healthcare. In this budget, notably, we didn't hear much about Ayushman Bharat, but even if the government spends more money on Ayushman Bharat in subsequent budgets, ultimately it's the private sector which will have to provide hospitals, healthcare, medical devices, medical diagnostics, and I think that remains a strong theme in our country. Plenty of high quality listed plays there for all of us to make money from.
Right, but you don't see that playing out in pharma stocks as well? Lots of cancer drugs which have been given sort of free custom duty, other boosts as well?
I think pharma stocks, the challenge is that the bulk of their earnings, for most of them, there's a few pharma companies which are domestically focused, but the bulk of them get their earnings from exports to the Western world, where earnings growth is a difficult story. Domestically, pharma stocks should continue to do well. They had a great run through COVID, post-COVID. I think there'll be reason to believe that domestically focused pharma companies will have, say, somewhere around 10-15% earnings growth. But remember, the government will constantly keep increasing the NLEM, the National List of Essential Medicines. We are a poor country, and NLEM will keep expanding, thus squeezing the ability of pharma companies to monetize demand growth. Harder for the government to do so with hospitals. There is a Supreme Court challenge around the hospitals piece, but I think by and large, hospitals will be left to make money on the core of their client base, medical insurance, and then diagnostics and medical equipment. I think plenty of space to make money there. And as the government pulls back from building more hospitals, there'll be growing space for the private sector to blossom and boom.
All right. So
one quick question for Jigar on insurance companies, Jigar. These stocks are almost at 5-year lows, if I'm not wrong, or somewhere thereabouts. Do you see them bouncing back? Because there is also this announcement on the FDI on insurance companies. Is there even sentimentally you think stocks will go up? Although I'm not sure how they're reacting today. I'm just looking up.
They're broadly, I think, down today as well, Mahalakshmi, and I think ownership structures beyond the point don't really change fundamentals. So to that extent, unless there has been something in the fine print, I couldn't really hear anything else that was coming through. So no, I don't think there is anything as far as the budget I could go through which suggested anything on insurance stocks.
The buzzword yesterday from the economic service is also health tax. That got everybody talking about how food which is unhealthy food will get this sort of health tax. I'm not sure if we missed that in the budget at all, but a quick takeaway. What did you make of that?
Yeah, but I think it was only limited to sort of economic survey. We'll have to go through the fine print to see if there was something really there. But I don't think that essentially weighs it on how the market is reacting today.
Okay. Before we go into getting some reactions that are coming in from Parliament and other places as well, Bodhi, quickly, I want to concentrate on another subject that we haven't really touched upon, jobs. That was said to be another focus that we were hoping that the budget would provide. Last year's budget had this internship scheme. We don't really know how that has really panned out, did not get a lot of support from the private sector. How are you picking up on jobs from this budget?
So the internship scheme wasn't mentioned at all. There are welfare measures for workers. There is, for example, the extremely important measure for gig workers, basically putting them on the Shram portal, giving them insurance. So that is there. As far as general sort of job creation is concerned, I mean, no big sort of direct measure that I could really pick up. I mean, there was some talk of incentivizing labor-intensive manufacturing by way of tax breaks of PLI, but no reference to PLI. So yeah, not much. I mean, I think the job creation, if any, will be indirect. I mean, I suppose the tax cuts and the extra spending, and if that leads to a revival in the economy, jobs will be generated, but nothing very dramatic. I mean, there are loans. There is the whole the fund of funds for startups. I mean, there is stuff. There's support for MSME. So it's there. But it is not directly, I mean, which will create jobs, but no direct job support schemes of the kind there were in the last budget. which was held just 2 months after the general election.
Yeah, so the great Indian middle class, that seems to be rejoicing at this point.
The
But
great
this is only a teaser, right? There is a new tax regime coming up altogether. There's a new bill in law that she plans to propose in just about a week from now.
It's a simple, but I think people are more interested in the tax rates than the tax bill.
Correct. On that note, let's quickly cut across and get some reactions that have come in from Parliament and other places.
देखिए, सबसे ज़्यादा तो स्टेटों के नाम देखिए, बिहार जहाँ पे चोन आ रही है, बिहार बिहार बिहार, उसके बाद असम की आ रही है तो असम, पंजाब का तो नामो निशानी है। वो किसान धरने में बैठे 4 साल से एमएसपी की लीगल गारंटी के किसान के लिए क्या मखाना बोर्ड, ये बोर्ड, वो बोर्ड। सो किसानों के विरुद्ध एक बजट था और किसान जो उसके लिए लड़ाई लड़ रहे हैं उनकी तो कुछ सुनी नहीं गई, तो दुख है।
ਕਿਵੇਂ ਵੇਖਦੇ ਹੋ ਜਿਹੜਾ ਅੱਜ ਬਜਟ ਪੇਸ਼ ਕੀਤਾ ਗਿਆ ਪੰਜਾਬ ਦੇ ਲਈ ਜਿਹੜੀ ਅਨਾਉਂਸਮੈਂਟ ਸੀ ਐਕਸਪੈਕਟ ਕਰ ਰਹੇ ਸੀ ਉਹ ਨਹੀਂ ਮਿਲੀ ਹੈ। ਉਹ
ਪੰਜਾਬ ਨੂੰ ਤਾਂ ਕਦੇ 15 ਸਾਲਾਂ 'ਚ ਇਸ ਸਰਕਾਰ ਨੂੰ ਹੋ ਗਏ ਇੱਕ ਵਾਰੀ ਪੰਜਾਬ ਦਾ ਨਾਂ ਨਹੀਂ ਲਿੱਤਾ ਗਿਆ। ਸੋ ਪੰਜਾਬ ਤੱਕ ਹੀ, ਲੇਕਿਨ ਕਿਸਾਨ ਜਿਹੜੇ ਧਰਨੇ 'ਚ ਬੈਠੇ ਹੋਏ ਨੇ ਪਿਛਲੇ 5 ਸਾਲਾਂ ਤੋਂ, ਜਿਨ੍ਹਾਂ ਨੂੰ 4 ਸਾਲ ਪਹਿਲੇ ਧਰਨਾ ਚੱਕਿਆ ਸੀ ਕਿ ਤੁਹਾਡਾ ਲੀਗਲ ਗਾਰੰਟੀ ਐਮਐਸਪੀ ਨੂੰ ਦਿੱਤਾ ਜਾਊਗਾ, ਅੱਜ ਕਿਸਾਨ ਮਰ ਰਹੇ ਨੇ उस मंग वास्ते, लेकिन ओदे वास्ते पूरे बजट ते एक किसान दे वास्ते एक शब्द तक नहीं सीगा। बस हाँ, फिशरीज दी गल सीगी, इत्थे उत्थे पहले बोर्ड मखाना बोर्ड बन रहा है, लेकिन किसान दे हाथ च कुछ नहीं। आम
अगर मेरी जानकारी सही है तो ये सरकार का 12वां बजट है। 12वां ही है? क्यों 11वां है? अच्छा ठीक है, जो भी कुछ है। ये जो बजट है, अगर हम इसको 12वां मान लें, 11वां मान लें, 12 साल बाद कुंभ आता है। जो सरकार को आंकड़े देने चाहिए थे, हमारे लिए आज बजट के आंकड़ों से ज्यादा जरूरी है कि जिन लोगों की जान गई है वो आंकड़े। जो सरकार मरने वालों का आंकड़ा न दे सके, जो सरकार खोए लोगों का आंकड़ा न दे सके, जो खोया पाया केंद्र है उसमें बड़ी संख्या में लोग भटक रहे हैं। कुंभ में लोग अपने मोबाइल पे अपने परिवार के सदस्यों की तस्वीर लेकर के, कोई अपनी माँ की तस्वीर लेकर के, कोई अपने बेटे की तस्वीर लेकर के, कोई अपने परिवार के सदस्य की तस्वीर लेकर के कुंभ में लोग भटक रहे हैं, लेकिन सरकार उसकी जानकारी के लिए कोई इंतजाम नहीं किया है। जो आंकड़े बताए जा रहे हैं, जान जाने
यंग सर्विसमैन कंट्रीब्यूटरी हेल्थ स्कीम यानी ईसीएचएस को 8,300 करोड़ रुपए से अधिक का एलोकेशन किया गया है। ये पिछले साल के बजटरी एलोकेशन से लगभग 19% अधिक है। बॉर्डर इंफ्रास्ट्रक्चर को और मजबूती प्रदान करने के लिए इस साल के बजट में कैपिटल हेड के तहत बॉर्डर रोड्स ऑर्गेनाइजेशन, भाई ऐसा है, इसे काहे को लंबा डाल दिए, कोई जरूरत नहीं, बंद कर दो। बहुत लेंदी कर दिया, बहुत, कोई जरूरत नहीं है।
All right, those were some of the reactions coming in. Just to sort of revise and refresh your memory, the opposition was actually sloganeering, demanding answers on the death toll in Kumbh. They even staged a walkout, then came back in the middle of the budget while this was being placed. This is the budget that started being read out in middle of ruckus in Parliament, and those were some of the reactions coming in. I believe we have Amit Jaswani, founder and CIO, Stallion Assets, also joining us. Hi. Good afternoon, Amit. Your first thoughts on how the budget 2025 went?
With an extraordinary great budget, this was the budget that was needed. Delivered what was needed, especially the tax cut. I think that headline was needed across paint industry, across every industry was struggling. Consumer spend was up 3% YOY. The consumers were struggling. And every elections, the emerging class, I would say, was getting soaps with 2,500 rupees a month, etc. But there was nothing ever for the middle class. I believe this budget shows that the government's intention is clear. I believe consumer stocks underperformance bottoms out. This is what I feel. I can be wrong, of course, but consumer stocks underperformance should bottom out today.
Amit, are you saying that because you're a die-hard fan of consumer stocks, you only invest in consumer stocks, or do you really see consumer stocks coming back?
So Mahalakshmi ji, actually it was a very tough 2025 for consumer stocks. There were only 5, 7, 8 companies in the consumer space that were outperforming very aggressively. Of course, good money was getting made and valuations got a bit stretched there in those 7, 8 stocks because everyone wanted to own those 7, 8 stocks because the rest 100 were not doing so well. But what has happened is, assuming 8, 10 stocks were doing well and 90 stocks were not doing so well, the valuations of those 90 stocks have now come down a lot. And assuming if market senses that there will be change of growth rate, I believe the re-rating can happen in the fancy ones, because the fancy ones will keep continuing to perform well, but the non-fancy ones is where large alphas can get made. So Mahalakshmi ji, if you think about it, consumer is the only place where large money can. I believe it's very tough to have B2G and those kind of things in your portfolio because volatility is very high for us. But let's see, we are very, but I believe outperformance can now start in consumer stocks. And today might be the outperformance bottom. Don't get me wrong, if the market goes down, consumer stocks will also go down, but they will not go down as much as the market. Market was looking for a defensive. After this rally, after this, whatever has happened from October till now, markets were looking for a new hiding place. And I believe consumer will now become a hiding place for all investors, at least in the short term.
You say markets, this is a great budget, but if we take a quick look at how the markets are doing and how the Lal Street is doing at this point, you see you see Nifty below 23,400, you see Sensex down 300 points as well. You have HDFC Life, SBI Life amongst top losers. They're coming in among sectors, consumer durables, realty, auto, FMCG up by around 1 or 2%. You have BSE mid-cap, small-cap indices also down marginally. You've got Bharat Electronics, L&T, Shriram Finance, Coal India, ONGC, all amongst top losers on the Nifty. Again, Trent, Maruti Suzuki, Britannia, Hero MotoCorp all against top gainers. So how exactly is this panning out? Make sense of these numbers for us, please.
You want me to make sense of these numbers?
Yes, please.
So this is what was expected, right? Because you've got the government is pivoting. So the last 3 years were all about capex spend, and you went from 5 lakh crores to around 11 lakh crores of capex spend. That was last budgeted capex spend. Right now the game is changing, and you had a massive growth in personal income tax. Personal income tax rates were growing at 17-18% CAGR. Way higher than nominal GDP growth. And now, so a lot of tax money was getting collected from consumer, from the middle class. And now this soap will be a game changer. I believe it is, so these consumer stocks underperformance should get reversed. And that is very good, because from your automobiles to your, there are so many stocks that were not doing so well. I believe across airlines, more discretionary spends, that is a good space to be in now. I'm very happy with this budget. I'm extremely happy. See, most times, like you're just like the budget is middle, like not so great, nothing new happens, but this 12 lakh is a massive change. Even in my office, there are so many people who make less than 12 lakh rupees. And this is going to be a massive addition to their income. And even if they make 20 lakh rupees, 15 lakh rupees, everyone benefits. They will spend on cars, they will spend on travel, they will spend, and there'll be a multiplier impact on the economy. I believe this is one of the best steps that could have been taken, and I would rate this budget 10 on 10. You're not asking me, but I'm still rating it 10 on 10.
ML.
Amit, you are absolutely right. I think more than 85% of taxpayers benefit from the tax reliefs, okay, the change in slab and the income tax rate. But tell me, in the consumer space, I mean, it's very hard to really determine which pockets will benefit, right? I mean, you have, you know, companies that you own, like something that sells shoes, or local brand of shoes, to the levers, which has everything in its portfolio, to, you know, all kinds of companies. How do you zero in on consumer companies or segments of consumers which will really benefit from the kind of changes that the kind of changes in the tax slabs that we've seen today? Where do you see that money getting spent?
Yeah, this money will get spent. This will get spent on cars. This will get spent on fashion. You just keep tracking quarterly data. Which are the companies which are growing? and which are the economy is always similar for everyone. For all companies in every market, the economy is similar. It is about execution. Few promoters know how to execute, but 70% don't know how to execute. So, but you have to look at who are the guys who are using this tailwind to execute and make it large. And those are the kind of entrepreneurs we want to back in this cycle. India has gone through a down cycle. We are just starting, I believe that next year, if you look at GDP growth numbers, they were 5.2%. GST growth numbers were 7-8%. So this is a time that I'm thinking that the best way to you keep tracking data and if a company has to go from 100 crores PAT to 500 crores PAT, it has to do 120, 150, 170. You keep tracking data, and whoever's executing well, that is where you want to be invested in. That is what we do. We keep tracking who are the guys who are executing, but valuation just decide the allocation. If you get good execution at low valuation, then you want to have larger allocations. If you get good execution but very high valuation, we might have lower allocation. So that is what we do.
And what is your valuation threshold?
So we look at 1 year forward numbers, Mahalakshmi ji, to decide. So if you grow at 40%, we will buy you at 70-80 PE also. But if you grow at
please tell me one company that is growing at 40%.
There's so many. Yesterday one
40% top line, bottom line, what?
Both. I want both. Like top line and bottom line, both should grow at 30-40%. There's so many companies. My entire portfolio, I think, will grow decently. There's so many from your largest exchange. So many companies will grow. You want to take more risk, you can go for triple-digit growth also. But these are very risky. So normal people, like your investors, should look at 20% growth also. Those are very sustainable. So Peter Lynch had these frameworks of slow growers, fast growers, consistent growers. I believe very large money for retail investors will always be made in consistent growers, companies who grow at 15%, 20% consistently, because those companies don't get changed. In the high growth companies, what happens is when growth is very fast, the market bids them to unbelievable valuation. And if you don't get out at the right points of time, then you're stuck with those stocks. So medium growth, like consistent market leaders, medium growth, wires and cables, housing, all your housing ancillary companies you should have, not real estate, but housing ancillary companies, all of these housing ancillary companies. You see one pipe company came with 0% growth yesterday. All these, the largest paint company was coming with 0% growth for so many quarters. And now if there is a revival, it has come to 40p, assuming. This is not a recommendation, but I'm just telling you how you should think that it is at 40p. It's never after how long do you think the growth will revive? And if you revive, then I'm just telling you how to think. I'm not buying the largest paint company. I'm just telling you how you should think, that if the growth moves back to 15%, because paint and all these categories are very long-term categories. For US, there are companies like, so many companies are already there who've been where India is right now. And very large, I think it's a very blockbuster kind of budget for consumer companies. Mahalakshmi ji, large money will get made now.
No, I agree with you. I agree with you, but I think the only difference is on valuations, which is where the market really disagrees. You see a company like, Whirlpool, what has happened? So global companies are also realizing that Indian markets are super expensive and dumping stock here. And of course, we are giving them exit at very favorable terms. But be that as it may, thank you so much for joining this afternoon, Amit.
Rohit Shrivastava, founder India Charts, has joined us. Rohit, quick comments on how we are hearing people saying 10 on 10 budget, great budget for the Indian middle class. The market numbers not really reflecting that at the moment.
Yeah, so there are a lot of positives, and at the same time, if you go by overall expectations, there are many things that you are hoping to see that have also not happened. So that is why probably there's a mixed feeling in the market. I mean, the most positive reaction you're seeing in the obvious area, which is consumer stocks, that if you have more money in your hands, okay, you're going to buy this or this. Then I think at some point of time you will think about secondary effects. But the other area which people are talking less of, which is the capex and infra spending, mostly dependent on government. has slowed down in terms of the pace of investment that they're doing from 30% 2 years ago to 10% last year to maybe 8 to 9% this year. That sort of reduces your expectations on growth overall from those segments. And then we, of course, start hoping that interest rates will come down because you have good fiscal consolidation going on. That means pressure on the budget is on the bond market is not so much, and there's a case for rates to cool off. Will that happen right away? Will the RBI take that measure, or will they remain concerned about the currency? So these are some of the unknowns, and which is why the immediate reaction is not there. We can look at secondary effects of consumption. When you combine it with rates and try to put it together, which is why some auto stocks are maybe doing well. The realty sector is up. So these are interest rate sensitive sectors, but they would probably show the same kind of movements as FMCG if you could actually anticipate what happens next more clearly. So which is why it's not broad based. It is sector specific based on what the government has allocated to, where the capital is really being put to or taken away from. And that is why the market as a whole is not showing that same response as the particular sectors are showing.
Right. Talk about quick responses that we are seeing. Swiggy, Zomato shares rise up to 7% from day's low. I mean, again, income tax relief that has come in. Agri stocks are on the rise as well on the announcements made in the budget 2025. Also, as a boost that has come to agriculture and farmer income. Renewable stocks, renewable energy stocks also up in this post the budget. Shipping Corporation, the Great Eastern Shipping, etc. All of them also gaining at this point. ML, you had a question for Rohit.
Rohit, on the charts, what are you seeing? You take today's reaction and the past 4 months. What do you see? Any clear pockets of winners in the short term?
Yeah, so there will be, and I think if we did, in fact, I published a relative strength analysis yesterday of what has been working since the market fell from 13th of December to the end of the month, and it was essentially the top sectors showing up were FMCG, auto, and pharma. These are the 3 sectors that were standing out in the fall. And usually we feel that, okay, what's standing out in the fall is going to stand out afterwards as well as it bounces back. And I think out of these, 2 of them are showing the way. One is FMCG and second is, of course, autos. FMCG was on top and that's sort of doing the best. So I don't think the rally that you're seeing now in FMCG is over because some of the stocks are just breaking out from the base formation that they were making over the last several weeks. Because remember that FMCG was also the first to fall when the market started to fall. From the peak in September, this was the sector that got hammered the most, whether it's including the domestic FMCG, which we are not even focused on now. Although I think Godrej Consumer is actually one of the top performers right now. But you have Titan, you have Asian Paints, you have so many stocks that got battered the most. So that became the case for, okay, when are they going to bounce back? And you've got a case now for them to continue this bounce, maybe retrace a little more because you've not even retraced maybe 38% of the fall so far. You can do 50%, you can do 61%. So I would say there's still further upside in these segments in the days ahead. So we should remain optimistic from a trade perspective. Since you asked short term, maybe for the month of February, I think we still have upside in these segments. But when we study the market as a whole, it's possible that the Nifty, which has hit its first resistance over here, close to 23,500, 600, you will see a consolidation below that level before you break out above it. I do think that in the weeks ahead, you will hit 24,000 in this, bounce that we've started to see. But it may take a while. You might still see the market consolidate maybe for a week below 23,600 before you get the next leg higher because you're going to need participation from the rest of the market for that to happen. So the sector specific gains may continue, but the overall Nifty, if we simply look at it, may take a while to start moving higher.
All right, Rohit, stay back with us. Lakshmi Iyer, CEO, Investment and Strategy, Kotak Alternate Asset Managers Limited is also with us. Hi, Lakshmi. Thanks so much for joining us at Money Control. Firstly, your first reaction to the budget. Like I said, I was mentioning to Rohit earlier, the sentiment, the newsroom was in cheers towards the end of the budget when we heard the income tax cuts over there. But somehow the market's not reflecting that mood.
Yeah, hi, definitely. So, I would say between the two C's, which is capex and consumption boost, clearly the common man, aka the consumption boost, has been the winner in today's budget. To that extent, near term, obviously, there is quite, it's quite likely that markets may think that, oh, the capex growth is not as much, but one can't completely undermine the positive, impact of the consumption boost that has happened today on account of tax rationalization. So I think, yes, one can't completely ignore what's happening across the globe in terms of potential tariff wars, etc. So I think I would say the balance of tilt has gone slightly more towards the consumer, and I think that is the key highlight of the budget in today's outcome. Apart from the fact that yes, fiscal discipline is something which is been a non-negotiable.
Right.
Hi Lakshmi, do you see a rate cut on cards in the next MPC meeting?
So I would say it's still a toss of a coin. It's not a necessary and a sufficient condition, because globally there are a lot of things which are happening. This time FOMC was a status quo, but the clamor for rate cut over there is also happening. ECB did a rate cut. While our inflation is fairly docile, especially on the food side, the target number is nowhere near met, and currency is definitely in a volatile phase. So I think we are entering the monetary policy phase with multiple uncertainties. So I would say it's still a toss of a coin between the head and the heart. We don't know what will rule.
Lakshmi, what is the sentiment amongst high net worth individuals right now? Do you see a lot of your clients move to debt, because it seems like the equity markets are sort of, at least before today, it was looking like they were hitting a pause button. One, the relentless selling from FIIs continue. The quarterly results seem to be, not as one would have expected. So there is clearly some kind of, at least in terms of stock market returns, very muted expectation. On the contrary, we don't see rate cuts happening yet. So is the mood shifting away from equities into debt?
Well, I would say the mood is getting a little bit cautious on equities, especially the mid-market segment, and more avenues are being sought, be it some of the unlisted space. Gold, for example, is, we are constructive on gold as a asset class. Fixed income, specifically in the high yields, there is interest, because in government bonds, the yields are very, very low. It's not even high enough to attract foreign investor interest, let alone domestic interest right now. So I think while the interest for equities is not out completely, but clearly diversification tools are being sought within asset classes to just kind of deflect some of the risk, which possibly could be more vehement in the coming weeks. Volatility probably.
Okay, two more questions. One is your take on the rupee. What do you see the trajectory in the next month or so? Secondly, do you see an end? Do you see an end to this relentless selling by FIIs anytime soon?
So the first part of your question, I would say there is still some more stability. Time for stability, I would say, on the rupee, given the fact that it is a larger pack of EM or emerging market currencies which are witnessing some sort of soft patch. And I'd say that that would continue for some more time, including the rupee for now. As far as the FPI or the foreign portfolio investor selling is concerned, look, they are actually trying to diversify more from, it's getting to be more like an EM versus DM or the developed market trade. So I think that's not going to abate anytime soon. Maybe the pace can come down a little bit, but looks like so long as we do not see currency stabilize, it is very difficult to expect FPIs allocate more durably in the very near term.
Okay. Rohit, coming back to you, general interest in market has gone down quite substantially, since September last year. Since the budget in July. Trading interest has also substantially gone down, I think more than 30% even in the cash market. Now, is the retail interest in stock market somewhat, do you see it waning?
I think it's a bit early to say that, but definitely, a lot of people who we speak to, in our clients or, essentially users of our platform, what they do say is let the market pick up and then, we'll do something. So it's more like a cat and dog thing, that this retail interest which you're talking of, they essentially feel that, okay, once the market picks up, we'll become more active. I think it's more like that. And they're just patiently waiting for the bad phase to be behind us. And once that sense starts coming back that, yes, maybe the worst is over, maybe we've put in a low and, stocks are making a comeback, that activity will probably increase all over again. So it's more like that. But there's no give up. I don't think they've generally given up on it. Because that's too early. We haven't really fallen that much from top to low for people to completely give up. But definitely the selling that we saw in mid and small caps was slightly disheartening for a lot of people. But the optimism is still there below the surface. But they're just being very, very patient.
Okay, while we continue to have Rohit and Lakshmi with us, can I just get a big picture question from Bodhi, who's also been patiently sort of listening into all of this? Can you give us and help us understand what exactly is the endeavour here from the government? What are they saying with this budget at this point? Is there a clear shift in strategy as we were talking about earlier?
No, it's clearly, it's a budget aimed at the middle class. There's been a lot of discontent, or at least a perception of discontent on part of the middle class, the very large middle class, however you define middle class. But I think the government is also very clear. The middle class are those earning around under 20 lakh rupees, 20-25 lakh rupees. So it's a big tax concession to them. There is also below the level of the middle class, if you look at the gig workers, which is really low middle class, they're not tax paying, but there's also a big attempt to reach out to them to in terms of health insurance, in terms to ensure some basics. So I think that is really the message. I think the third big picture is the government cannot keep spending capex, cannot keep spending money to boost the economy. So it's up to the private sector to really step up to the table. Where the private sector actually does so, as a number of the guests mentioned, depends on demand, because capacity utilization is under 75% right now. It needs to go up somewhat. So yeah, that's the conundrum of the economy. The big picture is that the government is now going to react to some of the discontent which has been expressed, and it cannot keep. I mean, this 11. So as some of the guests mentioned, the capex in FY 25-26 is about the same as the budget estimate for 23-24. So there's actually no growth. There's a marginal growth if you look at the revised estimate for 23-24. So yeah, I mean, so that has kind of run its course, and the government is, and the fourth element of the big picture is the government is still very big on fiscal prudence. It is going to stick to the fiscal deficit target. There's an announcement also to bring down the debt to GDP ratio to 51% by 2030-31. It's currently close to 60%. That's now 56-57%. So they will bring it down. So there is fiscal management remains a core element of the government, and there are elements of, there is a PM Kisan which they have, if I'm not mistaken, I think it's there somewhere. They have increased the payout. So there is so that's some kind of universal basic income and at a section of the population, although that's not. And yes, then startups, MSME. So the whole and of course the whole emphasis on Bihar, the elections in later this year. So it is reacting to the political circumstances. I think that's really the big thing. They're trying to boost consumption, and yeah, so that's really what.
Let's just pause that for a minute, Bodhi, and we can also cut across to CNBC, our sister network over there, to try and get more industry reactions. This is CNBC at CII.
Delhi right around the corner, and Bihar, and that's the message the government's sending out.
Yeah, I think. I mean, listen, I think we've had pre-budget discussions. Everyone was expecting relief for the lower and middle income. But this extent of relief, I don't recollect, has been given 1 lakh crore in personal tax, which is almost, about 7 to 8% of the total personal tax collection that the government has. So I think it's a very significant relief. And overall, if you look at the overall theme from a tax standpoint, I think a lot of it is based on just simplification.
Right.
From the new income tax, 50% of the provisions coming down in the new income tax bill, that will be tabled next week. All the other things that they have also done, whether it's on TDS, TCS, all the other areas that have been laid out, a lot of that is on simplification. Also in continuity, no changes, no significant changes anywhere except addressing some, minor tweaks here and there. Unless if something is there in the final, then we don't know. But this government generally, whatever is on the table. IFSC always gets, they're trying to encourage and project IFSC more. That's there. And overall, the emphasis, whether you look at the economic survey or you look at the budget, this ease of doing business. And I think it is so important to unleash the spirits and to ensure that India achieves its full potential. I think that, setting up the committee, coming out with in the next 1 year, setting up some competitiveness among states, clearly recognizing that a lot of these things have to happen in states. I think that's a big change. And the pillars that they have identified, and focusing, some of which Sanjeev mentioned, focusing on those 4 or 5 pillars that are so critical for growth in the next 10, 15, 20 years, including nuclear power and making changes in the act. I think that was quite good to hear.
Yeah, a target of 100 gigawatts as far as nuclear power is concerned. And remember, the IEA has said that 2025 is likely to be a breakout year when we talk about nuclear energy. So India getting into the ring as far as small modules are concerned. But Chandrajit Banerjee, what the finance minister has delivered on the consumption side, perhaps some disappointment on the capex side. Clearly not on the lines of what industry was expecting or even hoping for, but it's in line with what the government has been saying. So on balance, the balance has been done and the balance has delivered?
Absolutely. Of course, we talked about a 25% more. I mean, there's no restriction to asks, but
no, clearly there isn't. Clearly there isn't.
But yes, this was expected, and one had thought about that. But if you really look at the type of spend that one sees on the capex, which is still, I mean, quite reasonable in terms of if you compare it, what goes into rural infrastructure, even this about the states that 50-year interest-free loans. So all of that actually would help in crowding even the private sector, which has been called a laggard, so to say, for some time. And I see that coming in because we see a focus on a lot through that will come through the consumption demand. So all in all, not really any disappointment with the capex which the government has done, because it has done more than to offset through the consumption demand.
Done more than what was expected, certainly on the consumption side. Sunil Mujal, thanks very much for joining us. On balance, the big headlines, the big takeaways, what does the budget do to accelerate growth?
So actually the whole exercise, I think, was a balancing act between maintaining fiscal discipline, which the finance minister has put on herself over the last many years, at the same time figuring out a way to bring growth back in. So I think it's been done in multiple different ways. One is the building blocks, is on education, skilling, research, innovation, tech focus. That's very good. Second is picking specific sectors for high growth potential. Clean energy, deep tech, so the seeds, that's a massive area actually. What they've done in agriculture is a wide coverage. What I like is also focusing on some of the fundamentals, things like nutrition, things like the elderly, things like the farmer, small industry, export capability. So it's actually, I'm actually broadening the answer to your question, because I don't think it's only about that. It's not only about, growth is not something you can flick a switch and get tomorrow. But the tools have been put in place, and the point you were making just now, about the higher liquidity in individuals and families' hands will either go towards savings or investments or consumption, and all three will do good. Even if you say it's about 1/3 each, roughly. So you're talking about 30,000 crores coming into consumption this year. So some of it will need to go because personal and family balance sheets were getting a bit upset because there was over leverage taking place on individuals. I think some of that will go to offset that, as companies and banks have done over the last 7 or 8 years. So I think we will come out better, healthier, cleaner. I do hope, unlike what CB is saying, I was hoping that the infra spend would have been higher because this consumption takes a little bit of while for the virtuous cycle to kick in. Consumption can start, but consumption leading into production, leading into additional capacity, leading to jobs is a bit of a time lag. So that's one miss from my side. But I guess to be able to maintain the 4.8 instead of 4.9 at the fisc was a pretty magical number.
Oh, and it certainly was a surprise that came in there after having delivered on the kind of cuts that they delivered on. But Sanjeev Puri, let's talk about those untapped sectors where the government hopes to unlock potential. Tourism, you know, this identifying 50 cities, PPP with states, PPP with industry as well. I'm not sure what the details are, but also including hotels as part of the infrastructure harmonization scheme that they're talking about. What did you make of that? And, you know, a lot of actually the schemes that were talked about are work in progress. The actual operationalization still has to be detailed. So what do you take away from many of the announcements that came in?
See, first of all, many of the specific interventions that are there, you alluded to some in tourism. Then there are others, for example, in exports. I think the integrated approach, cross-ministerial approach, I think is absolutely the one that is required, because in the morning also we spoke about some of the issues that have to be dealt with, which requires a cross-ministerial approach. And something CI has also been talking about, you know, having an integrated approach. Looking at setting up this committee on ease of doing business. And taking an integrated and focused approach on agriculture, 100 districts, all-round development. Taking an integrated approach on rural, the non-farm development. You know, really sending some development and resilience hubs for rural areas. So these are very fine ideas, very good ideas, and certainly will unlock the potential in many areas. You know, creating a framework for GCCs. GCCs are already, you know, doing well in India.
And massive job creators.
Massive job creation, and the world has demographic challenge. So it's a great opportunity for India, and to provide impetus to it, to make some, you know, today it's happening on its own. Without really any impetus or for specific interventions. So right now, to create a facilitative framework for this, I think it's going to provide further impetus to it. Then the whole idea about the strong point of reforms and collaborating with states. I think this will provide a lot of impetus, because a lot of reforms now need to be done at the state level. Right? So a lot of the right things are there. And I think what I'm very happy to note also is that there is a lot of clarity on the mechanisms that will be used to do it. It is not just a statement without an institutional mechanism.
Rajiv Memani, the big, the big headline for you as I say goodbye, at least as part of this session, but the big headline that you take away from what the finance minister has delivered.
I would say identifying the critical growth drivers for Viksit Bharat, ensuring that there is, as he rightly said, that there is a focused approach.
So that was Shireen Ban talking to corporate captains from CII. We have with us Prashant Khemka, founder and CIO of White Oak Capital. Prashant, your first take on the budget.
It's a very good budget, Mahalakshmi. I think it's the best in a long time, because primarily, as I've often said, what I keenly try to read from the budget speech is what does it reflect of the government's mindset at this time. So I have, like, on my notepad, I'm taking the positives and the negatives along the, and the single biggest thing that I'm looking for directionally is whether they're improving ease of doing business. And the reason ease of doing business is the single most important factor for me is because that leads to faster growth in a structural manner over long term. Faster growth leads to job creation, higher incomes, higher spending, higher corporate earnings growth, higher market returns, and the virtual cycle that of higher economic growth as well. In this budget, if you see, there are many instances throughout the budget that the finance minister talked about ease of doing business, either using those very words or in one form or another, as if that was actually the central theme through the budget. So she talked about, setting up in the early part of the speech, setting up a high-level committee for regulatory reform. She mentioned 4 points. I couldn't note down each one of those in details, but one of the things she mentioned is investor friendliness index for states. I hope it is something that truly turns out to be a index that the states would pay attention to and would compete with one another, as that would be very would go a very long way in increasing the ease of doing business at state levels. Then she talked about evaluating impact of current financial regulation. There are a lot of regulations that are, if they've outlived their utility, or in fact they've become a burden, if they ever were serving any utility, they've outlived, but many of them have never served any utility. And Section 9A, one of the things that I was talking on another channel, Section 9A was a section that, with all good intent, was proposed by the late Honorable Finance Minister, Mr. Jaitley, in 2015, but it's been 10 years since, and it has not been operational because of a lot of handicaps that were built in and are built into that Section 9A. So hopefully all these would actually see the light of the day. A lot of announcement that came through in the Jan Vishwas bill to decriminalize 100 additional laws. This is so specific that I have to assume that would be seen through. A new income tax bill, in regards with which the finance minister talked about it being simple, it being clear, simple to understand, and providing tax certainty. All these are extremely desirable for.
Sure, but how do you see the pivot from capex?
Capex to consumption, all those I think are, relevant in the scheme of things, but are, to me personally, and then from a White Oak perspective, are very short-term in orientation. And hence I don't necessarily get very worked up with them positively or negatively. Yes, there is a little bit more emphasis on consumption that has to be expected after the elections of last year, the central elections. That was clearly the direction of the July budget as well. So in that sense, it is continuation on that front. There is nothing different. But on the more important subject that I was talking about, it is quite different from last year. This year, finance ministers talked about increasing the thresholds on TDS, TCS, and all those things. So on consumption, yes, it is more pro-consumption with the increase in the threshold of the income tax limit, and the capex budget was left at with only 10% increase, which is, while in line with last year, last year or July was expected to be an aberration in the longer term trend, that is where the capital expenditure budget has been growing in the high teens, and July was just 10%. People thought, well, this February, this budget, it will go back to that high teens. So now that it's come again at 10%, market would have to possibly reset its expectation going forward to more of a 10% kind of number rather than a high teens kind of number that persisted for the prior 10 years or so. Yes, that's important. But no, I think there are more important things that were positive in the budget, as I was highlighting earlier, and the whole list that we haven't gone through.
But how do you see this shift? I mean, is this a temporary shift for this year, in the sense that, all of this while we have assumed that this is a government that will continue to focus on infrastructure. That is what creates assets for India. That is what has the highest multiplier. All of that, and keeping it the same. And I'm also saying, in the context of the fact that they've accounted for 2.5 lakh crore in terms of dividend receipts from the RBI.
Yeah, So see, we'll have to see the underlying mix, how it has changed, what is growing faster, what is not growing so fast. So, for example, defense budget, which has come under stress, no doubt. But if there is far greater emphasis on indigenization of defense procurement, which has been underway for quite a few years, yeah. So Indian companies, private sector, which is still in its nascent stages, but they are producing some of the same equipment and supplies at a fraction of a cost compared to foreign suppliers. We've been engaged with and talking to several of these defense companies, and they cite examples of supplying these ammunitions and other equipment at 60, 70, 80% lower prices than foreign suppliers. So if there is a massive push towards further indigenizing, accelerating that indigenization, there will be a big benefit to the defense sector private companies, as well as help the government reduce the budgetary allocation to defense without cutting down on any of the procurement in terms of volumes. So we'll have to see the underlying mix of where the capex has been, constrained and where it is not. But if done properly, a 10% increase, you can't grow at 18-20% capex budget at the country level when the nominal GDP growth rate is 10%. You can't do 18-20% for too long, right? Forget forever. So in that context, we have to think of, in my view, 10% as a new normal going forward. It's not as bad as it seems.
In the near term, Prashant, what would you look at as tactical bets? If you were to just, look at the next 1 to 3 month period, where do you see positive news flow? Where do you see earnings sort of starting to see recovery by the end of the year? And next year, that is for FY26, do you think we can achieve a double-digit earnings growth?
Yes, I do think we can achieve a double-digit earnings growth. That would be our base case expectation, in line with nominal GDP growth rate, say 10 to 11% corporate earnings growth. This year is going to be a bit softer, as we all know. In terms of sectorally, where we find a lot of opportunities, Mahalakshmi, at this time, are in no particular order in the technology, IT services sector. I think all this worry about AI demolishing the business model of IT companies is very misplaced, and it is very possible, or just as possible, that the investments that companies, corporates globally would need to make to be AI prepared and leverage AI would result in a boom for demand of some of the IT services companies in India, particularly those who built some strength in this area and those who have been proven over time to be strong in execution and at pivoting when there are new technological changes which have always been there over the last many decades. They do come about every now and then. So IT services, we do continue to find some very attractively priced opportunities, particularly in mid-cap IT, where execution is very strong. Other sector, I would say, is
any announcements from this budget that stood out for you that open up fresh opportunities
for IT companies, or in general?
In general.
See, in general, from this budget, no. I mean, it's positive for consumption, but we already are fairly highly exposed to consumption. So it's not that for us, we can go out and buy more consumption-related stocks on the back of the budget. It's good that we have considerable exposure, but if we didn't, or if someone does not have exposure to consumption-related companies, might make sense for them, because this budget is not about this budget now. The July budget and this budget. Now, there are two budgets in a row where the government has made it very clear that consumption would remain their focus. So if that's going to be the case for many budgets to come, it puts a floor below the softness in consumption that we have been experiencing over the last few quarters or couple of years. And in that kind of backdrop, there are a lot of consumption-related companies which have reported weak numbers, and hence their numbers are suppressed. as well as the multiples have come down now relative to what they were at least 2 to 3 years ago. And so it would be a good idea to explore both discretionary, which includes a wide range of industries, including automobiles, retail, and whatnot, and durables, as well as staples. So that would be a good area to dig deeper to identify the big success stories over the coming years.
Thank you so much, Prashant, for joining us. We have Lata Venkatesh waiting for us at the Bombay studio. Lata?
Thank you very much, Mahalakshmi. Looks like the budget has quite clearly shifted from capex thrust to consumption thrust. That seems to be the main theme. What we have seen is that the capital spend of the government is rising only by 10% over the budgeted expense, over the revised expense of this year. Next year it is going to about 11.2, from 10.2 to 11.2 trillion rupees. So the basic increase in capex is only 10%, and the government has also given away a lot of money to the middle class, because the minimum tax has been raised from 7 lakh to 12 lakh. So more money in the hands of the middle class to spend. The hope therefore being that urban consumption will revive, and that will enable the economy to go ahead. It is a growth oriented budget, provided consumption takes off, especially in urban areas, and there's a substantial amount of money that has been given in the hands of people who are earning 12 lakhs, people who are earning 15 lakhs. They're all saving something like 70,000 to 1 lakh rupees by way of taxes. The expectation is that they will go ahead and spend. I think we have Gautam Trivedi with us, Gautam Trivedi of Nepean Capital. Gautam, can you hear me? Okay, we are awaiting connection with Gautam Trivedi, and as soon as we can. Okay, Gautam, can you hear me?
I can hear you loud and clear.
Okay, all right. Gautam, from what the macro takeaway for me is that capex expend has been increased only by 10% over this year's actuals, but the government has given away 1 trillion rupees to the middle classes by way of tax giveaways. Would you say, therefore, that we must expect a consumption boost?
I think we got to take this with a pinch of salt, because the fact is, to expect all of the disposable income in the hands of the taxpayers will now be spent on whether it's cars, whether it's clothes, whether it's QSR, and eating out. I don't know if that's what the middle class will necessarily do. There'll be a fair bit of savings, given the inflation is still pretty strong. And my view is that this was a very bold step to increase it from 7 to 12 lakh rupees, as you just said. But the reality is that I found other measures within the budget not as bold. So my view is, specific to your question on this 1 lakh crore bonanza, will the taxpayers start spending all of it, and as a result help jumpstart the economy? I don't think so.
Okay. Gautam, I'll just come back to you in 1 minute. We also have Manish Gunwani, the CIO of Bandhan Mutual Fund, with us. Let me get first thoughts from Manish as well. Manish, thank you very much for spending time with us in Money Control. What are your first takeaways from the union budget?
So I think it does look like a important pivot from capex to consumption. That is the first one. Two is, the question is the intensity of the stimulus. Is it strong enough to revive consumption in a meaningful manner? I think that will obviously be open for debate. I personally feel maybe the stimulus could have been stronger, but I guess it's also a function of how monetary policy works in conjunction with this stimulus on the consumption side. So the third point is, in terms of estimates, I think the personal income tax estimate does look a bit aggressive, given that with the tax cuts, we still have a growth of 13-14%. So that and the pension expenditure also is flattish, which may or may not happen. So I have a feeling maybe there is some risk to the fiscal numbers, although having said that, I'm not read the fine print in detail. But I do think maybe from the first glance, it does look like some of these estimates may be aggressive.
Actually, I share your skepticism on that. If you have given away 1.1 trillion rupees by way of taxes, income tax, you are assuming a 14.4% rise in income tax.
Right.
Now, we could be surprised positively because this year, if you looked at the April-December numbers, the income tax rise is 22%. So possibly even after the giveaway, there will be so much growth in incomes at the higher level. It's after all a K-shaped recovery. But, and maybe their bet on tax buoyancy will pay off, no?
So at the margin, things like capital gains tax and all, the kind of growth we've seen last 2 years may be a bit difficult, right? Given stock markets, how they're behaving.
Okay. Fair point. They have also assumed a little more on STT. Okay, let me get the first thoughts. Yeah, aggressive. Okay, so let's see. This is the first time we are giving a charge of aggression on this government. Otherwise, for the past 3 years, Nirmala Sitharaman has actually surprised on the upside in terms of her tax collections, including income tax in FY25 itself. Even as of April-December, she is surprising on the upside. So we perhaps must hold our horses in terms of our skepticism. Let me get back to Gautam on this. Gautam Trivedi, what are your key takeaways? You said that my bet on consumption is a bit aggressive and optimistic. What are your key takeaways from this budget?
I think fact is that, as I said earlier, that the raising the exemption limit, I think is a great move. The only thing is I found less of that in other aspects of the budget. So could they have done much more to kickstart this economy? Because that's where the economy really at this point needs help. If you take out the top 6 or 7 in large industrial houses, private sector capex really hasn't taken off. So I'm not sure if this is a great time to actually think of fiscal consolidation when private sector capex is not taking off. Should you be focusing more on spending more? Because even the defense budget, they've pruned it down. The overall capex has been pruned down from the budgeted estimates to now the revised estimates for FY25. So my view is that we need more investments to come in. Yes, there has been an effort to increase consumption, but I don't know if that's going to bear fruit so quickly. There were a lot of long-term measures in the budget which were longer-term positive. For example, the FM spoke about 50 new tourist destinations. Great idea. About time we did that, but the fact is that's going to take several years to play out. So the concern is that let's leave aside fiscal consolidation for now. Let's focus on continuing the spend because that's what the need of the hour is.
Okay. Okay. Coming back to you, Gautam, Munish, what kind of stocks or sectors, therefore, should an investor bet on? The market is running away with Easy Trip, for instance, because of what Gautam spoke. The fact that tourism, at least there is a mention of tourism in Bihar and other places like that. Munish, can you hear me? Munish, you can hear me?
Yeah.
Okay, I just wanted to ask you, the market is running away with positives for stocks like Easy Trip, for stocks like even Indian hotels, because the expectation is that all these will benefit from that tourism mentions as well as more money in the hands of people. What exactly should be the sectors one should bet on because of this consumption thrust and the other things like tourism that have been mentioned in the budget?
No, obviously things like auto, retailing, aviation, hotels may benefit. The bigger question post this initial bounce will be that ultimately these are consumer discretionary sectors and they will do well if the economy does well. So I think while relatively versus capex, this set of stocks will obviously benefit, and a lot of them have not really done all that well over last 1 or 2 years, again relative to the capex plays. So we may see a shift in the market action towards these segments. But ultimately, both capex and consumer discretionary need the economy to do well. So I think we should also keep in mind that for these stocks to do well, this stimulus is enough to get us out of this slowdown, which we've seen over the last 6 months or so. And I think that is also a big question.
Okay. You think that's not answered? It is not, you're not very sure that this boost is enough to get us out of the consumption slowdown that we have seen, is it?
So, Lata, think about this way. You basically shifted about 1 lakh odd crores from capex to consumption. The overall government expenditure growth is very tepid. 1 lakh crore is roughly about 0.2, 0.3% of the economy. So I have a feeling, although there is no science to this, that it needs to be married with a bit of monetary and maybe an exchange rate stimulus as well, rather than looking at only this 0.2, 0.3%, maybe slightly higher because some of the revenue projections, as I said, are aggressive. So the fiscal compression may not be as much from 4.9 to 4.4. Maybe we'll end up with 4.6, 4.7. But even that, essentially, the overall fiscal stimulus is actually going down in one sense. So I would preferably want to see monetary and exchange rate combined with the stimulus to be a bit more sure that whether it's capex or consumer discretionary. See, ultimately, both of them are married at the hip in the sense that if consumer discretionary does well, we will have capex finally, private sector capex.
Got it.
So the bigger question is whether the economy will come out of the slowdown.
Fair enough. You think that the question is not answered. Well, Gautam, Munish, I want to thank you. Just leave me with some sectors you will bet on at this point in time. Gautam, you first.
Yeah, I think I would stick to consumption given the fact that these stocks have done nothing for the last 3 to 4 years, and they finally got some benefit from this budget. So I would stick to them.
Okay. All right. Thanks a lot for that, Gautam, and thank you for joining us all the way from the Jaipur Lit Fest. That's really kind of you. Munish, which part of the economy would you bet on now?
I would say urban consumption in sectors like retailing, internet platforms, and auto. I think those will benefit.
Okay. Okay. All right. Well, those are the sectors that have done well today, at least. So maybe the market has smelt it right. Thank you very much, Manish Gunwani, for giving us your first thoughts on the budget. We now have two other guests joining us. We have Gautam Dugar, the head of research at Motilal Oswal, and Ashish Gupta, the CIO of Axis AMC. Ashish, Gautam, thank you very much indeed for your time. Well, Gautam Dugar, I wanted to ask you about these insurance companies. We saw them suddenly tank the insurance stocks on fear that more people will shift, I think, to the new tax regime. And there will be no incentive, therefore, to perhaps go for insurance. Would you be that bearish on insurance companies as a result of the budget? Gautam Dugar, can you hear me? Okay, I think there is a connection issue. We will come back to Gautam Dugar in just a minute. Ashish, can you hear me? Well, we do have a problem of connectivity. We will try and see if we can connect once again with Gautam Dugar and Ashish Gupta, two stalwart market veterans, and they're going to tell us what they have made. Ashish, can you hear me now?
I can hear you, Lata. Am I audible?
Okay, okay. Yeah, now you are. Now you are. Thanks a lot, Ashish. Well, a key takeaway is really, do you think that the thrust given to consumption is enough to push the economy up to a faster pace of growth?
Sure. Yeah, I think, first of all, I don't think we should just look at government as the sole driver of the economy and economic growth, right? So I think we have to keep in mind the government's largest role is to creating an enabling environment for growth. right? And I think on that count, the budget has clearly delivered, because in the current uncertain global backdrop, it was very important that we maintain path to fiscal consolidation, right? And we have all seen the trend in foreign flows that has been quite negative, even though our macro has been quite solid over the past couple of years. And at this point of time, there was no real leeway for the government to waver from the path of fiscal consolidation. So we have to see the room to maneuver the government had on that front, right? So first of all, yes, they have continued on that path. Next year, fiscal deficit is 4.4%. The market borrowing for next year on net basis is not going to be very.
Yeah, no, exactly. Gautam, Ashish, you can't fault the logic of the government. They have decided that they will move out and hand over the baton to consumption.
Yes. So given that backdrop, whatever spending they could do, they have delivered on that. And I think they have been responsive in terms of ensuring that the spend increase has happened more in the area that had been a drag on the economy, and which was clearly consumption. And so in that sense, I think the government had done its part, both in terms of creating an enabling environment and trying to address that pocket of economy which was lacking. So I think that is it. The other thing which I think perhaps has not been spoken about as much is that the responsiveness of the government has been on another big aspect that has been dragging the economy, and which has been regulatory, right? And there were two announcements. One was setting up of a high-level committee to look at regulations across non-financial sectors, and also actually mandating the FSDC to look at financial sector regulation in terms of development of the sector, right? So I think that, to my mind, is an equally important step, because in addition to the other challenges that we were facing, I think the regulatory drag was also a big hurdle to growth. And I think them looking to address that, to my mind, shows that the government is being responsive to the feedback that has been coming on what has led to the slowdown.
No, I absolutely take your point, and you're one of the first experts pointing this out, that this effort to deregulate, which was there in the economic survey, the government has actually tried to walk the talk. Non-financial compliance, clearly they're reducing the burden, and on finance as well, we should hear something if the FSDC committee is going to, cut some of the regulation. Now, an added point that comes from this, the regulator and the government should act together, especially the monetary authority. Considering that the fiscal deficit discipline has been maintained, it is logical to expect that Reserve Bank will cut rates, because that's how the RBI thinks, from what I know of 20 years of covering them. Whenever they see fiscal discipline, they are a bit more ready to cut rates. If that rate cut comes, what kind of sectors would you bet on?
Oh, so of course, see, when the rate cut comes, all of us are quite well aware of the rate-sensitive sectors, whether it is related to the financial bank, non-banks, real estate, automobiles, etc. But I think what is more important besides rate cut has been liquidity, or the lack of liquidity in the last 6 months. I think you have already highlighted in multiple shows over the past week how under the new governor, the stance towards liquidity is being addressed. And I think as much as the fiscal consolidation has been maintained this year, the other big document that they have put out, if you have seen the FRBM note, is that they have committed that in the next 5 years they'll get central government debt to GDP down to about 50%. Right, so it's about 56%. So I think that is again a very important statement. What it means is that not that this year fiscal deficit is coming down, but the glide path for next 5 years continues to be down, and debt to GDP, particularly the central government debt to GDP, will be declining, while across the globe over the last few years we have seen government debt to GDP only go up.
Okay. Well, please stay on, Ashish. We also have Deepak Shenoy joining us, a master of stock picking. Deepak, thank you very much for your time. Let me start straight away with a stock market question, which a lot of viewers will have in their mind. Having heard the budget, what kind of sectors look attractive?
I think, Lata, the attractiveness of perhaps the manufacturing industry, the shipping industry in general, and semiconductors or electronics in general have been particularly favored, I think, in the budget. So they might possibly react quite well. The increase in perhaps up to 10,000 rupees per person will be per month. Will be an extra, non-tax, because you save about 1,20,000 rupees in tax at the maximum if you're earning more than 24 lakhs. So that's 10,000 rupees extra per month that comes in the hands of people. So I think consumption should do well. Tourism, specifically consumer durables, also likely. And if this downstream, like you said, leads to a tax cut, we might actually see quite an interesting change in even the industrial capex that comes in. So companies that have been working in capacity constrained sectors, but not necessarily trying to do more capex because they don't believe demand will expand, those are sectors which I think will start doing capacity expansion plans. Much of that will happen in the manufacturing sector also because of the boost they've got. So I think overall quite a decent stock market related budget, but I don't think it will help a lot of people thinking that a lot more people get attracted to stock markets, because effectively 1.5 crores of income of assets can be placed in fixed deposits now by a person retiring, and they will have no tax on that income. So if you have that much money, it is actually better placed in a fixed deposit than invested in stocks, bonds, or mutual funds.
Oh, okay. I didn't think about that. That would actually take away some money at the margin. But I'm betting on the fact that, as you pointed out, 10,000 rupees more per month is available to people earning up to 25 lakh. That's, I would assume, a decent number of people multiplied by 10,000. That's assuming they will say, they will not invest, but they will spend. We are getting some consumption-oriented boost here. Very quickly, when you say manufacturing, which specific stocks are you thinking of? Deepak?
We do have a lot. So I think there'll be a whole, whether the auto industry itself has a lot of manufacturing components to it. That is one layer. The semiconductor / electronics manufacturing industry, whether, a lot of stocks there are listed. We own a lot of these stocks, so very biased here. I think downstream will also impact infrastructure, but I haven't been able to go through the documents in detail to understand where infra is maximum affected. There is a lot more push on nuclear. So companies providing manufacturing elements to the nuclear sector, I think they will do well, whether it is water pumps or other equipment related to this. There are few listed stocks there as well. And I think tourism, so manufacturing itself, I think in the end, you have a lot of people who provide tools, consumables and other equipment to the manufacturing sector. While you have a car manufacturer, for instance, buys a lot of components use a lot of machine tools and so on. Many of those manufacturers have floundered for decades because there's not been much of a manufacturing push. That I think will massively change. Many of them are mid and small caps, so I expect a few of them to become large caps soon.
Okay. Well, that's a very big hope that you're giving. At the moment, the market is not looking in that direction. The kind of stocks that are doing well, Swiggy, Zomato, Kalyan Jewelers, ITC Hotels, Indian hotels. So it's consumption, consumption, consumption as far as the market can look at it at this point in time. Maybe they will, come around a little later. Ashish, I wanted to ask you, do you think that, you're pointed out very correctly to that FRBM roadmap and the fact that the debt to GDP ratio will also come down towards 50. That's exactly what has been the ask of the rating agencies. Do you think we tick all the boxes now for rating agencies and we should expect, an upgrade from that quarter?
So I think there are multiple parameters they look at, and I don't really think India's government debt to GDP ratio was very high to start with, and that was therefore the constraining factor for the rating, right? But irrespective of that, I think India's macro fundamental.
No, Gautam, sorry, Ashish, fiscal deficit was something they would keep pointing out. And we kept arguing with them that our rate of growth is higher than our rate of interest, and therefore, the old R-star argument, and therefore we should get an upgrade. I'm just asking, all things put, macros in place, and then this 4.4% fiscal deficit, are we on the path of a rating upgrade?
So, I agree that, and if they continue on this path, both the fiscal deficit number will also keep coming down, and I think your primary deficit will also keep coming down, right? So I think should be taken as positive indicators, but I'm not just sure what will be the catalyst for the global agencies to change their view. Having said that, I think from the perspective of the markets, really what is important is what is the cost of capital, right? So even without the rating upgrade, given how well our macro fundamentals have improved, if you see the spread domestic yield have to global yield, that has been consistently coming down. So I think if we are doing the right things, the market obviously recognizes it and rewards it, irrespective of the fact when the rating change happens.
Okay. Finally, Ashish, what is your sense of, first of all, would you expect a rate cut? And secondly, what sectors therefore look good to you?
So I think I'll agree with some of the sectors picked by your panelists earlier. So for example, sectors including consumer discretionary. So rather than FMCG, consumer discretionaries, auto, real estate, hotels, and of course the financials sector, including insurance, because as you were earlier highlighting, there seems to be some inexplicable sell-off there. So I think all these sectors look good to us. I also agree that broader manufacturing continues to be fine.
Okay. Thanks, Ashish. We have to cut to the Prime Minister.
ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा। मैं वित्त मंत्री निर्मला सीतारमण जी और उनकी पूरी टीम को इस जनता जनार्दन का बजट, पीपल्स का बजट, इसके लिए बहुत बहुत बधाई देता हूं। साथियों, आमतौर पर बजट का फोकस इस बात पर रहता है कि सरकार का खजाना कैसे भरेगा, लेकिन ये बजट उससे बिल्कुल उल्टा है। लेकिन ये बजट देश के नागरिकों की जेब कैसे भरेगी, देश के नागरिकों की बचत कैसे बढ़ेगी और देश के नागरिक विकास के भागीदार कैसे बनेंगे, ये बजट इसकी एक बहुत मजबूत नींव रखता है। साथियों, इस बजट में रिफॉर्म की दिशा में महत्वपूर्ण कदम उठाए गए हैं। न्यूक्लियर एनर्जी में प्राइवेट सेक्टर को बढ़ावा देने का निर्णय बहुत ही ऐतिहासिक है। ये आने वाले समय में सिविल न्यूक्लियर एनर्जी का बड़ा योगदान देश के विकास में सुनिश्चित करेगा। बजट में रोजगार के सभी क्षेत्रों को हर प्रकार से प्राथमिकता दी गई है। लेकिन मैं दो चीजों पर ध्यान आकर्षित करना चाहूंगा। उन रिफॉर्म्स की मैं चर्चा करना चाहूंगा जो आने वाले समय में बहुत बड़ा परिवर्तन लाने वाले हैं। एक, इंफ्रास्ट्रक्चर स्टेटस देने के कारण भारत में बड़े शिप्स के निर्माण को बढ़ावा मिलेगा। आत्मनिर्भर भारत अभियान को गति मिलेगी। और हम सब जानते हैं कि शिप बिल्डिंग ये सर्वाधिक रोजगार देने वाला क्षेत्र है। उसी प्रकार से देश में टूरिज्म के लिए बहुत संभावना है। महत्वपूर्ण 50 टूरिस्ट डेस्टिनेशन, वहां पर जो होटल्स बनाएंगे, उस होटल को पहली बार इंफ्रास्ट्रक्चर के दायरे में लाकर टूरिज्म पर बहुत बल दिया है। इससे हॉस्पिटैलिटी सेक्टर को, जो रोजगार का बहुत बड़ा क्षेत्र है, और टूरिज्म जो रोजगार का सबसे बड़ा क्षेत्र है, एक प्रकार से चारों तरफ रोजगार के अवसर पैदा करने वाला एक क्षेत्र को ऊर्जा देने वाला काम करेगा। आज देश विकास भी विरासत भी इस मंत्र को लेकर चल रहा है। इस बजट में भी इसके लिए भी बहुत महत्वपूर्ण और ठोस कदम उठाए गए हैं। 1 करोड़ पांडुलिपियों के लिए संरक्षण के लिए, मैन्युस्क्रिप्ट के लिए ज्ञान भारतम मिशन लॉन्च किया गया है। साथ ही भारतीय ज्ञान परंपरा से प्रेरित एक नेशनल डिजिटल रिपोजिटरी बनाई जाएगी। यानी टेक्नोलॉजी का भरपूर उपयोग किया जाएगा और हमारा जो परंपरागत ज्ञान है उसमें से अमृत निचोड़ने का भी काम होगा। साथियों, बजट में किसानों के लिए जो घोषणा हुई है वो कृषि क्षेत्र और समूची ग्रामीण अर्थव्यवस्था में नई क्रांति का आधार बनेगी। पीएम धन धान्य कृषि योजना के तहत 100 जिलों में सिंचाई और इंफ्रास्ट्रक्चर का डेवलपमेंट होगा। किसान क्रेडिट कार्ड की लिमिट 5 लाख तक होने से उन्हें ज्यादा मदद मिलेगी। साथियों, अब इस बजट में 12 लाख रुपए तक की आय को टैक्स से मुक्त कर दिया गया है। सभी आय वर्ग के लोगों के लिए टैक्स में भी कमी की गई है। इसका बहुत बड़ा फायदा हमारे मिडिल क्लास को, नौकरी पेशे करने वाले जिनकी आय बंधी हुई है, ऐसे लोगों को, मिडिल क्लास को इससे बहुत बड़ा लाभ होने वाला है। उसी प्रकार से जो नए नए प्रोफेशन में आए हैं, जिनको नए नए जॉब मिले हैं, इनकम टैक्स की ये मुक्ति उनके लिए एक बहुत बड़ा अवसर बन जाएगी। साथियों, इस बजट में मैन्युफैक्चरिंग पर 360 डिग्री फोकस है ताकि एंटरप्रेन्योर्स को, एमएसएमईज को, छोटे उद्यमियों को मजबूती मिले और नई जॉब पैदा हो। नेशनल मैन्युफैक्चरिंग मिशन से लेकर क्लीन टेक, लेदर, फुटवियर, टॉय इंडस्ट्री जैसे अनेक सेक्टर्स को विशेष समर्थन दिया गया है। लक्ष्य साफ है कि भारतीय प्रोडक्ट्स ग्लोबल मार्केट में अपनी चमक बिखेर सके। साथियों, राज्यों में इन्वेस्टमेंट का एक वाइब्रेंट कॉम्पिटिटिव माहौल बने, इस पर बजट में विशेष जोर दिया गया है। एमएसएमईज और स्टार्टअप के लिए क्रेडिट गारंटी को दोगुना करने की घोषणा भी हुई है। देश के एससी, एसटी और महिला जो नए उद्यमी बनना चाहते हैं, उनको 2 करोड़ रुपए तक के लोन की योजना भी लाई गई है, और वो भी बिना गारंटी। इस बजट में न्यू एज इकोनॉमी को ध्यान में रखते हुए गीग वर्कर्स के लिए बहुत बड़ी घोषणा की गई है। पहली बार गीग वर्कर्स का ई श्रम पोर्टल पर रजिस्ट्रेशन किया जाएगा। इसके बाद इन साथियों को स्वास्थ्य सेवा और दूसरी सोशल सिक्योरिटी स्कीम्स का लाभ मिलेगा। ये डिग्निटी ऑफ लेबर, इसके प्रति श्रम एव जयते के प्रति सरकार के कमिटमेंट को दर्शाता है। रेगुलेटरी रिफॉर्म से लेकर फाइनेंशियल रिफॉर्म्स, जन विश्वास 2.0 जैसे कदमों से मिनिमम गवर्नमेंट और ट्रस्ट बेस्ड गवर्नेंस के हमारे कमिटमेंट को और बल मिलेगा। साथियों, ये बजट न केवल देश की वर्तमान आवश्यकताओं को ध्यान में रखता है, बल्कि हमें भविष्य की तैयारी करने में भी मदद करता है। स्टार्टअप के लिए डीप टेक फंड, जियोस्पेशल मिशन और न्यूक्लियर एनर्जी मिशन ऐसे ही महत्वपूर्ण कदम है। मैं सभी देशवासियों को एक बार फिर इस ऐतिहासिक पीपल्स बजट की बधाई देता हूं, और फिर एक बार वित्त मंत्री जी को भी बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
बाजार नहीं है, आपने कहा बोर्ड का गठन करेंगे। अच्छा, जो बात आप 10 बार पहले रिपीट कर चुके हो केनाल के बारे में, उसको 11वां बार लाते हो। मतलब ये तरह तरह से घुमा के आप आवाज करते रहते हो, नई बात कभी होती नहीं है। शराब बदल जाती है, बोतल वही रह जाता है। आपने 12 लाख लोगों के लिए टैक्सेस किया और आप हमको 10 लाख से 2 लाख बढ़ा दिया।
Investment thrust because of this consumption. Deepak Shenoy is still with us, and in a minute we'll be joined by Mr. Dinesh Kanavar as well, the tax expert from Dhruva Advisors. But first, let me get to Deepak Shenoy. Deepak, after listening to what the Finance Prime Minister has also said, what would be your look at financial stocks? I mean, NBFC stocks are doing well. It looks like there's more money and therefore more people will take personal loans. Any NBFC stocks you would like?
I think we've seen the results here, Lata, and I think that as much as we've seen, there are obviously, I think there's a clear differentiation between some NBFCs that have had too much of a reliance perhaps on unsecured personal loans and others that are more broad-based. I think unsecured personal will come back because eventually a lot of even business loans at the small sector happen as unsecured personal loans because they may not have any pakka collateral to give. Even their houses may not be collateralizable and so on. So I think when an RBI makes a clearer stance about how they may not be necessarily, not they were telling people not to give unsecured personal loans and the growth to slow down the growth. Now that the growth has slowed down, I think they should be more open about it. But once that happens, I think that will increase, across the landscape, whether it is private capex at the small level or it is actual for consumption, loans should probably go up a little. NBFCs, I think, other than the microfinance sector, where I think we have a little bit more of damage to go, we should perhaps see a much better scope for it in the next year. I would, however, focus on some of the larger banks. They seem to have more diversified portfolios, can participate in corporate capex as well. So I think they may give you a better edge compared to an NBFC right now.
Okay. And finally, the other piece of the financial space where I would like your views, insurance. Immediately after the finance minister finished her speech, we saw this tanking of insurance stocks on the, I would assume the reasoning that because there is so much of a benefit now to be in the new tax regime, there are no tax incentive-led insurance policy buying. Otherwise, people were buying insurance policy to take advantage of the tax benefits. Now that is not there. So insurance companies fell, but the stocks have risen again. Where are you on the insurance, both life and health?
So I think, firstly, I think health is a necessity now. It's more, I don't want to take it for the tax benefit. I take it because, if I go to hospital, somebody else is going to pay. I don't have to pay out of my pocket. That is the reason why insurance should have been bought in the first place. But for 40 or odd years, we've kind of looked at it primarily as a tax saving thing. Now, when you remove the tax saving, the real advantages come to the fore. For instance, we are underserved from a term insurance premium. Most people don't have term insurance when they should. And perhaps instead of looking at it primarily as a tax saving thing, they should look at it as a protection product. ULIPs have actually been made more attractive. Even if you invest more than 2.5 lakh rupees in a ULIP, the problem till yesterday or till this current financial year is the maturity amount, whenever you take them out, were taxed as income. So if you're in the highest tax bracket, even up to 39% of it was taxed. But now they've said, listen, that is just capital gains. So only the profits will be taxed, and that too at 12.5% because it's considered equity taxation. So that I think that ULIP part of the mechanism can be a boost because some of these insurance companies have been performing very well even in their insurance investment products. They have been looked at from a tax saving perspective. Now they can be looked at from a primarily performance perspective as well. So I think that may change the game. I think wider, more spending, more consumption will actually lead to more insurance growth. We just don't have the penetration, and we shouldn't have done it with tax advantages. So now I think it's better off for them longer term. I hold insurance companies. So I'm very biased, but I think it's
fair point.
Long-term positive.
Okay, just top 3 stocks before I let you go.
Good question. I think we have to look at shipbuilders again. The profits have been, the policies have been quite interesting. There's a few public sector, whether it's Mazgaon or GRSE or others, but there's that. I would look at the nuclear sector. We have a few stocks there, KSB, for instance, and so on. In the vehicles, where I feel there will be a revival because of the extra money in the hands of, in the pockets of people, looking at M&M, perhaps even a Maruti, and so on. So those, plus we have a bunch of mid-cap manufacturing oriented companies. Won't take too many names, but we are buying most of these. And I would, right today we're not trading, but we'll look at it freshly on Monday. I think very interesting sectors. We'll, a lot more will come. I haven't gone through all the memorandums, I'm sorry, but it looks like it's a shopping time now.
Oh, okay. No, actually that's the biggest advice you're giving in terms of shopping time. And I would believe that, the rupee has fallen enough and the stocks have fallen enough. So maybe at some point in time in the not too distant future for an investment, sentiment will also turn. Deepak Shenoy, pleasure having you with us. Thank you very much for joining us. We have now 2 economists joining us, and I think Mr. Dinesh Kanabar was waiting. I'll check if I can get him as well. But first the economists, we have Kanika Pastricha of Union Bank, and in a minute Devendra Pant of India Ratings will also be with us. Kanika, your thoughts on first the tax assumptions. I mean, the budget has assumed a 10.1% nominal GDP growth, and it is assuming a 15% growth in income tax, I think 14.4 to be precise. Is that an assumption that you find credible, considering that they have given away 1 trillion in terms of tax, tax reductions?
So, Lata, first and foremost, before even I make a comment on that tax assumption, if you remember yesterday when we ended the discussion on economic survey, the point was need for demand stimulus. We asked for it, we got that. At least that itself is a sentiment booster. Now, coming to the tax assumption, of course, if we adjust for 1 lakh crore loss on income tax, then the growth comes out to be 22% this year, almost for income tax in receipts in FY26 versus 20.3% growth in FY25. Of course, that assumption itself was on a slightly more optimistic base, and then adjusting for it, it's at 14%. Somewhere it's showing what economists usually call as the Laffer curve, that when you cut tax rates, more people start paying taxes, the compliance also improves. So maybe that's an underlying assumption. The government has been able to manage strong growth in income tax purely on the basis of compliance as well, even though nominal GDP growth has been sub 10% for the last 2 years. That looks like an assumption. We wouldn't want to call it not so credible at the current juncture. Let's see how the year goes. If we see a repeat of FY25, they will be able to manage even 14-15% with the tax cuts.
No, actually, I agree with you that for the last 2-3 years, for the first time in my coverage of budgets, the tax collected has been higher than what the budget has assumed. I mean, even for April, December income tax, the rise is 22%. The budget estimates had factored in only about a 15-16% rise. So I agree with you that income tax in particular, not corporate tax, but income tax has surprised on the upside. And if anything, the finance minister could be accused of being conservative in her assumptions. But now we are in a different situation, and Devendra Pant of India Ratings has also joined us. Dr. Pant, I wanted to ask you exactly that. The GDP assumption is very conservative at 10.1%, no 6.3 to 6.8 real and 10.1 nominal. I mean, I would assume that they cannot be accused of an aggressive assumption. But income tax, after a giveaway of 1 trillion rupees and likelihood of STT and capital gains not being that good, if you look at the state of the stock markets now, do you think that the income tax assumption, 14.4% growth, is aggressive?
Lata, I don't think so, because if I look at how the income tax collections have been in past few years, so if I look at FY23, 24 and 25 growth rate, that number gives a growth rate of average growth rate of 21.8%. So in 23 it grew by 19.7, 24 by 25.4, and 25 is 20.3. Now on top of that they have assumed a 40.1. So look, what these numbers are telling me, this is not just the natural growth which is coming because of growth buoyancy. There's a lot of improvement in entire tax administration and the way the tax are collected, and the leakages in the systems are getting plugged in. Now, because of that, we are looking at this number which are way too high.
14.4.
Now, if I look at that, if I add that 1 lakh crore into it, the growth number, including like 14 lakh 38,000 crore, on that I add another lakh crore, gives me a growth of 22.4%, which one can say maybe marginally higher than how we have done on an average last 3 years. I'm not counting FY22, because if one looks at 22, then I have to take the FY21 when there was a degrowth. So not much. The only issue which where could be a problem is the corporate tax. Unless
I agree with you.
The corporate performance is almost like 60% better than what it is right now. 7.6, there's a growth of 10.4%. So that looks
That's right. No, I take your point. Dr. Pant. I'm hurrying you because, we have also a market to trade and speak about. So I want to rush as many questions as possible with my economists as well. And I take your point. The only thing I'll say in favor of the government is that it is not wrong to assume that corporate income tax will grow along with nominal GDP. Nominal GDP 10.1, corporate tax 10.7. On the face of it, doesn't look bad, but yes, this year's experience does make it look a little confident. Now, let me get the first three economics questions from my two economists quickly going. First, Kanika, rate cut. After all, there's fiscal discipline delivered. So, rate cut?
Yes, Lata. A 25 basis points rate cut expected next week, and a repeat of another 25 basis points in April.
Okay, Dr. Pant?
I'm on the other camp. More than rate cut, the easy liquidity. Because that easy liquidity will take care of it. Because what is happened till now, we don't know how the US and tariff is going to play out. The weakening of rupee has added pressure on the inflation. So I think this is the time when the caution is required. So, and even if you look at the relationship between real rate and real investments is very weak. So if yes, there is a demand boost, the rate cut should follow, but not rate cut should not precede the demand. Demand has to come and then the rate cut.
Well, I'll tell you the argument of the other camp, and that is related to my next question. That's why I'm asking you that. The other camp says, see, Indonesia cut in the face of, the dollar strengthening, and that currency didn't go rudderless. Secondly, they also point out that the money that's coming to India is not debt money. It's not coming because of interest rate differential. India is always a growth magnet. People come here because it's a growth economy. And a rate cut normally prods on growth. So that is my question to you. Is this budget good enough to bring us back to the growth path? After all, we have skid down from the 7% plus 3-year track record to 6.4 in the current year. Is this consumption boost enough to give us back a higher growth?
Look, Lata, if you look at it, which are the growth engines? So growth engines, external growth engine is not there. What we have to look at is the internal growth engine. Internal growth engine right now is consumption and demand. So consumption, yes, this has given a big boost. Now, with the consumption boost, right, how the inflation is going to behave. If I go to the theory and say like your inflation respond to the demand, and if already with the low consumption demand, the inflation was high with the 1 lakh crore kind of consumption boost, and everything will not be consumed. But there will be consumption. Ultimately, unless the inflation comes down, the significant or sustained consumption boost is unlikely to be there. So I am in the camp where wait and watch. Yes, the inflation is coming down. Yes, the government has given the boost. There will be demand. But if you look at the economic survey, 6.4 to, even if I go at the upper end, 6.4 to 6.8. That is not significantly different demand. And what we had seen, both consumption response and the investment response to the real interest rate is not very strong. When we talk about the investment, it's the demand which is there, which is more predominant and which respond to investment respond to demand more compared to the interest rate.
Okay. Okay, fair point. Kanika, the same question to you. Actually, that's the central question. We have to get our growth mojo back. Does this budget push the envelope in that direction?
So, Lata, let's twist it around a bit and let's look at the discussion we were having yesterday. When the economic survey came out, we said 6.3 to 6.8 looks relatively credible. At least they're acknowledging that maybe 7% is difficult. But even this may face a downside risk.
My pointed question. Kanika, my pointed question to you is, will we grow faster in FY26 compared to FY25? And can the roots be traced to the budget? My pointed question is that does the budget push the envelope on growth?
So in my view, Lata, yes, it does. And on 3 counts. First count, sentiment booster. For the first time, we see the budget talking about the word trust and deregulation coming to fruition via high-level committee. That's actually declogging a big issue of ease of doing business in the economy. Of course, execution is important, needs to be watched, but at least a positive sentiment. Second, demand side, when you say below 12 lakhs, the income tax rate has been reduced to 0. What it means is that people with a maximum marginal propensity to consume are being given maximum income surplus in their hands. That's a big positive. Third point is that somewhere it starts to oil the system when you're looking at labor intensive sectors, MSME, labor intensive sectors, again a big focus area. So in my view, yes, execution needs to be watched, but at least the initial starting point is key and is a big positive. So if you're looking at only 6%, below 6.4%, closer to 6% growth in this year, there is likely to be some kicker in FY26 versus FY25.
Okay, well, that's very important if you're thinking that growth does get a kicker, but we'll have to wait and see. I mean, there are enough people betting because of global headwinds that the pickup may not happen. There has been a boost given even to tier 2 cities to allow more GCCs to come in. If things work out as expected, then perhaps the global headwinds will not hurt as much, because in any case, we are not a goods exporter. Our services exports have actually surpassed goods exports in the last data, in the last available monthly data, that is December. So we can perhaps keep our bets on over there. The final question for me to both my economists is on rating upgrade. Dr. Pant, first of all, your comment, there is a nice glide path given
sorry,
FRBM pages.
Lata, because of compliance and it's a different group altogether, I'm sorry, I'll not be able to say anything or comment anything on that. Coming from a rating agency.
All right, I can understand. Yeah, I forgot. Yeah. I forgot you're from a rating agency. I'm sorry. I just looked at the 2 economists I have with me. Let me ask Kanika on that. There is a glide path given on debt to GDP. Do you think that this puts us in a good position for a rating upgrade at all?
So, Lata, frankly speaking, I would say just 2 to 3 points more. First point, at least the finance minister has acknowledged that they, from a long-term roadmap perspective, they have tried to marry the debt dynamics with fiscal numbers. Focus on fiscal consolidation remains, which raises the possibility of a rating upgrade at the current juncture. But there was just other metrics to watch out for in that rating upgrade as well, which was a rise in the per capita income. In fact, even ease of doing business is also taken into account. So if we look at other indicators, maybe they also will be crucial in deciding on that rating upgrade, but purely on fiscal dynamics, given the firm focus on fiscal consolidation, positive move in terms of rating upgrade in my view. Thanks.
Okay, well, fair point. I would think that the situation is propitious, but we have to deliver on growth. I mean, ultimately, India is a growth story. We got away with a higher fiscal deficit compared to other countries rated BBB minus because we had growth. We always said that our rate of growth, nominal rate of growth, is higher than our rate of interest, and therefore we shouldn't worry about the higher fiscal deficit. We have to get that growth mojo back. Dr. Pant, what is your growth forecast for FY26? And has it changed because of the budget?
Yeah, no, because some amount of this was in the forecasters' assumptions. So we are at 6.6%. Yes, the income tax exemption limit going to 12 lakh. I don't think anybody has expected that. Most of the people were expecting a couple of lakhs of maybe going to up to 10 lakh odd or so, but it has come at 12 lakh. We have to see, because ultimately if the more is coming from the upper end, for say for example, more benefit is coming to all three people who are in this program, unlikely that it will have major impact on the consumption. At the bottom end, the people at the 12 lakh or so, they have a benefit of, I think, 30,000 rupees. We have to look at how that will translate into what level of consumption growth, but unlikely that there will be major difference in the growth number post budget.
Okay. So what is your number exactly?
6.6.
Okay. And Kanika, what are you working with for FY26, correct?
Yeah.
Dr.
Yes.
Pant?
Yeah.
Okay. And what is the FY26? Just for curiosity, what is the FY25 number?
Ours was 6.4 on 18th December 24. It came in at 6.4.
Fair enough. Okay. Yeah, we'll have to wait and see now. We will know on February 28 whether we can bank on that 6.4 number. There are some who are a little worried after looking at the corporate results, whether the third quarter will deliver what was expected of it. But let's wait and see. Let's ask you also, Kanika, what are your two numbers, FY25 and FY26?
Yeah. So for FY25, we were also at 6.4, but that assumes 7%, around 6.8, 6.9% for H2. December tracking 6.2 makes us believe that the 6.4 will be closer to 6.2, 6.1. And FY26, we are maintaining at 6.5 at the current juncture. Yes, we'll watch out for the impact of budget announcements, which looks on a slightly positive bias.
Okay. All right. That's at least a confident number. 6.6 sounds better than the 6.4 number. We will wait and see whether we are unable to or able to make that number. Dr. Pant, do you think that we have heard anything in the budget to resolve the food supplies problem? You know, our inflation is not really a core inflation problem at all. That's been running under 4% for quite some time now. It is a food inflation issue, and there were specific references to vegetable growing as well as to pulses, to the oilseeds mission. Given the gamut of announcements, are you getting a sense at all, and of course given the Rabi harvest, that we have got the inflation beast under control, that starting from Jan we are going to see a lower inflation reading?
So Lata, there are two things. A, are you talking about the budget? In budget, I heard about some block level.
Both.
And other
Sorry, both. Both. There were. I wanted to ask you the budget impact as well on incentives given to agriculture and horticulture, because there was a mention about FPOs, about oilseeds mission, about pulses. Lata, so there were some statements here.
Yeah, I think if these things, as we discussed earlier, the execution is the key, and if we start building the warehouses and all those, it will take time. So if I look at next 3 to 4 months, how the food inflation will pan out, it will be more on back of increased supply or the better Rabi harvest or the winter period where the vegetable prices goes down. We have this mission for isopom from, I don't know, from 2 decades or 3 decades. It hasn't helped much. It hasn't helped much, because at the end of the day you have the limited area, and that cropped area has to be allocated between different crops, and the farmers do their own acreage allocation based on their own judgment and what kind of market prices they are getting. So until unless there are productivity gains in the agriculture, where with the less area you can grow more. Till that time, this kind of, whether the top spot OTP, whatever one may say for tomato, onion and potato, and the pulses, edible oil, this will keep on having pressure on food inflation.
That's right. Yeah, I know it's a much larger problem. It's also a question of our minimum support price almost becoming now a structural problem. There is no way the MSP is falling, it's always rising. Thank you very much, Dr. Pant and Kanika, for giving us the economic backdrop. It is the last 20 minutes of trading, and so we have to come back fair and square to the stock market. The economic backdrop has been analyzed by our economists as slightly positive. Both of them have a slightly higher economic growth forecast for next year compared to this year. So to that extent, we have a positive handover from the economists. Let me invite our stock market expert, Nilesh Shah of Envision Capital has joined us. And in the studio in a minute, I will also have Prakash Diwan, the independent expert, with me. Nilesh, thank you very much. I know it's been a hectic day for you, and I'm deeply grateful for the way in which you have handheld all of us across Network 18. But first up, the budget looks like is a big bet on consumption. Until last year, the first three or 4 years, it was a bet on capex. Now it's a bet on consumption. Would you buy the bet?
Well, thanks, Lata, for having me on the show. But yeah, clearly, I think obviously over a period of say 5 to 7 year period, at times you do have differing allocations. It's just that the tax cut for the middle class, which is raising the income tax limit, clearly I think is a huge booster dose for consumption. But having said that, it doesn't mean that it doesn't do enough for the capital goods kind of space, because the government is still basically budgeted for an increase in the capex. Within that, of course, for some sectors, some subsectors, there would be probably lesser allocations, for some a few more. But on the whole, the cap goods opportunity, the cap goods story, or the growth coming in because of capex, I don't think that's materially altered. Yes, it's a bit lower versus market expectations, but I clearly think that probably in a day or two, the market will essentially digest that. And the order books have been, increasing for a lot of the companies in the cap goods space. But yes, I would totally agree that this is essentially a budget which is expected to deliver a booster dose for consumption. And because the raise in the tax exemption limit is quite material, quite substantial, and is going to kind of positively benefit a whole kind of a very large section of the population. So clearly believe that yes, this budget is clearly scores totally in favor of consumption.
Okay, well, let me just take that one step ahead, because this is something which most of the experts whom I quizzed are not giving such an all-out yes to my question. That is on retail loans. Every target customer for a bank now has about 70,000 to 1 lakh rupees more in his pocket if he is earning between 12 lakh and 25 lakh. That's enough for a loan to start with for a consumer durable. So how do you look at the finance sector itself? NBFCs, they're all giving personal loans. Anything in that space that becomes extra attractive?
Clearly, yes. This again, budget, basically the tax cuts or the raise in the tax exemption limits totally increases the eligibility for loans for retail individuals. So to that extent, banks or NBFCs or fintechs, which are into both giving loans or in distributing loans, that as a pack clearly I think benefit. It clearly means more business for them. But again, out there, Lata, a couple of things are we will have to watch out for. One is essentially what the Reserve Bank of India does next week in terms of rate cuts, whether it goes in for a rate cut, and second is by how much. So that's one. Two is clearly for retail loans, individual loans, personal loans, unsecured loans, there have been some kind of a bit of a pullback from the regulator in terms of the regulatory restrictions, in terms of the limits, the capital provisioning, or I would probably say maybe some bit of advisory as well, saying is, guys, be careful on giving these loans. So we'll have to see if there's any message which is coming in from the Reserve Bank of India next week on this front as well. I think if the message is loud, clear, positive, constructive for retail loans, personal loans, then I probably think that you will clearly see again once more buoyancy or vibrancy in amongst the lenders, the banks, the NBFCs and the fintechs.
No, it's a fair caution what you're saying from an investor point of view. All I can say as a Reserve Bank reporter is that, the Reserve Bank's caution was not misplaced. They saw unsecured loans growing at 30% when nominal income of the country is growing at 10%. So it was well-deserved caution. I don't think they were against unsecured loans. They were against the scorching pace. Prakash Diwan is with us. Prakash, rather than me putting stocks in your mouth, you tell me, at this point in time, if I gave you 100 rupees doesn't get you any far. 100,000 rupees. Where will you go? Where will you go?
No, I'm okay with 100 rupees as well. So I think as Nilesh was also explaining, the budget is thrown up a lot of opportunities. Some of them could probably be a bit distant in terms of timelines. There's nothing that you need to scramble and buy today. But the consumption juggernaut would take its own time to kind of feed back into the economy and make things look positive. From that perspective, so I was telling somebody, this is a budget which actually talks about kharche ka desh ka. That's what they want each of us to do. And from that perspective, if you look at hotels, airlines, QSR, retail, apparel, footwear, everything could probably do well, but all of it will take some time. The other good thing is that they've also tried balancing investments into channelizing investment into the right way. The TDS limits from 50,000 to I know personally what happens at home. The TDS
big pain, yes.
Inhibitor to place more FDs in banks and all that. Money could come to the banks at the right time.
Especially for senior citizens.
Yes, it is.
And they are the FD oriented people.
Yeah, there's a huge percentage of them who actually avail of FDs as a allocation.
Look at how AMCs
look at how AMCs could benefit. Mutual funds will probably take away a big share from the insurance ULIP substitution. You'll probably have the new product, the 10 lakh product that's being kind of conceived. So overall, all of this is going to be positive. But I think the smart money is going to wait till 7th of Feb.
That's another
for what
because that's another milestone.
Yeah,
I mean, I don't think you need to be in a hurry to kind of chase consumption. Yes, FMCG stocks from a valuation perspective have been soft for quite some time. They've come off 40-50% from the peak. So you will see a recalibration out there. But it all depends on how the RBI policy supports this. So then it becomes proper tailwinds for the economy to chug along. But very positive. I don't know why the market didn't like it. Probably it's a semi-holiday kind of a mood. So a lot of the institutions won't be active. And the second thing is there were too many expectations built. Morning we were talking about capex, we were talking about defense, we were talking about those things. But that might continue, albeit at a pace which is moderate.
That's exactly what Nilesh was saying, right?
It's just relative expectations vis-a-vis what.
So what are you buying? You didn't give me my list.
So I would buy Indigo. I would buy Thomas Cook, and I'll tell you, I was looking at Thomas Cook attempted to get into medical tourism a few years back, and then the pandemic kind of upset the thing. Great balance sheet. It's off 40% from its peak. Very good company. Good pedigree. These are nuggets that you would start looking at, but it'll probably be a bit more bottom up also. But yeah, I mean, so Indigo, Thomas Cook, Bata on the footwear side, and I do like smaller names. As I said.
I think ITC
hotels
is screaming for attention, while the main ITC is probably taking away all the attention. But I think hotels, Indian hotels, ITC. Smaller ones also, the way the Kumbh Mela has demonstrated the cascading effect of religious tourism, if I were to use that term, there's going to be a lot of replication of that you'll probably see a lot of festivals happen with much more fanfare now. So that's the thing. And look at mining, there's been so much of an impetus, we need all of that. There's a company that's into recycling, for example, does a lot of lead recycling called Gravita, again very good business. Is available. So I have a lot of stocks which are coming to my mind in terms of appropriateness in that sense, but of course you have to do your due diligence in terms of valuations and all of that. But this year we are going to be busy buying a lot of new things, sectors that probably were not very abuzz.
That is even
without additional spends, I am quite positive on it given its fundamentals. So that's the kind of thing you'll have a more bottom up thing eventually. Right now you might be doing a top down thing, but wait for 7th and then we'll have a slightly more decisive list of sorts. But I just want to recall 1st of Jan or 31st of December, we were doing this show, we have skeletal team strength, and I was very hesitant, very reluctant to name any stocks because I said this is not the time to buy. And I continue with that the valuations are kind of getting in that comfortable zone. So we'll definitely make up for that.
You know, I snatched Nilesh from my CNBC colleagues. Now my CNBC colleagues want to snatch you from me. So thank you very much.
My pleasure. My pleasure. Yes. Thank you.
And, Nilesh, I've got you with great difficulty, so I'm not going to let go of you very easily. Consumption, would you still prefer discretionaries? In the morning you were extremely gung-ho on the e-commerce guys. Does that still remain your best bets? Nilesh, if you can hear me?
Yes, I can hear you.
Yeah. So e-commerce, will that be the first bet? And within the consumption, are you at discretionary or are you with the staples?
No, clearly, Lata, I think, consumption is the bedrock of the Indian economy. We still remain a substantial consumption-driven economy. We probably have the largest pool of consumers globally. So probably, it's the best probably opportunity that any investor has. And within that, I clearly believe that all the platform companies with the use of technology have created digital platforms, which is helping them to reach out to hundreds of millions of consumers right across the country and offer them different products and services. So clearly, I clearly believe that within consumption, the top pick would essentially be the businesses which have created very successful online digital platforms. So that's really the top choice. If I were to kind of move on to basically the consumer product companies, it would clearly be the discretionary companies. Because I think the days of, businesses around soaps and shampoos have become relatively mature. Those markets have already probably reached about 70% or maybe 75% penetration levels. However, we are an aspiring India, we are a growing India. I think the consumption patterns are changing, consumption basket is changing, and this clear shift towards more of the discretionary stuff, which is around travel, which is around beauty, which is around personal care, which is around probably bakery stuff, all of that kind of stuff. And so clearly within the consumer product space, we are betting more on the discretionary stuff versus the non-discretionary stuff.
Okay. Fair point. It is a K-shaped recovery after all. I take your point on that. Well, let me come to the capex segment as well. There was no mention much about defense, and those stocks anyway had run up. But in that entire non-consumption side, manufacturing capex side, is there anything that still draws your attention?
So we continue to be very constructive, Lata, on the entire capex side, and there's really lots to pretty much pick and choose from and focus on. But clearly the three or the four favorites have been clearly around railways, defense, water and energy. These are really the four sectors where a lot is happening, a lot of investments are happening. And probably the market today is reacting as if there were no allocation to railways or defense or some of these sectors. But clearly, there is a growth in allocation. So clearly, I think this space is fantastic. And within that, in fact, some of the bellwether cap good company stock prices have corrected by 30 to 40% from their peaks. So clearly, a lot of the excesses are out. It's more a question of these companies kind of delivering 1 or 2 quarters of more steadier performance, which probably will get the price back and get back the investors' interest. So I'm not too worried about the space. We continue to like it and see this current correction as an opportunity to kind of be positive and buy into them.
Okay. What about insurance? The market sulked a lot because everyone will go to the new tax regime, and so they won't get into insurance because of the tax set-off. That kind of worried the insurance stocks. But in the finance space, broadly, you said that you will like the personal loan lenders only after you hear the Reserve Bank on Feb 7th. But what about the insurance piece?
No, I clearly believe, I mean, in the entire financial space, there are different pockets. I mean, we still continue to like the retail lenders, the payment companies look attractive, and the insurance space also looks very attractive. It's just that versus the insurance providers, it's essentially the insurance distributors or the online platform for insurance has been, more attractive for us over the last maybe, 2 to 3 years, and we've been liking that more. And that has led to, underperformance of a lot of the standalone insurance companies. But within that, I think the health insurance companies, standalone health insurance companies, I think that's really a segment one has to start to get constructive about, in addition to the online distribution platform. And why I say this is because, first of all, health insurance is growing at a significantly higher pace, number one. Number two, FDI in insurance has been raised to 100%. That means that a lot of the standalone health insurance companies, which essentially have no domestic ownership, but probably are probably well targets for FDI and 100% FDI. So they get access to capital as well. There probably could be M&A opportunities there. So that's the second one. And the third is that we've talked about this whole tax exemption limit being raised for the middle class. And we've been only talking about, the discretionary spending. But I think as part of the discretionary spending or as part of non-discretionary spending, I think healthcare clearly is becoming an important part of that spending wallet. And so, as the middle class has more money left, some bit of it is going to go into healthcare, some of it will go into health insurance as well. So I think probably it's time to kind of now start looking at the insurance space in a constructive and positive manner.
Okay, got that. Before we started the budget, we were also speaking about the EMS companies in a big way. FM has promised a package for the electronic components later on. It's expected in a week. EMS did fall a lot. I mean, Keynes fell, I think, 33%. It's from the all-time highs, it's down 33% this year. Likewise, we've seen some kind of correction even in stocks like Dixon. In the entire EMS space, does that still thrill you?
Oh, absolutely. I mean, the opportunity is humongous. I mean, I think EMS, in terms of the potential and the ability and truly the whole government's priority of Atmanirbharta, I think resonates very well when one looks at the EMS space. So clearly, I think it's a fantastic opportunity. Also, if we look at it in terms of our share, in terms of exports of electronic goods, it's still kind of a fraction or a minuscule, even when you look at, countries like Taiwan or Vietnam. So we've got a long way to go. And I clearly believe that the government will continue to support the sector through various initiatives, through PLIs or, through a lower tax rates or maybe any other kind of benefits. It's just a question of the valuations getting more realistic. It's good that these were movers of the last 1 or 2 years and they've got a bit shaken with the start of the year. I still probably think there's room for more correction out there, but that's probably more to do with higher valuations versus prospects. Okay. I think once valuations kind of become a bit more realistic, my view is that it's probably time to kind of then get back into this high potential, high growth space.
Okay. That leads me very nicely to the last and most important question. Earlier in the morning, you were not very sure that if I gave you 100 rupees, you would even put it in shares. You said you would wait, keep it in cash. Because I take your point. After all, we are a growth economy, and unless you see growth delta going up, you wouldn't want to go and invest. Have things changed for the better, or are they on the cusp of making you want to invest? Either because of the budget or because, the rupee has fallen enough. Foreigners didn't sell much on the last day. So for whatever reasons, are we on the cusp of a recovery?
On a lighter note, Lata, 100 rupees resonates with the world of sachet and sachet investment. So obviously, I would welcome.
Not even shampoos. Okay, I take your point. Okay, 100,000 rupees.
But micro lending is not in fashion, but surely micro investment is pretty much the need of the day. But anyway, okay. Moving on. But no, I think clearly, I think the opportunities still, I think, are huge. I think what this budget does, I think it reaffirms India's growth trajectory. A 10% nominal GDP growth rate still makes us the world's fastest growing large economy. Two is obviously this tax exemption continues to, showcase the government's kind of commitment to kind of increasing the purchasing power. And third, I clearly believe that there are adequate investments which are being made in infrastructure, which will make India's manufacturing and India as a place to do business more competitive. So on the whole, yes, I think I kind of walk away with this budget with a lot of positivity. And I think with some bit of correction, I think in the general market, I think that kind of makes one even more comfortable with investing into Indian equities from a medium to long term perspective. So on the whole, yes, I remain constructive.
Okay, thank you very much. I take all those caveats in place. In the medium term, very shortly will become attractive. Yeah, I take that caution. We have to keep that in mind, especially when we are in an extremely uncertain geopolitical atmosphere. We have just been saved some tweets today, but who knows, in a few hours the tweets may come back. Thank you very much, Nilesha, for joining us and helping us understand how to pass the budget. The market is ending on a very, very flat note. The Sensex may end up 5 points, the Nifty may end down 10 points, and the Bank Nifty may end down by about 50 points, which is really saying nothing. So it's a very, very flat market. The market has taken the budget in its and of course we'll look forward to global cues come Monday. We'll have to wait and see. With that, we wind up this stock market discussion. Let us leave you with some expert opinion that we got through the morning and through the afternoon. After that, it will be time for some commodity analysis.
एक नया ऊर्जावान युवा भारत के सपने को साकार करने का हर एक क्षेत्र का, चाहे वो कृषि हो, चाहे वो मैन्युफैक्चरिंग हो, चाहे वो सर्विसेज हो, चाहे अधोसंरचना हो, चाहे इनोवेशन हो, चाहे कृषि का क्षेत्र हो, यूरिया से लेके एक चाहे बीज की बात हो, चाहे नदियों को जोड़ने की बात हो, हर एक विषय पर पूर्ण रूप से अध्ययन करके एक नया मानचित्र तय किया गया है। और सबसे बड़ी बात कि हमारे जितने भी टैक्स पेयर्स हैं उनको इतनी बड़ी राहत दी गई है, 12 लाख रुपए तक कोई टैक्स नहीं, और हर एक ब्रैकेट में आप देखोगे तो करीब करीब 40 से 25% की राहत हाई इनकम टैक्स पेयर के लिए तक भी दिया गया है। तो ये एक कॉम्पोजिट बजट है, एक बजट है जो भारत को आगे ले जाएगा, और एक ऐसा बजट है जो भारत को केवल आत्मनिर्भर नहीं लेकिन भारत को एक विश्व गुरु के रूप में स्थापित।
No, I think frankly the applause you heard from the BJP benches was for the middle class tax cut. We look at the details and that may be a good thing. So if you have a salary, you may be paying less tax. But the important question is, what happens if you don't have a salary? Where is the income going to come from for you to benefit from income tax relief? You actually need jobs. Unemployment was not mentioned by the finance minister in her speech. And the generation of jobs becomes vital because in our country, not only do we have record unemployment, youth unemployment is particularly grim at the moment. We have the world record in youth unemployment and in college educated unemployed. So what is the method to generate jobs for these people? Then they can get salaries and they can cheer the tax cut. But those who don't have salaries are not going to cheer the tax cut. The other concern that many of us clearly have about the budget is that the overall problems that are facing the economy were not addressed. Where is investment coming from? We've seen a decline in foreign direct investment, and we've seen no investment, no willingness on the part of the domestic investors to come in. 23,000 Indian millionaires have left this country and gone to foreign countries. Where is the investment coming from that will in turn generate more manufacturing that can lead to more exports? You can talk about manufacturing mission and export mission, but how do we get there? I think those details we need to study in more care, but I have not heard in the finance minister's speech enough to cheer in those areas.
So lots of announcement for Bihar.
Well, with the elections coming up in Bihar, it's hardly surprising that they seem to be giving sops there. Ironic that the party that wants one nation, one election is actually using each election, each state, each year to give them more freebies. They may as well have multiple elections so they can get more applause from their allies.
Ready? Okay, take anchor.
Well, that of course is the reaction coming in from various ministers and opposition on this budget, but overall the budget is seen as a positive When I talk about commodities itself, well, there are a lot of conversation that we saw come in for agriculture, whether it was from the allocation part of it and whether it was about self-sufficiency in pulses that the finance minister spoke about. There also was a conversation on a Makhana board that is created, seeds availability, seed viability, and of course climate change is something that she touched upon as well. But pulses is going to be quite important because, you know, in 2024, the import that India has done in sense of pulses is double of previous year and was at a record high. Is the reason the finance minister really had to come out and talk about the self-sufficiency when it comes to pulses. I will talk about all of those commodities, but in the meanwhile, Nandita, my co-anchor, is ready now to talk about the wrap on the market on how it has reacted to the budget. Nandita.
A lot of push for agriculture and also consumption, right? Of course, we've seen the reaction in the market, a shift away from capex to consumption, you know, the big cut in taxes as well, which led to a very sharp rally in consumption stocks. The entire consumption basket as a whole was on fire today. You look at stocks like Trent gained somewhere around 8% or so. But on the index level, first of all, we saw big swings today, although the close has been very flat if you compare it with yesterday. Just about, 23,500, we have shut shop around that level. So big swings but flat close. That was the story from the market today. Heightened volatility, but index India VIX itself has cooled off by 12%. That's a big cool off coming in on the India VIX index. The breadth, however, towards the end of the session, we saw breadth or NSE advanced decline ratio at 1:1, but it was tilted in favor of gainers. Even the mid cap index, flat, but ended with the negative bias. Sensex, by the way, just about managed to end in the positive zone. Looking at some of the movers and shakers, railway stocks came under severe pressure. Capex unchanged, and which is why stocks tumbled anywhere between 8 to 10%. So if you look at the likes of IRFC, RVNL, all these stocks came under extreme pressure, and so goes for the defense pack as well, right? Although the defense allocation was higher than the revised estimate for FY25, but stocks nevertheless came under pressure. But the story today was consumption, as I mentioned. So look at Trent, Maruti, Tata Consumer, Eicher, Bajaj Auto, ITC, all of these stocks rallied quite a bit. Of course, no changes in cigarette taxation as well, which is why stocks like Godfrey Phillips also rallied quite a bit. On the index level, if you look at the losers, all the capex related stocks which were expecting, a big bump up in capex, they tumbled. The likes of Bharat Electronics, Power Grid, L&T, even some names like Cipla, Grasim, these were under pressure. But some stocks saw wild swings, in particular life insurance stocks, so to say. HDFC Life, SBI Life, after the announcement on FDI in insurance being hiked to 100%, we saw a good uptick, but soon after we saw most of these life insurance stocks give up their gains. I think it was after the announcement of personal tax cut that we saw a drop in these share prices. Aside of that, Dixon Tech is one stock that even that stock saw wild swings. Titan, Kalyan Jewellers, these stocks also managed to recover from the day's low. I'm sure Manisha will touch upon what really triggered this rebound in late trade. Aside of that, if you look at some of the other movers on the Nifty 500, consumer durables were doing well on the back of the cut in personal taxes. So Blue Star was one stock that did well. DMart, a stock like DMart was up 10%. So all these staple names, across the board saw very good gains. But will this up move continue on Monday as well? That's a question that that's in fact something that we'll get to know only on Monday, because FIIs, remember, were absent today, so they will be making a comeback on Monday. And Monday, as you all know, is a new day and a new week. Let's see how things really pan out. But good budget, good reaction as well. Although no big cheer on the headline index front as of now. Let's see as the markets digest all these announcements, how things really unfold from here. But with that, Manisha, back to you.
Nandita, thank you for that complete wrap up on what really, how did the markets react to all of that budget. But well, as I was talking about agriculture, and we saw a lot of headlines onto this one, markets were anticipating some of these, but pulses, as I was telling you, it has been a bit of a concern because we imported a record amount of pulses in 2024. Self-sufficiency is something that we've been talking about, and that really brings me to my first guest here, Sumit Gupta of McDonald Pills. Sumit, hi, thank you for joining us. And pulses and self-sufficiency, self-sufficiency are words that you perhaps can't use in the same line, but that's exactly what the finance minister did today. The kind of allocations that we've seen and expectations for some of those pulses like Tuar, Urad and Masoor, how did you read those lines, the fund allocation or the point that the government is putting out? Do you see all of that being executed on ground?
Manisha, a very warm good afternoon, and thank you very much for bringing this topic in. And the interesting part is government today in budget, the second statement in the budget was about pulses. Okay, and I will request you to read this budget in line with the economic survey which was published yesterday. And very critical aspect of the economic survey, government to begin with, they spoke about inflation. And inflation because of pulses and horticulture, especially tomato, onion and potato. But critical part in that was tuar dal and masoor and urad. Second, government spoke about climate variability, and because of that, how yields are suffering. And the third aspect in that was government supply side interventions, which government has done by duty and other aspect to keep the inflation low. And when you coupled yesterday's economic survey with today's budget schemes, okay, and specifically when finance minister started talking about Atmanirbhar impulses, to your point, you have started this show by talking about demand. And you know how much India spend approximately 50% of their income on food, and out of food, pulses are a very important component. So if we are talking about a demand revolution in this country, pulses will participate from the demand side also. Today, when government spoke about Atmanirbhar Bharat, they spoke about increasing allocations to increase production. Okay, but on the other side, I believe demand will also go up. In especially the schemes which government came up with, and I will like to mention annexure.
My one point to you, Sumit, is yes. Do you think self-sufficiency in pulses is something that we can achieve in next 3 years, 5 years or 6 years as the FM spoke about?
Manisha, I will say we cannot achieve self-sufficiency in pulses irrespective of situation, because our demand is growing at a faster rate than supplies. Even with government schemes, I don't believe that we can achieve self-sufficiency in pulses in the coming days.
And what is your sense on the National Commission that the FM has put out? Do you think there is enough allocation, or this is conversation, sentiment positive, but not so much on ground?
Allocations which government has done is around 1,000 crores for the pulses, mission on pulses, and it's a very good scheme in which they have targeted 100 districts, rice fallow lands to bring in the pulses cultivation. But you know, it is not only about bringing supplies, but it is how you are going to build the ecosystem. Because you need speculatory money, you need traders' participation, you need international integration, which all is missing at the moment. Because as of now, we have only focused on pulses either from the demand or supply point of view. And specifically, if you see what we have done last year by letting pulses in, as you have mentioned, imports have doubled. It has actually crippled the trading segment in the country. So we need to bring this ecosystem back and do a lot more than only supply side intervention as we spoke in this budget at the moment.
Fair point that. Sumit, thank you so much for joining in. So that's the point really, that while the finance minister did talk about pulses, an important level as well, but will it really convert to much on ground is something that there's a bit of a question mark, as Sumit put out as well. Well, that's about pulses, but I want to introduce Supreme Kothari, a partner ELP now, because the big confusion in the day today was about the import duty on gold and silver. We did see that one paragraph showing that it would perhaps be content wise, it would perhaps be a different tariff line that the government is introducing from 1st of May. Supreme, hi, thank you so much for joining in. I mean, I've been on phone calls with you since that that paragraph has been highlighted in media and otherwise. How have you read it? What we understand is that there is no import duty hike in gold and silver, because that is exactly what led to many of these jewelry stocks declining. But as clarity came that there is no immediate import duty hike, but this is a different tariff line, the markets have taken cognizance of that, but there still is a lot of confusion. What are you reading into this?
Yeah, hi Manisha, thanks for having me and good afternoon everyone. So I think effectively the change that led to this kind of discussion was a change that was proposed in the finance bill. Now, the effect of that change was to sort of change some tariff entries. And in doing so, obviously, there is a tariff rate ascribed to gold, silver and platinum. But that tariff rate effectively is not the rate at which imports are taxed, as we see. So because of that, there was a confusion. The intent in making that change was to create new tariff entries, and this fact is also documented in the TRU letter that has accompanied the budget. So the intention was to create tariff entries to distinguish between precious metals which contain more than a certain percentage of that precious metal and vis-a-vis the other kind of precious metal. So that also had a background. I'll come to that. But effectively, the rate at which duties are levied have to be looked at based on the existing exemption notification. So there is an exemption notification 50 of 2017, which is still prevalent and which has force. Now, basis that, the rate, even if it were to be applied based on a certain tariff entry, would be 5% or whatever is the current rate applicable in relation to different items. So there is no such intention at all that the rate in relation to gold or precious metal will be increased. This is only a change in the tariff entry and tariff structure, and specifically to create more entries to reflect the component of purity of gold or any other precious metal. And also the other objective was to sort of prevent certain abuse that was happening in relation to certain alloys of platinum which had higher content of gold, and yet they got classified as platinum, and hence were able to claim certain exemptions which are prevalent. So that was the whole objective. This will not have any bearing on the customs duty rate applicable. In fact, we have seen historically that gold is such kind of a product. If there is any rate change, that will form part of the budget speech itself. The fact that it did not form part of the budget speech itself demonstrates there is no change in the rate of taxation of customs duties applicable on gold.
All right, that is good to know. My second question, really, just to get deeper into this, Supreme. So, is it about content then? When you talk about different tariffs and different tariff entries, is this very, very documental on the back end of it? And would you say that the markets really don't have to bother about this?
Yeah. So there is, firstly, it is basically just the way the structure operates. There's a tariff. There's a notification, you have to read both of them to arrive at the applicable rate. So it's just a structural change that has happened in terms of creating different categories. The idea behind creating different categories is today if there is an import of gold which contains 99.9% of gold or which contains a slightly lesser amount of gold, both get categorized under one tariff entry. The idea is to have statistics of different nature of gold that are being imported, so that if there is any abuse or even for any other reason, there is statistical data which can be looked at the stage of import itself or later. That is the only purpose that it has right now.
Does it have anything to do with the content here? I mean, as you said, whether it is about gold being imported at 99.5, 95.5 or silver or platinum in that case, what already has come in, would that be changed at all? Are we only looking at statistical data, or do you think, as the notification also says, the finance bill says, this would come in effect from 1st of May? So we're not looking at the gold and silver that already has come into the market.
We are not looking at gold and silver that has already been imported prior to this date. We are looking at a prospective change that, as you said, would come into effect from 1st May 25. And also, when that change happens, even the existing exemption notifications will also be realigned so as to not impact any change or not lead to any change in the duty structure, because that is not the intent. So that will also happen as we reach closer to 1st May 2025.
Apart from that, Supreme, have we seen this happen only in these metals, or are you looking at these happening for others as well?
So as of now, I think these are the metals. And as I said, there is a specific chapter note in chapter 71 to the customs tariff that effectively states that if there is an alloy of gold and platinum that constitutes 2% of more of platinum, then it will be regarded as alloy of platinum. This historically is there because originally and decades back, platinum was considered to be more premium than gold, right? But now over a period of time, things have changed. So I'll give you an instance of a customs exemption under the India-UAE SEPA agreement, where platinum could be procured without a TRQ, that's a quota license kind of, and could still enjoy benefit of concessional rate of duty under the India-UAE SEPA agreement. Now, because of this chapter note, what was happening, it's reportedly, it's there in newspapers and all, is that certain elements were being imported which contained, say, more than 97%, 98% of gold, but at least 2% platinum. And because of that, they still got classified as platinum and not as gold, right? And they were able to secure benefit under the India-UAE SEPA agreement related customs notification. Now, by virtue of this amendment, because of this, distinction between the proportion of content that will determine the tariff entry, it is possible, and that appears to be the intent, that later on even that exemption notification under India-UAE SEPA will undergo an amendment so as to provide the benefit only where the platinum content is 99% or more. So that effectively is how these things will pan out. Right now, we are only looking at these three metals and not beyond that.
Fair point that, Supreme. Thank you so much for coming by and clearing that air for us, because it has been quite a bit of a confusion since everybody has been reading that finance bill. And as you rightly said, if there was at all an import duty change in gold and silver, the finance minister would have said that in her speech itself, and we won't really have to look for it into all of these documents. So clearly there is no change in import duty of gold and silver. It is about a different tariff line, and that also is just about a structural change. It's being created separately, and that would only come in effect from 1st of May is what we understand at this point in time. But we also do understand that the Revenue Department and the Finance Ministry will be sending a clarification to all of us by the evening today, as they will do for various other things that are being classified as slightly confusing at this point in time. Thank you so much for that, Supreme, for joining us. And with that, it's back to you, Sonal.
All right, thank you so much for that, Manisha. So that was a look at how commodities are doing, several other grains are doing this afternoon. But what a day it has been. It's 3:52 by the clock. The budget 2025 has been laid. Markets have not had much of a cheer. No budget cheer for the market. Sensex, Nifty and flat amid volatility, and we've been bringing you all of these. But as we look at the next 1 hour, let's focus on the biggest headline of the day. It's a budget for the middle class. More cash in hand, increased capacity to spend as well, and those are the main headlines, the key takeaways from this budget. Budget 2025 also signals more than just fiscal adjustments. It reflects a strategic shift in how the government acknowledges and supports the economic backbone of the country. For the middle class, it's not just a budget, it's a breakthrough at the moment. How exactly? Let's look into the details, and I'll just cue in my producers to bring in those graphics up on the screen as well. Now, previously, the middle class had been feeling squeezed dry by taxation. Taxpayers earning up to 12 lakhs now save 80,000, effectively eliminating their tax liability. Now, relief also extends to those slightly above 12 lakh due to the standard deductions over there, and incomes up to 18 lakh see about 70,000 savings at 30% of the previous tax. Now, while 25 lakh earners are saving about 1,10,000. Again, that's a number that's 25% over the previous tax. This budget has aimed to put more cash in hand for the middle class, signaling a sort of strategic shift and a potential breakthrough. The move also comes after growing discontent amongst the crucial voter base due to perceived neglect in the recent years. It also comes right below, just right before Delhi goes to vote as well. But politics aside, what has happened with the Lal Street also aside, let's look at how your and my conversations with our CAs are going to go after this budget. And let me bring in our guest now. Joining us next is Homi Mistry, partner at Deloitte India. He joins us from the Mumbai studio. Hi, Homi. What a day. It must have kept you very, very busy. Lots of calls are being made to different CAs as well to sort of understand this. But before I understand your first key takeaway, would it be fair to say that with the changes that have been brought in the personal, in personal finance, in the tax rate cuts, the new tax regime is now looking more exciting than ever before? Homi, can you hear me?
the focus now is more and more on the new regime, and I think more and more people will definitely opt for it because the slabs have also widened, the tax rates have also come down, and people, for example, earning let's say 24 lakh rupees may save over 1,14,000 rupees by way of tax. So it's definitely looking more and more attractive for the new regime.
It is, but in comparison, Mr. Mistry, if I could also sort of understand from you, I'm hoping you can hear me this time around. In comparison, I'm just trying to see, compared to last year and compared to now, the systematic shift that you're seeing, does it have benefit only for those up to 12 lakh? From 12 to 18, where do you see the numbers go?
See, the benefit is not only for people earning up to 12 lakhs, it's going up much more. So for example, if you're earning around let's say 24 or 25 lakh rupees, you could save a tax of at least about 1,14,000 rupees. And if you're earning more than that, there will be a slight increase further in the savings because of the surcharge.
I see. Kalpesh Ashar, certified financial planner with the SEBI RI as well, is also with us. Kalpesh, hi, welcome to Money Control. Like I said, it must have been a very busy day for you. Can I first start by asking your key takeaways on how the tax slab change is going to impact people? All right, you're waiting for Kalpesh to sort of get in. Let me. Okay, I have Mr. Mistry still with me. Mr. Mistry, can I understand this from you? The budget also promises a huge tax saving for the middle class. Are they in line, do you think, with expectations at this point? What are the savings under the new tax regime due to change that will come up with the change in the slabs?
So that will depend from case to case and on your income slabs. But definitely I would say that this is even more than what was expected, you know, because earlier it was up to 7 lakh rupees. Now there's a big jump from 7 lakh starting up to 12 lakh rupees. And gradually as your income goes up, you will be saving, as I said earlier, more and more. So it's definitely beneficial, and definitely the middle class is going to benefit here.
I see. I'm just trying to check if we have Kalpesh with us. Okay, Vipin Sapra is with us, the national leader indirect tax policy with us. Vipin, your first comments. It's been quite a hurrah for folks.
Yeah, I think customs changes have been there, though maybe we were expecting a bit more from the whole thing. The changes in the rates which have been talked about, I think we were looking at a much more substantive review after the last year's announcement. This time it has more been in the sense of rejig of rates between removal of customs rates to shifting it from customs duty to additional duty, and maybe effective 1st May there will be some changes which would come in. So yes, there has been review. I think that customs review is a continuous process. We'll see much more changes coming in the coming years. It's the need of the hour. Certain industries have been given the benefit, given that the Make in India has been a big theme out here. Things like displays, certain other parts have been exempted. A lot of other things have been, duty has been increased. Similarly, shipbuilding material which was coming in, the equipments and all of that, those duties have continued to be at a concessional rate. So overall, Make in India has been a big theme out here, as always, and it continues. So indirect tax has been, I think, has been generally around what we have had expectations and what we were hearing. So yeah, I'll stop here.
Okay. Can I then also go to Kalpesh, who is with us. All right, we have a full panel joining us now. Let me just quickly go over that. We've got a Homi Mistry joining us from Deloitte India. Vishal Dhawan is here. Vipin Sapra is here. Kalpesh Ashar is with us, and Nasir Salim as well. Kalpesh, let me quickly come to you then and understand this. What does this mean for the new tax regime versus the old tax regime? Are we giving a clear, significant push or saying an advantage in the new regime now? And how does it fare when if for people who are still claiming stuff like HRA, reimbursement for salary, fuel, etc.?
Yeah, so I think it's a given, and in fact, for a long time now, the finance minister was clearly giving indications that the old tax regime is on the way out. And I think with this, huge masterstroke which we have heard today, surely new tax regime wins hands down, and absolutely there is no point in anybody now even looking at the old tax regime. I think on paper it's still there, but it has, I think, negligible value left in it now. And as far as the other eligibilities, the deductions which were there under the most common ATC, ATD, clauses, I think what the government is trying to tell from day one is that we will give you more disposable income in your hand. You be a better discreet judge whether you want to save, you want to invest, you want to save taxes, but you take a very prudent call. So I think that has all transpired into this big move which has happened today, which is shifting the slab up to 12 lakh exempt limit, and all the other the HRA and all the other benefits, I think in due course correction will be a part in some way or the other as an exception under the new tax regime. So anybody, even by sheer mathematics, if you were to calculate what is beneficial, because the slabs now have been divided into almost 5-6 slabs, and nowhere would the old tax regime have a better hand than the new tax. So new tax is here to stay.
New tax is here to stay. Vishal Dhawan, let me get in your opinion on how you seeing the new tax regime actually fare up after this.
Push towards the new tax regime, and I think this has been a directional view that the government has taken, and they're going down that path very, very clearly. I think there are 2 or 3 very important elements that come out from today's budget speech around the direct tax piece itself. One is the whole need to simplify, and I think the government had spoken about that in last time's budget as well. And they've continued that direction by saying, let's make it easier for taxpayers to figure out which regime they want to go for, because ultimately we may stop the old tax regime completely. The second thing is there was traditionally a little bit of misalignment in the way investors put away their money or save their money, because they did it driven by tax considerations, which may not have been the right method. For example, if you didn't need insurance, but you had an insurance tax break available under Section 80C, you ended up buying insurance simply because of that, while the right way to do it would have typically been to use your financial goals as the basis to make that decision. I think by taking away some of that sort of direction which tax laws would have created, I think it becomes a lot easier for individuals and families to now customize their own portfolios, their own spending, their own investments, all of that to their own financial goals, rather than just being driven by a sort of top-down approach that an old tax regime would have. Last but not the least, I think what is also happening in this new tax regime is that with the enhancement of the slab ranges, I think it's very, very important that what it does for you is it just makes it a lot easier, because you have larger ranges, which is the reality around inflation. Because the challenge with keeping your slabs in narrow numbers is those slabs actually, don't really effectively change, because inflation comes in each year, and automatically, there's a certain increase that takes place. So I think it's good to have big, broader ranges rather than those smaller, narrower ranges that existed earlier.
All right, we'll just take a pause for a minute and dip into what the finance minister is saying. We'll just come back to you, gentlemen. Please stay patient with us.
and I spoke about it in the budget, sectors in which we will continue our agenda. All this, even as we have continuously been engaged with the stakeholders, and interest of education and health has been prioritized. When we're talking about education, from a child in a daycare center, portion for women, lactating mothers, till the level of getting skilling done, and also for artificial intelligence and digital reading material for students and in school and colleges. Every aspect of education and bringing in that dimension which is so critical for health. Daycare, cancer centers, and making sure more medical seats are available. These are kind of things with which I'm trying to highlight. The approach in this budget has been pointed on areas which definitely need immediate intervention, outlays, and action along with the states. So, Vikasit Bharat is not just being described. I've given you also what we mean by Vikasit Bharat, or what is it that we expect to achieve for Vikasit Bharat. So this budget actually has given you several things on which you can understand how this economy is being planned to take forward a route towards Vikasit Bharat. Secretaries have joined me. All of them would also come in to explain or answer and give clarity and so on. But one thing which I certainly would like to highlight is responding to the voice of the people, which is what Prime Minister Modi is known for in his administration. It's a very responsive government. And as a result, the income tax simplification, which I announced in July, is already completed in its works, and we shall bring the bill in the next week. So the income tax simplification, about which in July budget I have gone in detail to say, the work is completed within 6 months is what I said. Within 6 months we've brought the bill. It will be coming into the parliament next week. So if we are talking of reform, inclusive of taxation, the work is done. This budget also speaks about rationalization in customs. Tariffs are being brought down, tariffs are being simplified, and also the basket which consisted of so many different tariffs for so many different commodities are now reduced. 8 were taken off earlier, 8 has been taken off now. So whatever remains now, 7 I think remains, and that is all about India's tariff picture. So the usual narrative which goes on, saying is India being too heavy on tariffs? No, you find that we've drastically reduced and also simplified. So this budget has so many things for all of us to talk about. The more important thing about agriculture, which performed very well during COVID and which has contributed to India's food security, the proposals which are mentioned in this budget actually talk about everything to do with beads to bazaar, literally from the stage of seeds, hybrid seeds, climate resilient seeds, seeds which can give greater output, seeds which are going to be high yielding, all this together to the final point of India becoming the world's food basket. That's the definition I put in when I was talking about Vikasit Bharat. So we are making sure that India's agriculture gets the support across the board, whether it is on seeds, whether it is for skilling the farmers, whether it is rural prosperity, whether it is going to have agriculture and allied industries being set up in rural areas, and whether it is going to be farmers getting better and more loan with interest subvention, not just farmers, fishermen, and also dairy, meaning animal husbandry. So the picture for rural development and the picture for supporting agriculture is across the board, and that has been narrated. The second thing which I would want to highlight is the continued emphasis that we are giving since vote on account budget, July budget, and now on the MSMEs. whether it is giving them sovereign guaranteed loan, whether it is support during COVID, whether the definition being changed now for better, more inclusive growth in MSMEs, access to bank credit. So MSMEs have also been given greater emphasis. Together with this, I'd like to highlight the point that energy security has had greater attention in this budget. We've highlighted in July budget how even pump storage will have greater attention. Solar and wind and renewable energy has also been taking consistently good importance in our budgets. This time we are talking about the small modular reactors. I've also announced that there shall be 2 amendments, one to the Atomic Energy Act and the other one for the civil liability. All of this is going to help us attain energy security. Insurance sector's FDI limits have been enhanced. That is another important announcement. I'll end my opening statement with 2 things. There is no reduction in the public spending on capital expenditure. Let's put that up front. We continue to place emphasis on the multiplier effect that capital expenditure done by government has shown, has sustained us. We continue on that. And with all this, our fiscal prudence has aligned itself to the glide path that we announced in 2020-21. So we've kept ourselves in alignment. Fiscal prudence has been maintained. The next year, coming years, estimate is also been given. Well under 4.5 is what we had said earlier. We are also projecting the same. So this is just as an opening statement. There's a lot more to say, but as you all ask questions, so shall we answer. Thank you.
Thank you, ma'am. 225. 225. Mic, please.
Ma'am, this is Shrimi Chaudhary from NDTV Profit.
Expect what?
Do we expect the implementation of?
Well, let it get passed. I hope it will get passed without much of a difficulty, but it is only after its passing.
Sure. Thank you.
35. Front.
All right, that was the Finance Minister addressing and taking a couple of questions there right after a press conference. In a gist and in a nutshell, she talks about how there are several takeaways from this particular budget, the first full-term one that she's also put out. Lots to decode for us here as well, but we're dedicating this hour to understanding more on personal finance. Let's go back to a panel on that note. Nasir Salim, a managing partner at Flexi Capital, is also with us. Nasir, let me come to you. The finance minister is quite happy with the budget. People had quite a cheer. I can tell you for a fact that here in the newsroom, the minute the 12 lakh cut was announced, everybody here went in a cheer as well. Somehow the markets have not responded to it very well. What has been your personal study?
To be back with you. Look, Sonal, so there are 3-4 things here. I think if you look at this from a cheering perspective, there are 2 big takeaways. One, east or west, Bihar is the best. That concludes my decision, at least my point on, and I'll come to the markets also. One is that. The second thing is the middle income group has really made a bumper, something to cheer for. I think the sectors and the stock market specifically, since you asked, see, it's also come in at a time when the Trump administration has announced tariffs, which are now being executed as we speak. As India wakes up, we woke up to the budget, and as our day ends, the US wakes up. So there is an imminent, what he had said is now coming out, and that is going to create some volatility. And I think that could be one of the reasons why the markets, did run up to the expectation, and now it's kind of mellowed down. But if you look at specific sectors, so now that will tell you a different story altogether. The FMCG index was up 3%. There are certain automobiles sector, the automobile sector, certain big companies there. I wouldn't name individual scripts, but some of the bigger names in the automobile sector have gone up tremendously in terms of their price surge. We see a lot of immediate benefit coming into consumer durables, retail, brown, white goods. These are some of the immediate beneficiaries of this. There is also going to be an impact now, I feel, in the banking and financial services with banks also, because when you have a scenario like this, the RBI's intervention is now imminent to reduce interest rates. If interest rates come down, I can tell you from my past wisdom that private investment will start to follow. And if that happens, there is also a credit offtake that picks up. So look, the opportunity is good. I think this is what a few of the last few years we've been demanding, that the burden on the middle income group is very, very high. It needs to be somewhere recalibrated, rationalized to make sure that there's some relief which is given, which I think bodes well for consumption. I also feel the entire consumption space, realty included, will also ensure that there are personal disposable incomes which will start to show up. Interest rates comes down. They also have some impact on people taking more loans, buying, possibly channelizing their income in individuals, taxpayers, where their taxation is far less. So overall bodes very well for the consumption sector broadly.
Yeah, and we keep saying middle class, and I keep wondering, with this, have we also established a new definition of the middle class? Have we also said that 12 lakh and around that's the new definition of what we're going to look at? Can I bring in Vishal Dhawan on this one at least and understand, is that the new definition now that we're looking at?
Set some sort of a benchmark, especially because what it does is it creates a threshold at which people do want their income to be, so that they still don't pay the taxes, but they do have that benefit of the income available. So I think it is again a direction which is happening towards that definition of a middle class. Again, I want to re-emphasize that one of the things we need to be very mindful of is that inflation has been a challenge. Even though it's started to come under control. So a lot of these numbers needed to get enhanced because one of the challenges around consumption and the slowdown was about the fact that inflation had hit much harder than wage growth had been. And hopefully what will happen is this will induce some wage growth also to come in because, companies have had decent levels of profits, but somehow the translation into wage growth has not been there across the board, and especially at the entry level, where a lot of sectors have seen salaries sort of stagnate over many years.
Correct. Now, how will this actually translate into several things that you've mentioned, very important points there, Vishal? Vipin Sapra also come in on this point then how are we looking at the overall policy when it comes to taxes? Because remember, this is just a teaser, if one can call it that. We are looking at a new tax bill. Do you have thoughts on what that could be really about? We know largely it's going to be about simplifying taxes to a greater degree, but any more degree of depth that you can bring to it?
See, I think once the bill comes in, we'll have more clarity. It's all about simplification, which is being talked about. I think I look at the indirect tax side of the law, so direct tax is not my forte. I would let it pass.
Sure, I'll let Kalpesh take that question, please. Kalpesh.
Yeah. I think what needs to be understood from picking up from Vishal's point, I'm continuing that what will happen is that it will boost a lot of consumption, and when you talk about consumption, the GST aspect comes into the picture, And here the government, I think, will have to have a very neat balancing act, because what they've done is that the luxury items which are at 28% and all those things, those are still not going to be affordable by that 1 lakh new I think so-called middle class. So there will be a choice for the middle class, who is going to decide that, for example, if I can't buy a luxury car, at least can I buy a normal car? Can I buy a normal car? That will boost even the borrowing part. So it goes completely in a domino effect. And more importantly, the government now also has to look at the GST structure once more, because the GST aspect of, there's still the complaints going on about there are too many ranges, there are too many modifications to be made. So one part of the job has been done with this 12 lakh thing, but I think the remainder part on the GST still needs to be looked at.
Still needs to be looked at. GST needs simplifying to quite a degree. Let me bring in Homi Mistry as well. Homi Mistry, how are you seeing and what is your take on rationalization of TDS as far as sort of individual taxpayers are concerned?
So there have been a number of changes in the sense that the exemption limits where there will be no TDS gone up now has actually gone. So for example, on interest on securities, earlier there was no threshold, so there was a TDS irrespective of the income. So now interest on securities has a threshold of 10,000 rupees, up to which there will be no TDS. Similarly, interest on, let's say, fixed deposits with banks or post offices, etc. The limit has gone up from 40,000 to 50,000 rupees, up to which there will be no TDS. And in the case of senior citizens, it has gone up from 50,000 to 1 lakh rupees, up to which there will be no TDS. Similarly, payments made by partnership firms or companies to any individual who's a resident in India or any other resident in India, the limit now has gone up from 2,40,000 rupees for the rent to 50,000 rupees a month. So, and for dividends, it's gone up from 5,000 rupees to 10,000 rupees. Similarly, for professional fees and technical fees, the exemption limit has gone up from 30,000 rupees to 50,000 rupees, up to which there will be no TDS.
I see. Can I also touch upon how prices for how taxes actually on self-occupied properties are going to be simplified after these? Kalpesh, can you come in on that one?
I think what it has done is that earlier it was only limited to one property, and that was actually the property in which you are residing. And by extending it up to two self-occupied properties, I think there's no need to declare whether that's rent out or not consumed by you. I think that's a very positive move again, and that would also propel people into the real estate aspect a little bit more actively.
All right. Can I get Vishal's version on this one as well, please, on self-occupied properties and how that's going to change?
So I think there are two aspects to this. So one is clearly, there are certain sets of individuals who are unable to rent a second property because maybe they have family living there, or they have certain other legal issues, or they just feel uncomfortable renting out property. And they were forced to pay a tax on a deemed rent if it was not self-occupied beyond one property. So I think it gives a little bit more flexibility for some of those families who are facing particular situations, as a result of which they don't want to rent out a second home. However, the flip side of it is that one of the challenges that a lot of people have faced across metro cities in the last year or two has been that rents have gone up very substantially.
Yeah.
And what something like this does is it actually reduces potentially supply of rental property into the market, because earlier on, if you had to pay a tax on a deemed rent anyway, you would probably force yourself to go out and rent it out. While now you have that flexibility to choose not to rent it out, because anyway, I don't have a deemed rent provision and therefore a tax to pay on that. So I think to that extent, it may be a little bit inflationary for rentals as a result of the way it is structured.
How fascinating. Let me also bring in Bipin at this point. Bipin Sapra has been patiently waiting. I want to understand a bit on GST and trade policy from him, incentives sort of coming in from this budget. Your key takeaways, please.
So, I think we were expecting some changes from a GST perspective. They have happened. There were credits. So, the major issue regarding credits, which was there, the Safari Retreats judgment which came in, which caused a lot of noise around that credits on immovable properties can be allowed, credits used in immovable properties can be allowed. That has been retrospectively amended so that that benefit goes away. So that's a huge change which is there. It was expected. It was already announced in the 55th GST Council. So that's something which was there. We also have changes on the implementation of IMS in computers. The ISD scheme is now being formalized, and a couple of other changes which were expected, which were there. On the trade policy front, I think there were again changes from a GST perspective, where supplies in a bonded warehouse, they have no longer been classified as they have been taken out of the definition of supply as before clearance for home consumption. It was again an expected move. I think GST broadly, we have 3 or 4 GST councils during the year, and those are our main budgets when it comes to we indirect tax professionals. At this point, we look at customs a lot and trade policy. I think no major announcement on the trade policy front, except there has been some benefits which have been brought in terms of ease of doing business. On the customs front, there have been some concessions given to bring in Make in India. I think overall the theme has remained between Make in India and ease of doing business. Correct. So that's the focus. One last thing on the incentive piece, there have been a couple of incentives. Critical minerals have been given incentives in terms of import of scrap. There have been incentives for the shipbuilding industry and for the footwear and toy manufacturers. So some incentives have been given in this budget.
We actually saw an impact on that on stocks and sectors related to that as well. Let me bring in Nasir now. Nasir, middle class often seen as a silent engine that's driving the economic growth, finally at the center of some sort of fiscal relief that we are seeing. But as some of our panelists were saying earlier, not really catching up to inflation yet. Is that your sentiment?
No, I'll tell you, see, you can always never be happy. Sonal, it's always a mixed bag. I think inflation has its own challenges, and those will remain. And the point is, I think, as far as India is concerned, we are mostly importing our inflation. And the one thing that even the economic survey report suggested, by the way, was that how do we reduce our dependency, for example, on China? And I think that is something which continues to, be one of the bigger issues. And number 2 is our logistics. There's a lot of perishable items when for example in the agri sector, which are moving from state to state, and there are logistical issues. So I think that is something which will remain. But the point is that in one theory or one aspect of this is, Sonal, is that am I going to be having more pulses now? Will I be consuming more food because all of a sudden my disposable income is shot up in the middle income group? Not really. But what really works is it's the sentiments. You see, the sentiment has now become positive. I think, and that bodes well. And there is an aspiration in India which is upgrading itself. So, somebody who was earlier lower income group has now become lower middle income group. And then the one who was middle income group has become middle income group, higher middle income group. And, it's a transition. And I think this budget, and especially this part of giving relief, brings in a sense of positivity, a sense of sentiment, which becomes more favorable for either creating or reviving avenues of investments, stroke asset creation, stroke purchasing, or reviving consumption. And I think all of this combined is what the aspiration India attracts the aspiration India, which is the middle income group. I would have been happy to talk about inflation. I think more importantly, I think one of your panelists just said that, Sonal, is that, and I'll tell you a number. This year, the fiscal year 24, we've had the highest corporate tax profits being reported. But if you look at real wages, those have been actually below pre-COVID levels, right? Real wage growth. So our point is that वहाँ पे तो benefit नहीं मिला. We haven't given any big benefits there, Sonal. But at the end of the day, all of it adds up to consumption increasing, personal disposable income increasing, and I would have been happier to address real wage challenges and unemployment at the lowest level. I think that is something which needs to be addressed by the government, by the center, more favorably. If that happens, this thought of reaching to a certain $1 trillion economy by 2047, or aspiration India to getting to 5 trillion soon enough, is something which will become faster if that is also addressed. But overall,
very
I think,
important. Yeah.
Yeah. But overall, I feel inflation, where it is, the middle income group stands to benefit.
Right. Vishal Dhawan, actually is in agreement. He feels something more could have been done. He was pointing at that a little earlier. But I want to understand from you, Vishal, at this point, what is a larger issue? Is tackling inflation a larger issue, or sort of boosting consumption?
So I think both of these need to go hand in hand. I think it's very hard to say which is more important, because one of the things that happens in India is, we've seen historically that if spending gets very loose by the government, then inflation can come in very quickly, and then to bottle it back can be a very big challenge.
Exactly my point, yeah.
So therefore, I think the way that the government's trying to approach it is very sensible. On one side, on the fiscal deficit side, they've continued the glide path. If you look at the fiscal deficit number at 4.4% that they're targeting, that's very much aligned with what they had indicated earlier. On the other side, if you look at their the market borrowing programs, both net and gross, they are also very much in line with what the market had expected. So I think the way to think about it is they're focusing on one side, saying, let's not bring in a lot of fiscal imprudence out there, because that would create inflation. At the same time, when I give money to taxpayers, now they have the option to do two things or both things. They can either spend that money in the way that they think is best for their families, or they can go out and invest that money in the way that they think it's best for them, or even pay down a loan if interest rates are high, or they can start to do a combination of both things. And I think different families and different individuals will need to make their own choices on what works well. So I think what this budget is trying to do is create that avenue for both things to happen without letting the fiscal deficit go out of control, because then it becomes very hard to get inflation back into the bottle.
Right. And I think one of the key sort of age brackets where it impacts the most, the tax cut, is actually first-time office goers, people who have just started working. There was a mention by the finance minister also of young people, Gen Z, millennials, and Kalpesh, with them the worry is that a lot of it is actually be spent out, right?
Yeah, absolutely. But, we are on a very progressive path, Sonal. And, with the level of, I think, people even listening to this budget on a holistic basis, itself is a little bit of an indication that people are now aware of what's going on in the economy, what is good for them, what is the government doing. In a minuscule way, they're trying to understand the nuances of everything way. So I think although the young generation is going to spend the money, but let's not discount the fact that they are now more aware investors as well. And like what Vishal rightly said, once the choice is given to the individual, I think they would make a very discreet, selection, whether they want to repay their loans or go on the long-term investment path or have a good lifestyle. And even if you see, there was some mention of AI today in the FM's speech, that they're going to dedicate, some budget for that as well, which augurs very well that the government is thinking for the next stage, for the next age group. So all these things, I think the next generation which is going to come up in that 1 lakh, income group, I think they're going to have a very, very decent pathway and utilize the money in the most discreet way. And that's the best bet the government could have. Let the individual or the citizen decide and take its own course.
Right. Hobi Mistry, can we focus on the other bit now and understand the gig economy workers? If you were to tell me, for those watching right now and working for themselves, entrepreneurs, etc., what does this budget really have for them?
So they will also, Sonal, they will also benefit because of these taxes. Because this is across the board for everybody. Irrespective of your income levels, etc. Of course, a person who's not an employee does not get a standard deduction of 75,000 rupees, because that's only for the salaried class. But otherwise, they will also get the benefit of these lower tax rates and the higher slabs.
I see. Vishal, can you also talk to us a little bit about the increase in the threshold for TCS and LRS schemes? How is that panning out for you?
So that's been something that was, obviously, when it was introduced for the first time, it came as a big surprise because, for a lot of people who were sending money overseas using the LRS, it created a cash flow challenge because you needed to now remit out a higher number to account for the decreased sort of remittance amount, because you had to provide for the taxes. So I think by enhancing this limit from 7 lakhs to 10 lakhs on one side, I think it makes it easier if you want to invest overseas, for example. One of the big things that we believe is that if you want to run good quality portfolios which are stable over long periods of time, you need to have money in more than just one geography, even though India is a very, very exciting story. And I think what this does is it gives a larger window available for you to use LRS without a TCS and invest either in international ETFs or international mutual funds or international stocks. Of course, you need to keep in mind is that you could always get a refund back on this TCS. It's not a real outflow. It will come back to you either when you file your taxes, or you can adjust it against other taxes that are payable. But it still does create a cash flow challenge. The other big thing around TCS which has changed is that if you have an education loan, then it's very useful because now you don't have the TCS on that element when you're sending money, let's say, for your children to study overseas. And this is again very powerful because people have had to deal with two challenges when they've had to send their children to study overseas. One is inflation overseas has been very high, and the second is the currency has also depreciated. So there's been a double whammy for people, having kids study overseas, and this gives a little bit of relief to them as well, saying I don't have to worry about the cash flow aspect of it.
Right. I'm going to start taking closing comments from everyone. But Kalpesh, first to you, for those, money control viewers are largely the ones who are still trying to sort of, like I said, make calls to their CAs, understand how exactly is this going to work out, what to rework, what not to. I know it's still early to sort of decode what was there in it for the common man, for the middle class. But if you had to pick out your top three, and I'm going to go around the panel in that manner on the top three highlights, which ones would that be? And what do you think has not been talked about so much, the misses here?
Okay, so first and foremost, I think obviously the captain of the ship is the shifting from the 7 lakh to the 12 lakh. That goes without saying. I think nobody would have any two doubts about it. The second one, which literally I was looking for and it got implemented, was in the senior citizens exempt limit, increasing it from 50,000 to 1 lakh, because even the senior citizens were calling for a little bit of relaxation, and they got it this time. And the third, obviously, is the push by the government towards, I think, the AI word which they uttered, I think was music to my ears, that the government is looking quite progressively and staying in tune with the world. The one thing which I would have liked to hear in this particular budget, which in the former part of the budget was amiss, I think the FM kept the best for the end, which was obviously the direct tax. But which I would like to hear in the beginning was, this time there was hardly any mention that still the push on capex, defense and all that, the government is looking at it very strongly. I think that would have infused a lot of confidence in the people listening to the budget, in the markets, and I think it would have just reiterated the confidence that the government is still strong on its PSU and its capex spending, which I think later on the the FM has clarified that we are still on with it, but that could have been a part of the budget speech as well, a little bit more strongly.
I see. Vishal, your thoughts? Top 3 hits and misses, yeah.
Yeah, so top 3 hits in our mind continue to be, number one, this whole rationalization of the tax slabs. I think it's been very, very powerful in terms of what it can potentially achieve, to give choice to families to decide on whether they want to consume more, invest more, or do a bit of both. The second is that there has been a mention about KYC. And, while it appears like it's a very small thing, I think one of the biggest impediments to long-term wealth creation is the friction that is created, because it is so difficult to start investing when you want to, because every now and then you need to do KYCs. And we had a central KYC system which clearly was not working. So the mention that there is going to be a revamp of this KYC system, and also some more probable method of frequency of how this KYC is to be updated, is really good news, because I think that friction to investing can actually end up getting removed as a result of this. The third is, the focus around helping cash flows. So whether it is TDS rationalization that has happened, or whether it is TCS, like on the LRS that we spoke about, I think all of this is very useful, because one of the challenges that a lot of the middle class families face is that the intent of a lot of TDS and TCS is actually to track, whether there are certain types of transactions that are happening. But the outcome of that tracking is that you actually have less cash in your hand, as a result of which you can't save or you can't invest. And I think that simplification is very, very useful to ensure that there is actually more cash flow available. So those I think are our top 3 hits. As far as top 3 misses are concerned, one is, I do think that there isn't a very clear answer in terms of how more employment is going to get generated. Yes. And I think that continues to be a big challenge. There are sort of social angles to it, and there are sort of clearly investment angles to it as well. The second, sort of miss is that there hasn't been so far any evidence that the private sector is coming back and wanting to invest. And therefore, there needed to be probably much more focus on public sector spending or government capex, because, all of this while companies have used their excess cash flows to actually pay down debt rather than going out and investing. And I don't think that confidence has necessarily come in yet, that people want to go out and invest big time in the private sector. Last but not the least, I think there continues to be a little bit of misalignment in the way taxes on different investment products are created and asset classes. So for example, if you buy debt in the form of a mutual fund today, you get taxed to the highest marginal rate. And if you buy equity, you get taxed at 20% short term or 12.5% long term. Now, what it could end up doing is, if you don't align this, and hopefully the direct tax code to be talked about next week will try to address this, but as of now, it could mean that people who have short term money to invest are actually investing it in equity, because tax is more attractive there, rather than investing it in debt, even though debt is the right vehicle to use, just because of misalignment of tax structures.
Yeah, that's a very important point. Nasir, you want to go next?
Yeah, Sonal, so in conclusion, I mean, while most of the points are by and large covered now, but I'll tell you, in conclusion, Sonal, union budget, I mean, is a positive budget, which will revive consumption without impacting the investment cycle in any significant way. I think as interest rates come down, we will see private sector consumption and investments continuing to pick up. I think the key sector that I kind of just mentioned to you, which will benefit from the union budget, is consumer non-durables, consumer durables again, automobiles, discretionary spending also stands to benefit. As the monetary cycle easing starts, it will be positive for most interested sensitive sectors, especially NBFCs, for example. I think one is mostly some of those points. I think some of the misses clearly is the lowest income group, right? There, when you look at something called tops, which is tomatoes, onions, and pulses, those continue to be very, very expensive, right? And that is something which also the economic survey report mentioned, to say that there is a lot of consumer price inflation. Food price inflation continues to be the largest contributor. So I would have wanted to kind of hear more about that. They have pushed about agri reforms there. They have mentioned about pulses being looking at some options to homegrown pulses and so on and so forth. But I would have been happier to kind of hear more about that. And number two, real wage, which I mentioned to you, don't seem to be going up, and that is at the lowest strata in terms of income levels. May have been somewhat of a miss, in my opinion, because there's no roadmap given there in terms of employability and employment generation. And last not the least, Sonal, while they did mention about asset monetization without using the word infrastructure much in the budget, they did have a roadmap around it. But the one of the challenges that has remained, at least for this fiscal, is the outlay that they had mentioned for capex. And this time we didn't hear much of that capex outlay, at least in terms of directionally, because that's a very, very important number. And I think I would have been happy if they had a more clear roadmap for capex outlay.
Seemed like a toss-up between capex and consumption, in which way this has gone. We have to move back to the FM, but very quickly, Bipin Chapra, your top 3 hits and misses when it comes to indirect taxes.
Yes. See, these are the decisions which are taken. What the purpose is, one of course is to raise borrowings in the market for the purpose of financing the budget, and at some point of time whether this asset class is to be supported or not. But the conditions of the recent past of the experience has been that this has been rather a fairly high cost of borrowing for the government. As a result, for the last several quarters, government has not chosen to follow that path. As and when a compensation is there, you will get it. 226 left. We'll take 2 more questions.
Hello, hi. Rishika Chakravanshi from Business Standard. Just 2 things. One is you could elaborate on the BIT that you said that it will be made investor friendly. So will it be in the line with what we have with the UAE? And one, there is an increase in the corporate tax revenues also that have been projected in the FY26 budget. So what is the reason for you to, why are you expecting like a revival in corporate tax, which has been a bit of concern?
Well, on the BIT, I think I've stated the reason why we want to revamp it, to make it more investor friendly. Yes, I can understand you quoting UAE and asking whether it is going to be in line with that. UAE was a bit more than, it was 2016 plus, it was more than the 2016 version of the BIT. But there is no particular template that I'm adhering to. We want to make it lots more robust and lots more investor friendly.
125.
Ma'am, good afternoon. Karishma from Business Today. Congratulations to you and everybody. Ma'am, Manrega has again, it's seen in stagnant allocation in the last 2 years, despite that this year's FY25's utilization has already peaked until December. Do you expect a mid-year revision? And ma'am, a quick clarification on crypto. When is the DA-led crypto paper likely to be released?
See, on Manrega, I think every year the same question is asked, and every year we answer the same question. It is a demand-driven program. If as a result of increased demand, a state or another state, a third state wants money because their demand has to be met, the RE shows the numbers and we increase it. But just because of that, it doesn't mean that my BE will have to be on the enhanced note. Every year the numbers, in fact every crop season, post the crop season, the numbers vary. So as a demand-driven program, we'll certainly respond to it as and when the numbers come. On the crypto, when is the DA paper likely to come? You'll get to know when it comes out.
This is lap 6 at the back. Ma'am, I'm Bhanukinga Patnaik from the Economic Times. In your speech, you have said that there would be a light touch regulatory framework and that a committee will be set up to review all non-financial sector rules and regulations. So, ma'am, is there, any possibility that it will also include financial sector regulations?
But even as I read the speech, there were two different things. One for the non-financial and another for the financial. The financial is still being looked through the FSDC, whereas the non-financial is where we have appointed, or we are asking for an appointment of a high-level committee which will look at the regulations, particularly for compliance, for inspection, for certification. There are ever so many overlaps, friction points, pain points. So to sort that out, our approach is this: one through the FSDC for the financial, and for the non-financial, several of them which are non-financial, the high-level committee.
Ma'am, again,
प्रधानमंत्री मोदी जी के नेतृत्व में हमारी फाइनेंस मिनिस्टर निर्मला सीतारमन जी ने एक बहुत ही जबरदस्त इस प्रकार का बजट पेश किया है। विशेष रूप से इसको हमारे मध्यम वर्ग के लिए ड्रीम बजट कहा जा सकता है। ऐसा बजट उन्होंने पेश किया है, इसलिए मैं उन्हें बहुत बहुत बधाई देता हूं। विशेष रूप से इनकम टैक्स का एग्जम्पशन स्लैब जिस प्रकार से परिवर्तित किया गया है और 12 लाख रुपए तक कोई इनकम टैक्स नहीं लगेगा, ये जो घोषणा है ये निश्चित रूप से एक मील का पत्थर भारत की अर्थव्यवस्था के इतिहास में साबित होगा। 7 लाख से सीधा 12 लाख का जंप। और मैं बता देना चाहता हूं कि 2014 में मोदी सरकार ने ही 2.5 लाख तक एग्जम्पशन लिमिट लेकर वो गए थे। वहां से लेकर अब 12 लाख तक का ये सफर हमारे मिडिल क्लास, सैलरीड और हमारे जो नए तरुण है, इनके लिए एक बहुत ही सुखकारी इस प्रकार का अनुभव होगा।
देखिए, आपने पहले बिहार का जिक्र किया, तो बिहार तो मेरी कमजोरी है, बिहार मेरी मजबूती है और बिहार मेरी शक्ति है, मेरी ताकत है। तो आपने बिहार के बारे में कहा, या कोई बातें हुई हैं जो लुभावना लगी, जो अच्छी लगी, बढ़िया लगा, वो अच्छा लगा मुझे कि जाहिर एक साथ साथ ये भी महसूस होता है कि चुनाव की घड़ी है, तो कहीं वही सोचकर तो चुनावी बजट पेश नहीं किया गया, और खासकर बिहार को फोरफ्रंट में लेके। लेकिन जहां तक बिहार का सवाल है, जहां कोशी प्रोजेक्ट का हो या मिथिलांचल का सवाल हो या ग्रीनफील्ड एयरपोर्ट का सवाल हो या इतने और इंफ्रास्ट्रक्चर और बढ़ाने की बात हो, तो अच्छा लगता है, बहुत अच्छा लगा है। लेकिन क्या इतना ही काफी है? क्या बिहार में उन्होंने पहले कितनी बड़ी बड़ी स्पेशल पैकेज की बात की थी, क्या हुआ उसका? इस बजट में भी उम्मीदें थी, क्या हुआ जो बोली लगाई थी बिहार की? 50,000 करोड़ दूं, माननीय प्रधानमंत्री जी ने कहा था कि 1 लाख करोड़ दूं, 75,000 करोड़ दूं, 1.5 लाख करोड़ दूं, क्या हो गया उसका, उसके बदले उसकी तुलना में स्पेशल पैकेज इन बातों की तुलना में ये बजट का ये जो लोक लुभावना बजट बिहार को देख के पेश किया गया है वो मुझे लॉलीपॉप समान दिखता है उसकी तुलना। बहरहाल जो हुआ समथिंग इज बेटर देन नथिंग, हम उसकी सराहना करते हैं बिहार के कॉन्टेक्स्ट में। अब रही बात सैलरीड क्लास को, अच्छा है, जानते सैलरीड क्लास को वोट ये देने का मतलब है कि आप वोटर्स पर नजर रख रहे हैं, इसलिए मैंने कहा चुनावी बजट है। ये तो बहुत पहले से हमारी मांग थी, एक्सपेक्टेशन थी कि सैलरी क्लास को बढ़ना चाहिए, वहां पे वो 5 लाख और 7 लाख और
देखिए वैसे भी रुपये का अवमूल्यन हो चुका है, 80 रुपया पार हो चुका है, तो यदि अंतर बढ़ाया है तो इससे कोई फर्क पड़ने वाला नहीं है। दूसरी बात है कि मिडिल क्लास हो, लोअर मिडिल क्लास हो, गरीब हो, किसान हो, इसके लिए इस बजट में कुछ भी नहीं। तीसरी बात यह है कि बाजार बजट प्रस्तुत करने के बाद गिर गया, बैठ गया है, तो जो एक व्यय हो रहा था वो वैसे भी फॉरेन निवेशक है वो पैसे पहले बाजार से निकाल रहे थे, अब और इससे दुष्प्रभाव पड़ेगा। तीसरी बात यह है कि इंफ्रास्ट्रक्चर के लिए कुछ नहीं और जिससे लोगों को रोजगार मिले, तो रोजगार भी नहीं मिलना है, इंफ्रास्ट्रक्चर भी तैयार नहीं होना है, और दूसरा लोगों की बजट में कुछ भी नहीं है। जो कुछ भी कहा गया है वो अव्यवहारिक है, खाता कम पैसे होगा इसके बारे में कुछ नहीं है, और जो कुछ भी बताया जा रहा है मेरी लाइफ में हसीन सपनी है, इसके अलावा कुछ नहीं। हम लग रहा है बजट
हम बहुत प्रसन्न हैं। पहले देश के विकास का बजट है, देश में पूंजी निवेश हो, रोजगार के अवसर मिले, उद्यमशीलता बढ़े, छोटे उद्योग आगे बढ़े, किसानों की चिंता की गई है। और जिस तरह से 100 जो ऐसे इलाके हैं जिलों में किसान और किसानी की चिंता की, वो बहुत ही अलौकिक है। स्वाभाविक है मैं बिहार का हूं, तो बिहार के लिए जो IIT में फैसिलिटी मिल रही है, जो मखाना बोर्ड हम लोग की बहुत दिन से मांग थी, कृषि के लिए, मिथिलांचल के नहरों के लिए, तो प्रधानमंत्री जी का हृदय से धन्यवाद, उन्होंने बिहार की चिंता की है। वित्त मंत्री का धन्यवाद। और इनकम टैक्स 12 लाख जीरो, इसे कहते हैं ड्रीम बजट। ये हिम्मत मोदी जी ही कर सकते हैं कि मिडिल क्लास की भी चिंता, गरीबों की भी चिंता, किसानों की भी चिंता। बहुत अभिनंदन।
विपक्ष कह रहा है कि ये चुनावी
कैसे देखते हैं, क्या कहेंगे, आपको क्या लगता है?
ऐसी कोई नई बात यूनियन बजट में नजर नहीं आई है। और जो समाजवादी पार्टी का आज क्योंकि बजट पेश हुआ है, ये 11वां बजट है, लेकिन जो कुंभ हुआ है उत्तर प्रदेश में, तो जहां आंकड़े दिए जा रहे थे सरकार द्वारा, वहीं समाजवादी की यह मांग है कि जो कुंभ में जितने लोगों ने अपनी जान गंवाई है, जितने श्रद्धालुओं ने, उनके आंकड़े सरकार पेश करे और ज्यादा से ज्यादा लोगों को सहूलियत पहुंचाए, क्योंकि अभी भी जो लोग जो कुंभ में नहाने आए थे वो भटक रहे हैं और वो अपने परिवारजनों से नहीं मिल पा रहे हैं। तो हमारी मांग है कि जो गवर्नमेंट है, जो उत्तर प्रदेश की सरकार है, वो आंकड़े निकाले कि आखिरकार कितने लोगों की मृत्यु हुई है कुंभ में और क्या वजह रही है, और क्या यह सरकार जो दोषी ऑफिसर्स हैं उनके खिलाफ कार्रवाई करेगी कि नहीं करेगी।
ये उनको क्या लाभ हो रहा है? उनके 12 लाख के आमदनी पर तो आपने कोई टैक्स की राहत दी नहीं, पहली बात। दूसरी बात, आम आदमी पार्टी के राष्ट्रीय संयोजक केजरीवाल जी ने जो मांग की थी कि अगर आप ये फैसला लें कि भाई उद्योगपतियों के कर्जे आप माफ नहीं करेंगे, अपने पूंजीपति दोस्तों के कर्जे आप माफ नहीं करेंगे, और जो 16 लाख करोड़ रुपए के कर्जे आपने माफ किए हैं अब तक, उसकी वसूली करेंगे, तो देश में जीएसटी की दरें और इनकम टैक्स की दरें आधी की जा सकती हैं। बहुत बड़ी राहत इस देश के मिडिल क्लास को और इस देश के आम आदमी को मिल सकता है, लेकिन वो नहीं किया गया। आपने देखा कोई ऐलान नहीं किया गया इस प्रकार का कि जो पूंजीपति हैं, बड़े बड़े जो प्रधानमंत्री जी के दोस्त हैं, बीजेपी के दोस्त हैं, जिनका लाखों करोड़ रुपए का कर्जा बाकी है, उनका कर्जा माफ नहीं।
Hello and a very warm welcome to Money Control. We are
tracking the budget for you, and we've been at it since 7 a.m. this morning. What a morning it has been. Finance Minister Nirmala Sitharaman has delivered a budget that possibly ticks many boxes. It's the budget where she has directly reached out to the middle class. The big headline is that income below 12 lakh rupees is now exempt from income tax. Finance Minister has also pegged India's nominal growth at 10.1% for FY26, which is higher than 9.7% in the previous fiscal. There's an ambitious fiscal deficit target set of 4.4% of GDP, lower than the previously targeted medium-term goal of 4.5% by 25-26. She has walked the talk, as it were, on fiscal prudence. The revised estimates for fiscal deficit 24-25 came in at 4.8%, lower than the budgeted 4.9%. The budget has also raised the capital expenditure target by 10.08% to 11.21 lakh crore for the next fiscal year starting April. The budget also makes a very strong political statement. It reaches out to the farmers. In fact, the speech began with the farmers, the middle class, and the state of Bihar. So a very tightrope walk, and done very deftly, if I may add. So to discuss what does this budget imply for the next 5 years of the Modi government, what are the big messages here, I have with me Mr. Rajiv Gaura, Chairman AICC Research, and Mr. Rajat Sethi, an economist, a right to center economist, if I may add. Thank you very much, Mr. Gaura and Mr. Rajat Sethi. And joining me in the studio is consulting editor Network 18, Gaurav Chaudhary, who has analyzed several budgets. So we are calling him our in-house budget veteran. So let me quickly go across first to Rajat. Rajat, very quickly, I started by saying that this is also a political budget besides being fiscally prudent. So clearly the BJP has tried to, appeal to the Delhi trader community, appeal to the middle class, and appeal to the economists as well, and to the rating agencies. So many boxes have been ticked with this budget.
Good evening to all your viewers and to all the fellow panelists. You're absolutely right. It was a very tight rope to walk on, and I must congratulate the Honorable Finance Minister for doing an absolutely wonderful job at that, and leaving all Indians with a reason to smile about this budget. It is a rare feat, and I believe we must all across party lines should come out and congratulate her. The middle class for a fairly long time felt that they had been taken for a ride, largely because, when you see the state governments doling out direct cash transfers on various schemes, the middle class was feeling the pinch. And I believe the middle class has been pretty vocal about it on social media and elsewhere. And as always, Prime Minister Modi, he keeps his, ears close to the ground, and he read the writing on the wall pretty quickly. And this time he did not tinker. He ensured that, a bazooka, middle class bazooka is given. And I believe an additional 1 lakh crore of capital, which would have been collected as tax, has been given back to the middle class. It is cash at hand. It is going to, reignite the consumption engine, and we believe it is going to have cascading effect on the economy as well. So net, while keeping the themes of capital investments intact, I believe the one big area which was showing signs of, slowing down, which was consumption, that engine has been given sufficient fuel to run the course over next financial year. So I must again congratulate her. There is
Right, Rajat. So let me now go across to Professor Gaura. Professor Gaura, Rajat said that, everybody is smiling today. A lot of headline management that has happened really, and it's a big relief that's coming in for the middle class. But the Congress party still is not looking very happy. Professor Gaura.
See, the relief for the middle classes is long overdue. They were under the burden of inflation and higher prices. So we also welcome this tax cut. However, the finance minister and the prime minister's expectation that this will spur private sector consumption is totally erroneous. You put all the middle class taxpayers who will benefit from this together, they're a small fraction of the overall population of India. What we need, if you want to create a boost to private consumption, which is what economic growth is calling for, you essentially needed a much more broad-based cut, something like a cut to the taxes and cesses on petroleum. That would help the common person, that would help the farmer, that would actually put more money in everybody's pockets rather than the small fraction of middle-class taxpayers who are benefited by this cut. So in that sense, this is a nice political move for the Delhi election, and you were also pointing out to political payoffs, and so that's good for them, but that's all right. But is it making a difference to India and our growth trajectory? If you look at India's growth trajectory, even the government's own economic survey that was released yesterday points out that over the last decade, even excluding the COVID years, growth is stuck in the 6% range, right? And the survey also points out something that we all know, that if we want to get out of the middle income trap, if we want to encash our demographic dividend, we need to have sustained growth of 8% over multiple decades.
Right.
We're getting this much lower growth rate, and this is not going to move the needle. The middle class tax cut is not going to move the needle when it comes to spurring private consumption. There's another dimension to expecting people to spend. Household savings, if you look at a year ago, household savings were at some 47-year-old low. And, those sorts of situations, people are just relieved. There's a lot of loan burden that they're also dealing with. So, in that sense, this is not going to have the desired impact, except, as you said, politically.
Right. Let's also hear it out from Mr. Niranjan Hiranandani, Chairman of the Hiranandani Group. Mr. Hiranandani, how much are you giving this budget? We started by saying that the budget remains fiscally prudent, it's conservative on its fiscal deficit, and it's managed to push an impetus into the economy, and it's ticked the political box as well. I want to understand from you, Mr. Hiranandani, for the sector that you represent, what does this budget imply?
Two aspects. Number one, you have to understand, even in spite of the fact that I don't like that the growth is only 6.2% and should be higher, the fact is that we are the fastest growing nation in the world. That's very clear. Number two, that the investments which did not take place in the year 2024 was a real challenge, especially in view of the election year by the central government and also states like Maharashtra. So I think the overall investments got actually stuck up, and that's the reason why we had a lower rate of growth. Number three, that there are headwinds internationally which have taken place, both in the Trump administration coming in, the cost of fuel, all these aspects of challenges which India will have to face continuously in order to have an exponential growth. However, I think what the finance minister has been able to achieve is fiscal control and a balanced budget which takes care of the political means which we just mentioned. I think that's important for them to continue to be in the position, but also the fact that the generative power, a triple generating power which is there in the field of manufacturing, in the field of services, in the field of infrastructure, and in the field of housing. I think these are the sectors which can actually grow with the entirety that they are talking about and give a 8% plus GDP growth. But we do need more investments to come into the marketplace, whether it is government investment, if it is FDI, it doesn't make any difference. So from that part of it, maybe I'm a little apprehensive that the amount which has been kept aside for the purposes of investment may be a little lower than what I would have expected. But I think if you look at the overall balancing of the budget, I think she has done a fantastic job and continues to do it. Look at the collections relating to GST. I mean, they've grown exponentially and are absolutely out of the world. The ease of doing business is targeted, not achieved. But I think to a great extent, the Prime Minister has targeted the ease of doing business in the country. And with China Plus One opportunity, which is taking place, I think more and more aspects will take place. One of the biggest challenges which I feel is not addressed adequately is skilling. Today, for instance, the housing and urban infrastructure employs 71 million workers today. It's the second largest employer in India after agriculture. But only 13 million are skilled. Only 13 million out of 71 million. We need minimum to be 23 million, which means we are 1 crore workers short today, just as of today. And if you're targeting 2030, where we want at least 100 million workers for there, of which 33% will have to be skilled in order to see that the economy and the growth takes place in urban infrastructure and housing, then we are humongously short in terms of the skilling that we need to do. So we are far away from that. But you have to understand that the high rates of growth in China took place at a time where there was not only manufacturing, but there was also infrastructure plus housing. These three put together really gave the double-digit growth to China. And if India also concentrates on infrastructure and housing and skilling of workers, we can actually achieve the Prime Minister's target of Viksit Bharat, as well as to be able to cater to the unemployment issue which is there and hidden unemployment which takes place in agriculture. So I think balanced budget, no doubt about it. Little thought process that they will do it. One more thing I'd like to flag off. I think that the interest rate is too high. And I think RBI needs to actually correct it. They keep on saying that inflation is still not under control. You have vegetables and supply is too high a cost. I don't think that's that by keeping interest rates high, the prices of tomatoes and onions and other products are going to come down. But it will make world of a difference, especially in terms of every sector of the economy, especially purchasing power of the common man today, as well as industry, as well as affordable housing. So I think there is a challenge there where we will have to look at RBI after this budget is done and dusted. We need to focus on that in order to see that the 8% to 10% growth that we actually need to achieve the growth of India is achieved. These are the two aspects which I think need a further focus than what has been done.
Right. Thank you for that, Mr. Singhania. Gaurav, multiple issues have been raised by Mr. Singhania, right? He's the person on ground creating jobs, generating wealth, and some of them are very, very interesting points. One point is, of course, about RBI and how they need to reduce interest rates. I want to get a sense from you. When we were speaking this morning, I think all of us acknowledged that there's the mountain of expectations that Ms. Sitharaman was carrying. So in this budget, she manages to stick to the fiscal deficit target. Not only that, she's given a very ambitious target for next year, but in the process there has been a reduction in as a percentage of GDP in the spends on roads, rural development and defense. Cumulatively speaking, from 67.2% of the GDP, that number goes down to 62.7% of the GDP. Now that will also have a spillover effect on the economy.
That is true. I mean, the strongest spillover effect that you will have is through the capex spend. There's a clear sign that it's slowing down, government capex spend. If you look at last year's revised estimate, that is this FY25 revised estimates, is about 10 slightly above 10 lakh crore, whereas the budgeted estimates was 11 lakh crore. And the budgeted estimates for FY26 is 11.21 lakh crore, which is only 10,000 crore more than the budgeted estimates of FY25. Clearly, and if you dovetail that with what the government has said on PPPs, I think over the last few years we had seen that the dominant model for infrastructure asset creation through government budgets was through the EPC route. and that was the most preferred route. Now we see there is a shift, and it seems to be a distinct shift so far as the signaling from the budget is concerned, that we need to go back to PPP, which is one way of saying. Another way of saying that private sector investment needs to now come in. So a lot will depend, of course, on to what extent the government incentivizes the private sector to be a participant in infrastructure creation, because there have been instances before where PPP model projects have not really taken off.
So let's get Mr. Hiranandani's thoughts in on this. Mr. Hiranandani, if you heard my colleague Gaurav Chaudhary there, you know, does the budget do enough to spur private investment? Because that is that has been a sore point for the India story, and we do see, you know, mention of PPP making a comeback, something that has been tried before but hasn't really taken off. So you know, we want to get a sense from you on how are you viewing this? Will the private sector come forward and invest after this budget? Is this tax break enough of an incentive, you know, in terms of boosting demand that will propel investments into the country?
Well, the answer is yes and no. The yes, because we have seen huge examples of success. Look at Navi Mumbai airport. Look at the various other airports which are done by the PPP route, which are taking place. Look at the ports which are coming under the PPP route. Look at the REITs which have been done by the national highways, and also passing on those aspects of it to the private sector. The construction contracts which have been given to the private sector, large and differently, things which almost turn out to be like a PPP, which is over there, where the payments are done over a period of 10 years and other things, where they are supposed to do the collection of the tolls and other things. So that's also an indirect PPP which is taking place. So the answer is yes and no. So yes, because many of them have proved successful, but many of them have not proved successful because the ease of doing business is not there in many of the aspects of it, and it depends on the local polity, it depends on the local bureaucrats, and in some places, some of them are very corrupt. So we have a problem there at the local level, at the operational level, and other things.
Let's go. Hold that thought.
The Prime Minister has done a fantastic job at the top end of the story, and but sometimes at the operational level we have a lot of problem, and I think those are challenges. But let me put it across differently. The China Plus One story is a humongous story. So I think that part of it, with the trade barriers coming up and the demographic dividend of India, you're going to see a lot more, whether it comes to investments in FDI, whether you see local investments do it. Look at the investments by local people in the Indian stock market. Look at all these aspects of it which are actually taking place. So I think that is something which is amazing, and we'll be able to do a lot more successful than it does. And the steps taken by the finance minister, prime minister, is a good one. But how many of them actually perform on the ground is a challenge.
Right. So, you know, clearly the onus has been put on the states, and I want to bring in Professor Gaura here. Professor Gaura, you're also very well aware of this fact that the center can only give an intention, it can give a direction, but ultimately there is a lot of governance that comes under the state governments. And this year, clearly the theme has come out as, you know, ease of doing business, deregulation, and so on. We heard it in the economic survey yesterday, and today the finance minister has emphasized on this greatly. So, you know, we cannot just constantly keep blaming the center, Professor Gaura. How about the Congress-run states? You know, why aren't we seeing greater ease of doing business in those states?
The Congress-run states in South India, Karnataka, where I'm from, and Telangana, are amongst the most competitive states in India. They attract a tremendous amount of investment, and you know, essentially they are reputed for being good places to do business. So I would not. They have engines of growth like Bengaluru and Hyderabad. The real challenge, of course, for us is internal, trying to make sure that growth is spread in an inclusive manner across our states. And otherwise, we are globally competitive, way more than the rest of the country is. So I'm not worried about that. If you look across the country, though, at the state level, there's a whole mixed record in terms of state level. But capital expenditure at the state level has also been quite considerable. And in many ways, those are the kinds of investments that go beyond the highways and the railways to reach the hinterland, to reach the interiors, and to bring more and more people in. Now, when you think about state governments, there's also, for example, Karnataka. We all gave up a lot when we signed up for the GST regime, and there are certain recommendations from the Finance Commission that Karnataka has not received. Those recommendations are usually binding. And the finance minister, who is an MP from Karnataka, has just not, delivered for us. And this is a matter of great angst and discontent within Karnataka that, progressive states that crucially need additional resources are being denied them. Anyway, if you think that this government is giving a lot to Bihar, I would like to remind you, in 2015, when Bihar had an election, Prime Minister promised a 1,25,000 crore Bihar package, right? That was never delivered. And what you're seeing now is little projects here and there which sound nice, but I don't expect the people of Bihar to be fooled by that kind of, as you said, the central government is not really capable of delivering what it promises.
Okay, all right. Let me.
Yeah.
Okay, sure. Let me bring in Rajat there. Rajat, a lot of questions being raised on the government's ability to deliver. Now, a lot of the budget, there's a lot of signaling that has gone into the budget. A lot of good intentions have been spelled out in the budget, but the success of the budget really depends on the implementation. To quote the finance minister, she spoke about trust, right? And then she was referring to the tax department, which has really been on an overdrive in the last 1 year, sending tax notices, which really has vitiated the the business environment of the country. So Rajat, how I wanted to bring in your thoughts on how does one ensure this? Now, this is, there's an intention that's spelt out, but there is a clear challenge there of implementation. The finance minister might have spelt it out in the budget document, in the budget speech and so on. But, just to go back to what Professor Gaura was saying, that implementation will be key.
So I'm still not sure what do you mean by implementation. If you look at the previous budgets, they have been able to meet some of those targets which were set in spite of being election year. The outlay, the capital outlay, was largely met, barring a few thousand crores here and there. But essentially, I believe that government has been consistently on a growth trajectory wherein capital investments is the cornerstone of its strategy. And that story carries on. I mean, I heard you and the other panelists also speaking about capital investment taking a hit. Even in the evening press conference, the Honorable Finance Minister was absolutely clear that government spending on capital investment will stay on track, stay on course. Yes, the private sector needs to step up. And, the private sector, and the famous saying when she said that, it's like Hanuman, the private sector has to be repeatedly told that, there is promise in India and promise in India's growth story. And still the private sector isn't investing in the capital expenses. And this has been a cause of worry. And I believe the government is trying to nudge the private sector into that direction. And that shouldn't be seen as a sign of shying away from capital expenditure. That is point number one. Point number two, on the income tax notices, I absolutely agree with that. There have been targets set on GST officials. There have been targets on assessing officers of income tax. All of this, when you start putting targets as if there is a sales target on somebody, that you need to meet those sales targets, so you can understand the kind of harassment that is going to happen at the very retail sector. This should stop. And I believe Prime Minister has been saying this consistently, that we need to believe in fellow citizens. There can be other models that if somebody is found, not paying adequate share of taxes, have very hefty penalties. But having these non-stop artificial intelligence generated summons to lakhs and lakhs of people and not having same artificial intelligence based solutions to those summons is creating a Babudam, a Babu Raj once again. And, the common man who is starting small businesses again have to go to these GST officials to resolve those summons and so those issues and pay their way out. This has to stop. And I believe this is the only thing which can unleash animal spirits that is much needed now in order to put the country back on that 8% plus growth trajectory.
Okay, one of the other challenges that's facing the Indian economy is the question of jobs, and I want to ask Gaurav here and Mr. Hiranandani on, does this budget address that? Because Mr. Hiranandani pointed out the skill development challenge, but are we talking about job creation if we look at the areas that the budget has decided to focus on?
See, one thing that we need to understand is the largest number of jobs are being created in the MSME sector. It's the kind of lifeblood of the Indian economy, and the Finance Minister did expend some degree of time on trying to underline the importance of the MSME sector. About 45% of our exports, 40% of our GDP, or about 36% of our GDP is accounted for by MSMEs. There are about 60 million MSMEs in place now, employing more than 100 million people. It is absolutely essential to get the MSMEs as an active participant and co-opt them in the growth process, and the focus should be firmly on them. If the MSMEs fall off the radar for whatever reasons, whether for lack of policy focus or also because the kind of technological disruptions that are happening, and also if the global headwinds actually affect Indian economy, the MSMEs are going to get affected the most. It is something that we need to ring fence them and find a way that they do not fall off the cliff. That the closer they get to the precipice, the bad it will be, the worse it will be for India, because that is when jobs will get lost. Likewise, on the conversely, the more MSMEs get support, both in terms of capital and policy, and also market creation, I think the more the jobs will be created. So it's absolutely critical for the MSMEs to be on board. So if we have to meet our job, the job goals to be met, job creation goals to be met, because there's an army of hopefuls, army of youth that are joining the queue of hopefuls every year, and creating jobs. We are talking about creating jobs by tens of millions here. We are not talking about creating jobs by thousands here. That has to mean that MSMEs will have to play a big part on it, for which they need active support.
Absolutely. Let me also pose this question to Mr. Hiranandani. Mr. Hiranandani, real estate is one of the biggest sectors in terms of employment creation, and of course, infrastructure, building of roads, highways, and so on. And traditionally, these have been viewed as sectors that will generate jobs and employment. Does the budget give a push, give an impetus to job creation specifically in your sector?
Answer is yes and no. I think it does have focus on this, but I don't think it's adequate enough. I think the need of doing structured, possible, innovative methods of skilling, which require people to be on the ground training at the contractual site level that we need to do, has not been thought of also. So I think we have a long way before we can actually achieve this target. But to say the truth and to give compliments to the government, the start has definitely been made, but I don't think it is sufficient enough to address the issues that we are talking about. So yes, that they have done it, but I don't think it is enough. I think they need to do at least 10x of what they are doing as far as the thing. And as I've said it before, and this is a part of something which is on record, anybody can check, we are the second largest employer in the country after agriculture. And in agriculture, you have underemployment. In the construction sector, if we can focus on it and do these skills, and what are the skills? Carpenters, plumbers, electricians, painters, they need a 6-12 month training job. You don't need 20 years of training and education. It's so simple to do. So I think that focus needs to be done much more. It's easier to achieve than any other sector that you can possibly think of. And we will solve the unemployment issues and also create GDP growth, which will be 8%, 10% that you can do and achieve within 2 years' time that I'm talking about. And this has been done in China completely. Manufacturing one, but if you see the overall numbers of employment, urban infrastructure and housing actually did 75% of the employment in China in terms of the growth potential that took place over there. And whenever it was double-digit GDP growth, these were the two sectors which had to be focused on. So while I'm saying, and I agree 100% with my dear friend on the MSME sector, which should be supported, and it's also a great area, but we are not adequately addressing this problem is the only point that I'm making.
Sure. I believe Rajat has a question. Rajat, you want to go ahead?
Yes. So I just have a small point. I mean, I'm firmly of the view, and I believe in free market-based capitalism, wherein government should not be looked up to for providing skilling. Skilling should have been from day one been the job of the private sector. The private sector should have stepped up and passed on the benefits of skilling on site to lakhs and lakhs of people. And correspondingly, they could have negotiated better deal with the government. In any which way, we are seeing that the corporate tax rate is much lower than it was before. We are seeing the corporate profit is at record high. The pass-on benefits we are not seeing going to the employees. So why does the corporate sector not step up and try and provide on-job skills at scale? I mean, asking and expecting the government would understand that the construction sector requires this specific drilling based skill is just asking too much and is trying to create a nanny state.
That's a very fair point. 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 Professor Gaura, would you like to come in here? Yes, Mr.
I'd like to reply that.
Sure.
It is a failure of industry. I accept that. Let me just point out to you. A company called L&T has 17 major skilling centers, and on the site training, they continue with hundreds of sites that they do. In spite of that, they have a 50-60% turnover, where these are going to government contracts, they are going to other places where they don't have training. Government doesn't conduct any training. They are doing at least 30% of the total projects. They do zero skilling. They get the labor from the open ground. So while private sector, I agree with you 100%. I have failed. We have all failed to do so. I'm only pointing out that this sector is so large. Can you imagine trying to work out and skill 2 crore workers? In this sector? It's not so easy as we can possibly think, and you can solve your unemployment problem. Yes, the sector must much more, and we are trying to do so. I'm only trying to tell you that if you want a double-digit GDP growth, this is a focus area which I think will be useful both for the government and the sector. And I accept and admit that we have not done enough. I accept it personally, and also on behalf of industry.
Okay, well, to take Rajat's point forward, I tend to agree with him. I think we put too much emphasis on what the government can do, but what can we as individuals and companies and the opposition party, right? What can we do in our personal capacities? Professor Gaura, asking the government to do everything, is it asking for a nanny state? I just want to pose Rajat's question to you, because Mr. Hiranandani also admitted that there has been a failure on the part of the industry also in terms of skilling and building centers to skill people that they can absorb in the workforce. So why hasn't the opposition really been more, I would say, maybe do this in your states, maybe get industry to participate in the skilling challenge more aggressively?
We're doing that in our states, but you must go back to history. The larger skilling missions were started under the UPA government, and the basic logic of that is this is the government's strength is scale. And the whole approach was, let's create a skilling ecosystem which would train people, which would allow for transferable skills, recognition of prior knowledge. A whole edifice was built up. Somehow that is not actually translated over both our regime and then the current decade of Modi Sarkar into enough placement. So there is some mismatch between what industry seems to want and what people are ready with, and that's what really needs to be addressed. And government has the capacity to also think about people who are far-flung areas and are out of the reach of standard private sector investment activity. So the whole idea is that government would play a much more active role in creating that inclusion for more people to be trained and to become capable people. It's still a work in progress. In our manifesto, we had the apprenticeship program, which the government announced that it was adopting as an internship program in the last budget. We haven't heard a progress report really on that, but that's the sort of activity that can again give people hands-on training. But you might want to ask whether construction is, higher end luxury construction is what is booming. What about construction of housing for lower income levels and masses? Those are concerns. Sure. The other question, my old friend Rajat had was about, he was asking, what's this question about implementation? All you need to do is look at 10 years ago, Prime Minister Modi's speech, Independence Day speech, where he talked about Make in India and the targets he set out, right? He said by 2022 or something like that, we would have 25% of India would be manufacturing of our GDP. It's still stuck at 15%. There would be hundreds of thousands of people who would shift to working in factories. That has not happened. In fact, what you see is a reversal. People going back to agriculture and to underemployment. So when you start thinking about these dimensions, that's when we say it's all great, nice, wonderful slogans and hype, but what is the reality? The reality is that this, sputtering along at 6% growth rate is just costing us too much. It's costing our youth a chance to have a better future than their parents have had. It's going to cost us our demographic dividend. It's marching us into a middle income trap, which is going to make us uncompetitive and, really we're going to suffer from it. And now, as Mr. Hiranandani pointed out, it's a globally, it's a very complicated world that's emerging, and there's not a word about the rupee in the entire budget and the depreciation and what it's going to do to our imports. Right. Mr. Trump's tantrums.
Right, Professor Gaura. Thank you so much for joining us with that perspective, and a big thank you to all the other panelists as well, Mr. Hiranandani, Rajat Sethi. Thank you so much for joining us. We now have with us Professor K.V. Subramanian, who is joining us from Washington, D.C., Executive Director at IMF. Professor Subramanian, thank you very much for taking out the time. I saw you on our screens this morning as well, so you have been tracking the budget, and it's bright early morning there in Washington. Is this a spectacular budget that you've woken up to, or would you have liked to see something more?
Actually, I didn't have the opportunity to wake up because I've had an all-nighter, first doing sessions pre-budget and then watching the budget and then, analyzing it and speaking about it. But be that as it may, I think I've liked many aspects of the budget. I've already, tweeted about the positive impact that it will have on consumption. And I think the 1 lakh crore that the Honorable Finance Minister has estimated that the Honorable Finance Minister has estimated to be foregone tax revenue, that will be really money in the hands of the middle class, and if we take the data for the amount for the savings rate that they have and thereby estimate the consumption multiplier, I anticipate that this will translate into about a 4.8% increase in consumption just because of the personal income tax. Do keep in mind this will be a one-time increase, unlike for instance the effects of spending on capital expenditures or infrastructure, which actually have a far more long-run impact, and there will be a positive impact on GDP as well, and that's what I've estimated. I think that even conservatively, I think that GDP growth could be close to 8%, at least 7% plus. And I think in these conditions is very useful. Also, from the perspective of spurring the virtuous cycle, because we've been hearing from India Inc. that, they are not investing as much because they've not seen demand coming through or consumption coming through. I think now here's the opportunity. I think, after this, I don't think, any of the policy makers want to hear any excuses from India Inc. saying, we're waiting for X, Y, or Z, to do to the private investment, because fiscal policy has, has basically done the needful, on the consumption side.
Right. So, there is an expectation that the middle class tax rate cut would spur consumption. My colleague Gaurav Chaudhary, who's tracked several budgets, is also here with me in the studios. And Gaurav, you have a question for Professor Subramanian?
Yes, Professor Subramanian. Very good morning. The budget has assumed a nominal GDP growth rate of 10.1%, and we just heard the DEA, Department of Economic Affairs Secretary, clarify that the deflator would be about 4.5%. So are we effectively looking at a sub 6% growth in FY26?
No, as I just mentioned, actually, in response to the earlier question, I think, from the time that I was, in the government, and, we started actually providing the budget math very transparently. Not just that, also, started implementing this philosophy of under-promising and over-delivering. And I think that is something that has been consistently continued. So I expect the nominal growth actually to be higher. And in fact, you would, if those of you who track my media interactions post the budget would remember, last year I had actually said that the actual fiscal deficit is likely to be lower than 4.9% because the growth estimates are conservative, on the nominal side, deflator. But I think, and that has actually happened. The fiscal deficit is 4.8%. So I don't think that the growth will be sub 6%. As I just explained, because of the spur to consumption, and thereby also, and remember, 60% of our GDP is consumption. Thereby there'll be a significant, spur to GDP growth as well. So I don't foresee, nominal growth to be 10%. In my opinion, it's likely to be, north of 11%.
Also, one more question on the fiscal architecture, and the finance minister has again, as part of the budget, come out with the next set of medium-term targets or projections or the roadmap. What we now see is that there is a subtle shift towards moving, a qualitative shift rather, if I may say so, of moving towards debt to GDP ratio as some kind of a more important marker than just a fiscal deficit figure. And in the medium-term fiscal policy framework, the budget clearly specifies that by 2031, which is the terminal year of the new finance commission, the government expects debt to GDP ratio to come down to 15%. Plus minus 1. So do you see this as a change in the beginning of a change in our fiscal architecture, and also in terms of approach in public finance?
This actually, you will recall, started happening post-COVID itself. In the economic survey, then we had written about, the fact that, if the fiscal deficit target of 3% actually is, is really derived from the Maastricht Treaty, which is not an economic document. It's a political document for a monetary, union. Actually, it's fiscal synchronization for a monetary union. Moreover, when you look at the debt to GDP ratio, it actually also accounts for, what is the borrowing by the government being used for? Is it being used for revenue expenditure, or is it being used for capital expenditure? So I think this is something that has happened post-COVID, and it is being continued.
That's right.
I have a question for Professor Subramanian. Professor Subramanian, the thing is that we've seen in the economic survey and in the budget, there's a lot of focus on ease of doing business, deregulation, and so on. In theory, it sounds, it sounds just the thing that we need. But in practice, how much of a challenge will it be? You've been part of the government, and you've seen the functioning of the government really up close. So what, how tough is this job for us as a country to really make it easy to do business here?
See, it is my view that where there is a will, there is a way, and I think if you see many of the policy measures that were taken during COVID, we've, for instance, were very different from the policies that India pursued, a very different policy from that by the advanced economies. The reason I'm bringing that example is that I think if the bureaucracy focuses really on ensuring that that government becomes an enabler for business and does not micromanage businesses, I think if that is the objective, then certainly ease of doing business can be achieved, and this is an aspect that actually has to be focused on by the bureaucracy. Things like, for instance, if you take the GST, a 5% rate on rotis and a 12% rate on parathas, and when rotis or parathas actually are no different, I think it's just absolutely needless complexity. Or labor laws specifying basically where the spittoon in office or factory should be put. I think again absolutely needless micromanagement. So this is something that the bureaucracy has to focus on. Gone is a socialist era where the bureaucracy would basically micromanage in business and industry. I think we are now actually in post-liberalization in an era where the government has to think about its role, the bureaucracy has to think about its role as an enabler of business, not a micromanager of business. So that is the now I will be on this watching very carefully the tax code which the finance minister has mentioned will be tabled actually next week, and she did mention that the number of sections and the number of pages will be reduced by half. You would recall in 2019 we had submitted a draft tax code which actually had the same features. So that will be something to watch out for, because the tax is a very important part of doing business for firms, especially the smaller ones.
Absolutely, Professor Subramanian. Thank you so much for joining us with that. And joining me now in the studio is our Managing Editor, Dr. Nalin Mehta, and Amit Malviya is joining us from the BJP headquarters. Amit, I'm sure today is one day when you're happy to be on the media talking about what is being called a spectacular budget, a blockbuster budget, especially for the middle class.
Well, Shweta, thank you for having me over. I'm always delighted to speak to the media, because I can tell you with certitude that my government for the last 10 years has delivered on one promise after the other. And the budget today that you see is a continuation of that same spirit with which Prime Minister Modi has been governing. There have been largely three major areas where this budget is focused on. One, of course, the personal tax bit, and I think the decision to increase the taxable limit to 12 lakh is a phenomenal one. 12 years ago, just about 16,666 rupees is what people got tax-free, as compared to 1 lakh rupees per month. So that is the kind of six-fold jump that this move means for the middle class. Give an example. If you had a couple who were both working, were salaried, and were making up to 12 lakh rupees, the standard deduction taken, effectively their household income would be tax-free till 25 lakh rupees. Now that is, in every sense of the word, making the middle class earn without paying any taxes. Prime Minister Modi has in fact abolished income tax for the real middle class, as I call it. And this is a significant move, because it will spur consumption, a demand that we have been hearing from all quarters, particularly in the post-COVID era. So this is a great step coming in the early part of the third term of Prime Minister Modi. This signals the confidence that the government has to pull this through. And the new tax bill that the FM has promised in next week is also quite significant, because it's Prime Minister Modi's government which would have then brought in a direct tax reform, the bill that is expected, and the GST that was implemented, perhaps the most successful implementation of GST anywhere in the world. I understand there are issues, there are areas of improvement and simplification, but it is all work in progress. But Prime Minister Modi, at the end of 10 years, would have actually delivered on two biggest tax reforms, and in that sense, he would have overhauled the entire tax regime of the country. So that is a great move, and this is a very bold step by this government.
Also a big, I'm sorry to butt in there, Amit, but also a big political move, because this comes right before Delhi elections, so very deftly handled. And I want to bring in Nalin here. Nalin, I started the show by saying that this budget ticks all boxes. So politically speaking, this budget has reached out to the middle class, to the farmers, to the state of Bihar. So very well managed, I would say, for Ms. Sitharaman on that front.
I just wanted to say hi to Amit first before I respond to Yushwata. I want to pick up from what Amit was saying before this. See, I think we should read this budget in conjunction with the previous one in July. What you saw in the July budget was a very clear focus on reaching out to constituencies where there was some discontent, which we saw in the Lok Sabha election, of farmers and so on, and it was very well managed on that account. What we have seen in this budget is a very clear outreach to the middle class. The middle class is a very core constituency of the BJP. For the last couple of years, there had been a clamor of complaints to the middle class saying, look, everybody else gets things. There has been a new social welfare net that's been created with direct benefit transfers, where different interest groups, farmers and everybody else has something or the other to get. What do we get? And also, so what this budget does is that not only does it answer that and answer that with a bang, it also creates a new multiplier effect in the economy. Because remember that under 12 lakh or up to 12 lakh, those who earn, that's about 80% of India's tax paying base. That's a large number. It's about 10% of income tax collections for the last financial year. So that's a very large number, and what that does is that, I think Amit was right, that that's money that would otherwise not have been spent in the economy, gone to the government, is now there for people to spend on. What it does do is that, see, demand has been tepid. Consumption has been tepid. If you see the festival season, in terms of volume and price growth, it was just about 3% and between 1 and 2% for price growth. So what we are doing now is that the idea is that when people have more money in their pockets, they will go out and create and have and consume more, which will then spur the economy. This is, I think, also, Shweta, a shift from the government's previous approach, which was very supply side led. For the last 3 or 4 years, you've had a lot of focus on capex. That has continued. There's a marginal increase in capex this time. But this focus from the demand side is a new kind of approach, the beginning of a new approach, I think.
Let's also bring in Amit. Amit, if you can hear us, yeah. So you heard Nalin as well. There's a difference in the approach of the government in this budget, and one headline that will also be dominating the newspapers tomorrow. And I personally, for me, I think it's a very, very big announcement, which is the massive nuclear push of this government. The target to set up 100 gigawatts of nuclear power by 2047. I think that's the power that we need. Yeah.
Can I ask a question to Mr. Malviya?
Yes, of course.
So Amit, I have a question for you. See, a very big, there's a lot of celebration of the middle class on the budget. The question I want to ask you is on another aspect of the budget. A lot of people before this budget were talking about the need for a 1991 reform kind of budget, kind of move. All of those things. What would you say to those in India Inc. and others who beyond this reach out to the middle class and on consumption, who were expecting to see more big bang reforms on the economy at a time when we are entering a very difficult global climate, at a time when the CAA has also said we can't do business as usual. What would your response be to that question?
Nalin, I'll just answer your question in a bit. Before that, can I just make two quick points, and that'll probably dovetail into what you just asked me. Look, this budget also takes care of the fiscal deficit targets, which is pegged at 4.4%, better than 4.5%, which most analysts were predicting. So in that sense, the government has been fiscally prudent. The third point, and Nalin mentioned about this, that we were fairly supply side focused. I don't think that focus has waned away any bit, because if you see the projection for capex at 11.12 lakh crore is actually 10% more than what it is for 25. And if you add the PSU bit in that, the number is actually around 15 lakh crores and is about 17% jump over the existing. So it's not only that it's focused on middle class, it's also focused on containing your fiscal deficit in prudent levels and also addressing the capex and related investment side of the economy. Now, coming to reforms in particular, I sometimes wonder what is it that India Inc. would desire that we do in terms of reform. Let me give you a small example, and this has been mentioned in this budget, but I don't think has found the kind of traction that it should have. Insurance, for instance, has been opened up for 100% FDI. Now, I think everybody, as far as I remember, almost 2 decades ago, wanted this to be done. Dr. Manmohan Singh, when he was in office, even attempted this, but he could not get this passed. You look at Air India divestment, that is a reform that everybody wanted for decades, and it happened and nobody seems to be talking about it. The other side is labor reforms. You look at industries and norms that control them. There have been so much streamlining that has happened in all these phases. The problem is that we want to benchmark everything to 91, but unfortunately in 91 we really did not have a choice. The reforms were not reforms. The reforms were conditions that were imposed on us by the IMF, and the government of the day had no option but to comply with it if they wanted funding and they wanted to be bailed out. So clearly a government which has massive foreign exchange reserves today, over $660 billion, is obviously not going to do something which does not come through a consensus process. And every time there is a reform through consensus process, it somehow ceases to be exciting enough for people to comment. For example, why would we all not sort of get very excited about 100% FDI in insurance? I thought this was the holy grail of disinvestment or privatization or reforms, if you like to call it. But now we've got so used to efficient government, we got so habituated to seeing things happen that we continue to demand more, which is perfectly fine. But I don't think we should lose sight of everything that this government is doing. And it's quite incredible that it is managing to do these things with ease. Coming to the nuclear power question that you asked, Shweta, look, Prime Minister Modi has been continuously saying that I want Viksit Bharat by 2047. There is a roadmap that is in mind. India, given its 1.5 billion people, cannot continue to lean on fossil fuels, coal, petrol, diesel and other products. We have to diversify and we have to generate energy through alternate sources. Now, if you look at the entire power sector, and in most developed worlds, whether it's Japan or it's the United States or some of the European countries, the bulk of the power comes from nuclear. Unfortunately, India first did not invest in nuclear for a very long time. It had a lot of impediments in between. The government did not give it the kind of impetus that it should have got. Dr. Manmohan Singh again tried the nuclear deal, but after getting the bill passed, he could not really execute it because he didn't have the requisite political capital to do so. And there were, of course, a lot of interference from foreign powers which did not want India to become energy sufficient. This push that you see on the nuclear side effectively is to address India's growing energy demands. We are today one of the lowest consumers of energy per capita, and if we have to move towards a regime where we want to promote electric vehicles, for example. We need to have a much bigger infrastructure to charge vehicles to ensure mobility. And that can happen only if you have 40 to 50% of your power coming through non-polluting source like nuclear, which is more sustainable, which is more long-lasting, and can serve as the base supply of power. Now, it is a step in that direction, and I think given India's standing today in the world, a lot of people trust us with non-proliferation. They are willing to provide us the requisite raw material. We also have our own reserves. So it is coming together a lot of things, obviously led by the Prime Minister's vision, where he thinks that we need to get to a point where power, one of the major constituents for building a more industrialized, urbanized, middle-class country has to be addressed, and it has to be addressed on priority, and that is why you see the push for nuclear power in this budget. But this is not the first time that it has been mentioned in any budget, and it has been work in progress, although I would concede that the push is quite apparent this time.
Amit, one quick question, across social media, and we had Professor Gaura on the show before you joined us. There's a fair amount of angst on the fact that Bihar got so much and the other states were completely missed out in the budget. So this is again a new thing for the Modi government. We saw in the last budget, the July budget, there was a lot of focus on Andhra Pradesh, and this time around a Makhana plant, and there's this food processing institute. So much happening in the state of Bihar. So clearly, Nalin also.
On a funny note, I mean, there's some meme going around on this, and Kanni Modi has said, "Well, I've just seen the privilege of the Bihar state budget being presented in the Lok Sabha budget." I mean, that's Kanni Modi saying that.
Right.
But seriously, we saw a fair bit of outreach to Andhra Pradesh also in the lead up to the budget with the Visakhapatnam steel plant and so on. Yeah. We saw some moves in the previous budget also, so that's par for the course. But I'll leave Amit to answer the question.
Amit, yeah.
I mean, at the end of the day, if you look at the numbers, right, you will see that every state and every union territory has got their fair share of wealth. In fact, if you look at the budget document carefully, you will realize that the center is going to transfer 25.6 lakh crore rupees to all the states in the coming financial year, which is 2025 and 26. People tend to read too much into mention about one state over the other. If you want to accuse us of being seized with the political opportunity or a looming election, then you should have, accused us of pandering to the electorate of Delhi, which is going to poll 4 days later. But the idea is not to use the budget, a national exercise, to align our political goals. Andhra, as was the case last time, is a state which was bifurcated when the UPA was there, and there were dues to the state because that was part of the reorganization, roadmap. They had to have a new capital. They had to get other funding to get other agricultural and irrigation projects up and going. So that is the reason why Andhra got a lot of, support in the previous budget. But having said that, you can't also hold a political party for politicking once in a while, can you?
Amit, a couple of things. Hi, Gaurav here. I wanted to, first to Nalin's point on the consuming class, we just heard the DA Secretary say that it's going to, the spending ability is going to go up by about 1 lakh crore. So if you net out the household savings rate, which is about 30%, so we're probably looking at a 60%, 60,000 crore of stimulus, consumption stimulus flowing into the economy right after this budget over the next 1 year. That is one. But one thing that the government doesn't seem to say in headline numbers and programs is also that the government has done over the last 10 years on the gender budget side. In 2014, the gender budget allocation 1 year before this government, this party came to power, was 97,000 crore, and this year 25-26 it's come up to 4,49,000 crore. Over FY25 there is a 73,000 crore increase, which is more than 20%. That is one. Why isn't the government talking too much about it when N of Gyan is all about women? And two, the other question is slightly on the growth side. The budget has assumed a 10.1% nominal GDP growth, and we just heard the DA Secretary say that the GDP deflate is about 4.5%. So are we possibly staring at a sub 6% growth in FY26? Amit.
Your second question first. I don't think we're looking at a sub 6% growth. I would assume that it would anyway be anywhere be between 6.3 to 6.5. That seems to be the broader consensus, and the government also seems to be wearing around that number. But of course, a lot depends on the global situation, global supply chain. We just have a new government of the United States. How it sort of shapes out, what kind of supply chains are we looking at? Will the Russia-Ukraine war, ease out, opening up more opportunities? So there are a lot of variables which are at play. It's not really led entirely by domestic consumption. But have we done enough in this budget to boost domestic consumption? The answer is yes. And as you just pointed out, 1 lakh crore is what the government has chosen in terms of tax collection by increasing this limit to 12 lakh rupees. So clearly that is going to find its way to the market. Also, let's not forget that the first time job seekers who get into the job markets will be the biggest beneficiary of this move, because now they will actually have almost 1,06,000 rupees, as much as 1,06,000 rupees to take home, depending on what is their first salary like. But and that would really propel consumption in a big way. So yes, that is to answer the second question, and we are quite hopeful that the GDP will pick up, and it will be better than the more conservative estimates that people are making at the moment. Coming to the gender budget thing, yes, of course, it is a big thrust for the government, and most of our welfare programs have been women-centric, because we believe that at the nucleus of a family is an empowered woman, and we have seen that work out very well. And in that sense, the outlay, and if you would like to call it gender-based budgeting, then yes, it has gone up. But then again, in any budget, there are so many things to talk about, and we'd love to talk about each one of them. But of course, there are areas that capture the popular imagination, and there are announcements that sort of interest a wider cross-section of the electorate or the population, if you like. And therefore, those get talked about more. But yes, we are quite sensitive to the idea of women-led development, and Prime Minister Modi has been completely and entirely focused on it, whether it is the Lakshpati Didi program or it's Startup India or funding under several other welfare programs. Big chunk of it has gone to women. So
right.
Yes, you're absolutely right. But
thanks Amit for that, for giving us a very comprehensive overview of the budget, and also of course telling us that this budget is not all politics, it is also good economics. Thank you very much for joining us on the show. Nalin, very quickly, we're nearly at the end of this broadcast. What is in this budget for Delhi? Because Delhi elections are barely a week away, and Amit actually made this point. He's like, you're not accusing us of appeasing the people of Delhi. I would think this middle class.
2 points. He also said that, well, once you can't really accuse a political party of doing politics once in a while. Okay. So Delhi election, I think a lot of people thought a couple of months ago that Kejriwal would be winning hands down. Yeah. I think the election is very close. I also think there is the BJP, there are those in the BJP who think they're sniffing victory at the moment. There are internal assessments being done. The Congress, for example, some internal surveys that I've seen, they indicate that the BJP may well be ahead. And you are seeing some of that reflecting in the tenor of this campaign. What this budget does, I think, for Delhi it may have given the BJP the extra fillip it needed for Delhi, because Delhi is a very large middle class.
Middle class, absolutely.
So this is going to change the sentiment 4 days leading into. I mean, I don't think this budget was aimed at Delhi, but it's going to have an impact.
It is a bazooka move by the government. Gaurav, very quickly, because we have Chandra waiting in Bangalore.
I mean, on Delhi, and I have a question for Nalin. Is the budget a clincher for the BJP now? Is it going to force or prompt the BJP to think they have got home?
At this point, if the BJP, I think it may well be the clincher.
Yeah.
Wow. So there, bazooka moment for...
I was trying to hide my words there, but then I said, okay.
That's right. Well, thank you so much, Nalin, and thank you, Gaurav, and a big thank you to all our viewers for tuning in. I'm handing it over now to my colleague Chandra, who is standing by with some startup founders on what does this budget mean for entrepreneurship and startups. Over to you, Chandra.
Thank you for that, Shweta. Well, you asked what's in it for Delhi, but a lot of excitement as far as the Indian startup ecosystem is concerned, which is why we believe that this budget indeed is a booster budget for the Indian startup ecosystem, and we will be unpacking that over the next 20-25 minutes with some of the biggest voices in the Indian startup ecosystem. So joining us on our panel today, this evening, we have Prashant Prakash, the founding partner of Axel, Kunal Bahl, the co-founder of Titan Capital and Snapdeal, Rohit Kapoor, the CEO of food marketplace at Swiggy, as well as Siddharth Pai, the founding partner of 314 Capital. Before I get to them, let me quickly give you an overview of some of the key initiatives as far as the startup ecosystem is concerned. I think the biggest was the expansion of the fund of funds scheme from SIDBI. Now, initially, this was set up with a corpus of 10,000 crore, which is today being expanded to 20,000 crore. This is a huge force multiplier for the Indian startup ecosystem, because SIDBI is a source of rupee capital for many venture capital funds in India, who in turn invest in startups. So that's a big announcement. The government has also expanded the credit guarantee scheme for startups to 20 crore. For micro enterprises, customized credit cards will be issued with a limit of 5 lakh. And there's also going to be a new scheme on the lines of the Stand Up India scheme, which will benefit 5 lakh women first-time entrepreneurs. Startup India scheme, the loan has been increased from rupees 10 crore to rupees 20 crore in 27 focus areas. They've also spoken about setting up a center of excellence on AI for education with an outlay of 500 crore rupees. Importantly, for gig workers, the government will be arranging ID cards under the e-Shram portal, and they will also be provided health care under the PM Jan Arogya Yojana. Remember, the number of gig workers is only going to increase with the boom that we are seeing in quick commerce and e-commerce in India in the last few years. There's also good news for AIFs, because AIFs, the money that they earn will be treated on par with foreign portfolio investors. So to unpack all this, let me go to our panel. Kunal, if we can start with you, what are your first impressions of the union budget and what this means for the Indian startup ecosystem?
Hey Chandra, thanks for having me. Look, at the end of the day, we are a startup nation and third largest startup ecosystem in the world right now, and the excitement is justified, especially with today's announcements, where, I remember I was actually in the room 10 years ago when it was announced that this 10,000 crore fund of funds will be set up, and I recall quite vividly a lot of people in the room sort of rolled their eyes and said, look, this will never see the light of day. Fast forward 10 years, there are 140 AIFs that have gotten seeded with this capital from the 10,000 crore fund of funds. 91,000 crores has been mobilized and invested onwards in the startup ecosystem thanks to the 10,000 crore start that many of these AIFs got. Now imagine we're going to do one more time the same thing, and maybe hopefully this time it won't be after 10 years that we'll see another replenishment, but it'll be in 3, 4, 5 years. Still a large majority of the capital going into the startup ecosystem in India is not domestic, it's foreign. And in order for us to have a stable bedrock for the startup ecosystem where we are not subject to the vacillations of funding winters in other parts of the world, we will need to have more domestic capital participation. And this 10,000 crore fund and the replenishment of it today by the Honorable Finance Minister is a big boost in the arm for the ecosystem.
Right. As Kunal said, and I think he also tweeted that, this is going to be a huge force multiplier for the Indian startup ecosystem. And as he said, the fund for startups of 10,000 crore helped galvanize over 90,000 crore of capital for investment in Indian startups. So a lot of people that we've been speaking to believe that this will increase rupee capital participation in Indian startups and also increase the pace of entrepreneurship in India. We also have Prashant Prakash of Axel joining us. First of all, Prashant, congratulations on being honored with the Padma Shri. It's our first conversation with you after that honor, but take us through your own impressions of the budget. In your comments to us, you've said that it lays a strong foundation for Viksit Bharat, driving transformative reforms that will reshape India's entrepreneurial landscape.
Yeah, so thank you. Thanks for having me and thanks for the good wishes. I think we are undergoing a transformation in the type of startups themselves, right? And it's really heartening to see that the government has recognized that the next phase of the Indian startup journey is for Indian entrepreneurs to aspire to move up the global innovation ladder, right? And if we need to go up the global innovation ladder, it's really important that we prioritize IP development, we prioritize areas such as AI, and we have the AI mission. So this deep tech announcement really complements what was already done with the AI mission. And as you know, a lot of the deep tech investments are not like typical venture investments. You kind of invest ahead of the time, the results come later, so there's a longer gestation period. So this is the right area where the government should intervene, and they have intervened. So just like what Kunal spoke about, the capital that we were able to crowd in with the first 10,000 crore fund of funds, I think with this new deep tech fund of fund, to see a similar galvanization and catalyzation of the ecosystem, where a lot more private players will now come in and participate in semiconductors, in quantum, precision manufacturing, space tech, and a lot of these areas are where the foundations for Atmanirbhar Bharat and Viksit Bharat need to be laid. If we need to be able to manage, replace the trade deficits and aspire not only to build some of these technologies for India but for the rest of the world. There are a few other interesting areas when it comes to manufacturing, the manufacturing mission, now that startups are in manufacturing mode and are no longer just urban tech services enablers, but are looking at enabling precision and deep tech manufacturing. I think the manufacturing mission in areas such as clean tech, EV, battery manufacturing, and a lot of the next generation electrical distribution equipment. All of these are areas that we couldn't have imagined as fertile areas for startups, but that's the vision of the entrepreneurs, and the government is really rallying behind it and giving it a big impetus. So very timely, and it's really heartening to see the pace at which the government is catching on and supporting the startup ecosystem.
Right. Prashant, a quick follow-up. They've said commitment to a deep tech fund of funds. Yes. How should this be structured? What should the corpus be? How should they work this out?
I think this is so big. I think this requires, in my mind, a similar allocation of something like 10,000 crores, right? So deep tech is not just one area. Like I said, it straddles so many areas from AI and beyond, including biotech and...
Let me know once Kunal is back.
So there's a lot of areas where deep tech goes beyond AI, was what I was mentioning. And I think a minimum of a 10,000 crore allocation is what would be useful. And I think you'll be able to see a lot of capital, private capital, to at least to the tune of 3 to 4 times this, which will participate.
Right. We also have Rohit Kapoor, who is the CEO of Swiggy's food marketplace. Rohit, you know, all the consumption-based stocks were in the green today, including Zomato, Swiggy, and the others, because there is hope that this budget has put more money in the hands of the Indian middle class. It will solve some of the pangs that we have seen as far as the consumption story is concerned. What will this mean for Swiggy? We've already seen tweets from founders like Kunal Shah who believe that this budget will spur consumption among the Gen Z population. But, you know, how will this impact consumption according to you?
Yeah, I think this budget has truly put the ball in the court of the private sector and in some sense the consumers, because post-COVID the government was doing its bit through coming out of COVID through government-backed capex, etc. Now the onus is clearly on consumption and private investment to do their bit, right? So the tax relief which has come, I think, is a definite boost, because also it, from just the slabs, it probably affects the younger consumers and first-time jobbers and people who are in the early phase of the career a lot more. It puts money in their hands, and I think a large part of that money does go into consumption. So it's a definite kick for consumption, and I think what we have been seeing in terms of, and just not food or our businesses, but when you talk to people across, that over the last few quarters or several quarters, the premium or the top 1% of India, 0.5% of India was fairly insulated from consumption yo-yos. It is always affects upside and downside, affect the mass consumption a lot more. And I think this really gives it a boost. I would like to see a lot more progressive elements coming up on taxation, where we lighten up the tax burden, especially on the salaried consumers in India.
Right. Siddharth, I want to come to you for, you know, something that you have written for us on the AIFs in terms of how they are classified, that they are now classified as a capital asset, which means that all gains emanating from the sale of securities will be treated as capital gains and not as business income. Tell us in very simple terms why this is important as far as Indian venture capital firms are concerned.
Yeah, happy to do so. I think I'll actually borrow a phrase used by the finance minister herself, where she said they want to reduce tax litigation and end up increasing tax certainty. Now, as an AIF or a venture capital fund, I think the taxation of the gains the fund ends up generating is of utmost importance, not just for the manager, but for the investors also. While foreign investors, and in India, there's been a long-standing debate about whether the gains made out of investments is an income from business or whether it's actually going to be capital gains. And we have a patchwork of circulars, case laws, notifications, a large amount of this that has ended up actually affecting the investing industry in this entire country. Now, in 2014, under the Shri Arun Jaitley budget, they did actually give tax clarity and absolute certainty to FPIs, where they said that any of the assets held by an FPI, any securities held by an FPI will always be considered as a capital asset. And by virtue of being considered as a capital asset, any gains arising from the transfer of that will always be capital gains. There is no chance that the department will ever say that what you're doing considers business, regardless of your holding period, what sort of investments you make, etc. Now, foreign investors have actually gotten this, but Indian AIFs had to wait for 11 years before they got this kind of similar treatment. And when Indian AIFs went to raise money for foreign investors always often look at the tax memos and say, if I come in as a foreigner, I will end up actually getting the benefit of tax certainty. But if I choose to invest in you as because the structure as an AIF, will this tax certainty end up applying or not? The lack of that prompted a large number of investors to say, I'd rather come into India not through GIFT IFSC or through a SEBI registered AIF, but through some entity, let's say in Mauritius, Singapore, etc. Now, because we've actually gotten this parity as of now, we are on equal footing with foreign funds, and the AIF industry has long been advocating for two important components: parity as well as clarity. Give us parity with foreign investors, give us clarity on our operations, and make sure they're actually reflected in law. And we're very happy to see that the Honorable Finance Minister has taken our inputs, and they've actually given us a parity we've actually long sought for. And this will be a massive boost to capital formation in India through SEBI regulated and IFSC regulated AIFs.
Right. I think we have Kunal back on the show. Kunal, I was just asking Rohit from Swiggy on what, what this will mean in terms of spurring consumption spends in India. So we've had interesting views on how this puts more money in the hands of the middle class, because we might see spends going up. We also have a view from Grove, who believe that, this will prompt more people to invest in the markets, thereby leading to more financialization as far as savings are concerned. What is your own view on how this will impact consumption and investment going forward? And of course, the second order impact on startups who will benefit from this in the quick commerce space, e-commerce space, as well as the discount broking space.
Sure. So, look, we all hope that a lot of this incremental money in the hands of families and households goes into consumption, because that is the need of the hour for not only the companies, but particularly the nation itself and the economy overall. There's no question about it, and there's no debate that there has been a significant urban consumption slowdown over the preceding quarters. And this is the kind of shot in the arm that was needed at nation scale to push the consumption momentum forward. Otherwise, we were seeing in our own company, we have, Unicommerce, we process 1 billion orders across all kinds of categories, right? Digital selling categories. And we were seeing a plateauing out in many of the categories over the preceding quarters. So there was clearly a slowdown in the market. And hopefully, when a family which has 10 lakhs of annual income has 50,000 rupees more in their hands, they are not only able to spend more on the necessary healthcare for the family, education for the children, but particularly on discretionary spending to upgrade their lifestyle, to buy the things they look at ads on Instagram of and start living the life they have dreamt of living. And we may think that 50,000 rupees, how far can that go in today's day and age of prices? It goes really far. It allows people to buy that extra meal on Swiggy, or buy that extra dress on Snapdeal, or take your pick of platform or category. So I feel this is going to create a significant momentum in consumption going forward, Chandra.
Right. Prashant, wanted to get your view on their announcements around AI. Now, yesterday, if you look at the economic survey, they had about 23 pages on AI and its second order impact in India. They've also warned that the tech skills that we have today may become obsolete, which is why today they've announced a center of excellence on AI for education with an outlay of 500 crore rupees. But what else needs to be done here? I mean, this week we also had, the announcement from Ashwini Vaishnav on how they have 18,000 GPUs ready, which startups can access, academia can access. But are we late in the game? What else should we be doing to, to really stay ahead in this AI arms race?
Chandra, this new initiative, the capital is one. We spoke about the deep tech fund and what is required. The other big place where we are really sparse in India is research, right? So both academic, both in the academia and also to some extent in corporates, we just don't spend enough on research. So the new 10,000 fellowships that has been proposed for research across the IITs and IISc, I think will have a twofold impact. One, I think there will be, research that can feed into, that can be translated into fundamental models and other, things in startups, which is what is required when you're talking about cutting edge deep tech areas. The second, I think, benefit of this is the number of people who would stay back in the country and work on these areas, because there is now capital and support for them through the research fellowship in the top institutes to pursue these research activities. So I think this is a complementary boost that was required in addition to the deep tech fund. I'm really glad to see this.
Right. Rohit, there was also a lot, key announcements with respect to social security and welfare of gig workers. The government has said that they will arrange for ID cards under the eShram portal, and gig workers will also be provided health care under the PM Jan Arogya Yojana. What does this mean for a platform like Swiggy, which has a huge number of gig workers on its platform?
So, Chanda, this thing is on insurance. Swiggy and some other platforms have been providing insurance to gig workers for a fairly long time, and the insurance cover is also reasonably comprehensive to cover their needs. So we'll have to wait for the details in what it means, and then we'll boil down to a little bit of understanding on how this plays out versus the insurance we already provide. Some state governments have also moved forward in announcing their schemes. So I think the details will be important here, but the step in the right direction, we welcome it. However, this has been, just to reiterate, being provided by Swiggy at least for a fairly long time now.
Siddharth is there.
Sorry?
Yeah.
Yes. It exists already. So we'll have to wait for the details on how it plays out. Am I audible?
Siddharth? Yeah, Siddharth, I want to also come to you for two more technical things, if you can help us, simplify this. One is the sunset date for tax exemption in gift IFSC. It's been extended till March 31st, 2030. And the second point on startups incorporated up to March 31st, 2030 can avail of tax benefits for startups, provided they are recognized by the Inter-Ministerial Board or IMB. Tell us in very simple terms why this is important, who benefits from it.
I'm always surprised you only ask me to explain it in simple terms, but others can speak freely. But no, just when explaining it, see, I think in every budget, the government keeps announcing that they end up extending the sunset period by a year. So it's almost like with every budget for that matter, that's one expectation everyone has. I think the government, by extending it to 2030, does end up giving a large amount of clarity to all the markets. So we don't have to sit and wait for whether it'll get extended or not. We now know until 2030 how we can end up actually planning our business, as well as planning any relocation, how to end up setting up a gift IFSC, etc. Now, with regard to the Inter-Ministerial Board, I think any startup in India who has to get any of the tax benefits under the Income Tax Act needs to get a certificate of recognition by the Inter-Ministerial Board, which is a board consisting of several bureaucrats, several other sitting members, etc. Now, out of the 1.5 lakh DPIT registered startups, only about 3,000 of them actually have an IMB registration. That is a dismally low rate of acceptance from the IMB. The IMB has systematically denied any of the tax benefits given under the Income Tax Act to all sorts of startups. So by extending it to April 1st to April 1st, 2030, well, the government does end up giving clarity to the system, to the entire Indian ecosystem, until and unless the IMB board is either abolished or fundamentally reformed, Indian startups will continue to be denied the tax benefits that the government has constantly promised them. The government has actually removed similar boards, removed the FIPB board, they removed the handloom board, they removed several boards. Why does this IMB board needs to exist? If the startup receives funding from either a SEBI registered or IFSC, a regulated entity, then that should vouch for the innovation of the business model. But having a group of bureaucrats or having a group of people decide what is innovation or not actually flies in the face of all the reform that the government has actually promised. So while they've done this, I hope the IMB gets abolished soon, and we have a market-driven process to ensure that our startups get the tax benefits they have been promised since year 2016.
Right. Siddharth, thank you for joining us. But before I let you go, Rohit, Prashant and Kunal, what's the one big miss in the budget? Because I think there were also expectations around, the taxation for reverse flip, something around ESOP rationalization. I mean, be as candid as you want. What's the one big miss? Maybe Kunal, you can start.
Sure, I think you sort of said it. I would say ESOP taxation, because like with it's as broad-based an impact that a piece of regulation or deregulation, I should say, can have. Currently, ESOP taxation is highly disadvantageous to to the holder of ESOPs. And now these are not like people in thousands, right? We are talking. These are people in the hundreds of thousands.
Right. Prashant?
I think we could have seen, I think on the deep tech, while there has been an announcement on the deep tech, I think it would have been good to see some more clarity to what exactly the scale and the size of this initiative would be.
Right. So, more clarity on ESOP taxation, more clarity on the deep tech fund. Rohit, what would you say was the one big miss? Something that should have been there?
I'll agree with Kunal. I think the ESOP taxation for holders of ESOPs in India is highly egregious. I think it needs a relook. I think all kinds of elements, including when you exercise the amount of dry tax you pay and the uncertainty you carry on top of that, to lack of parity with holding other asset classes which are similar in nature. I think that truly is important, because if you see, I think a lot of dreams have been made out of ESOPs, and these are people who have come out of middle class homes, being followed the classical study in good colleges, get through to good colleges. This is a classic Indian middle class dream playing out, and I think this will be a huge force reckoner. And this is something that definitely needs a careful look. I don't think the ESOP taxation as it stands in India today is fairly placed.
Great. On that note, thank you very much, Kunal, Prashant, Rohit and Siddharth, for really deconstructing, decoding the budget for us. Hopefully this budget will lead to more and more startups, more and more entrepreneurs, particularly women entrepreneurs, because that's been a huge impetus, huge focus in the budget today. All in all, I think the startup ecosystem is pretty enthused with the budget, that it will spur consumption, that it will lead to more startup formation, capital formation. A few misses as far as ESOP taxation and more clarity on the deep tech fund is concerned, but perhaps we will see that coming in the coming weeks. On that note, thank you very much for joining us on this special show on Money Control. With that, I'm handing it over to my colleague Ashwin Mohan in Mumbai.
Thank you, Chandra.
निर्मला सीतारमन जी ने रखा है, वह बजट बहुत ही संतुलित, ऑल इंक्लूसिव और विकास को बढ़ावा देने वाला बजट है। यह बजट विकसित भारत के संकल्प को गति देने वाला बजट है। इस बजट में गरीब और किसान का कल्याण है, वंचितों का सम्मान है और नारी शक्ति और मध्यम वर्ग का उत्थान समाहित है। हमारा बजट इस प्रकार से कहा जाए तो ये आम व्यक्ति का बजट है।
Hello and welcome to Money Control, sir. Modi 3.0 government's first full year budget. How do you first of all assess that?
I think it has brought Lakshmi to a lot of people. Only problem is that the gold is very costly. So with this gold, I don't think you can buy gold. So I only hope people will buy some more soft drinks from me, so that because this will boost economy. We were expecting around 7 lakhs to go up to 10 lakhs, but going to 12 lakh is a very good and bold move. And that also keeping the fiscal deficit target same. So they are saying, okay, we are willing to give you tax relief, but your fiscal deficit targets will remain same. I think it is a positive news. And overall, if you see, even the custom duties have been lowered. Income tax has been lowered, and still the deficit is going to be same. That means they are pretty confident on growth, and I think they are also pretty confident that this time private sector is going to rope in. So because I have seen post-COVID last few years, a lot of growth is happening because of the public sector investment, government investment. What is lagging behind is the private sector investment. But I somehow believe this budget is a step in that direction. She also used a very important word 4 times: trust.
Hi sir, thank you for speaking to Money Control. Your first reactions towards the budget. I know everybody is talking about the big tax cut that has come in especially amid concerns for a pronounced slowdown in urban consumption. So what's your take on the tax cut?
It's a budget which, it is, we were all talking, as you said, about income tax relief, but much more has been done for the middle class than what was being expected, if I may say, in terms of not only the amount of savings that they will be able to do, but how it will trigger not only relief, but also growth in terms of consumption demand, which is can skill them, we will reskill them, so food processing, all of that. So a lot has gone towards common man and the upliftment of common man. The third area is agriculture. If you see the tremendous focus on agriculture and rural, you know how it helps not only on employment generation in the agricultural and rural area, but the way I see it is also addressing the supply side, which addresses inflation, food inflation. So it all is directed towards a segment of the society which needs attention. So I think it's a people's budget which is very good, and it's good for everyone across all sections of the society, and even sectors and even, I would say, industry.
So coming to capex, it's almost flat on year, if I'm not wrong. Even the state's capex linked loans are flat on year. It basically seems like a message that maybe it's time. Finance Minister's speech just got over. How do you assess Modi 3.0 first full year budget?
So it's a very good, very fine budget, and it continues as in earlier budgets to focus on inclusive and sustainable growth. And there are several measures across very important sectors that are labor intensive to unlock the full potential. Agriculture, MSMEs, footwear, toys, exports. So several sectors, important sectors have been touched. At the same time, boosting investment in the economy, whether it's human capital development, urban infrastructure. So many areas have received focus. Climate change has received focus. And besides this, there is a very strong message on reform, really collaborating with states, incentivizing states for reforms to do the ease of doing business, forming that high-level committee on reforms, leveraging latest technology. I think very, very positive steps in really bringing in cutting-edge technology into the economy at a general level. I think these are very strong announcements. And consumption, which is 60% of the economy, will also get a boost from this budget because of the relief in the personal income tax.
There was a concern on the slowing down consumption, slowing down demand, which the industry was obviously very worried about. How will that be boosted after the big announcement in the budget?
Welcome back again, viewers. Over the course of the next half an hour, we are going to dissect the impact of Budget 2025 on Beale Street and the overall investment climate. This is yet another edition of our non-stop live post-budget coverage. We have for you a power-packed panel offering a 360-degree perspective. Raghuveer Menon, partner at law firm Shardul Amarchand Mangaldas; Sonia Dasgupta, the MD and CEO investment banking at JM Financial; and Rajesh Simhan, partner at Anagram Partners. So we have the M&A and PE legal perspective, we have the banker's perspective, and we also have the tax expert's perspective. So let's dive straight in. Raghuveer, if I can get you in to the panel. The big takeaway from today's budget as far as proposals on Beale Street are concerned is, of course, the FDI hike in the insurance sector. Now, this is something that has been in the works for a while. We have seen last year there was a consultation paper released by the Finance Ministry pushing for a hike from 74% to 100%, and then of course the economic survey also spoke about the need for greater FDI in the financial services space, and also spoke about insurance being an untapped sector. What's your take on this now being formally announced in the budget? And also keep in mind that this is a conditional hike, right? It applies only to those companies which are investing their premiums in India. So what's your take on the conditional hike?
It's an interesting proposal which has come through, Ashwin. I think it is kind of driven at the entire construct of making insurance coverage in 20 odd years from now for the entirety of the country and getting that on board. And for the growth in our insurance market, it will have to be driven by foreign investment. And the Indian insurance market has always been attractive for foreign investors. There have been a number of structured transactions which have happened over the last several years. I think coming to the point, moving it from 74 to 100 is definitely a step in the right direction. The conditionality which has been built in also, I guess, is more coupled to ensuring that there is no cash outflow from the country in terms of the fresh FDI which is brought in and that stays in the country. The real impact, will it drive a number of the existing ventures to move from a 74 to 100% holding, foreign holding, or attract new large players into the market? We'll, I guess, get to see over the next 6 to 9 months. But it is a sector which we do need to focus on. You did mention something very interesting as well. There's been a lot of focus on financial services, etc., and the interplay that regulation has had there with the ease of investment. The budget's not touched upon that as yet, but that is more, let's say, year-on-year policy, so would hope to see some relaxations on that front as well.
Right. Sonia, what do you think will be the response from the foreign insurers? Do you think these overseas JV partners will be tempted to hike their stake? Some of them, of course, would want greater and complete control. In some cases, some of them want to exit. Your preliminary take?
So I think, there have been actually a lot of foreign insurers who've been waiting for this change and who have not entered the country at all because ab initio they wanted to be in control. So there could be, some of them who will definitely look at this extremely positively and rush to enter the country. One of the few countries in the world which is, an island of growth, the demographics, everything very attractive from long-term point of view. And within the existing joint ventures also, I think wherever the foreign partners are more predominant and the domestic ones have not been so active and have largely been there to give them the support of the so-called Indian shareholding, there we will see very quick changes in the foreign insurers taking over close to 100%.
Right. Rajesh, what are the kind of conditionalities which you think the government needs to keep in mind while rolling out this proposal?
So, Ashwin, very clearly right now what the government seems to have indicated is that they have put in language saying that the premium itself will not move out of the company, out of the country. Obviously, I think from a broader FDI point and from a broader macro perspective, because the government's always looked at insurance as a sensitive sector. So they have been careful in terms of ensuring that there is proper capital adequacies at all points in time. So that the Indian insured are not able to enforce at a later point in time. So that's where I think most of the checks and balances are going to be on.
Right. So let's wait and watch to see what the BUPAs and the alliances of the world do and how they react in the days ahead. Let's shift focus now to another key proposal that came in the budget, and this was relating to mergers. This will definitely be music to the ears of all those deal makers who are complaining about really long deal approval timelines, and this one has to do with the requirements and approvals for speedier approvals of mergers. Now that FM Nirmala Sitharaman said will be rationalized, and the scope for fast tracking mergers will also be widened. Raghuveer, correct me if I'm wrong, but currently as we look at the regime right now, this fast track approval is only applicable in the case of a few companies, right? Maybe small companies, and also perhaps those mergers involving wholly owned subsidiaries and holding companies. Now, taking a cue from what the FM said, if one way to sort of expand the scope to new scenarios, let's say mirror image demergers, let's say intra-group restructurings, that would be a clear boost, right? Because that would lead to speedier deal approvals and perhaps also declog an already choked up NCLT.
It's a very good point, Ashwin. And I'm going to take a step back and let's address your question first in terms of what is the universe that it could be expanded to. At the moment, because of nuances in wording, demergers or arrangements or reconstructions are not picked up technically. So that clarity can be brought about. Till date, what you see is that in most cases where the fast track merger route is utilized, it's in terms of VOS mergers into parents, wholly owned subsidiaries merging into their parents. Over and above what was mentioned in the budget, there is another aspect. India is seeing a lot of internalization structures at the moment, where foreign companies are merging into Indian companies. It's all part and parcel of, if I term it very loosely, the ghar wapsi which is happening, and most people wanting to access now the Indian capital market. So if a fast track merger could actually expand to pick up foreign into Indian mergers, for which we are now currently going through the NCLT process, that also would be a very big boost. However, the word of caution which I'm going to build in here, Ashwin, is that look, we've done a number of fast track mergers over the last several years. Changing the law is a step in the right direction, but what we also need to change is the nimbleness on the ground. It's not as if a fast track merger gets done in 1 month versus an NCLT process, which can take anywhere between 8 to 12 months. The procedure on ground tends to be fairly pedantic and bureaucratic, and we need to be able to cut through that slack as well. And that's when we'll see the real benefit in terms of deal making, because it just opens up another avenue which is not available today for corporate India in terms of deal making.
Sure, you raised a very important point, Raghuveer, because there definitely is the need for more manpower as far as the NCLT benches is concerned. The more manpower there is, the more cases can be taken up and perhaps cleared. Sonia, your take on this proposal of fast tracking mergers? What's your take on this move by the FM?
I think this is really music to the ears of all deal makers. Not only does it help bring in a lot of efficiencies, because sometimes by the time the approvals come, the dynamics of the market itself have changed. And simple things like you said, mirror image demergers sometimes are the need of the hour to improve capital allocation, to have pure play companies in certain kind of sectors when a conglomerate wants to unlock value for shareholders. So not having it facilitated in a time bound manner sometimes just it loses the charm of even doing that entire restructuring. So I think, like Raghuveer mentioned, the devil is actually in the actual implementation of this going through. So the intent is fabulous. We really welcome it. And all the M&As will get a great spur. I think it's also in the right direction. This has been a demand from the entire capital market community to the FM for a long time. And we really welcome this move.
So it's a clear thumbs up from both Raghuveer and Sonia on our panel. One must keep in mind that, at the end of the day, deal approvals are really important within the NVSA's timeline, because one doesn't want to be in a scenario wherein one lands up in a spot wherein, the reasons that originally existed for the deal or the original market conditions are no longer there. That could be very tricky for both the buyer and the seller. The next question is on the tax front, and Rajesh, you're the right person to address this, and this is the relief that has come in for sovereign wealth funds as well as pension funds, and this is a scheme, a tax exemption scheme relating to their investments in the infrastructure sector. Now that was scheduled to end by March 31st, 2025. That's been extended for a period of about 5 years till 2030. How much of a boost is it for this big pocket of investors? Because sovereign wealth funds and pension funds are looking at India in a increasingly aggressive way, and they are picking up stakes, both minority, they are also considering majority acquisitions. So how do you think this decision will influence their deal strategy in the days to come, and which pockets in infrastructure do you think they will warm up to?
So I think there are a couple of points there. One, I think while everyone saw that there was a sunset clause in terms of investments made before March 2025, I think there was an expectation that it would actually get extended, and rightfully so, because the sovereign wealth funds or pension funds are effectively long-term capital, and that's something, especially when we are talking about the infrastructure sector, where you tend to have longer gestation periods and you tend to have longer exit tenure. You do want investors who have a long-term view of the economy coming in, and across, even when you see other jurisdictions, most jurisdictions do tend to provide tax breaks to sovereign wealth funds or to pension funds. So from that perspective, I think it's a welcome move. You will see the investor interest continuing in the infrastructure sector. If you see the deal making over the last 24 months, you have seen that there have been a lot of activity from sovereign wealth funds in the infrastructure sector, be it roads or be it renewables. And even looking at the government's own plan in terms of infrastructure spending over the next 5 to 6 years, that is definitely one pool of capital that they do want to ensure gets tapped properly in terms of investments. So at least all in all, I think from both infrastructure sector as well as from the sovereign wealth funds and pension funds, I think it's just getting that clarity and having it out of the way and having a good 5-year horizon in terms of investment activity just provides a bit more certainty, rather than doing it on an annual extension approach.
Right, so at one shot they've sort of extended it for 5 years, and so therefore one doesn't need to keep looking out for it in the next budget. Fair point over there, Rajesh. In fact, UAE and Saudi Arabia, they have committed $75 billion and $100 billion of investments in India. Sovereign wealth funds and pension funds are a very, very important class of investors. In some deal scenarios, as all three of you would know, they are in fact competing with the bulge bracket global private equity funds. So therefore, good news as far as they are concerned. Raghuvi, now let's shift focus to BITs, or bilateral investment treaties, and those are of course pacts which lay down the terms and conditions under which you invest in a country and vice versa. The FM said that they're going to revamp BITs and perhaps make it more investment friendly.